That was the session yesterday. Let's check on the future story right now for Europe, with oil at around $85 a barrel, hovering around that level, but not picking up in the session today. That's giving a bit of a lift, it seems, the European futures story. Again, the strength in the AI demand being signalled for TSMC. We'll see how the tech sector responds to that. Futures pointing higher then by 0.3%. FTSE 100, though, is a little low. You've got gold and silver prices weaker, so miners could be under pressure, and oil a little weaker. Maybe that's going to be a drag on the energy sector, currently at 10,468. DAX futures largely unchanged. Here are your stocks to watch. We will be watching, of course, tech stocks on the read across from TSMC. Really interesting price movement across ASML yesterday, ending in negative territory, having started with a pop of 7%. ABB coming through with a deal, some M&A there, and some decent numbers in the second quarter for that company that is exposed to the AI story, to data centers and electrification. And Publicis, interestingly, in the advertising space, coming through with a decent set of numbers as well. So we watch Publicis for that reaction. We are 8 seconds away from the open. It is again a story about energy, a story about the chip momentum, about the AI story, and how that filters in, of course. In terms of Fed expectations, markets have now pushed out a 25 basis point hike until around October. So still expecting a hike, but not until October. The FTSE 100 is currently down about 0.1%, and that is partly down to, you would suspect, a little bit weaker on oil, $84 a barrel, down 0.4%. But again, you've got iron ore, you've got gold and silver a little softer. So it's possible the miners are a bit of a drag for the FTSE 100, currently down 0.5%. Across the benchmark, Stock 600, very modest gains of about just shy of 0.1%. It's a slightly brighter picture over in the Netherlands with the AEX up 0.3%. So we'll bring up the pricing for ASML shortly. The CAC current over in France is currently flat, and the IBEX in Spain is up 0.2%. In terms of the sector breakdown, we're just going to bring that for you, because yesterday the story was a story of luxury stocks gaining on the back of some strong earnings coming through from Richemont. On the downside, you had telecoms. Today, top of the list is media, so Publicis is playing in the role there. Media is up 0.9%. Tech is getting a lift as well, so tech as a sector is one of the best performers, up 0.6%. On the downside, it's a reversal of what we saw yesterday. Consumer products down 0.6%, and you've got personal care products also down around a similar level. Again, on the top side, for your sectors, the gain is coming through. Media up 0.8, tech currently around 0.6% is the gain there. In terms of the movers, ASML putting in a print of 2.5%. That is the gain right now. It's in the context, again, of a volatile session for ASML yesterday, but arguably getting a lift from the upside in CapEx spending coming through from TSMC and the forecast there. So ASML is up 3% right now. Siemens is getting 1%. Process on the back of stories around Delivery Hero and Uber's potential acquisition of that company, for which Process has a stake and will be offloading that stake, is up 0.8%. On the downside, Total Energy on slightly softer oil in the session, down 1.8%, is one example as well. Let's get a broader perspective right now on these markets and how to think about positioning. Sharon Bell, Senior European Equity Strategist over at Goldman Sachs. Sharon, fantastic to get you in the studio. What is standing out to you right now? What is top of mind as you look at the European equity space? How constrained are we on energy? How vulnerable are margins as we enter earnings season? How much conviction do you have that we'll be able to get double-digit earnings for European equities?
I actually think earnings will probably be pretty good this year. And you might be surprised at that, because an energy crisis is not normally conducive to European growth, given Europe doesn't have energy independence. We import so much. But on the other hand, we've got a lot of commodity stocks in the index. We've also got, so we've got resources companies, mining companies, we've got energy companies, we've got utilities companies that tend to benefit from higher energy prices. But yes, there is an offset because of some of the consumer names suffer with higher costs. But as we've seen, some of the luxury goods companies are printing quite well. So it's a mixed picture, I would say.
OK, it's a mixed picture. How are you thinking right now about... We've had this update for TSMC, we've had an update from ASML, not asking you to name names, but in terms of how you think about the trajectory around AI spend, is the door still open for European companies that have exposure to data centres and AI infrastructure? Has that story got further to run, do you think?
We do think it's got a further to run. I mean, yes, I can see why the market's nervous, because these have run up quite a lot. Not so much in Europe, but in the rest of the world in particular. You've had some very strong performance, but really based on earnings coming through. And we still feel that the hyperscalers will be upping their capex again in 2027, and we're looking for reasonably good earnings, and that's absolutely coming through in the print so far. So good earnings driving not necessarily higher valuations, but higher performance by these stocks.
What is giving you the conviction that hyperscalers continue to spend and increase capex in 2027?
Yeah, I mean, in many cases, they've already said that this is what they plan to do. So I think it's following that. It's following those signals. And you are starting to see some returns from the AI spend as well. So a combination of better returns from this and plans already in place means that you start to get some pickup in spending.
Do you think executives in the earnings season will be under more pressure to give more detail on the token cost, the spend on tokens, and the ROI? Is that something that analysts are going to be looking and pushing for more?
I think people will push for it. I don't think we will necessarily get all those details, unfortunately. I mean, I think it will take time. I mean, we think ultimately this will be a big productivity gain for GDP in aggregate, but we won't even see that really in terms of the productivity numbers until at the earliest 27 in the case of the US, probably even a little bit later than that for Europe. So it takes a while for these things to come through, but I'm sure there will be pressure to report gains on the basis of it.
Do investors have the patience to look into, to hold until 2027, to continue this investment theme until 2027 if we don't get that?
Well, we kind of know that investors are nervous because the hyperscalers haven't done particularly well, actually, in the last 6 months or so. Depends on the exact window you look at, but the big performance has been the ones which have been seeing clearly the gains from the capex spend, because we kind of know that is coming through. So investors are nervous about the returns on it. They are also nervous about the funding as well, because a few years ago, the big hyperscalers were funding it all out of their cash flows. So they were very cash-rich companies. They still have incredibly strong legacy businesses, so they funded a lot of that. But now we're getting to the point where they have to tap the market more. Equity market, debt markets. So that also makes investors a bit nervous.
And that has benefited the banks. It's been one of the catalysts for this incredible run of results for the banking sector in the US. But the volatility, the geopolitics has been a factor, the energy story, the trading volatility, and clearly trading desks performing incredible record hauls from the top US banks. What is the read across to European banks? We've had a number of guests come on and say they quite like European banks. Is that a sector you would look at?
Yeah, we do like European banks as well. Not necessarily because of trading volumes, etc. Although I do think they are at the margin helpful for some of the European banks. I think it's just the fact that European banks are printing pretty good return on tangible equity now, much better than they were a few years ago. Rates are higher; they're likely to stay higher. It's not just corporates fueling capex spend, which are fueling this rise in debt and equity issuance. You're also seeing governments issue more, pushing up and keeping bond yields relatively high. So the whole sort of rates complex being a little bit higher, that helps the European banks as well.
Sharon, you also have a recommendation for focusing on halo stocks, heavy assets, low obsolescence. Detail that trade for us.
That trade. So this is a trade that was very unloved for many years. After the financial crisis, people only wanted software companies, media companies, business services companies that generally were not heavy assets. They were capital light. Capital light businesses really was the area that performed incredibly well. Not so in recent years. These heavy asset companies, which I would include amongst them some of the tech hardware names, but also energy stocks, renewable stocks, defence stocks, aerospace stocks, telecom stocks, all of these put in a lot of capital. Capital, of course, is a protection against AI disruption to some extent. Unlike, say, for example, capital-light businesses, which are more likely to be disrupted. And then also all this need, I think we spent too little on infrastructure for a long time, and now we're realising, we being both corporates and government, that we need to spend more on infrastructure. So those things coming together and meaning these stocks do better.
You've said on the halo trade, the first phase is largely done. Now we enter the second phase. What is the second phase?
So the first phase was a re-rating because these stocks were trading at very low valuations. No one wanted to touch them, as I said, and everyone wanted the capital-light businesses. We've seen a bit of a decline in valuations of the capital-light businesses, not that much, but a little bit. We've seen a big re-rating up in the valuation of the heavy asset businesses. Now we think what we need is the earnings coming through, and we do expect not just double-digit earnings but high teens earnings growth for this year for those kind of capital-heavy businesses, I guess you could say, and that's what we see as driving performance.
How are you thinking about UK stocks right now? Citi came out with a view they've downgraded UK stocks, and partly that's down to what they describe as a broadening of the leadership and maybe less focus on what's happening with commodities. How are you thinking about where UK assets, UK equities should sit in your basket? Yeah,
I mean, probably within the context of Europe, roughly neutral. I don't have a very strong positive view nor a negative view on the UK stocks. I do think they look good value. And you are seeing foreign investors still accumulating a little bit more UK. You are seeing more M&A into the UK as well. You're seeing more buybacks from UK companies, all these big energy and commodity companies who are making good money buying back shares. Some of the banks are doing relatively well, good return on equity by the UK banks too. So all of that is good. But on the other hand, domestic investors are very wary. And you're still seeing outflows from domestic investors. There's still a lot of political uncertainty. And you're right. I mean, ultimately, as we go into next year, we would expect commodity prices to come down. And the UK is very commodity heavy. And then also the UK is a big dollar earner, and sterling has been a little bit stronger recently.
Well, we saw that yesterday, didn't we? On the reports that Shabana Mahmood would be made the Chancellor in the next government. The rate story for Europe. Expectations the ECB raises rates again. Is that priced in at this point across the equity markets, or is that potentially a hurdle?
Yeah, I think it's a bit of both, really. I mean, I don't think it is good for the equity market to see it, other than maybe for the banks. It's not particularly good news to see another rate hike by the ECB. We do think they will likely do another rate hike. But if also another rate hike comes with it, my guess would be an environment where you've still got higher commodity prices, which is unhelpful for European growth. So at the margin unhelpful, but I do agree with you as well, it's probably priced. It's what the market expects now. We also, by the way, think that the ECB will cut rates in 2027. So these are hikes, but they will basically give them back next year.
OK, that's interesting on the interest rate cycle for the ECB. You mentioned luxury as a sector, and we saw that performance yesterday, and the Richemont earnings coming in strong and benefiting from a very strong US consumer at kind of the top end for jewellery and watches. Do you have a view on whether the luxury story is turning around in a meaningful way, given that China remains a challenge?
Yeah, China has been a challenge for the luxury companies, probably will stay a challenge. I mean, the recent data on the consumer side from China remains on the relatively weaker side. Having said that, luxury companies are potentially benefiting from a stronger wealth effect. We've just been talking about the strength of global indices in recent months. So in Asia and in the US, you've had quite a strong wealth effect. So I think it's a balance for luxury companies. We'll see how the results continue to pan out. As with a lot of these sectors as well, there's a kind of overall sector, but there's also which companies are taking the correct path, as it were, and growing their businesses. In the end, we think the key thing this year, because valuations are already quite high across all sectors, not just luxury, is earnings growth actually delivering.
Do you think the automakers can deliver earnings growth in Europe?
I think it's very tricky for them. We would be underweight autos. We have been for some time. I think the issue for the autos companies, as we know, I mean, there are plenty, but it's China competition is the absolutely key one. They can try to cut costs, but that in itself is costly and difficult. That's a tricky path. So they can try to cut costs. They've got new models coming through. That may be a little bit helpful. But, yeah, I think it's the competition, the pressure on prices, these businesses. They look cheap on a PE basis, but I don't see them growing. OK. Sharon Bell, thank you very much indeed with the insights on these markets. Sharon Bell, Senior European Equity Strategist at Goldman Sachs. This is something we've been watching for as well, is an update around how South Korea and the regulators there are thinking about these leveraged ETFs. So redhead across the terminal right now, South Korea will temporarily halt new single-stock leveraged ETFs.
That is the red head across the terminal. South Korea will temporarily halt new single-stock leveraged ETFs. They will continue monitoring. They seek to stabilize the market soon. They will be banning new single leverage products from listing. Korea as well hiking the minimum deposit requirement for chip leveraged ETFs. That was expected, and that has been confirmed that South Korea will be hiking the minimum deposit requirement for chip leveraged ETFs. South Korea's FSC regulator announcing these measures on single stock leveraged ETFs. So that is important given the volatility, of course, that we have seen in the Kospi that closed the session down 6.4% today. A reminder of the volatility in today's session. And that is the detail. We'd seen this coming, of course. We'd expected some announcements, and now we have the details around part of the story in Korea that has caused, at least been attributed to some of that volatility, which is these leveraged ETFs exposed, of course, to the chip story in South Korea. Let's check in on the core 6 right now in Europe. The focus, talking of chips, on the likes of ASML, of course, on the back of the strong demand and upgrade to CapEx spending coming through for TSMC. How much of that CapEx will be flowing to ASML and its lithography machines? That company right now, the stock is up 2%. On the downside, a little bit of pressure in the defense space. Rheinmetall is down 1%. LVMH in the luxury space down 0.4% after luxury performed well yesterday. Novo within health gaining 1.2%. Schneider Electric a little weaker by 0.3%. And Nestle consumer staples down 0.6%. Let's get a check on some of the individual stocks on the move with Chloe Melly. Chloe.
Good morning, Tom. Well, at the open, we had all of those tech names up in the green, but now we only have ASML up in the green. This was off the back of those TSMC numbers, which came in quite strong, with TSMC hiking its outlook for spending and for sales as well, which is a sign of this continued AI spending and AI demand. And so this is particularly good news for ASML, given that it is a key supplier to TSMC. But then we are not seeing that reflected in the shares of some of those other tech names this morning. Moving on to Publicis, which is in the green this morning after narrowing its guidance to the top of the range, and also sales came in ahead of expectations. It's an advertising company that has been able to better weather the downturn in advertising spend, and has also been able to push back against those concerns around AI on the media industry by integrating AI into its own business. And so we're up slightly this morning for Publicis. For Nordea, however, in the banking sector, we are seeing some weakness this morning. It was down a little bit more strongly earlier. It had fee income beating estimates, but then net income actually missing estimates. And so this is a part of all of those Nordic banks reporting this week, and we've seen quite a mixed picture so far. So we'll see what the other banks, the other big banks reporting next week, tell us about the health of that sector moving forward. Moving on to Rotork and ABB, we have this M&A story, of course, with ABB buying Rotork, the industrial components company from the UK, in a $5.5 billion deal. We are seeing that really boost the shares in Rotork this morning, up more than 66%, but some weakness for ABB this morning on the back of this deal. And finally, let's move over to DeLonghi, which is a household appliance manufacturer, has been rated a new buy by Goldman Sachs analysts, with the analysts saying that the company is going to be really benefiting from this exposure to coffee and to how much people are loving those luxury espresso machines. And so we're up about 4% on the back of this new buy rating from Goldman Sachs.
Chloe, thank you very much indeed for some of the stocks on the move this Thursday. Chloe Melly. Coming up, incoming Prime Minister Andy Burnham here in the UK, of course, reportedly making his pick for the next Chancellor. We discuss that and the potential market implications. That's coming up. This is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg. For U.S. markets, we are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The data center is the fast growest segment of ABB. Last year, it accounted for about 9% of our company revenue, but it is growing in the first quarter and in the second quarter more than 100%, almost triple-digit growth. When we talk with customers, so our large customers, the pipeline is very strong. Also, so the outlook in this sector for the next quarter and years is very strong. The whole trend of electrification of everything, that's a long-term trend.
A long-term trend. ABB CEO Morten Verod speaking with Bloomberg after reporting earnings. The stock is currently down 2.2%. Let's stay on that strong AI demand. Shares of ASML higher this morning after TSMC raised its capital spending and revenue projections for the year. Let's bring in Bloomberg senior strategist Neil Campling to walk us through the market implications for this, what we've been seeing. The European reaction then to what look like very, very strong numbers for TSMC and confirmation that that AI demand story continues to hold up.
But yeah, Tom, I think no one will be surprised by the AI demand story, but it's rare to see companies of $1 trillion growing revenues of 40%. It's pretty amazing. Then they also talked about on the call the CapEx, and obviously they're talking about an incremental hike in the CapEx spend. Positive read for ASML, who are a key chip equipment provider for them. So all of the narrative is certainly positive. The AI demand is very strong. There was one small negative in the print that I did notice this morning, and that is that smartphones were the only segment to decline year on year. Now, we think TSMC's biggest customers away from NVIDIA are the smartphone makers, Apple and Huawei, for example. And if that division is in decline, then it suggests maybe that what's happening is that the units of smartphones are going lower, and that's probably because of the cost inflations of memory chips and the AI chips, etc., which wonders whether we're going to feel that in our pockets as consumers later in the year.
Okay, so that's a potential fly in the ointment, at least for consumers. Some changes being announced by South Korea's regulators around these leveraged ETFs, single stock leveraged ETFs. How significant is it? Does this put a cap on the volatility that we've seen in the Kospi?
That would be nice. The one thing to mention on this is it says new ETF products. What happens to the existing ones? Because there's a lot of existing ones already in the market. We've seen some other similar products that are very large in terms of size. So it's great that there is some movement that's taken place to prevent that. But if we look at, even within the US, look at the NASDAQ. Apple has a market volatility compared to the index of 1. Micron, peer to Hynix in South Korea, has a market volatility that's twice the size of the market. So so volatility is a key issue, not just in Korea, but also in tech, and particularly in memory. Okay. So all measures to cap that, I think, are a positive sign.
It doesn't sound like this will necessarily solve the volatility in its entirety, but it's a step, maybe in that direction. Neil Campling, thank you very much indeed. Bloomberg's senior market strategist, of course. From volatility in what's happening around semiconductors to volatility in UK politics, incoming UK Prime Minister Andy Burnham is reportedly set to name Home Secretary Shabana Mahmood as his Chancellor. Let's bring in Bloomberg Markets Today editor Sam Unstead, in fact. Sam, we'll make sure we get your name right. First off, this was welcome. There were reports of this yesterday, Financial Times and others, and it was welcomed by investors, at least when we looked at the reaction to the pound and gilts.
Yeah, so it was. I think it's you have to put a bit of nuance into how it was welcomed, because what had been speculated upon for quite a lengthy period of time is that Ed Miliband was going to get the job. Yeah. And in the Market Slide Pulse survey over the course of the last week, that was the least market-friendly option. That had been kind of bubbling around in the market. So I think what you saw yesterday with the pound going up, and gilts were a bit weaker today, but they also had a little bit of a rally yesterday, is more a reaction to it not being Ed Miliband rather than it being Shabana Mahmood. Because at the moment, we don't actually know a huge amount about what Mahmood would be like as a Chancellor. But she's on the sort of right side of the Labour Party, what would be seen as a more fiscally conservative part of the Labour Party, and it reduces some of the worries that people may have about
described, as a centrist, blue Labour.
Blue Labour,
am I right in thinking, because the markets could be getting this wrong, she doesn't have any, I think my understanding is she doesn't have any economics credentials and hasn't worked in the market. Miliband worked in the Treasury. He knows how to operate in the Treasury. He worked with Gordon Brown. He has that experience. There's a risk that investors may be getting this one wrong, no?
Oh, there's risks all over the place with it, because I think, so as I say, I think you're seeing a sort of short-term reaction. What you now need, and what we've needed throughout the whole process, really, is more detail once Andy Burnham is in position, once all the appointments are made, about what may actually happen. And from what we have at the moment, as I say, there's not much history to go on, in terms of what kind of Chancellor Mahmood would be in terms of actual policy. It's just that from the political standpoint, the much broader political standpoint, as you say, it's the blue Labour side, it's not the left side, so there's a little bit less concern.
Whoever's the Chancellor, will they be inheriting a better and stronger UK economy?
Maybe marginally, although one thing about the GDP data today back from May was a little bit better than expected, but it's not spectacular. It's okay. It's resilient. I think that resilience has actually remained pretty much the case over the course of the last couple of years. With a bit of fluctuation in either direction, but in the end, the UK at the moment still is pulled around by lots of global factors that are way out of its control. And so even borrowing costs this week, there was a really significant shift in borrowing costs after the US inflation data, right? Gilt yields had been up all day. That completely got wiped out by inflation data from a completely different country. And then you've got obviously oil prices that's been sending gilt yields a bit higher over the course of the last few weeks. Two things over which the UK has very, very little control. So that picture, which has been the case for Rachel Reeves and for Keir Starmer over the last couple of years, is the same.
Where does this leave the BOE, Sam? What are expectations right now? Francine Lacko was speaking to Sarah Breeden, Deputy Governor, yesterday. How are traders, how are markets thinking about the BOE? Briefly?
So with the oil price going up, bets on rate hikes went up again. They are now hovering sort of 50-50 between there being 2 this year. That was already a bit hotter than what I think a lot of economists had thought about where the market is. So probably it doesn't change the picture too much just yet, but really the dependency is all about the oil price. And again, not in the UK's control.
Sam, thank you very much indeed, as ever. Sam Umstead, of course, from our Markets Today team. Coming up, Ukraine continues to innovate in drone technology in its war with Russia. We're going to discuss with the CEO of defence tech firm U-Force. That is next. This is Bloomberg.
Look at the more successful economies in the region. The key to their success is continuity. But the way our constitution is written, it actually encourages a lack of continuity. And that's a problem. The term for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Welcome back. This is the opening trade. We are 30 minutes into today's session. European stocks having been flagged for a positive session, actually turning negative now, down a little over 0.1%. The FTSE 100 is falling 37 points. The CAC current is off by about 19 points as well. And over in Germany, the DAX currently falling 0.2%. Again, reversing some of the earlier modest optimism. Brent is at 84.80. Oil is currently down around 0.2%. You're seeing yields up here in the UK, gilt yields up between 2 and 3 basis points. But again, across equities, a little bit more negative versus what we saw at the start of the session. Let's get you up to speed on some of the geopolitics right now. We've been talking, of course, about what's happening in the Strait of Hormuz, but we should not turn our attention away from Ukraine and Russia as well, given Ukraine's attacks on energy refineries and infrastructure in Russia. We have an update crossing right now. In the last couple of minutes, Ukraine's army saying that 6 Russian tankers have been struck in the Black and Azov seas. That is according to Ukraine's army. So an update there in terms of course, what Ukraine would see as success in terms of targeting those Russian tankers in the Black and Azov seas as well. We know energy shortages are a real challenge right now for Russia as a result of some of these attacks by Ukraine into Russian territory. It comes as Russian gasoline and diesel prices, of course, have surged further due to those drone attacks, Ukrainian drone attacks. Regional authorities across the country introducing fuel rationing to address panic buying. Moscow has retaliated by targeting dry cargo ships at Ukraine's key shipping ports. Let's bring in Tony Halpin, who leads Bloomberg's Russia economy and government coverage. Tony, what is the economic impact right now in Russia of these Ukrainian attacks?
Well, it's becoming increasingly serious and perhaps more importantly, increasingly visible to ordinary Russians. As you've noted, many are spending hours a day now simply to fill up their vehicles in some regions where agriculture is an important industry in Russia. Local officials are saying that they need deliveries of diesel in order to ensure that the harvest is brought in on time. Otherwise, long-term, there may be a threat to food supplies. So it's having a cumulative and snowballing effect, and it's very difficult for the Kremlin to see what it can do about it, because ultimately it's down to the fact that Ukraine is attacking Russian oil refineries, fuel storage depots. They've shown that it's quite possible for them to evade Russian air defences to continue those strikes, and that therefore the problem may continue to grow, and that's going to present a big problem for Putin as they go into autumn and winter.
Does Washington pose another problem for Putin? Is the US getting closer to another sanctions package on Russia? Does the Trump administration have appetite for that? What have we been hearing from Jameson Greer and others about this?
Yes, that's clearly another vulnerability for Russia. They depend very heavily on oil sales in particular. That's why we're seeing Ukrainian attacks, for example, on vessels in the Black and Azov Seas to try and disrupt that sort of trade. And the US now, with the proposed bill that would give President Trump the right to impose as much as 100% tariffs on countries that the largest, 5 largest purchasers of Russian oil, that threatens to further undermine Russian income and Putin's ability to fuel the war machine. It has to be said, though, that there's been some sort of reluctance to go too hard on this kind of sanction in the past, not least because, as we've seen, global oil markets are disrupted by what's going on in the Middle East.
Tony, thank you very much indeed. Tony Halpin with that update in terms of the impact on Russia and its economy. Staying with the defence story, let's bring in Oleg Rodzinski then, CEO of defence tech firm UForce, which of course has a portfolio of autonomous attack vehicles, both sea and air and land, being used in Ukraine. Do you know if it's your drones that have been used in these latest attacks on six Russian tankers?
I can't comment on the most recent operations, but I know that our sea drones have been the most popular sea drone in the Black Sea operations for many years now.
Okay. Are we seeing a paradigm shift in terms of Ukraine's ability to strike targets inside Russia, and what does that mean?
Yeah, absolutely. What we're seeing is the first time Ukraine is employing a completely autonomous multi-domain set of operations where they combine sea drones that get to Crimea on overseas, Sea of Azov as well, and then launching air drones from the sea drones. So what you're seeing, for example, in the combination of products like UForce is where you can replace the effect of a Tomahawk missile by having a cheaper boat get to the beach and then launch a cheap drone from it and then hit an air defense system that's worth $500 million with a 20,000 drones at 1,000 kilometers away. And that used to be the only job of a Tomahawk missile, but now you can do it for $20,000.
Has Ukraine out-innovated Russia?
Oh, definitely. Ukraine has
Can you maintain that gap?
If we are continuing to employ the same workflows, same ways to operate at same shoestring budgets, we'll continue innovating.
Okay, that's interesting. Have you out-innovated the US? Are you seeing US demand? Are you in conversation with the Pentagon? Is the US interested in your technology?
I cannot comment on conversations, but US demand has been extremely strong in terms of signal. And what I'm really excited about is that with all the changes that US is delivering right now in terms of their purchasing structure, like the new DRPM office, the Defense Autonomous Warfare Group, etc., they have centralized all of the budgets for autonomous systems in a way that is now moving capital extremely efficiently at large scale to things that really, really matter. The drone dominance program, there's a number of programs for unmanned surface vessels, there's programs for sensors, communications in the non-environments, etc. All of that is obviously really good for UForce.
And you're confident you'll be able to get access to some of those contracts and some of that funding?
We are setting up our U.S. operations in a way that treats us as a U.S. subsidiary with SSA, which basically is the same way as BAE or Kongsberg or Saab is operating in the United States and gives them advantage.
The U.S. has recently used Corsair unmanned boats, drones, in Iran for the first time. There's Anduril, of course, as well. And on the software side, there's Palantir in the US. How do you see the competitive landscape in the US? What is your USP versus some of those competitors?
Well, US has also used UForce products, reportedly according to the US, in the Pacific, which we think is a much more strategic region versus what's happening in the Middle East right now. But overall, the competitive side is there's a lot of ocean on the planet, and all of that will need to be covered by autonomous systems that are not only keeping a watch on military assets, but how many, 20,000 Chinese fishing vessels, and so on and so on. There is a ton of assets to cover. There is a ton of assets to defend against. And there is 20,000 islands in the first island chain to secure.
So that requires scale. How do you scale? How do you build out your drones your sea drones, your air drones, your land drones at capacity? What are the constraints? What are you doing to ensure you can scale?
So we are making sure we are present in terms of sovereign manufacturing in as many NATO countries as we can be, because that is where the real bottlenecks come from. When you're deploying a system across a theater like PACOM, for example, you need to get to tens of thousands of units. And also, soldiers who are on the front lines could be on an island or somewhere have a limited capacity to learn 10 different systems. So there is inherent stickiness built into this market where once your system is battle proven, it's done what our systems have done across 250,000 missions we flew, a number of Russian warships that we sunk, then it is your opportunity to become a system that militaries will use for, I would say decades in this world, but at least years.
Okay, so that's the stickiness. How many units are you producing now? How many units can you produce next year?
We produce thousands of sea drones, and we'll continue growing that. And then in terms of aerial drones, it's hundreds of thousands, and ours are big. These are not small FPVs.
What are the biggest constraints, the supply chain constraints?
Batteries coming not from China. And especially for extreme environments, you need batteries that don't reduce the drone capacity to fly far in -60 to +60 degrees, because the combat operations these days are happening in all kind of extreme environments.
Are you able to source outside of China? Are you sourcing components from China right now?
We are trying not to source components from China. For our US and European sales, there is absolutely no Chinese components, because that's the world we live in. But what's really difficult is, and where we're focused, is building up our own vertically integrated supply chain that only depends on European or American components. There is that. We're already operating like that. But the technological advantage and experience of the Chinese side suppliers has probably years to cover for the European and American.
What do Middle East orders look like? Is there a world in which we can use drone technology, sea drone technology, to open up the strait at some point in the future? Is that unrealistic? What are the dynamics you're seeing at play in the Middle East right now?
I actually see sea drones and similar technologies, especially sea drones used as a platform, like our Magura sea drones, setting up a fully autonomous security kill web across Middle East. So imagine the Gulf with hundreds of boats just loitering there in the predefined locations, some of them carrying counter-drone, counter-Shahed capabilities, some of them carrying ISR and rescue capabilities, some of them carrying strike capabilities. And so this kill web just sits there, and whichever threat comes its way, it can go autonomously and either strike into the inland Iran, or take out the submarine, or take out the ship or a boat that's coming at them. And you can set that up permanently, fully autonomously, no humans on the line whatsoever. And that will create multi-layered defense for any kind of threat that will originate from Iran.
Okay, this is a kill web that you're describing, Oleg. It's a terrifying prospect. Maybe it's a necessary prospect when it comes to some regions of the world. Do you see consolidation in the drone sector? There's hundreds, at least over 100 startups just in Europe alone focused on drone technology. Is there a bubble? Is there going to be consolidation?
There'll definitely be consolidation. I'm not sure all the investors fully understand how government procurement works and how the scale works when you end up being in a program of record. And so there will be definitely a time when hundreds of these startups will go on for sale because they couldn't raise follow-on capital. And that's where I guess...
Are you looking at acquisitions?
We're definitely looking at acquisitions, at least 5 right now.
5 acquisitions you're looking at right now?
Yes.
In Europe or globally?
In Europe, mostly.
In Europe.
Mostly around supply chain, because supply chain is key. But then we're seeing these companies coming out of Ukraine that are extremely effective, still haven't reached scale, and they do one thing extremely well. But at this point, both in the Ukrainian battlefield and abroad, you got to have a portfolio that's fully integrated, multi-domain, fully autonomous, just like we do it with UForce.
Oleg, thank you very much indeed. Appreciate you coming to the studio this Thursday to walk through what is happening in terms of the defense space, of course, from UForce. Oleg Rodzinski, CEO of UForce. Meanwhile, US Trade Representative Jameson Greer says stability in ties with China remains a top priority. His comments coming ahead of the expected visit of President Xi Jinping to the US in September. Greer says the two sides will take stock of Beijing's commitments during the summit. He spoke exclusively to Bloomberg at the Aspen Security Forum.
So China's compliance with the rare earth elements of our agreements, it's not perfect. I think everyone knows that. You can read that in the paper. That being said, we are getting a flow of rare earths. We don't have factories shutting down because they don't have it. But again, we really want to be in a position where we were, in 2024 and 2023 in President Trump's first term, where we had a regular flow of rare earths. We also know that the Chinese, they use rare earths for economic coercion. They did it in 2010 and 2011. They're doing it now, so it's not necessarily surprising. But we're continuing to to have some flow, and where we have gaps, where we have problems, the Secretary of the Treasury and I, we work with our counterpart in China to try to loosen that flow up. Sometimes we're more successful than others. One important thing is we're moving forward in the U.S. on rare earth production. One of the things I'm doing on my trip out west here, I'm going to Utah to visit a facility where they've discovered rare earths in the Utah desert, and they're refining them and further manufacturing them at a facility in Utah, which is a great development for U.S. national and economic security.
You've got rare earths. There's huge pharmaceutical dependence as well. And I wonder how you're thinking about that, the way that you can kind of curb our reliance on Chinese pharmaceuticals and ingredients.
Yeah, we think about this a lot. This is really critical, because at the end of the day, if somehow you lose access to Chinese inputs, it can be a huge challenge for our own manufacturing base. And some people will say, well, what about India? Fine, but a lot of the inputs that India uses also come from China. One great thing that we're seeing as we try to encourage companies to reshore is we actually have commitments from 17 pharmaceutical companies, the largest and the most major pharmaceutical companies, not only to lower prices of medication here in the U.S. Pharmaceutical prices have gone down by 2.5%, but they've also agreed to reshore here and to manufacture here. And so we have companies like Eli Lilly and Novartis and others actually pouring concrete and superstructures going up in new facilities in North Carolina and Indiana and Southern California.
There's a long way to go until this meeting in September when the Chinese president comes to the United States. But let me ask you lastly sort of how you're thinking about that. You were so integral to the conversations that took place in Beijing. What are you expecting, deliverables-wise, to come out of that meeting in Washington in a couple months?
Well, the number one deliverable we always have between President Trump and President Xi is to continue the stability of the relationship. Both of these leaders are very committed to having a strong and solid personal relationship. Now, that doesn't mean we don't have issues in the broader relationship. Obviously, we do. China is a big challenge for the U.S. in a lot of ways. But we want to make sure we're delivering stability. There's never been a situation where the U.S. side or even the Chinese side has gone out and said, everyone should expect a comprehensive agreement that resolves all issues. Like, no one's ever promised that, so that's not what we expect. We will have an opportunity to take stock of Chinese commitments with respect to purchases of soybeans and other agricultural products. We'll take stock on the rare earth issues we decided. So I think it'll be a moment for stock taking, confirming the relationship, making sure that China's complying with what it's agreed to do. That's really what we're looking forward to in this meeting.
US Trade Representative Jameson Greer speaking exclusively with Bloomberg's David Gura. Coming up, Wall Street is back on top. Goldman Sachs leads a record banking haul. We break down the numbers next. And this is Bloomberg.
Today, Wayfair sees immense potential in brick-and-mortar stores.
When we got into physical retail, our view was that, even if the market continued to grow for e-commerce, probably a large chunk of the market in this space would stay offline.
Kate Gulliver showed me around Wayfair's new 150,000 square foot Atlanta flagship store.
when customers who have seen us online come into the store, they're generally a bit surprised by actually the breadth of what we offer. Often if you're going online, maybe you're looking for something particular. But when you come into the store, you walk in, you see, the market square, you see all these pillows, you see the decorative accents. So what we're seeing actually is that in store, we do really well in some categories that online are, less a percentage of the total.
How does technology help in kind of making it seamless online to store?
I think
and vice versa.
The biggest thing is for the customer on the front end, that she can be in the store, that she can actually shop here, go back home, complete that purchase. And if you look at these sort of price tags and everything, they're all these digital tags. That's because they're the exact same prices they are online. So you're not going to be surprised that you saw something in the store and then you decided to purchase it online, that it's somehow different and that the offering is different. It's actually very consistent, but when she's here, she can have her app open and everything that she's doing here can be very similar to what she's doing at home. And I think that consistency is quite important.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
Welcome back to the opening trade. We are 49 minutes into the Thursday session, and sentiment has turned negative, currently down 0.5% on the European Stocks 600. US futures also in negative territory now. A couple of hours ago, you were pointing to gains in the US, and futures in Europe were pointing a little to some upside as well. But it has turned around, and you're looking at Nasdaq 100 futures pointing lower by 0.4. S&P E-mini is pointing lower by 0.1%. That's despite the fact that the earnings season is coming through with some decent strength, particularly when it comes to Wall Street banks regaining their swagger. Goldman Sachs stock pricing, and that price jumped to its highest ever level as it led the way to a record-smashing $100 billion in profits. That's across the sector in the first half. For more, we are joined by Stephen Ahrens, our EU finance team leader. Stephen, we got Morgan Stanley yesterday to kind of round things out from the big US banks. Where do things stand? How much strength have we seen across the US bank earnings?
I mean, yeah, I think you just mentioned the biggest figure here, $100 billion in profits for half a year. I mean, that's absolutely insane. I don't think it's ever been like that before. They're smashing all records. As you've probably seen, the trading units in those banks are performing, firing in all cylinders, and the investment banking, capital raising units are also doing extremely well. So all of these things are coming together for, I think, a very strong moment for U.S. banks, including Goldman, of course, Morgan Stanley, J.P. Morgan. All of these are having their big moment in the sun.
What does it mean then? Can we expect that European banks are going to perform well as well? That the profits, particularly for the trading arms and in the investment bank divisions, are going to perform well?
So yes, I would say so, but there's a but. It's the past quarters, or especially the first quarter, has shown that European banks tend to benefit a little less from all these trading boom than the American ones, and I guess that trend is likely to continue in the second quarter. So yes, all the volatility in the markets is driving people to trade equities, hedging and that kind of business, which boosts the trading units in those banks, also the European ones, and all the capital raisings we've seen have boosted the investment banks. So again, European banks have benefited, I'm sure, but maybe not quite as much as the US ones.
Stephen Ahrens, thank you very much indeed on the US bank earnings and the strength that's coming through and the potential read across to European lenders as well. Let's look ahead to what else we're watching throughout the day. NVIDIA's CEO, Jensen Huang, is in Japan. He's been and will be speaking at the Japanese Ministry of Economy, Trade and Industry event in Tokyo, so a lot of eyes on him right now. The IEA is set to release its global critical minerals outlook report, meanwhile, and at 1:30 p.m. UK time, we'll get US retail sales and initial jobless claims, so some important data out of the US later. 9 p.m. UK time, meanwhile, on the earnings front, it is the streaming company Netflix coming through at 9 p.m. UK time. And later, US President Donald Trump will be addressing the nation. Let's get back to the broader markets right now. Bring in Skylar Montgomery-Koning. And Skylar, I want to start actually on UK assets and the pound. Seeing some strength yesterday on reports that maybe traders, maybe the investment community might be getting the chancellor they want in Shabana Mahmood. What, does that mean a significant repricing of UK assets? Is this going to be sustained?
Yeah, I mean, I think this is one of those that you have to look at the pound move as a confluence of factors, right? So yesterday we also had dollar weakness that's contributed. That's post-weaker inflation data. Europe isn't looking so hot right now given where gas prices are. And you're also seeing from a risk perspective, you know, carry is doing much more positively. And I think, yes, you know, politics can feed in there. But if you look at the move in relative rates, yes, the UK gilt market outperformed yesterday. But the relative outperformance at the long end is by no means massive. It's very muted, I'd say. And so I think politics is less of a driver there than those other factors. And I'd point to carry in particular as being important. Carry needs a couple things to do very well. It needs significant interest rate differentials, and it needs low volatility. And we have both those right now. FX volatility in particular is in the doldrums, and you have central banks that have divergent policy paths. And one way you can see that influence is just plotting what the last 2 weeks of currency moves in G10 are versus the expected policy rate 12 months from now, and the R-squared of that is something like 60%. And that doesn't look like it's going to change, and I think particularly for the UK, because you had short positioning that was pretty extended. As you have those moves and you don't have a negative catalyst within the horizon that you're looking at, it's very expensive to hold on to those shorts if the policy rate is high and expected to stay at that level.
And we're seeing flows as a result of the carry trade into the pound because of the higher rate. So, and you're funding that from cheaper currencies, lower yielding currencies. And you're funding and you're putting that to play in an environment where you have rates at around 4%.
Yeah, absolutely. And I mean, that's one of the things that really weighs on the yen. I think something that's unexpected more so recently is the way that it's also put on the Swiss franc, because the Swiss franc had been this haven people were going to. And now it's not looking so great because risk sentiment is a little bit more positive. That is a risk given the US-Iran tensions that you have, but it looks like the market's become numb to that in the same way that it's become pretty numb to political risk unless something goes very wrong in the UK.
And you've been talking about, you're kind of pushing on this idea that that markets are becoming somewhat immune, at least, to some of these dynamics, and particularly around Iran. I mean, Brent is still around $85 a barrel. There's no resolution in place or in sight, and yet the equity markets are not completely freaking out. I mean, a little bit of downside pressure today.
Yeah.
But is this an equity market? Is this a broader market that is going numb to what's happening in the Strait as well?
I think absolutely. Some of that is there are mitigating factors, right? On the supply side, you've had exports from the U.S., you have reserves being drawn down. On the demand side, you have China not consuming as much as it was previously, but there is a limit to that, right? And the risk is that if you have all these factors going in the one way and that there's also an expectation that Trump won't want to escalate, even though it's not entirely in his control, the risk is that moves higher, especially as you continue down this path of negotiations where stuff isn't actually flowing through the Strait of Hormuz. And something I'd point to as a worrying sign is that you do have markets that have higher levels of concern. So gas markets, for example, have a higher level relative to oil, or if you're looking at something like refined products. Yeah. And I think you are seeing that differentiation within the equity market, and that European equities are trading more highly correlated to commodity prices in oil than, say, the U.S. is.
Do you have conviction right now on what Fed Chair Kevin Warsh and his biases are? Just briefly, do you have clarity on where he stands on rates?
I mean, inflation fighting credibility is the clarity.
Right.
I think, you know, I did have my view change slightly on the inflation data that we've had. You need a series of softer prints to see that shift. I think it makes sense that we've pushed out hikes rather than eliminated them, but it was certainly a softer print.
Okay, interesting. Skylar, thank you very much indeed. Skylar Montgomery-Koning. That is it for the opening trade. Checking back in briefly on your European benchmark right now, the Stock 600 is down 0.5%, so the negativity is there. US futures also pointing lower. The S&P E-mini is off by 0.2. NASDAQ 100 futures pointing lower by 0.5%. That is it for the opening trade. We'll see you on Friday. The Pulse is up next. This is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Bringing you the latest business news wherever and whenever it happens. I'm Scarlett Fu, reporting from America's biggest military shipyard. This is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
The main chip maker for NVIDIA, TSMC, beats high expectations on the AI boom and plans to ramp up spending even further. The U.S. launches more airstrikes on Iran, including a supertanker linked to the country, with President Trump threatening to intensify the bombardment. Plus, the UK economy unexpectedly grew in May, with the pound hitting its highest level in a year, on speculation that incoming UK Prime Minister Andy Burnham will name Shabana Mahmood as Chancellor. So there is quite a lot of going on in the markets. We not only look at gilts and sterling, but of course we look at oil as we do on a daily basis. U.S. stocks seem to be pausing again. A lot of the focus is on artificial intelligence, what happens with those earnings and whether it justifies further advances in the AI trade. And there's still a lot of uncertainty swirling around in the Middle East. Dollar a little changed. Gold was actually on track for its first day of first day of losses in 3, so you can see Brent 84.37. If you look at the European markets map, so a lot of the earnings that we're seeing in the U.S., especially from the banks, are also trickling through Europe. I have to say one of the other markets that we're looking for is maybe Seoul. We saw some sharp volatility in its chip-making heavy, and that's driving another steep decline in the Kospi index. Here in Europe, we're seeing a little bit of pressure on the FTSE and, of course, on the CAC 40 in France. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, TSMC has raised its capital spending and revenue projections for the year, a sharp increase that reflects the company's confidence in global demand for AI infrastructure. It's also reported a faster than anticipated rise in quarterly net income. So let's get more from Matt Bloxham, senior analyst with Bloomberg Intelligence. I love speaking about AI because every day there's something new, and you can look at the earnings and say, right, what's good and what's bad. What did you take out of TSMC?
Yeah, I mean, I think the underlying theme here is that still the industry as a whole has huge confidence in the next, say, 3-year outlook for demand for capacity. And I guess that's not surprising. We've seen the CapEx numbers from the big hyperscalers, so the Metas, the Googles, go up a lot. We're looking at over $700 billion of CapEx this year, and maybe as much as $900 billion next year. And I think it's been a little bit difficult for the market to kind of figure out exactly how that's going to trickle down into the supply chain. Obviously, TSMC is a massive part of that supply chain, being the main provider for NVIDIA, amongst others. And so I think what you're hearing from TSMC today is a bit of a catch-up. That they're seeing the clarity of that kind of order book come through. And obviously, it's a big issue for them because there's a lot of pushback from investors that, hey, we've seen this kind of cycle before. Don't go too quickly in your investment. And so I think they've kind of really been having some quite tough negotiations with their big customers, trying to get as much clarity as they can about the 3 or 5 year view so that they can feel confident in the investment. As you say, this year, CapEx going up into the kind of mid-$60 billion mark, maybe 8 to 10 billion higher, but also signaling that they're going to spend a lot more in the next 3-year cycle than they have in the past 3-year cycle, including huge investments in the US. And they need to increase their US investments because the whole kind of Make America Great Again kind of proposition.
So Matt, because they're the main provider to NVIDIA, what does it give us? I mean, does it really give us a sense of the global AI infrastructure spend?
I think, it does, or at least it gives you a sense of what these big companies are thinking they're going to spend. And I think there is still a bit of a big if here. And the question is, obviously, one of the other big themes we're talking about at the moment is token maxing. Yeah. So, every big company is suddenly realizing that people are using way more of this stuff than they thought. It's costing too much money. They're not seeing the returns yet. And they're having to think, hey, hold on a minute. We need to kind of slow down a bit. Now, if that becomes a persistent trend, then maybe these big CapEx plans that the hyperscalers have either don't come through in the end or they are slower to materialize. And if either of those things comes true, then all this kind of optimism we're hearing from TSMC and SK Hynix will kind of start to get tempered. So I think there's quite a big if at the moment out there that people are putting a lot of scrutiny into.
Matt, thank you so much. Matt Bloxham there from Bloomberg Intelligence. Now, as earnings season gets underway, investors will be watching whether AI-related investment spending remains strong. Well, I'm joined by Claudia Panseri, France Chief Investment Officer at UBS Wealth Management. Claudia, we'll get on to, of course, geopolitics, energy and oil in a second. But what's your take on AI right now?
Thank you. Good morning, Francine. Yeah, I think we are essentially surprised every quarter by the amount of CapEx spending. But I have to say that I'm also surprised about the volatility we have around AI names over the last 3 or 4 weeks. I think there are big questioning about monetization and also questioning about if this CapEx can be easily funded through operating cash, but also how much debt need to be issued to cover the amount of CapEx has been announced so far. So, of course, everyone is revising up the amount of CapEx spent. We had for this year, at the beginning of the year, something like 700 billion. We are already at more than 800 billion. Next year is 800 billion. For the time being, we see the companies still surprised on the upside. But I think we need to watch out if there is some change in the CapEx trend. For the time being, we don't see this change, but it's very important to keep in mind that there is a big concentration in the indices, which is bringing a lot of volatility as well.
Yeah. But Claudia, do you think some of this profit growth can actually support this broader rally? Because we're also seeing global equities near these record highs. Can they stay at these levels?
I mean, we see a bit of rotation. It's quite interesting. We had a few names yesterday publishing very great results. Performance was not great. There was a bit of pressure on momentum names and AI names. And at the same time, we had a good performance of the Magnificent Seven. So we see clearly that all the stocks which have been underperforming since the beginning of the year are now starting to reperform well. And when we look into the performance in terms of earnings growth, AI, a tech name are still driving up, but there is a rebound in earnings momentum outside of the tech. One of indicators we look quite a lot is the ISM new order and ISM manufacturing. Both indicators are doing pretty well, are recovering pretty fast, which although mean that we should observe earnings growth outside of the tech names. So we should probably diversify the breed more and be focused on broadening of the equity market.
When you look at equity markets, I mean, regionally, and you also make this point in the notes, like regionally, it's very diverse. So is there a region that you want to be more invested? We know, for example, I mean, there's a lot of concern about South Korea and volatility at the moment, but do you have top countries where now is the moment to get in?
I think the top countries here are, of course, still emerging markets, where both Korea and Taiwan represent a big part of the market cap, but also China, which has been underperforming since the beginning of the year, look appealing in terms of valuation. We like India. We recently re-upgraded India. Valuation is now appealing after the underperformance. We see within Europe, even if on the European market we still have a neutral allocation, we have some themes which are particularly attractive. The DAX is attractive, has not been performing as many were expecting at the beginning of the year. So there are plenty, I think, of segments within the global equity market which are appealing and seeing an upside in the earnings coming. So clearly the market should be driven not only by a few stocks, as this has been the case since the beginning of the year, but regionally, as I was mentioning, and in terms of sector, we should probably be more diversified. Financial sector, for instance, we had some results already in US. Results are good. Financial has been quite underperforming since the beginning of the year. So there we have a potential upside coming in the next few months. So I think there are a few segments within the global market and across the region where upside still persists until the end of this year.
Claudia, thanks so much. Claudia Panseri from UBS Wealth Management, of course, stays with us. The U.S. also says it has completed another round of attacks on Iran to degrade the country's ability to attack ships in the Strait of Hormuz. Well, let's bring in Paul Wallace, Bloomberg's managing editor for the Middle East and Africa. So, Paul, what do we know about the latest strikes, on how they also fit into this overall conflict?
Hi, Francine. Well, these skirmishes which began, or the latest round of skirmishes which began around a week ago, seemed to be worsening. The US struck Iran for a fifth straight day last night, and Iran responded again by hitting US bases, or targeting them at least, in places like Bahrain and Kuwait and Jordan. So both sides seem pretty entrenched in their positions. None of them are backing down, and there's certainly no sign that Iran is backing down in the face of Donald Trump's threats to escalate US strikes, unless Tehran says it will give up control over the Strait of Hormuz and stop attacking ships there. So I think we could be in for several days, at least, of a period of several days more of skirmishing and strikes around the Persian Gulf.
President Trump continues to claim Iran is seeking more talks. So what are the risks going forward?
He has said that. There's been no confirmation publicly from Iran that it's looking for talks. There was some sign of easing yesterday when Donald Trump announced that a U.S.-Iranian citizen who had been incarcerated in Iran since late 2024 was released. He said that was a gesture of goodwill from Iran. But so far, it doesn't really seem to have moved the needle much. And this war is now firmly focused on the Strait. Iran insists that it keeps control over the waterway, and that any ships passing through it must seek its permission and abide by rules which may include charging them fees. The U.S. is loath to accept that and says ships must have free passageway through the crucial choke point. And because of this standoff over Hormuz, the sides are not making any progress in their talks over Iran's nuclear program, which is a thing that needs to be resolved for there to be a permanent peace. But at the moment, there's no sort of forward movement on that, and all the attention is on who controls the Hormuz Strait.
Paul, thank you so much. Paul Wallace, our Middle East and Africa Managing Editor. Now let's get back to Claudia Panseri from UBS Wealth Management. Claudia, when you look at all of the unpredictability with, of course, the conflict and what it means for shipping, trade, and oil, equity markets, again, have looked through it. Can they continue to look through it by and large?
Yeah, I think once again the market looked through because the concentration of the performance is driven by AI, which is for the time being not really impacted by the rise of energy prices. What is surprising is that over the last 2 weeks, when the oil price were down to $70 a barrel, I had a lot of conversation with people which were revising down the energy price. In reality, we are still in the period of negotiation where the energy price will continue to probably trade above $80 a barrel. We have in our forecast $85 a barrel. Then for me, what is important is the relation between the energy price and monetary policy anticipation. We had after the PPI and CPI data in US some revision of the interest rate hike expectation. But if you have an energy price move back to $90 a barrel or $100 a barrel, of course, you will have more tension on rate expectation, a move on the yield curve both in US and in Europe, then the bond yield moving higher and the equity market to get under pressure. So I think we really need to watch very closely where the energy price is, where the gas price is, in order to understand what central bank will do next.
So what do you think they'll do next, Claudia? Because if you look at some of, the latest inflation figures, now I don't know whether they're a one-off, but it looks like we could see less increases than we expected just 2 weeks ago.
Yeah, in addition, I'm thinking that what Kenny Walsh has been commenting about even yesterday is that AI should increase productivity and the environment is deflationary. So it could be that the Fed look through this period of time where inflation is probably well above the target and so not make any rate hikes, staying on hold until next year. There is another element which people do not speak about, and is the job market. It's true that unemployment rate remain very low, but at the same time, the activity rate, participation rate is low and falling as well. So in reality, the job market is not as strong as it appears. So I don't think the Fed really need to hike rates. In our forecast, we have a Fed which stay on hold until the end of the year, and then cutting rate twice next year, which I know is a bit out of a consensus, but we stick to our central scenario.
It is a little bit out of consensus. What does it mean for how you play fixed income, both on the quality bonds in companies, but also government bonds?
Yeah, it means that government bonds and corporate, especially when you have quality corporate bonds, are very appealing. The carry is high. You have a spread which are low, volatility pretty low, so we stay positioned on high quality bonds. We don't search for long duration. We stay between 5-7 years maturity. So clearly is a way to have some carry in the portfolio. I know that bonds are less an asset class which diversified I will say the overall portfolio construction, but still for some clients which are looking for yield, the fixed income market in US and in some other region like in UK, it seems quite appealing right now.
Claudia, very quickly, is there anything that you'd sell right now, given all of these uncertainties and all the risks that could come at the same time?
Yeah, I think there are some risks which may come at the same time. Let's move back at the risk of monetization in the AI. Let's say we are wrong with our interest rate scenario. Of course, the market should be under pressure, but for the time being, we see earnings growth, being well-oriented. We see the quarterly data, which is once again confirming the trend. We don't see central bank hiking aggressively interest rate. Usually a market is under pressure when central bank tighten interest rate and monetary policy. So I think for the timing, the scenario is still positive, and we still see upside despite some risk we may have in the month to come.
So interesting. Claudia, thank you so much. Claudia Panseri there, France Chief Investment Officer at UBS Wealth Management. Now, coming up, the U.S. military hits a supertanker deep within the Persian Gulf as the peace deal with Iran all but collapses. We discuss all of this with Sanam Valkil from Chatham House. This is Bloomberg.
To the minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Anand, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Well, the U.S. military has hit a supertanker deep within the Persian Gulf near Iran's key terminal for oil exports. It's the first U.S. attack on a vessel since Washington reimposed its blockade of the country's shipping. Let's bring in Sanam Vakil, Middle East and North Africa Program Director at Chatham House. Thank you, Sanam, for joining us. When you look at what happened this week, it's unclear whether there's still a ceasefire, whether this escalates. How are you seeing the next 3 to 4 weeks progress?
Good to be with you, Francine. So we are, not in a ceasefire period because there is active conflict. And the Memorandum of Understanding does remain a scaffold for future negotiations and for bringing down the temperature. But for now, and what I expect maybe for the next 1 to 2 weeks, is continued volatility in the Persian Gulf as the U.S. strikes Iran's infrastructure in the south of the country, and Iran strikes back on tankers, but also Gulf states. This is all part of a misunderstanding or a misinterpretation of the Memorandum of Understanding. Iran is looking to keep leverage and control and authority over the Strait of Hormuz, while the United States very much expected the Strait of Hormuz to be open and operating under American terms and conditions.
But what's the way out of this? Or is there going to be de-escalation quickly because the midterms are also around the corner for President Trump? Or are the two sides not trusting each other?
Well, there's certainly I think, a low point of trust between the U.S. and Iran that was never high, because it's worthwhile reminding everyone they haven't had diplomatic ties for 47 years, and there have been 2 rounds of war thus far. The way out is by both sides climbing down effectively, showing some goodwill. There are some positive signals, and I appreciate they're hard to see or read. First of all, the U.S. is messaging that it is willing to go further in and strike Iran harder, but that hasn't happened yet. So it shows that they're not quite escalating in the way they could. The Iranians are also in their strikes, not escalating at their highest capability. So there are limits here with the possibility to climb the escalation ladder, as we say in my world. Thirdly, the Iranians did signal some positive movement in releasing or allowing an American citizen to leave Iran, somebody that had been detained for well over a year, and that could be a signal of goodwill. There are back-channel talks still underway, managed by multiple countries in the region and Pakistan. There are direct messages also going back between the U.S. and Iran, I imagine. We need a ceasefire. We need the memorandum of understanding to be better understood between both parties. We need to reestablish a deconfliction channel. And finally, there need to be very consistent negotiations.
Sanam, when you look at the Gulf states, this has been a very difficult period for them just because of their business model as well. I mean, will this change them? Can they put pressure or influence either side?
Well, I think that they are trying. It's worthwhile remembering that the Gulf states did not lobby for this war, and in fact tried to convince the Trump administration to not go down this path, because they very much feared that they would be collateral damage. They have performed well from the defensive perspective, but they are very vulnerable to further attacks and of course, the impact to their economies. What the Gulf states are doing, not all of them at the same pace, are trying to reroute away from the Strait of Hormuz. For countries like Saudi Arabia and the UAE, that is a bit easier, not just because of capital, but because of their geography. They have alternatives. Qatar, Kuwait, and Bahrain are very much locked in, and so their diversification strategies will take longer to develop. Ultimately, I do believe that most of the Gulf states are economically resilient and will develop alternative supply chains and corridors out of the Strait of Hormuz, but it will take time, and so they will continue to bear the economic and security costs.
Sanam, what do we know about the strength or not of the Iranian leadership right now? Do people support them? Do they have enough money to continue? How strong are they?
Well, the country is really quite large and vast. 90 million people really suggests that you're going to have divisions politically and also cleavages and wide gaps economically speaking. Prior to the war, the Iranian economy was already very strained, and we should not forget that there were protests in January that were very brutally suppressed. The war is putting a huge pressure on ordinary citizens in the South. There are reported cases of food shortages, for example. Ultimately, I think people are deeply worried, anxious, and uncertain about what's to come. And the Iranian system, the leadership, which has survived this war, is much more strategically united than what is being presented. Their objectives are to survive and to obtain a deal that will enable better economic opportunities inside the country. Their legitimacy depends on it. But of course, like in any system, there are tactical differences about how to obtain or secure those sort of outcomes at the end of the war. So these are issues to watch and unpack. And I think that these dynamics are going to be with us for quite a number of weeks, if not months, going into the U.S. elections as well.
Sanam, thanks so much for joining us. Sanam Vakil, their Middle East and North Africa Program Director at Chatham House. Coming up, incoming Prime Minister Andy Burnham reportedly makes his pick for the next Chancellor. So we'll have plenty more on that next. And this is Bloomberg.
exploring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in Season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch Season 2 on all these lovely channels.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. The main chip maker for NVIDIA, TSMC, beats high expectations on AI boom and plans to ramp up spending even further. The U.S. launches more airstrikes on Iran, including a supertanker linked to the country, with President Trump threatening to intensify the bombardment. Plus, the UK economy unexpectedly grew in May, with the pound hitting its highest level in a year, on speculation that incoming UK Prime Minister Andy Burnham will name Shabana Mahmood as Chancellor. So let's get more of that story now. Reports on who the new Chancellor may be have lifted the pound. We're joined by Matt Bunny, our UK economist for Bloomberg Economics. So Matt, thank you so much for joining us. Look, I'm looking at the markets, and actually they seem to be pretty pleased with these reports that Mahmood has been picked over Ed Miliband. Why exactly?
So markets are taking Mahmood to be a more market-friendly pick than Miliband. It signals perhaps more of a commitment to fiscal discipline than would have occurred under Ed Miliband. So I think markets are relieved, perhaps, that we're going to see something closer to the Starmer-Reeves model of fiscal discipline. But we are still in the dark, actually, on the detail of what Mahmood would stand for on economic policy. So other than broadly knowing that she probably sits in a more moderate camp in terms of fiscal policy than Miliband, we don't really know the detail. So we know that without a credible plan, markets will dismiss any kind of particularly big ambitions from Burnham.
So what kind of economy will the Chancellor actually inherit?
So we saw this morning that GDP came out a little bit stronger than expected by consensus for the month of May. So broadly speaking, it signals that the economy is perhaps doing a bit better than initially feared with regards to the energy shock from the US and Iran. But that's not to say there aren't broader headwinds that we are still facing. Of course, we've seen a re-escalation in the conflict, which still poses a significant risk. He's also facing tighter funding conditions than existed at the start of the year. So while in the near term perhaps things have improved a little bit, the backdrop for Burnham is certainly still challenging.
So what are you expecting at Bloomberg Economics? You have great reports on actually, this happened over the next 2 to 3 weeks, 4 months. Is it really difficult right now, given we're in the dark on a lot of the policies from the new government?
It is. I would say we're dealing with more uncertainty than usual. Economists love the word uncertainty, but uncertainty is truly heightened at this juncture, both from the Iran war and around fiscal policy. So there's no doubt that this makes the Bank of England's job harder. I would say at this stage, we still expect the Bank of England to remain on hold this year. Markets are expecting some hikes. I guess the point to make is that inflation expectations to date remain in check, and we're expecting the labour market to soften. So that will help prevent the inflation problem becoming more persistent, which is why at this stage we think they'll remain on hold.
Matt, thank you so much. Matt Bunny, their UK economist for Bloomberg Economics. Now, the Bank of England has warned that increased borrowing by investors in equity markets has raised the risk of a sharp fall in prices that, of course, could threaten the stability of the financial system. Well, the bank's Financial Policy Committee said many of the threats to the system it had previously highlighted have intensified. Well, we discussed all of this in an exclusive interview with the BOE's Deputy Governor for Financial Stability, Sarah Breeden. She told us cyber risks exposed by recent advances in AI models have risen to the top of the bank's concerns. Now, she also discussed inflation and the broader political environment.
The latest version of the frontier AI models have surprised us. They've surprised the AI labs, and they've surprised the AI Security Institute in terms of how capable they are of identifying and exploiting cyber vulnerabilities. So it's right at the top of our list right now.
Do you worry that actually a lot of the European banks and UK banks didn't have access to some of the newer models like Mythos?
So I think the important thing to think about is what is the right defense here? And the first and most important thing is to get your basic cyber hygiene right. You don't need a model, a frontier model, to help you do that. You just need to get those basics right that we've been talking about all of the time for the last decade or more. All that said, for our most sophisticated institutions, the ones that are most important for financial stability, of course they need access to the best models so that they can have the best defense. And we're in a position now where they are getting access, which is great news.
So is there anything else that you worry about in that space that people should be aware and actually make a difference to?
So in addition to making sure that your cyber hygiene is great, everybody, all financial firms, all technology companies, the big guys, the small guys, they also need to get ready to patch quickly. What these models are doing is identifying vulnerabilities, holes in the technology. That means bad actors can get in. Patches are going to be released. Everybody needs to get ready to patch at scale and at speed really quickly to keep their systems safe.
Is there a natural disadvantage by being European because these models are by and large American?
So the models are part of the solution, that's for sure. But even the ones that are freely available, that have been around for some time already, they're also pretty good. So you don't need the very latest model. You can have access to the earlier models. But let's be clear, the global financial system is an interconnected one. And if we want the global financial system to be safe, the most significant institutions, wherever they sit on the globe, need to have access. So it is an issue that we'll be talking about internationally and making sure there's international coordination on for the health of the whole system, not just UK firms.
I mean, does it need to be, if it's worldwide, does it need to be like a tech financial stability board proposal, or do you have insights on how what that could look like?
So there's two things to think about here. There's one, the safety of the models, how they get evaluated and how they get allowed to be let loose on the world. That's not where the financial stability authorities are in the lead. That's other bits of government. Where we're in the lead is ensuring that the financial system is ready and that those AI models are deployed right across the financial system. And we're working with our international peers all around the world on that. Andrew was chair of the Financial Stability Board, and you can quite imagine Francine is very focused on this.
I'm sure he's very focused on this. I mean, there's a lot of concern about evaluations when a lot of these companies are so big. Whose job should be to look at that?
Well, I think the important thing to remember is that AI, we expect, will be the next general purpose technology that's going to drive growth all around the world. That's a good thing, right? What have we all been saying for the last 15 years? We need more growth. So what we want to do is get to a point where the infrastructure that's necessary to support the adoption of AI is getting financed, because that is the pathway to growth. But you highlight a great point. How do we make sure that the path to get there is one where financial stability risks are managed? We're really focused on seeing what's happening in the equity market. Is there leverage there that's supporting the valuations that might mean if there's an adjustment to earnings expectations, it's a sharper fall than it might otherwise be? We're focused on that. We're also focused on the debt that's going to be needed to finance this infrastructure. It's an historically unprecedented pace of investment that we need to build the infrastructure to support AI adoption. And so everybody going in needs to know that, because the path to getting the revenues to make sure that that debt can be repaid is one over which there's some uncertainty. We're very focused on that. We're telling the story. We're hoping people are building it into their stress testing to make sure we're as prepared as we can be in case there's an adjustment.
I know you focus on financial stability, but I need to ask a little bit about monetary policy, given the inflation figures and the trajectory that we're seeing. Does it make life a little bit easier for the Bank of England if it's scenario A, the more benign scenario on inflation?
So what I said back in June was that I expected the outlook for energy prices to be uncertain, and I think that has proved to be the case, hasn't it? My focus, Francine, as I've been looking at what's been happening in the economy, is on how that energy shock is being absorbed in the economy. We have a softish economic outlook. We have slack in the labour market. Those two things mean that that shock is less likely to become embedded and lead to inflationary dynamics. And so we've had a tightening of financial conditions. And I think in combination, that means we're in a good place to monitor very carefully what's happening. Thing I have to say, of course, if it's clear that inflationary dynamics are becoming embedded, we'll act. And I'll act.
When you look holistically at the UK economy, how much of it is it external forces and domestic issues changing what we'll see in the next 6 months?
So certainly most of what we talk about in the financial stability report, a lot of what we've been talking about in monetary policy space has been these global shocks. It's the energy shock, it's what's happening in AI. Those are the ones that have been really affecting us, perhaps as you might expect from a small open economy with a very large international financial centre. But of course, the domestic political environment is something we keep a very careful eye on.
That was Sarah Breeden, the Bank of England Deputy Governor for Financial Stability, speaking to us exclusively. Now, just getting a little bit of breaking news out of China's biggest search engine, Baidu. We're just finding out that it will pursue a dual primary listing on HKEX main board and NASDAQ. This is something that there were rumors at some point. There's a little bit of, I guess, a fashion for some Chinese firms to upgrade some of their Hong Kong listings. The picture for Baidu ADRs in the U.S. right now are spiking up 3.8%. Now, the Fed chair, Kevin Warsh, has pushed back on commentary that surging investment in AI is stoking inflation. Testifying on Capitol Hill, Warsh said the impact of the boom will not necessarily lead to persistent price pressures.
I think that investment in data centers and in AI generally do affect the demand side of the economy, and we can see it, and we can see prices move up. But unlike some of these other shocks, with a lag, it also affects the supply side.
Well, let's bring in Alistair Bull, one of our senior editors. Alistair, good morning. So Kevin Warsh seemed to downplay the inflation risks posed by AI.
Good morning. So he had a very carefully nuanced message. He's embracing the long-term productivity benefits potentially from AI, saying that that could lift the ability of the economy to grow faster without creating inflation. But he's also been careful to acknowledge that in the short term it could affect individual prices, while saying those prices don't necessarily lead to wider price increases, but reminding his audience that it's the Fed's job to make sure that doesn't happen in an environment where inflation's been above the Fed's 2% target for 5 years. And on the subject of audiences, I think it's important to acknowledge that he's now speaking to the market as opposed to the audience of one when he was up for the job and in his confirmation hearings. Now he's got the job, he's focused on building his credibility, and I think so far it looks like the market likes what it's hearing, Francine.
So Kevin Warsh also doubled down on Fed independence, Alistair.
He did indeed. He was asked about this several times, and while he declined to say if he'd spoken to the president, he did assure the senators that the president hadn't tried to influence him on monetary policy. Well, the president hardly needs to tell him face to face. The whole world knows that Donald Trump would like lower interest rates. But importantly, while he said he wouldn't discuss individual conversations with the president, he did say he would follow precedent. And the precedent has been that the Fed chair, certainly since Janet Yellen, has released their monthly calendar. So we will be able to see in the months ahead if he has taken a call or met with the president, Francine.
Alistair, thank you so much, as ever, for joining us. Bloomberg's Alistair Bull on the latest with Kevin Warsh. Coming up, Ukraine reshapes its top team as Russia faces fresh sanctions pressures. We'll have plenty more on that shortly, and this is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
So Wall Street banks have definitely found their swagger. Now shares in Goldman Sachs jumped to their highest ever level as it led the way to a record-smashing $100 billion in profits across the sector. Now for more, we're joined by Tom Metcalf, who leads our finance coverage in EMEA. All right, Morgan Stanley. This was so we had a busy Monday, 5 banks. Yesterday I had Morgan Stanley. What was your main key takeaway?
Well, you can clearly see, that long-term relationship they've been building up with Elon Musk. In the past, sometimes getting some criticism for that when it looked like, say, for example, the Twitter deal was going wrong. But obviously, with SpaceX out there, even as it's just dipped below the IPO price, you can really see the boost from that come through. And then it's just, again speaks to that 100 billion figure, which is, when Trump first came into office, it was 100 billion in a year. We're now talking about 100 billion in the first 6 months. It's absolutely an incredible switch, basically.
What have you learned overall by some of these Wall Street bank earnings? Is there a danger that actually they've peaked?
Well, I think lots of people are, suggesting that, and it is really hard to see how much further, can this run, particularly with increasing sort of worries around, the valuations and, is leverage really sort of pumping that up and thus encouraging the equities trading and stuff. So It's all, but they've managed to kind of do it quarter on quarter for quite a while now, and I think that's probably the lesson of these markets. It's really hard to sort of call the top, because even when there is a sort of downdraft, often it's a massive rebound, and the best thing you can do is stay in the market.
Tom, what are you expecting from European investment banks and trading floors?
Yeah, it'll be very, very hard, in my view, for them to kind of keep up with the US. But, it'll be a case by case, right? Like Deutsche Bank has shown a load of strength, obviously, in the fixed income space. I always take a very close look at Barclays Investment Bank. I mean, they're in an interesting position there, right? Because they are sort of capital circumscribed, really, with Venkat saying, hey, you've got to keep to 50% of our total sort of RWAs. So that is a tough tightrope right for them to walk, and I think they report in 2 weeks' time, and that'll be, for me, kind of the defining earnings of the European set.
But is it because European banks are just smaller, or because they just have different rules?
Yeah, a bit of everything, right? Like the US banks have that massive scale; they can really push forward through. And then at the same time, being a domestic market in the US economy, far more growth, far more strength. It's where all the big AI companies are. So they just sort of have that kind of home market advantage as well. But I guess on the flip side, the European banks being smaller, if anyone's going to grow normally, it's the smaller one. So there's a chance they can try and close that gap at least somewhat.
Tom, thank you so much, as ever, for joining us. Tom Metcalf, there in charge of finance institutions in Europe. Now, Jamie Dimon, the JP Morgan chief executive, is warning about the risk of making a sophisticated AI system like Anthropic's Mythos model widely available. Now, rapid advancements in AI have both businesses and governments assessing potential threats. Now, the issue took on more urgency after Anthropic also said that Mythos models are good at finding software vulnerabilities that it cannot release to the general public.
Mythos, that's a real issue, which I know our government is on top of at this point. It's not to stop smaller banks from gaining stuff. It's really just to make sure we roll out the stuff that we know is being controlled, because you're giving ballistic missiles to individuals with Mythos, basically.
Well, the International Energy Agency has warned that China's rare earth export curbs could put $6.5 trillion of downstream production outside the country at risk each year. Now, it's called for multilateral stockpiling to guard against those risks. The U.S. Trade Representative says the U.S. remain a top priority. Well, Jameson Greer spoke exclusively to Bloomberg at the Aspen Security Forum.
So China's compliance with the rare earth elements of our agreements, it's not perfect. I think everyone knows that. You can read that in the paper. That being said, we are getting a flow of rare earths. We don't have factories shutting down because they don't have it. But again, we really want to be in a position where we were, in 2024 and 2023, in President Trump's first term, where we had a regular flow of rare earths. We also know that the Chinese, they use rare earths for economic coercion. They did it in 2010 and 2011. They're doing it now, so it's not necessarily surprising. But we're continuing to have some flow, and where we have gaps, where we have problems, the Secretary of the Treasury and I, we work with our counterpart in China to try to loosen that flow up. Sometimes we're more successful than others. One important thing is we're moving forward in the U.S. on rare earth production. One of the things I'm doing on my trip out west here, I'm going to Utah to visit a facility where they've discovered rare earths in the Utah desert, and they're refining them and further manufacturing them at a facility in Utah, which is a great development for U.S. national and economic security.
You've got rare earths. There's huge pharmaceutical dependence as well. And I wonder how you're thinking about that, the way that you can kind of curb our reliance on Chinese pharmaceuticals and ingredients.
Yeah, we think about this a lot. This is really critical, because at the end of the day, if somehow you lose access to Chinese inputs, it can be a huge challenge for our own manufacturing base. And some people will say, well, what about India? Fine, but a lot of the inputs that India uses also come from China. One great thing that we're seeing as we try to encourage companies to reshore is we actually have commitments from 17 pharmaceutical companies, the largest and the most major pharmaceutical companies, not only to lower prices of medication here in the U.S. Pharmaceutical prices have gone down by 2.5%, but they've also agreed to reshore here and to manufacture here. And so we have companies like Eli Lilly and Novartis and others actually pouring concrete and superstructures going up in new facilities in North Carolina and Indiana and Southern California.
There's a long way to go until this meeting in September when the Chinese president comes to the United States. But let me ask you lastly, sort of how you're thinking about that. You were so integral to the conversations that took place in Beijing. What are you expecting, deliverables-wise, to come out of that meeting in Washington in a couple months?
Well, the number one deliverable we always have between President Trump and President Xi is to continue the stability of the relationship. Both of these leaders are very committed to having a strong and solid personal relationship. Now, that doesn't mean we don't have issues in the broader relationship. Obviously, we do. China is a big challenge for the U.S. in a lot of ways. But we want to make sure we're delivering stability. There's never been a situation where the U.S. side or even the Chinese side has gone out and said, everyone should expect a comprehensive agreement that resolves all issues. Like, no one's ever promised that, so that's not what we expect. We will have an opportunity to take stock of Chinese commitments with respect to purchases of soybeans and other agricultural products. We'll take stock on the rare earth issues we decided. So I think it'll be a moment for stock taking, confirming the relationship, making sure that China's complying with what it's agreed to do. That's really what we're looking forward to in this meeting.
Well, that was the U.S. Trade Representative Jameson Greer speaking to our very own David Gura in Aspen. Now, in Ukraine, thousands of people have rallied in Kyiv against the dismissal of the defense minister. We're looking at live pictures there in one of the main central squares in Kyiv. Let's get more with Chad Thomas, Bloomberg's Europe executive editor. Chad, thank you so much for joining us. I mean, there's a lot we need to talk about, on Ukraine, but it's a little bit surprising to have protests. Now, they're not massive, but we still understand there's thousands of people.
Yeah, this is part of a broader reshuffle that is happening within the government. Of course, Volodymyr Zelensky, he announced on Sunday that he was going to reshuffle the government, bring in a new prime minister. That new prime minister was announced yesterday. He is the CEO of Naftogaz, and that has to do with Zelensky saying they need to prepare for the winter ahead of what could be another onslaught from the Russians. The attacks here in Ukraine, the protests that we're seeing here in Ukraine over the defense minister, he is a 35-year-old. He was the former deputy digital minister, and he's very popular in Ukraine. He's the one who's brought sort of the digital transformation to the country, and he is also really important. He's the one who has really been pushing the drone attack strategy that Ukraine has been using so successfully to attack Russian infrastructure. So it's interesting, first of all, that Zelensky had decided that he wanted to dismiss him, and now we see these protests breaking out here in the live pictures are showing.
Chad, talk to me also, I mean, there's these new Russian sanctions legislation that could target, top purchasers of Russian crude, including China and India. Like, how close are we to that?
The legislation seems to be going through the U.S. Congress. The question really is, will President Trump use those that power that he's given? It's up to him. We saw Greer saying that he has to weigh his options there very carefully. For the U.S., of course, it's a question of, do they want to upset India and China? Those are the purchasers of the Russian energy. And so on the one hand, if they cut off Russia's source of income, it potentially helps to end the war, but at the peril of upsetting China and India and that relationship that the U.S. has with them.
Chad, in 20 seconds, what do we know about the new prime minister in Ukraine?
The new prime minister is an energy executive and someone who has been focused on that sector.
So it makes it interesting to see the implications of that. Chad, thank you so much for joining us. Chad Thomas there, Bloomberg's executive editor for Europe. But up next, we'll have plenty more, of course, on the markets. We'll have plenty more on some of this new Russian oil sanctions bill aimed at terrorists. Well, we'll see, actually, if the bill sponsors are confident that it has sufficient support to pass the Senate after securing the president's support. You can see S&P futures and NASDAQ futures down between 0.1 and 0.3%. Up next, Bloomberg Brief, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
I've been called worse things than that.
You think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise Ahead or Gattaca?
Maybe somewhere in the middle.
At the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
In New York City, 10 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. TSMC's AI optimism. The chipmaker raises spending and boosts its revenue outlook. Meantime, market caution prevails as traders weigh earnings and the strength of the AI trade. And the U.S. completes its latest airstrikes on Iran with tensions showing no sign of easing. Meantime, globally, Korea implementing some market stability measures. Let's get all the color from the Asia session now with Winnie Su in Hong Kong. Winnie.
Yeah, good morning, Bonnie. We are seeing Korean stocks leading declines in Asia today in expectation to authorities tightening those rules around ETFs. Now, you just mentioned we had the announcement about an hour ago with South Korea saying that they are temporarily halting the new listing of these single stock leveraged ETFs until market conditions stabilize. Now, they are also going to be raising the minimum deposit requirements for these investments and expecting the implementation to start in a few weeks. So that is likely going to restrict some of the accessibility, especially for retail investors, and hopefully tame these volatility that we see in the South Korean market. Now, when it comes to the central bank moves, we did see that Bank of Korea raising rates for the first time in over 3 years, and that is helping to strengthen the Korean won here by almost 0.5%. Now, you flip the board and take a look at the broader Asian market, dragged down by technology shares, but the bright spot is actually in technology shares in Hong Kong. In fact, we did hear from Apple finally after 2 years of waiting to get that approval from China for its Apple Intelligence, the AI feature that it's working on with Baidu, and that is also helping the shares of Baidu, on top of how we just heard that they are pursuing a dual primary listing on the NASDAQ and in Hong Kong.
Winnie, lots going on in Asia. Thank you so much, Winnie Su there in Hong Kong. Now to London, where markets are evaluating a potential new chancellor, among other things. Justina Lee has the details from the Europe session. Justina.
That's right, Vonnie. But before we get to that UK political headline, a quick update on European markets today. The Stoxx Europe 600 down a little bit, dragged down by utilities and financial services. In terms of bonds, generally yields are up, but I want to draw special attention kind of to the UK move, because as you alluded to earlier, we got a big news story out of the UK yesterday. Now today, the UK bond yield are up quite a bit, 4 basis points for the 10-year, And that's retracing some of the moves we saw yesterday after the FT reported that the incoming new Prime Minister, Andy Burnham, has picked the Home Secretary, Shabana Mahmood, to be the new Chancellor to head the UK Treasury. And that's generally seen as quite a market-friendly move because she's seen as a little bit more fiscally conservative, a little bit more centrist, maybe compared to the other candidates that markets were afraid of. And so a little bit of reversal today with the pound also depreciating. But if we flip the board here, we can see the big market move that we saw yesterday afternoon after this news headline came out, with the pound rising to the strongest in almost 3 months. And that's on the back of that news, with markets maybe breathing a sigh of relief there, Bonnie.
Absolutely. Justina, thank you so much. Well, here in the United States, as you can see, we look to be a little red going into the open in just a few hours' time. So we got obviously benign data on inflation the last 2 days, but this rotation from semis into hyperscalers and back into semis, it's just going on and on day after day, and there doesn't seem to be any rhyme or reason to it, because every piece of news that we've got from the major companies across Asia and in the United States on AI has been great. They've been upping their visibility, they've been telling us more about what's to come in the future, and yet the market just doesn't seem to be able to make up its mind. We have the VIX pretty muted, the VXN, which is the measure for the NASDAQ 100, that's also pretty muted. And then, of course, you have what's going on in the Middle East, which does seem to be escalating, and that's not impacting things too much either. So for now, we have just a little bit of a down picture for equities. Let's move to yields, where obviously we had a little bit of relief. We have the 2-year back down to below 416, the 30-year though still up there at 510 and change. So a little bit less relief perhaps at the long end than at the short end. And then oil prices, they're holding steady, even though we are seeing those skirmishes just up a little bit in temperature, and it does bear watching what actually happens in the Strait of Hormuz. All right, let's get some individual market movers now. Back over to London and Chloe Melly.
Good morning, Bonnie. We're seeing this as a sign of additional strain on this AI trade this morning. TSMC came out with some very strong numbers and raised its outlook for both spending and sales. But we are seeing some weakness in those ADRs this morning, down more than 3%, really indicating those persistent concerns from investors. Moving on to United Airlines, which is also in the red this morning after actually raising its outlook, but that outlook disappointing investors. And there's also the concerns around those rising fuel prices, which is, of course, a really major headwind for the entirety of that sector. And this seems to be what investors are really focused on this morning, and we're down more than 2% there. And finally, let's go over to Atai-Beckley, a psychedelic drug maker, which is soaring this morning on the news that Eli Lilly is in talks to acquire the company. This really shows that this kind of fringe area of medicine is attracting more and more interest from those traditional pharmaceutical players. And so we're up more than 50% this morning for this company.
Chloe, thank you so much. Chloe Melly there in London. She'll be back later in the hour. And also coming up this hour is Sitara Sundar of JP Morgan Private Bank. As we wrap up Wall Street earnings, we'll also be speaking with Saul Martinez of HSBC. He joined us earlier in the week. We'll get his thoughts post-earnings. Let's kick things off now, though, with TSMC's strong outlook. Bloomberg Intelligence analyst Matt Bloxham joins us now. Matt, once again, it doesn't seem to matter what these companies are telling us. We're seeing this rotation between semis and hyperscalers. What is the reason behind this rotation that's happening day after day, and it's yo-yoing?
Yeah, I mean, I think the market's still trying to kind of figure out the best way to kind of play the AI story and just kind of seek out those kind of underappreciated parts of the value chain. But obviously TMC is kind of really central to all of this, being the primary provider of chips to the likes of NVIDIA. And obviously I think what we're seeing in the numbers today, raising their annual growth guidance in US dollar terms to more than 40%. The market was looking for about 35, 36%. It just shows you that the market's still kind of trying to adjust to how those big CapEx plans by the hyperscalers, spending over $700 billion this year, how that flows through to the rest of the value chain. And I think certainly today, we heard optimism from TSMC about the durability of that demand over the next 2 or 3 years. It's pointing to sustained high capex from them as they try to catch up on the capacity they need to provide to deliver against that demand.
Yeah, so forecasting 2026 sales to grow by more than 40% in US dollar terms. It's a gross margin of 67.7%. All the key metrics beat. It's going to up its cash dividend. Is there any crack in this story?
I think right now, no, but I think if there is going to be a crack, it remains this kind of theme around the sustainability of enterprise demand. Obviously, a lot of people right now focused on this concept of token maxing. The tokens are the kind of the building blocks of AI consumption, and a lot of enterprises are realizing that they're burning through their budgets quicker than they thought and having to figure out, do we just continue to spend more, or do we manage how we interact with the AI platforms? And obviously, if it's the latter, then that starts to put a bit of a brake on the revenue growth we've seen, and that may kind of take the shine of some of these capital spending plans. And so obviously, if corporates do try to kind of weave their way through this in a more cautious budgetary way, then that could slow the pace at which the capacity expansion happens and inevitably lead to a kind of further down the line, more muted expectations for growth across the entire value chain, starting with the hyperscalers and feeding all the way down through to the chip providers.
Well, that's just it, Matt. I mean, does it make sense that there's this bifurcation or even trifurcation, I suppose, in the AI trade? Isn't it just one trade? If AI is, taking over, then it's good for all of these companies, no matter where they are in the chain?
To a degree, but I think what we've seen is investors rushing into certain parts of the value chain. That trade gets kind of overcooked, if you like, and then they move on. So I think if AI demand continues, then every part of the value chain should benefit. But the incremental question is, to what extent is the market already appreciating that, or perhaps over-appreciating that? And so I think that's what you're kind of seeing right now, is investors trying to kind of figure out where the value opportunity is, and where perhaps they need to kind of rotate out of to kind of continue to kind of deliver good alpha really for their investors.
Slightly different subject, but we do have Netflix reporting earnings after the close, and I think we haven't got any AI characters on Netflix yet, as we know. But curious about engagement. Has it seen a floor, do you think, Matt, for engagement?
It's the big question. I think people are hoping that the answer to that's going to be yes when they report later, and obviously that the engagement figures, what we watched is going to be hugely in focus. I think the market's looking for about 14% sales growth. They've obviously been kind of looking at a lot of different parts of the strategy recently, including M&A, including broadening their own lineup of content. Netflix was once a disruptor, and arguably other platforms are starting to disrupt Netflix, and they're having to respond to that. And so I think that those engagement figures are going to be very, very closely watched. And that's going to be the real kind of key metric that people latch onto in terms of where the stock goes from here. It's been under a huge amount of pressure over the last 12 months, and they do definitely need to deliver a convincing story when they report. Expectations are super high, I think, in terms of how they communicate what they're doing on content, and that they recognize what's going on, and they've got the right strategy to get that engagement level back up.
Yeah, absolutely. Matt, thank you so much. Matt Bloxham of Bloomberg Intelligence. And catch Bloomberg's interview with TSMC CFO Wendell Huang. That's Sunday at 7 p.m. New York time. The U.S. has completed another round of attacks on Iran in an effort to secure shipping through the Strait of Hormuz, or at least that's the stated aim. Paul Wallace, Bloomberg managing editor for the Middle East and Africa, joins us for the details. Much, much further into the Persian Gulf, right by Carg Island, Paul, was this latest strike on a supertanker. Who's actually transiting the strait at the moment? Is anybody?
Ivani, the numbers of ships going through the strait have dwindled a lot since early last week, when the most recent bout of tensions really escalated, and we're seeing very few ships going through openly with, let's say, transponders on. The US is saying it's still assisting some vessels going through at night, and it said that last night something in the order of 10 or slightly more ships got through with its assistance. Whether that was a full-on military escort or something slightly less is unclear. But the point is, numbers have dropped big time, and we're not at zero, but we're kind of back to where we were at the height of the war in terms of traffic through Hormuz, and that if this continues for a while, is almost undoubtedly going to put renewed pressure on oil and gas prices.
I do want to point out the U.S. Navy has said that it will allow shipments of bulk food, medical supplies, and other goods necessary for Iran's civilian population. It won't stop those, and it will let them through the blockade. How is Iran responding to this latest round? I mean, I know that they're targeting Jordan, Kuwait, Bahrain, but what else is Iran doing?
So it is picking up its attack, or stepping up its attacks on ships. That's for sure. Those going through Hormuz. The Strait is what the war is very much centered on right now, and talks between the U.S. and Iran over Iran's nuclear program and a permanent peace deal. They've pretty much completely stalled, and everything is now focused on Hormuz. So beyond those shipping attacks by Iran, it is, as you mentioned, picking up its attacks on the likes of Jordan and Bahrain and Kuwait. And it's hard to see either the US or Iran budging on the Strait. Both sides are accusing the other of breaching the terms of last month's interim peace deal. Iran says that deal gave it the right to effectively decide on how traffic through the Strait should be managed. The US says no, that's not the case, that free passage of ships was pretty much guaranteed by the so-called Memorandum of Understanding. So until the sides move beyond that and resolve this issue of the Strait, it's very hard to see how we can get progress towards a permanent peace deal.
All right, Paul, thank you so much. Bloomberg's Paul Wallace there for us in Dubai. Now to other top stories trending on the terminal this morning. Uber has agreed to buy German food delivery company Delivery Hero at a valuation of almost $15 billion. The deal marks a sizable expansion in Asia, Latin America, and the Middle East for Uber. The transaction is pending regulatory approval. Extreme weather hits the U.S. In New York City and across the Midwest, wildfire smoke from Canada is degrading air quality and turning the sun into a hazy, yellowish orb. Air quality alerts are in effect across portions of the Midwest and Northeast, with people with heart disease, asthma, and other respiratory conditions most at risk. Argentina defeats England 2-1 to advance to its second straight FIFA World Cup final. England was able to stop Argentine star Lionel Messi from scoring, but he was still able to earn 2 assists. Argentina will face Spain at 3 p.m. New York time in New Jersey on Sunday. Coming up, U.S. Trade Representative Jemison Greer says China's compliance on the trade deal is not perfect. More of that exclusive interview next. This is Bloomberg.
The global economic playbook is being rewritten, and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Earnings season is here.
The earnings story has been so powerful.
Bloomberg is first to break the numbers.
Blackstone reporting a larger than expected jump.
All right, guys, I want to go to T-Mobile.
We're keeping an eye on those earnings out of Oracle.
Meta, Amazon, Microsoft, Google.
With the smartest insights.
We have seen a consumer that has been and continues to be resilient.
There's a lot of reason to believe that there's still a huge amount of growth here.
Continuing coverage on Bloomberg.
Bloomberg Brief. I'm Vonnie Quinn in New York. U.S. Trade Representative Jamison Greer says stable trade ties with China remains a top priority. He spoke with Bloomberg's David Gura from the Aspen Security Forum.
So China's compliance with the rare earth elements of our agreements, it's not perfect. I think everyone knows that. You can read that in the paper. That being said, we are getting a flow of rare earths. We don't have factories shutting down because they don't have it. But again, we really want to be in a position where we were, in 2024 and 2023 in President Trump's first term, where we had a regular flow of rare earths. We also know that the Chinese, they use rare earths for economic coercion. They did it in 2010 and 2011. They're doing it now, so it's not necessarily surprising. But we're continuing to to have some flow, and where we have gaps, where we have problems, the Secretary of the Treasury and I, we work with our counterpart in China to try to loosen that flow up. Sometimes we're more successful than others. One important thing is we're moving forward in the U.S. on rare earth production. One of the things I'm doing on my trip out west here, I'm going to Utah to visit a facility where they've discovered rare earths in the Utah desert, and they're refining them and further manufacturing them at a facility in Utah, which is a great development for U.S. national and economic security.
You've got rare earths. There's huge pharmaceutical dependence as well. And I wonder how you're thinking about that, the way that you can kind of curb our reliance on Chinese pharmaceuticals and ingredients.
Yeah, we think about this a lot. This is really critical because at the end of the day, if somehow you lose access to Chinese inputs, it can be a huge challenge for our own manufacturing base. And some people will say, well, what about India? Fine, but a lot of the inputs that India uses also come from China. One great thing that we're seeing as we try to encourage companies to reshore is we actually have commitments from 17 pharmaceutical companies, the largest and the most major pharmaceutical companies, not only to lower prices of medication here in the U.S. Pharmaceutical prices have gone down by 2.5%, but they've also agreed to reshore here and to manufacture here. And so we have companies like Eli Lilly and Novartis and others actually pouring concrete and superstructures going up in new facilities in North Carolina and Indiana and Southern California.
There's a long way to go until this meeting in September when the Chinese president comes to the United States. But let me ask you lastly, sort of how you're thinking about that. You were so integral to the conversations that took place in Beijing. What are you expecting, deliverables-wise, to come out of that meeting in Washington in a couple months?
Well, the number one deliverable we always have between President Trump and President Xi is to continue the stability of the relationship. Both of these leaders are very committed to having a strong and solid personal relationship. Now, that doesn't mean we don't have issues in the broader relationship. Obviously, we do. China is a big challenge for the U.S. in a lot of ways. But we want to make sure we're delivering stability. There's never been a situation where the U.S. side or even the Chinese side has gone out and said, everyone should expect a comprehensive agreement that resolves all issues. Like, no one's ever promised that, so that's not what we expect. We will have an opportunity to take stock of Chinese commitments with respect to purchases of soybeans and other agricultural products. We'll take stock on the rare earth issues we decided. So I think it'll be a moment for stock taking, confirming the relationship, making sure that China's complying with what it's agreed to do. That's really what we're looking forward to in this meeting.
That was U.S. Trade Representative Jamison Greer speaking with Bloomberg's David Gura in an exclusive interview. This is Bloomberg.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
For your front page news. First up, the New York Times reporting on a House vote yesterday rejecting a measure to eliminate U.S. aid to Israel. Almost half of Democrats supported the move to end aid. Vote notable, says the Times, because it exposes a stark shift in the Democratic Party away from backing the Jewish state. Next up, the Washington Post on acting Attorney General Todd Blanche telling the Senate Judiciary Committee he's not Trump's yes man. With Democrats united against Blanche, even one Republican committee vote against him would be enough to sink the nomination. And finally, the Financial Times reporting British Home Secretary Shabana Mahmood is set to become Britain's next Chancellor. Sources telling the FT the original frontrunner for the role, Ed Miliband, is now likely to become Foreign Secretary. A spokeswoman for Andy Burnham said cabinet roles will only be assigned Monday after Burnham becomes Prime Minister. Coming up, we're going to speak with Sitara Sundar of JP Morgan Private Bank.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. TSMC's AI optimism. The chipmaker raises spending and boosts its revenue outlook. Meantime, market caution prevails as traders weigh earnings and the strength of the AI trade. And the U.S. completes its latest airstrikes on Iran, with tensions showing no sign of easing. Let's take a look at markets as we're shaping up a few hours before the open. So very fractionally lower on futures. We have obviously had better news on inflation, but instability in the Middle East and really in the chip sector worsening the intermediate term outlook and the immediate term outlook potentially. We did have the S&P up 4% yesterday, the Nasdaq 100 down 0.3%, but that sort of masks all the volatility within the session. It's a pretty strange market because we have a muted VIX, a muted VXN, and yet so much uncertainty and a lot of optimism as well. Very strange. Let's take a look at yields. Obviously, after 2 days of Kevin Warsh's testimony, not too much has changed. We know a little bit more about how he thinks, but it hasn't really changed the narrative. It was more the CPI data that did that. We're back down to 4.15 on the 2-year yield. I guess it could be lower, but we did have that bear steepening move. The 30-year yield at 5.10 and change. And then oil holding at yesterday's levels. WTI is just below $80 a barrel now, and Brent is still firmly above $80. Let's get to some individual movers now with Chloe Melee in London.
Good morning, Bonnie. We are seeing some weakness in TSMC this morning, with the ADRs down more than 3% this morning, despite what look like very strong numbers from TSMC, as well as a raised outlook for both spending and sales, as you mentioned. But this seems to show this kind of growing strain on the AI trade and those concerns, those growing investor concerns around those lofty valuations and the sustainability of this AI spending as well. So a bit of weakness there. We're also seeing some weakness in United Airlines, despite a raised outlook, but the outlook has apparently disappointed, underwhelmed investors a little bit. And of course, we have got also the concerns around those rising fuel prices, which are weighing on the entirety of that airline industry, and this seems to be what investors are really focused on this morning. So we're down more than 2%. And finally, let's go over to Atai Beckley, a psychedelic drug maker, which is soaring this morning. We're up almost 60% after news that Eli Lilly is in talks to acquire this company. So it seems that this fringe area of medicine is moving into the mainstream, and we are seeing a huge jump in the shares this morning.
They're pretty high, wouldn't you say, Chloe? Thank you so much, Chloe Melee there. Let's take a closer look now at TSMC's strong outlook. Bloomberg intelligence analyst Matt Bloxham joins us now. So Matt, really nothing disappointing in TSMC's earnings that I could see. Key metrics all beat, margins were healthy, they're going to spend more in Arizona, and it's really just all golden. So why would investors sell this stock or these ADRs?
Yeah, I think it's just largely, the market already being ahead, perhaps even of where the company has announced things. And, they definitely beat on revenue guidance, 40% plus US dollar growth this year. The market was looking for about 35% or so. But I think everything we've been hearing recently is that the demand for chips is enduring. And so to some degree, I think perhaps the whisper numbers were already there. And we're not seeing that kind of next incremental leg of capital spending commitment from the big hyperscalers yet. Perhaps it will come, but the market already almost close to doubled its spending plans for this year, over $700 billion for the US hyperscalers, and the market's already expecting that to go to $900 billion or more next year. So I think there's already quite lofty expectations for demand growth. And I think that these numbers really just kind of confirm that rather than taking it to a really substantial next level.
Matt, we were waiting for South Korea to do something about the massive, crazy swings that we've been seeing in that market. The regulators came out today. They're halting new listings of single-stock leveraged ETFs. They're also raising the minimum deposit requirement for leveraged ETF trading and so on. Korea obviously on a holiday tomorrow, but will this implementation really do anything for the stability of the Kospi?
It's a good question. I guess the answer is we'll have to wait and see, but I think it's encouraging that they've actually acted to do something. Yeah, I think we spoke a few days ago about similar things in the past where, for example, short selling was banned in some markets. I think clearly these leverage ETFs have had an outsized and disproportionate effect on share price moves and kind of really perhaps masking the underlying fundamentals that you'd usually expect to drive a share price. So I think, hopefully this will start to kind of bring in that volatility and really the share price moves will reflect more the fundamentals. But I think we're going to have to wait and see whether they're enough or not.
All right, Matt, thank you so much for all of your help explaining things every morning for us. That's Matt Bloxham of Bloomberg Intelligence. To catch Bloomberg's interview with TSMC CFO Wendell Huang, that's on Sunday at 7 p.m. New York time. That's 7 a.m. Monday, Hong Kong time. Joining us now is Sitara Sundar, Head of Alternative Investment Strategy at JP Morgan Private Bank. Sitara, we're seeing investors be very either they're being just random or they're being extremely discerning and they're choosing on a daily basis what part of the AI trade they want to be in. When it comes to the alternative universe, how is that expressing itself?
Yeah, I think it's always important to take into context where we've been. We're 3 years into this cycle, and usually the way that you see tech disruption cycles play out, the infrastructure is built first, whether that's physical or digital, and the application or the integration of that technology into the real world economy comes second. We saw that with the internet. We saw internet beget cloud, cloud beget all of these different applications that we use on a day-to-day basis. So what we're seeing within the alternative and private market universe is kind of twofold. You have folks that are focused on the bottlenecks, whether it's compute-oriented bottlenecks or which really exists within the VC and growth space, or within the power bottlenecks, and that exists within infrastructure and the amount of infrastructure spending that we're seeing on the private side. I think we talk a lot about public utilities and how much that has benefited from a step function higher in earnings growth, but we've also seen a very similar earnings growth profile within the private infrastructure players to assess those power bottlenecks and the energy bottlenecks, transmission, the issues with transmission within the United States, but also globally. But then on the flip side of it, when we think about what this next phase is going to look like, the integration of artificial intelligence into real businesses outside of just technology, and to think about financial services businesses, industrial businesses, HVAC businesses, manufacturing, that's where I think the private markets are really going to start to benefit, because private equity is a bigger representation of the real economy than the public markets are. So if you start to see any kind of profitability and productivity boost from the integration of AI, private equity will benefit from that.
Is private equity then looking to a golden time fairly soon where there'll be lots of exits, lots of deal making and lots of profits?
Yeah, look, the capital market activity that we've seen so far this year, that we've obviously heard in bank earnings on the public side, has been extraordinarily strong. And what we're seeing is twofold in terms of capital market activity. One, this AI, it's not just AI-led, but we've seen this massive increase in IPO activity and M&A activity. 2026 is actually on pace to be the largest year in terms of capital market activity that we've seen over the past 10 years and could even beat what we saw in 2021. So what that means is that we're likely going to see an pickup in distributions on the buyout side, usually related to M&A activity, and a massive pickup in distributions within VC and growth, because for the most part, if you look historically, about 70% of IPO activity is usually VC backed. So that pickup in distribution is something that is going to be very welcome for an industry that has been starved of distributions over the past 10 years. But on the flip side of it, in terms of where that step function higher is going to be from an earnings growth perspective, the application layer is really where we're starting to see a lot more activity within the private market ecosystem, specifically within VC growth. When you think about vertical AI applications, a little bit in terms of the horizontal AI application layer, but that application layer is where we're starting to see the next phase of this go, outside of just the distributions that are coming.
It's hard to talk about all of the areas that you cover, right? Because you're basically all of the alternative investing universe. But if you were to pick one or two areas that are very hot now, or that investors are really interested in, or where there's amazing and extraordinary opportunity, what areas would you focus on?
Yeah, I think the challenge always within the private market and alternative ecosystem is that you have 7 or 8 different asset classes that are looped within one. So we always try to ground ourselves in putting it into the portfolio context. And I think right now what we've seen in terms of our own conversation with clients is that portfolios have been positioned for a period of time of, low inflation, lower rates, and, higher than expected economic growth, because that's been the macro environment that we've been in over the past 10 years, save what happened post-2022. Now we're in a period of time where we'll see what ends up happening with inflation, but this rolling inflation shocks is likely going to persist for the foreseeable future. So this increase in inflation volatility will lead to an increase in rate volatility, which means that the correlation between stocks and bonds have flipped positive, and we expect that to continue over the long run. So the role that alternatives play when you think about infrastructure is where we're leaning into, because clients have been underallocated, especially on the retail side. Our family office survey, only 1% of family office asset allocation is catered towards infrastructure. We think that's underallocated, primarily because infrastructure gives you inflation resilient income backed by multi-year cash flows that are backed by secular themes related to the artificial intelligence rollout, but also electrification and reindustrialization of society.
So the move higher in the yield curve, and granted, historically speaking, it's not a massive move, but from where we've been, right, even 10 basis points is a big deal when you're talking about, allocating and portfolios and so on. Has it affected what investors are doing?
I think that there's a couple of things. The first part is this understanding that the cost of capital and the cost of financing has been like a step function increase. So when you think about the alternatives landscape, the hurdle rate is a little bit higher in terms of thinking about what that means for ultimate return generation within private equity. Obviously, when you think about return generation there, you can no longer just lean on leverage or anything along those lines to generate those returns. Those returns have to come from operational value creation. From a portfolio context, the volatility that we've seen within rates, obviously core fixed income has a role to play within client portfolios, but what we have seen is this continuation of the theme of reimagining what the 40 is. It used to be, well, bonds are giving me not a lot when we were in a low rate environment, so I need to search for carry. And now the shift is, okay, well, we're in a different rate environment, I'm getting carry in different places, but now I need to figure out what carry is still going to be there when I take the inflation adjustments out of it. And that's where not just infrastructure, but real estate is coming into play too, and asset-backed finance as well. Private credit has been in the headlines earlier this year, not so much anymore, because the fundamentals have been okay, and it's been robust.
The whole narrative of cockroaches went away, right? And maybe it'll reemerge, but it certainly hasn't, and we didn't see anything in bank earnings that would suggest that there's something on the way. So Tara, we do have to leave it there, but thank you so much for joining us. That is Tara Sundar of JP Morgan Private Bank. Now to other top stories trending on the terminal this morning. Iran's lead negotiator defends diplomatic efforts to end the war. In an interview on Iranian state TV, he said negotiation is not the same as compromise and that Iran has to create a synergy between military and diplomatic approaches. Uber has agreed to buy German food delivery company Delivery Hero in a deal valuing the company at almost $15 billion. The deal marks a sizable expansion for Uber in Asia, Latin America, and the Middle East. The transaction is pending regulatory approval. Extreme weather hits the U.S. In New York City and across the Midwest, wildfire smoke from Canada is degrading air quality and turning the sun into a hazy, yellowish orb. Air quality alerts are in effect across parts of the Midwest and Northeast. People with heart disease, asthma, and other respiratory conditions are most at risk. Coming up, Wall Street's record second quarter. We'll recap the results with Saul Martinez of HSBC next. This is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving something.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
I just think we're in a very healthy, active, exuberant market with very high prices and very high volumes, and we benefit from that. We just don't know how long it will continue. Could it get a lot better than this? It can get better, but how much better, I don't know.
JP Morgan CEO Jamie Dimon speaking earlier this week on the bank's earnings call. For more on Wall Street's solid, to say the least, second quarter results. Saul Martinez, head of U.S. Financials Research at HSBC, joins us now. And Saul, you were on with us before all the earnings, and I mean, we couldn't really have had a better quarter, right? Jamie Dimon expressing doubt maybe that this can continue, but why wouldn't it? Volatility is not going away anytime soon, as far as I can see.
Yeah, I think that's a fair point. I think the question right now is the durability. I mean, these were exceptional results, especially in the capital markets businesses. You just have a confluence of different factors that are driving this, that are all pushing in the same direction, in a positive direction. Asset prices are higher. You've seen demand for financing, prime brokerage. Asia has been exceptional. The AI trade has been a big driver. You've had a lot of IPO and debt issuances this quarter, a lot of advisory activity. The traditional banking business is also doing well, Vonnie. Loan growth is good, credit is good. So it's not clear. I think for a lot of us, we look at these results and we say, wow, can it really get better than this? But there aren't a lot of in the absence of a market correction, a significant one, and or economic weakness, it's not clear that there's anything that's near us that is going to derail this train. So I do think there's a risk of complacency always with when you have results like this. But again, you look at the backdrop and it doesn't seem like there's anything that's really going to derail this train at this point.
Yeah, there were very few cracks. I mean, even sort of the traditional concerns, the cockroaches and so on, they're not materializing. And the economy is resilient, inflation is going down, maybe rates going up. Is that something that could trouble the banks at some point?
Yeah, I think if you had, if you had to look at what could be negative, one is potentially some pressure on funding cost and deposit cost. You've had a little bit. I mean, for the most part, the results have been good. The funding costs haven't really pressured net interest income. There was, with the exception being Wells Fargo, where and where you did have a little bit of pressure on deposit costs, and their financial margins were a little lower than people had hoped for. It wasn't a bad result, but I think that was a bit of an issue. And if you do see higher rates pressuring funding costs, and you see more depositors, whether it be commercial depositors or consumers, searching for yield, that could pressure deposits, could pressure net interest income growth in the back end of the year and into next year. And that would be something to look out for. And then I guess the other thing that, could derail things is just, the bar is much higher, Bonnie. It's just, they've been exceeding a higher and higher bar, but you do get much tougher comps going forward when you have these kinds of results. So exceeding a much higher number is estimates and expectations go up, does get harder going forward.
True, and that is sort of the case for all of the sectors at the moment, particularly the AI trade, Sol, right? So it's not just the banks. Wells Fargo was your top pick. Is it still your top pick? I mean, investors certainly aren't rewarding some of these banks the way they are other companies that beat and raise the way these banks are.
It is. I mean, it is. I mean, the stock reacted a bit negatively on the results and sort of rebounded yesterday. When I look at Wells Fargo, I do think that there's too much focus on the financial margin and not enough focus on the revenue growth and on the net interest income growth. And they are growing net interest income. They're growing fee income very effectively. They're managing costs effectively. I think the results improve into the second half of the year. And, and the stock, the valuation is at a bit of a discount to their peers. So I think the setup looks better for them. And I think you saw a bit of a reflection of that yesterday with the stock, coming back. So it is still our top pick. But we like the group broadly. We like the regional banks here. PNC had good numbers as well. So it is, we're generally constructive, but Wells Fargo would be our preferred choice at this point.
Sol, does Citi have a problem? I mean, the turnaround efforts, Jane Fraser's performance, investors don't seem to be loving it. And at the same time, it's continuing apace.
Yeah. Well, I think you have to look at it in context, though, too. The bar was very high. I mean, this stock has outperformed the market by a vast amount over the last year, over the last few years. And it went from trading at a pretty substantial discount to most peers to trading on par with peers. So you do have a much, much higher bar for Citi than you have had in the past. I think the issue here wasn't necessarily the fundamentals being bad. This was a really good quarter. It was that they didn't raise their full year profitability target. So, they did, they have an 11% ROTCE guidance for the year. They did 13% in the first half. That implies that the second half is going to be much lower. And I didn't think they did effectively, I don't think they effectively communicated whether that not raising guidance was conservatism or whether there's an issue. And I don't think there's an issue. I think what they're doing is they're taking advantage of the strong results and investing for growth, sort of front-loading some of the investments they talked about at their investor day a couple months ago, and that will hit. Those costs in the second half are going to hit the results a little bit potentially. But at the same time, that does position them well to maintain what has been really good business momentum over the last, call it.
Well,
1 to 2
another
years.
quarter in the books for sure for the bank. Sol, thank you so much. Sol Martinez of HSBC after a whopping week. Coming up, we're going to get you set up for your trading day. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
This is Bloomberg Brief. I'm Vonnie Quinn in New York, and now a look at what's ahead today. Earnings on deck. We just got earnings from United. Stock is up 4% in the pre-market after it widened its guidance. GE also coming before the bell, and then we get Netflix after the market close. Plus, we get Fed Speak today from Laurie Logan, Jeffrey Schmidt, and Philip Jefferson. And then President Trump will address the nation tonight at 9 p.m. at New York time. This is your macro picture going into your Thursday session. NASDAQ 100 futures pointed lower. We do have the two-year yield up almost 2 basis points, but down generally at 415. Brent crude holding on around the $85 mark. That's it for Bloomberg Brief. Surveillance is next.
Today, Wayfair sees immense potential in brick-and-mortar stores.
When we got into physical retail, our view was that, even if the market continued to grow for e-commerce, probably a large chunk of the market in the space would stay offline.
Kate Gulliver showed me around Wayfair's new 150,000 square foot Atlanta flagship store.
When customers who have seen us online come into the store, they're generally a bit surprised by actually the breadth of what we offer. Often if you're going online, maybe you're looking for something particular. But when you come into the store, you walk in, you see the market square, you see all these pillows, you see the decorative accents. So what we're seeing actually is that in store, we do really well in some categories that online are, less a percentage of the total.
How does technology help in kind of making it seamless online to store?
I think
and vice versa.
The biggest thing is for the customer on the front end, that she can be in the store, that she can actually shop here, go back home, complete that purchase. And if you look at these sort of price tags and everything, they're all these digital tags. That's because they're the exact same prices they are online. So you're not going to be surprised that you saw something in the store and then you decided to purchase it online, that it's somehow different and that the offering is different. It's actually very consistent. But when she's here, she can have her app open and everything that she's doing here can be very similar to what she's doing at home. And I think that consistency is quite important.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersetchi in El Ula, Saudi Arabia, and this is Bloomberg.
The underpinnings of this market are still in decent condition. The big story is earnings.
The reality is the earnings prospect remains very positive.
Right now, you're seeing so much earnings growth within these semiconductor names that it's a question of how sustainable they will be.
You're probably going to see companies continue to be cautious about the outlooks for Q3 and the rest of the year.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Thursday, tension building, crude elevated, the US striking Iran for a fifth straight day. Higher energy prices failing to stop United from raising its outlook after Wall Street wraps up a record-breaking quarterly earnings season. Up next, the CEOs behind the numbers, Scott Kirby, Brian Moynihan joining the program later this morning.
So far, earnings are triumphing over macro concerns, even with the pressure being put on a lot of these companies from high oil prices, from uncertainty. The rhetoric has been that the consumer is strong, demand is resilient. A lot of it is being driven by the higher end, the upper end of the K, and there is a sense that it can continue over the near and medium term.
You've got to take note of how this market's responding to some of these numbers, though, particularly on the tech side of things. ASML out of Europe, fantastic numbers. TSMC, Taiwan Semi, fantastic numbers. Nasdaq is down on the week. Tech trade is still struggling a little bit, even with that as your backdrop right now.
It's struggling to understand what it is. For a while, it was moving away from hyperscalers, going to the semiconductors, and now people have decided, regardless of what the earnings say, we're going to shift back to the hyperscalers. So that's what you've seen, because people are skeptical about how long this can continue, given the fact that there's a renewed focus on expense, on cutting expense, on doing it yourself, on competition. And that fear is triumphing over, frankly, earnings that keep beating, but they aren't beating necessarily by $10 billion in each unit, the way that maybe you saw in other places. And that's the reason why maybe you've got a little bit of skepticism, but otherwise, it just simply is that people have shifted their focus and the market can only focus on one thing at a time.
To your point, those profits have insulated this market from this mess in the Middle East. Check out crude this morning. Still elevated, but slightly lower. We're down on the session by 0.2%. WTI around 80. Brent crude still around 85. Striking Iran for 5 consecutive days, wave after wave after wave.
Yeah, and last night's wave ended around 9 p.m. Eastern time. Again, CENTCOM coming out saying they want to degrade Iran's capability for going after commercial vessels in the Strait of Hormuz. Also, this got my attention last night from the Wall Street Journal. Trump leaning towards expanding military operations in Iran after days of briefing with top aides. We have been here before, but the President of the United States, along with his team, another Situation Room meeting, potentially looking at options that they can go in and do a little bit more of escalation to try to get Iran back to the negotiating table.
This is why the coast isn't clear. This is why for Kevin Walsh, the Fed chair, it is not mission accomplished. Look at the data we had recently. Gasoline prices, biggest decline in gasoline prices since 2022. How much comfort can you have with those numbers when things are looking increasingly uncomfortable in the energy sector?
Well, Fed Chair Kevin Walsh said that he's not comfortable, and the market is saying we're getting a lot more comfortable, because what you've seen over the previous 2 trading sessions was the biggest 2-day drop in 2-year yields going back to early April. People are saying, okay, this removes the urgency for a rate hike. And increasingly, people, when you talk to them, expect the Fed to be on hold for this year and then cut rates next year, even though in the market they're pricing something different. So even though Kevin Walsh is coming out and saying the coast isn't clear, he's leaving little tea leaves that give people hope that maybe he still is on the more dovish side, including some of his comments on AI.
CPI a little bit softer, PPI a little bit softer. The next data point, 8:30 Eastern Time, jobless claims just around the corner. I'll take a guess, 215, 220. That's what it usually is.
Bold.
Around 8:30 Eastern Time. Yields this morning, 4.15 on 2s, 10s around 4.60. 3 hours away From the cash open this morning, with equity futures slightly elevated on the S&P 500 this morning, we see futures down by about 0.1%. Coming up this hour, we'll catch up with Brian Levitt of Invesco on the high bar for earnings. We'll speak to Norman Rule of CSIS as the US strikes Iran for a fifth day, and Mark Newman of Bernstein as TSMC posts a 77% profit gain. We begin this hour with stocks sliding following 2 days of gains. Brian Levitt of Invesco forecasting more robust earnings on the horizon. Writing the bar is high for the tech sector. The focus is likely to be on guidance. Misses are likely to be hit harder than usual. Brian joins us now for more. Brian, good morning.
Good morning.
It's good to see you, buddy. The earnings have been great. The reaction has been somewhat mixed. What's your read on that this morning?
A little bit of, my point about the bar being high. I think we came into this year, everybody was so worried about if the demand was going to be there, and we know the demand is there, and the markets had to catch up to it. I think the markets have come along to the fact that, this is a strong demand story, but at some point, the earnings growth starts to moderate. It's nothing disastrous, but it does start to moderate. So I think you're seeing a little bit of unwind in sentiment, a little bit of unwind in leverage in these markets, but fundamentals continue to look quite good.
Are there pockets of the market that you are uncomfortable with? And I ask that because typically you're quite bullish and constructive.
Yeah, I'm not overly uncomfortable with it. There's pockets of the market that I've been getting more excited about, and we've been talking about for a while. I mean, we sat here in 2024 talking about only 7 stocks winning. At that time, we would have been thrilled to have seen the other 493 performing as well as they have within the S&P 500. And so what you're seeing in financials and other parts of the market is all very comforting. That's not the sign of an economy that's rolling over. It's not the sign of a market that's rolling over. It's in essence a sign of expectations getting incredibly high in the tech sector, but market activity broadening to other parts.
How do you understand the shift to hyperscalers away from semiconductors? Is it just an exercise in valuation, or is there something fundamental behind it?
I don't think it's a huge fundamental issue. I think that you had seen such a big move in the chip stocks and such a big move in the memory stocks that you were likely to see some unwind in momentum. And you look at the chip sector, which was up like 75%, more than that year to date, and it's been off a bit since, not a bit, 17% since June 22nd. So that's a bit of a momentum unwind. I don't think it's a harbinger of anything disastrous. Again, the fundamentals are still quite strong.
Do you think the chip sector has outsourced its trading activity to Korea, and what's going on with some of the single name volatility and the greatest volatility that we've seen since the financial crisis? No, I mean, I wonder how much what happens in that market in the Kospi is filtering into the United States and really causing a lot of people to feel anxiety.
I think there's a whole, I don't think that it's necessarily because it's happening in Korea. I think it's all part of the same trade where this had just moved so far, so fast that investors are reassessing their expectations, reassessing just how fast this can grow. Again, fundamentals are very strong, right? This is the type of growth that we don't typically see, right? And so the tech sector is going to continue to post strong earnings. Sentiment has just gotten very high, and it's a bit of an unwind. I don't think it's anything particularly ominous.
I've got to be honest, Brian, from my perspective, it's easier to identify a pool of doubt right now relative to a deep pool of exuberance. If I look at the bank earnings from earlier on this week, the conversation we had repeatedly is whether they can repeat the act. Is this as good as it gets?
Right.
Is that skepticism a wall of worry we can keep climbing?
Yes, I believe it is, and I continue to think that the backdrop continues to be favorable. I mean, the backdrop coming into the year was about as good as I could have remembered. We disrupted it with the war in Iran. It looked like we were moving past it. We saw inflation expectations down, oil prices down, gasoline down. All of this was moving favorably. We've got a little bit of a hiccup there. I don't think it's a huge surprise to see, tech sell off a bit, or, mid to late June with Fed officials getting a little bit more hawkish, and now maybe we're backing away from that. Of course, the conflict still continues. Ultimately, I think we move through it. Macro backdrop remains strong. I am one of those people who believes the Fed is on hold. I do believe we will ultimately get cuts in 2027, and I think we'll see the conflict have some type of resolution or some type of extended ceasefire that keeps commodity prices lower and the global economy picking back up again.
At the moment, though, we don't. We're back to hostilities, and the president is even considering potentially even sending ground troops. when it comes to maybe seizing Carg Island. How does the market look through that?
Yeah, so we've heard this before, and I think the market is generally expecting some type of reasonable resolution on this, or something that allows the market to keep it in the background, and that's basically where we've been since April. So we have not had any type of concrete resolution, but the market's been willing to look past it. That's where the market still is, even with oil creeping up in recent days. If not, different story. But ultimately,
what if this goes to a level that it becomes much more volatile than we are now? How does the market can't look through that, can it?
Well, you'd have to get a sense on what it means for economic growth and what it means for Fed policy. And so if you were to have a sustained rise in oil prices, gasoline prices, I'm not talking about a couple a day jump where the oil prices go up 20% and then start to come back down. I'm talking a sustained move higher, and that starts to really weigh on U.S. economic activity. That's a different story. Ultimately, what I think we're dealing with right now are commodity prices, oil prices that are going to be volatile based on the news flow, but my expectation would not be a sustained $110, $120 a barrel.
You might have some insight that none of us have. What does it mean for Fed policy? Because at this point, after 2 days of testimony, I don't know. Do you?
Yeah, they're all over the place. I'm of the mind that what we've been hearing is a bit more dovish. I think I've said many times.
What gives you that steer?
Well, I've been watching the inflation expectations, which are very well contained. The job market is not overly robust. Wage growth is modest. Goods prices are fine. Shelter costs are moderating. So I don't know why we would be raising interest rates into this. I don't want to raise rates because of a supply shock in the commodities market. And I think that's where the Fed will be as well. If not, different story. I got to call them. They don't answer my calls, but I would not be raising interest rates in this type of an environment.
Still a FOMO guy?
I am still very much a FOMO guy.
I didn't expect it to change today. Brian Levitt, thank you, sir. Brian Levitt there of Invesco. Equity futures slightly lower this morning on the S&P 500. Let's get you an update on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, good morning, John. U.S. striking Iran for a 5th straight day, hitting a sanctioned oil tanker near the country's main export terminal. Iran responding by firing upon American bases in the region. The Wall Street Journal reporting President Donald Trump discussed seizing Carg Island in a meeting yesterday. U.S. Trade Representative Jevson Greer signaling modest expectations for a summit between President Trump and his Chinese counterpart, Xi Jinping.
The number one deliverable we always have between President Trump and President Xi is to continue the stability of the relationship. Both of these leaders are very committed to having a strong and solid personal relationship. We will have an opportunity to take stock of Chinese commitments with respect to purchases of soybeans and other agricultural products. We'll take stock on the rare earth issues we decided.
Trump expected to meet with Xi in the U.S. in September. And in sports, the World Cup final is set. Argentina will play Spain on Sunday after defeating England 2-1, coming from behind and scoring both goals after the 85th minute of play. President Donald Trump is planning to attend the game in New Jersey. And that is your Bloomberg Brief, John.
On behalf of my friends across the nation of England this morning, we'll pretend that didn't happen. Up next on the programme, escalation with Iran.
They want to settle so badly. They don't like what we're doing, and they do want to settle. We'll find out whether or not we settle with them or we just finish it off. The country is booming, and we'll have Iran defeated soon.
Norman Rule of CSIS joins us next, live from New York City this morning. Good morning. good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Coming up on the program, 8:15 Eastern Time. Don't miss this. We'll catch up with Scott Kirby of United Airlines after that company raising its guidance after facing down some serious fuel cost problems. Then we'll touch base with Brian Moynihan in the studio here in New York City, 8:30 Eastern Time. Looking forward to catching up with Brian after what looks like the best start to the year this company has ever had. What a quarter, what a first 6 months for the big banks on Wall Street. Equity futures this morning on the S&P 500, slightly softer. On the S&P, we're down by 0.1%. On the Nasdaq, we're down by 0.5. Down 0.5, even with great numbers out of ASML, fantastic numbers out of Taiwan Semi, and this tech trade is still stumbling.
It's changing. It's really still a punish semiconductors after a meteoric rise. Maybe go into hyperscalers, because even amid yesterday what we saw, which was ongoing softness in the semis trade, you did see an outperformance of the likes of Amazon and Microsoft and Google or Alphabet. And so this is the question, do you see that rotation continue, or is this an overall read on over-exuberance in the tech trade?
That's the story in the stock market right now. Here's a story in the bond market. Yields lower off the back of softer CPI, PPI this morning, just a bit higher by 2 basis points. Still around 420 at 415.77 at the front end of the yield curve. The move in crude looks like this, still elevated, but declining by 0.1%, around 80 on WTI. Brent crude around 85. Under surveillance this morning, escalation with Iran.
They want to settle so badly. They don't like what we're doing, and they do want to settle. We'll find out whether or not we settle with them or we just finish it off. The country is booming, and we'll have Iran defeated soon. A lot of people thought oil would go up to $350 a barrel. It went up a little bit because I had to take tough action. When that settles down, I think you're going to have $55 oil.
So here's the latest this morning. The US striking Iran for a 5th consecutive day and hitting a sanctioned oil tanker sailing towards Karg Island as Tehran shows no signs of backing down. Bloomberg's Tyler Kendall has the latest. Hey, Tyler.
Hey, John, good morning. Well, it is another day where Iran is reiterating that the Strait of Hormuz will remain closed until further notice as the U.S. steps up its own action. The Pentagon confirmed that it hit this supertanker near Karg Island as it moved toward an Iranian port, marking the first such attack on a vessel since the U.S. reinstated its naval blockade. Now, we heard from CENTCOM last night saying that it helped at least 10 ships transit through the strait overnight as the 7-day average for oil flows in the waterway has fallen from 4.6 million to 3.9 million barrels a day, according to RBC Capital Markets. And it is numbers like that that's leading this White House, according to our reporting, to consider extending that Jones Act shipping waiver in a bid to make sure that it stays easier to move oil in this country amid what feels like we're headed towards prolonged supply disruptions, because we're seeing this reporting from the Wall Street Journal that is indicating that President Trump is leaning toward expanding military action, which could mean the potential for ground troops, though the reporting goes on to caution that he hasn't made a decision quite yet. And John, we heard from the Vice President, J.D. Vance, last night in an interview, seeming to bat down part of that notion, saying that the U.S. isn't looking to put boots on the ground. And President Trump himself has opened the door to diplomacy, reiterating yesterday his claim that Iran is coming to the U.S. asking for talks, though, of course, we haven't heard public confirmation from the Iranian side that they are looking to do so.
Tyler, how closed is the diplomatic channel right now? Are there any talks going on between Steve Witkoff and Jared Kushner and their counterparts?
Well, Anne-Marie, as you know, President Trump has indicated that he would be okay if his negotiators kept talking. He did list Steve Witkoff and Jared Kushner last week when it comes to his top negotiators. But at this point, we haven't gotten indications that those talks are continuing. In fact, we're seeing that the U.S. is instead trying to pursue this more kinetic action, but then also that economic pressure with the naval blockade and revoking that oil waiver that had allowed Iran to sell its crude to market. President Trump did say yesterday that there was this goodwill gesture and noted that Iran had released an American that was imprisoned in the country, though we didn't get many details beyond that. And that was taken as a potential sign that, of course, these talks are still happening in the background towards trying to get them back to the negotiating table. But at this point, we really haven't gotten that confirmation that they're making stronger progress or even on that technical level about what they had agreed to talk about when it comes to curbs on Iran's nuclear program.
Tyler, stay close. Let's just pick up on that reporting. Anne-Marie, I want your feedback on that. The possibility, the potential that this could spread from limited action to a bigger, let's use the president's word, excursion, that this could be a return to revisiting the kind of things that we were talking about in March, April time, which is seizing Kark Island. What kind of military capabilities, resources do we need to achieve that? Because at this point, it still seems unclear to me that we have the ability, certainly have the willingness, to maintain an open passage through the Strait of Hormuz. Given the asymmetric nature of this, the fact that Iran can make that very difficult for both shippers and the US alike with very cheap drones, have we done enough sufficiently to establish, provide any evidence whatsoever that that's achievable?
Well, I think for it to be more achievable, you would need more troops in the region, amphibious assault ships, and also if you're thinking about trying to take control of an island, you would need ground troops. Absolutely. So I guess that's at this moment, that is what the president is weighing. He has given Iran a very long leash to try to come to the negotiating table. And at some point, the president might want to escalate because he's left with no other option.
Here's the take from Norman Raw of CSIS. He says, this is no longer a ceasefire suffering violations. It is a limited enforcement war with no apparent diplomatic exit. Norm joins us now from Norm for more. Norm, always appreciate your time, sir. So please elaborate and tell us what kind of phase you think we're in right now, and what is the potential for this to become something bigger, something less limited?
Good morning. So we're looking at the Iranians using attacks as part of their negotiating strategy. These attacks are not saturation strikes. They're limited, but they're sufficient to demonstrate that Iran has the capability to close or to restrict traffic in the Gulf, the Strait, and in the Arabian Sea. At the same time, the United States is undertaking a series of expanding and widespread attacks that are both degrading Iran's capability to attack shipping and to demonstrate to the Iranians that there is a material price to be paid for their lack of diplomatic engagement. Now, the diplomatic channel remains narrow, but it is open, and through the release of the American citizen, that is evidence of that. But as a ceasefire, this construct no longer is working. So what the United States is hoping, apparently, is that its actions will provoke a debate in Iran amongst its leadership. Basically, do they want to take this a lot farther? I think the answer is going to be yes in the near term, but events will dictate the course of this dynamic.
Norm, can you provide some more context on the debate happening right now within the elites of Iran? Because some individuals are calling the likes of Mohammad Ghalibaf a traitor for even having these negotiations with the United States.
Well, you want to be careful about anyone outside of that dynamic, especially 6,000 miles away, talking with great clarity. But it is clear that we have, especially in the wake of the funeral of the previous supreme leader, a space where individuals in this political world are each trying to outdo each other for a tough position on the United States and the region. Now, that is likely going to remain constant for some time. But again, in the long term, or in the medium term, rather, Iran has got to decide, do they want the United States to continue to move attacks north, to cut down maybe some of the bridges, to restrict the flow of trade into country, which touches their inflation, unemployment? It is a conversation that its leaders are going to have to undertake. I think in the short term, the dynamic is going to be for Iran to continue its pressure against the West and its neighbors.
Norm, how much can President Trump escalate without Congress signing off on some sort of resolution of war?
I think the administration would feel that it has considerable flexibility with the personnel that are in the region, as long as the United States is not engaged in a long-term boots-on-the-ground endeavor. The personnel that we have in the region are sufficient to conduct clearing operations that would take some time, but this is not a boots-on-the-ground forever war such as Iraq or Afghanistan.
Well, but that's sort of the issue and the tension here. How much are boots on the ground required to really escalate to the degree that really cripples the current Iranian regime, as AMH was talking about earlier?
Well, the comments that were made earlier are appropriate. I would say that this is no longer the 1980s. We have drones. The Navy has demonstrated some unique and special drone capacity involving sea drones. We don't need to have personnel on the ground as long as we have a capability to strip the Iranians of their offensive punch. Now, we do have personnel out there that are capable of raiding operations, and that's different from occupation. And even when you think occupation, it's a very long coast. So, putting personnel on 100 miles of coast is not going to be reasonable. So you want to really have your personnel go where the offensive punch is. And I'll close by saying we also need to keep in mind that drones and missiles can be fired from a long way from the region. So having personnel 10 miles in or 20 miles in doesn't necessarily stop the Iranians from conducting strikes. So this is a recipe that's going to require some complex work, but our CENTCOM leadership are really quite capable and experienced in this regard.
Has Norman Rule got a bug in our control room?
I love it.
How does he know what time is it?
Yeah, he's perfect.
Does he know what time the break is?
Well, and he also is like, and let me tell you. I love it. Norm, always great.
Because he watches every day.
Perfect timing, Norm. Thank you. Norman Rule there of CSIS. Why can't all guests be like that? Just take it up to the break and say, "I'll close."
He's an absolute professional.
Without a doubt. Up next on the programme, Mark Newman of Bernstein as TSMC's 77% profit surge fails to impress investors. That conversation just around the corner.
Western countries, all of them are cutting funding to Africa. And some of these programs were supported by funding coming from Western countries, like for human resources, for testing, for transportation of samples. And suddenly, African countries have to think how to fund money and to cover this gap. But it takes some time. And I think the combination of all of these factors are fueling this mistrust that we see at community level. We value the support we got and we are still getting from the US. And we think that if we continue to work together, and there is no reason for the US not to work with Africa CDC, Africa CDC is the leader in terms of public health in Africa.
The global economic playbook is being rewritten and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
Days of gains on the S&P 500 this morning, pulling back by a tenth. On the Nasdaq, down by 0.55. We'll talk about the tech results in just a moment. You've seen the price targets, upgrades across the street over the last month from Wells Fargo, Barclays, JP Morgan, SocGen, RBC. I lost count a long time ago. Some pushback from Bank of America in their fund manager survey published in the last 24 hours. The equity overweight in the US, the biggest since 2024. Forecasts for a boom, the highest since 2022. Their take, reduce equity exposure. Summer upside for risk assets will remain stymied by bull positioning. That's what we're fighting this morning. Some very long positioning. In the bond market, 2s, 10s and 30s, yields still elevated, 2s still around 420. Yields higher this morning by 2 basis points of 415.56. 2 days of testimony from the Fed Chair, Kevin Warsh. What did you learn? That much, okay. Not much at all. And maybe that was the goal of the Fed Chair.
You know, we weren't expecting much, let's be very honest. At the same time, on the margins, there actually was something kind of interesting yesterday, and that was the rhetoric of Kevin Warsh around AI and the fact that maybe it isn't as inflationary as people expected, and that actually is in contrast to what we're hearing from other Fed officials that are saying this is their priority, that they're mostly concerned about inflation tied to artificial intelligence. It's pretty minor, but that's what I got from yesterday's testimony.
We'll be playing that clip out in about an hour from now. We'll have that conversation, so look out for that. Let's turn to crude. Crude right now, Brent and WTI, just about unchanged on WTI around 80, on Brent crude around 85. We just touched base with Tyler Kendall down in Washington, D.C., and as Tyler indicated, this reporting coming out of the Wall Street Journal, that the president is leaning towards expanding the military operations in Iran. That would catch this market somewhat off guard, even with the strikes we've seen over the last 5 days.
Right. It would be a serious escalation when it comes to what's going on in the hostilities. And as you say, off of a series of waves, last night, 9 p.m., the latest series of waves from U.S. forces striking against Iranian facilities, military assets, defense sites, drone capability sites, everything that the Iranians, the IRGC, is using to attack commercial vessels the United States is going after. What Trump is weighing would be something a lot more in terms of an escalation.
Crude this morning, it's all calm, for now at least. 85 on Brent, WTI around 80. 3 hours away from that opening bound. Let's get you some morning movers, some single names. Yahara has more. Hey, Yahara.
Hi, John. We are seeing TSMC ADRs falling nearly 4% in the pre-market, even after the chipmaker delivered a blockbuster quarter. It beat on earnings, raised its outlook, and also hiked its spending plans due to stronger demand. Yet the market is not impressed, and it may be that bigger capex number that is that is giving investors pause, adding to the angst that we've been seeing across the market about how the industry is spending so much on AI infrastructure and whether it will ultimately pay off. Turning to United, those shares are falling nearly 2.5% now in the pre-market, even after the airline posted a beat and raised the lower end of its full-year outlook. But its third quarter guidance did come in a touch lighter than expected. That was due to higher fuel costs. And it's the same story we've been seeing across the industry, with premium and international travel doing very well, but not well enough to ease some of the pressure after higher fuel bills. And we end on United Health. It just posted earnings moments ago. Shares are surging 8% in the pre-market. It delivered a beat and raised its full-year outlook again. And a big reason why is it paid out less in medical costs than Wall Street had expected, giving investors confidence in its turnaround plan. And what's notable is the stock had already run up nearly 30% year to date. So the bar was high and it more than cleared it. John?
Yahira, thank you. Thank you very much. Their stock is up by 8%. More from Yahira in the next hour. On our radar this morning, TSMC ramping up its capex plans, expecting to spend up to $64 billion this year. The chipmaker affirming it's likely to spend even more over the years ahead after posting a 77% rise in quarterly income. Elsewhere, the JP Morgan boss, Jamie Dimon, warning of the risks around Anthropic's Mythos model.
That's a real issue, which I know our government is on top of at this point. But it's really just to make sure we roll out the stuff that we know is being controlled, because you're giving ballistic missiles to individuals with Mythos, basically.
JP Morgan among a select few firms given early access to that model. Speaking of Anthropic, lining up talks with investors ahead of its potential mega IPO, reportedly working with banks including Morgan Stanley, Goldman and JP Morgan, the $965 billion company considering a public offering perhaps as soon as October.
Yeah, and getting a credit line as they do so. There are a number of really interesting aspects of this. So number one is some of the skepticism that's been mounting about who is going to pay for all these tokens as the era of token maxing seems to be fading and token optimization seems to be surging. On the flip side, there's also a question of how much tolerance there'll be in not only equity markets, but also bond markets to possibly finance this, because they will probably follow the playbook that we saw from SpaceX, which is issue shares, do an IPO, and then issue a whole lot of debt. And I'm looking at the SpaceX debt right now, and it has just been tumbling. I mean, it was issued close to par, and now it's down almost 10 cents on the dollar. I mean, this is a pretty big decline, particularly the longer duration ones. So how much are they getting their sort of aspirations clipped by the market realities on the ground?
There's some pushback in the debt market, not just on SpaceX, but Amazon as well. When Amazon came to market, we saw that in the secondary market. We saw some pushback, not just to Amazon debt, but to debt across some of these big issuers around this one theme. It raises the question really for the banks. The banks have been able to leverage this story really, really well. They get a piece of the IPO, they get a piece of the debt offering. We've gone through some of the numbers regarding equity trading revenue. That's been fantastic because the market backdrop has been so good. I can share some of the stats with you from Goldman, new Wall Street record for equity trading revenue. JP Morgan, Wells Fargo, Morgan Stanley, best quarterly profit ever. Bank of America will catch up with them later this morning. Brian Moynihan about 2 hours away. The best 6-month start to the year we've ever seen at that bank. For this to continue, you want the Anthropic IPO. You want them to do what SpaceX did. You want OpenAI to follow up after that as well. There's some question marks around that happening in that specific order in a timely fashion.
And so far, it seems like people are still willing to go to market even at a more expensive price. It hasn't been to the point where there is this sort of price sensitivity. That said, it does raise questions about the optimal time to not only IPO but raise debt. And so to your point, at what point is the pain threshold too high? Right now, it seems like the market, you can see this in IG AI-related debt, you could see it softening, spreads widening, people starting to say, maybe this isn't as creditworthy given the glut of what's coming to market. If that continues, does it really lower people's ambitions? Unclear at this point.
The October date is interesting to me because, of course, the DoD is giving contractors and all the departments within the Pentagon to purge Anthropic by September 29th. That's what Breaking Defense has come out with. So basically, they're going to be persona non grata within the DoD right now, and then go to market for the IPO just weeks after that happens. All of this as they continuously have really difficult conversations with this administration that put export controls on them just a few weeks ago.
Any sign it's hurting their valuation right now? I've got to say, just looking at their valuation, no real signs it's hurting their valuation.
No, if anything, it only makes them more relevant. I mean, at a certain point, everyone's saying, look, I'm a risk too. Please pay attention to me, because ultimately I could hurt you, but also I could help you.
It drives me insane. Is it a marketing pitch or the real deal? I don't think Jamie Dimon's along for the ride for the marketing pitch, so clearly he thinks some of this stuff is the real deal.
My sense is, in many conversations, this wasn't the government necessarily going to the banks and going to the well, not just the Anthropics of the world, but the more broadly, the LLMs and Anthropic specifically on Mythos. It was the banks going to the government and saying, hold on a second, this is actually a serious concern for us because of some of the vulnerabilities that it's finding, and potentially could threaten the monetary system.
The policymakers felt the same way.
Yeah.
Not just in America, but over in the UK as well and elsewhere. Got a real sense of that, the IMF meetings in Washington a few months ago, back in April. When this all started to roll out, there was more concern over that, more chat about that than there was almost anything else.
What happens if someone figures out how to absolutely stymie the payment system across the world? What happens if, say, some hacker from Iran or some hacker from Russia figures out how to use mythos or fable to get in and disrupt some sort of vulnerability in systems that have been built on top of each other that are naturally subject to human foibles? This has been something dominating a lot of conversations.
Get back to pen and paper, people. You know, get back to that.
That I don't think is happening.
Save the people, you know.
Yeah, but
the
people are
labour market.
messy.
Ask for a raise, all right? Equity futures on the S&P, have to sneak that in. We're down by about 1/10 of 1%. Let's get you an update on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. South Korea halting new listings of single-stock leveraged exchange-traded products. The move follows a surge in popularity of funds tied to Samsung and SK Hynix. More than a dozen leveraged ETFs launched 2 months ago, aiming to deliver twice the daily return of the individual stocks, for example. King Street Capital is significantly restricting withdrawals from its flagship hedge fund. Exiting investors will be moved to a separate vehicle that will sell off the assets over time. The 31-year-old fund has struggled with lackluster performance, fleeing clients, and an exodus of staff. The executive director of the International Energy Agency warning that the global economy will face a renewed challenge if the conflict in the Iran war resolved soon. Fatty B-roll saying the Strait of Hormuz needs to be fully and unconditionally opened in a matter of weeks, not months. And that is your Bloomberg Brief. John.
Not sure how much control he has over the situation right now. Vonnie, thank you. And complacency will build because this market has been burnt once, right? This market paid all this attention to this issue, then inventories insulated to us from any of the consequences, the real fallout, the blowback from these attacks in the Middle East and the closure of the Strait of Hormuz. And now the second time around, people are just like, it doesn't matter. It doesn't matter.
The logical story hasn't been the right story, at least not now, and it's partly because of what's going on in China, due to the deceleration there and due to a shift to electric vehicles and beyond. Question is, are we still not out of the woods? And I keep thinking about what the CEO of Chevron had to say about that and the idea that we are eating down some of our inventories.
I'm certainly not saying Fatty B-roll's wrong. I'm just saying, sitting here this morning, who on earth in this market is listening to Fatty B-roll and saying, oh, that's concerning? Because they saw so many of those warnings repeatedly, one after another, through March and through April.
And you can tell by this administration, the president certainly prefers the diplomatic route. He continuously goes back to that. And even when he said the ceasefire was off and you pressed him, are we back to all-out war, he refused to commit to that either.
That's what makes this situation maybe a little bit more unsettling in some ways. Crude this morning, Brent around 85, WTI around 80. Up next on the program, the resilient traveler.
Broadly speaking, I think the consumer's doing well. Certainly the higher-end consumer is doing very, very well. Our international, travel season is looking very, very healthy. I don't see fuel prices deterring that.
Navigating sky-high fuel prices. We'll talk about the airlines with Tom Fitzgerald of TD Cowen up next.
We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like
Very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm election.
Hear it first on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Later this morning, Scott Kirby of United Airlines, looking forward to that conversation following decent numbers from them, record numbers in some ways coming from Brian Moynihan and the team over at Bank of America. We'll catch up with Brian at 8:30. Sprinkle of World Cup action. How many games do you reckon Brian's been to in the last 6 weeks?
Well, I imagine he's been quite busy, but I would hope that considering the fact, I would imagine based on these results, that he's probably been somewhat busy. That said, considering the fact that they're the sponsoring bank behind the World Cup, I hope he got to some of them. I'm trying, I'm getting there.
I'll be disappointed if it's not at least 5.
Yeah.
Oh, I was going to say a dozen.
Well, I'm sure he'll be
at least 5.
I know where he's going to be on Sunday, though. And I think that he will be.
Can you imagine if he's not at the final this Sunday?
No, that'd be crazy.
He will be at the final. The question is, does he have extra tickets?
No. Yes. Who's he rooting for?
We'll try
Who's
and
he
find
going
out.
to support?
As a sponsor, can you pick a team?
No,
I don't know
of
if you
course
can. Haven't you got to pretend
Deep
that you
down,
haven't got a team?
But deep down, you'll have a team.
We'll try and find out from Brian later, 8:30. Prepare, Brian. All right. Futures right now on the S&P 500, negative by 1/10. On the Nasdaq, we're down by 0.5. Really decent numbers out there again this morning, and this market is struggling to pick up, struggling to rally, even after 2 days of fairly muted gains on the S&P 500. Turn to the bond market, 2s, 10s and 30s. 2s really queuing off what happened with CPI and PPI, a bit softer than expected, particularly CPI much, much softer than expected. 415 on 2s. Lisa, we talked about it repeatedly over the last week. We've taken away the urgency to hike. We haven't settled the debate, and in some ways, Chair Walsh supporting that somewhat.
Yeah, and really talking about how he hasn't necessarily seen mission accomplished as the goal. That said, sounding a bit more dovish yesterday around the edges about AI, as well as just more broadly. We'll have to see, we'll have to study. The longer they have to see and they have to study, the more it benefits actually staying on hold, just simply because there isn't necessarily the data to support that. That said, and this is the anxiety that we have to deal with every single executive, how much does the percolating conflict in the Middle East change the backdrop should it persist?
And it does persist. And elevated crude prices persist as well. Crude right now, Brent around 85, WTI around 80. Not seeing a massive move, just another series of strikes and a commentary report coming out of the Wall Street Journal that maybe those strikes are expanded and the president is leaning in that direction. Now look, is that part of the negotiation? Is that the signaling for the Iranians that this is what the president is thinking right now? You probably want to negotiate. I don't know. But that's the state of play.
Right. If you were the White House, this is the kind of news you want to get out there to reach Tehran. And according to the Wall Street Journal, it says options include stepping up airstrikes, sending ground forces to seize Iranian islands near the Strait of Hormuz, and bombing a fortified site that could be used for covert nuclear work. So if you're the regime right now, and you have had waves and waves and waves of strikes, and this is the information now starting to leak out of the White House in the Situation Room, you might start to have that debate amongst the elite that Norman Rule was just referencing earlier.
Brent crude right now around 85. Under surveillance this morning, navigating sky-high fuel prices.
Broadly speaking, I think the consumer's doing well. Certainly the higher end consumer's doing very, very well. Our international, travel season is looking very, very healthy. I don't see fuel prices deterring that. I don't see oil prices returning back to the peaks we saw a few months ago. We're going to be fine. We're going to get through this period of time.
So here's the latest this morning. Strong travel demand driving up profit even as fuel prices soar. United, the latest to raise its outlook. Tom Fitzgerald of TD Cowen keeping a buy rating on the stock with a price target of 176, writing, "We believe investors should focus on the robust revenue outlook implied by the guide rather than the guide relative to stale consensus." Tom joins us now for more. Tom, welcome to the program. We've heard from United, heard from Delta. What are your conclusions so far?
Demand is great. I mean, I think compared to what we were concerned about back in March and April, the quarter and the year is going about as well as can be. I think the fuel spike in the last couple of weeks is frustrating and kind of muddies the narrative a little bit. But the main thing and the North Star for the industry is unit revenue performance, and it's on fire right now.
And a big part of that is because they've been able to raise prices in a significant way without dampening demand, and they've restricted capacity. How much longer can they continue to raise prices in a capacity-constrained environment?
I don't think, I mean, fuel will swing it a little bit, but I wouldn't expect more price increases from here. I think the year-on-year run rate as we lap this will continue to go higher. And I think the name of the game right now is more about just maintaining this level of pricing and not giving it up like we saw back in the mid-2010s.
How much is their increased revenues really derived from the fact that they have constrained capacity in a dramatic way and are even considering continuing to cut just to keep planes full and to maximize profits?
I think that's a big element of it. I also think the fact that they're generally the premium mix shift, the fact that the cabin's much more segmented than it's ever been. I think the international boom, corporate's back. That's a lot of close-in bookings at higher pricing, so that really benefits them well. I think it's all of the above. I don't think it's any one particular thing.
This might be a stretch, so bear with me. But how much are the airline results also an AI trade? And I'll explain why. Because we're seeing, for example, aero defense come into play. A lot of that has been driven by new technology, and that's been a lot of the business travel. Financials also being a lot of the business travel. How much have the premium offerings been driven by all the activity that we're seeing at the banks and beyond that really has been funded by the capital markets?
Oh, absolutely. That's a big part of it. You can see it in the cargo over the Pacific a little bit. And I think another angle to consider is the wealth effect, just from the AI lifting the broader stock market and how that buoys, wealth-driven spending, especially from the baby boomer cohorts going to Europe kind of all year round right now.
When it comes to the fuel prices, especially in recent days, we have seen spot jet fuel prices start to spike once again. Who is going to be the best in terms of weathering this storm?
Delta and United, they have the best balance sheets. They have the most diverse revenue streams. I think they've proven to have the most resilient business models over the last couple of years already. And I think the airlines that will suffer will be the ones who are the most leveraged, who are going into this with already weak or negative margins.
When it comes to United, though, their fuel expenses were 84% higher year over year, more than $5 billion. Can they make this back up?
I think so. I mean, I think, look, if fuel is going to stay like 3 or above, in the 3 to 4 range, I think that's going to be tricky to really drive margins higher, barring another round of big price increases. But I think if fuel would start to normalize over the next couple, 12 to 18 months, I think then you see a lot of leverage in the model.
Tom, I'm just noticing a change in the conversation. Typically, we'd ask people about the airlines, what you like. They'd just pick one. They'd say Delta. More recently, more and more, we're all hearing the same thing. They'll say Delta and United Airlines. And United Airlines. Now, American Airlines is still not part of the conversation. Tom, just briefly, one, what has United done to be considered alongside Delta as best positioned right now? And two, what can American do anytime soon to be considered part of that group?
Yeah. I mean, how much time do you have? I mean, United, they leaned into premium in a similar way that Delta did under the current leadership team. I mean, we're coming up on Scott Kirby's almost 10-year anniversary on joining the company. The management team made really shrewd fleet investments, both in the planes that they've ordered and in the decisions not to retire planes during the pandemic. The similar thing with not furloughing pilots during the pandemic, like Piers, that allowed them to really lean into the strong demand, especially internationally coming out of the market. I think they've done a lot of things innovative on the customer experience side, whether it's on the app or some of their new products like the Relax Row or the Block Middle Seat that's going to be coming on the A321 soon. So I think they're just kind of following, they realized that where the puck was going was all about unit revenue and driving a premium and decommoditizing the product and not a race to the bottom on CASM-X. In terms of American, I think they recognize that maybe we're too focused on the cost side and at the detriment to revenue performance and revenue mix. And I think they're going about it. You've seen a lot of premium investments. They're growing international quite a bit now as they take delivery of A321XLRs and 787 Dreamliners. And that's an interesting play because they do look a lot like Delta and United, more like any other airline in the industry. And if we do see this strong environment where the industry can take price, you'll see a nice, almost a beautiful deleveraging on American where they could take net leverage down from 5x to 3x. So that we have a buy rating on them, and that's an interesting play as well, just a little more risk from the leverage.
How much is Delta maybe showing signs of not necessarily being threatened, but trying to defend their turf when it comes to some of the premium offerings versus United and even to a lesser extent some of the other airlines when it comes to the business basic, the idea that they have to compete more on price even though that is the most profitable area and the area that's expanding the most dramatically?
I think it's also just a recognition that the customer mix who's sitting up front has changed. It's not as much focused on close-in business travel as maybe it was 8 years ago. And because you have premium leisure, a product like basic business might appeal to folks who maybe don't care about all the bells and whistles, but they want the lie-flat seat for a red eye or for a longer flight. But I think Delta, by virtue of how successful the business is, they're throwing off $3 to $4 billion in cash every year. They're able to reinvest and continue to maintain in this arms race, whether it's, their partnership with Amazon, which I think they can do a lot of exciting things on the loyalty side, not just on Wi-Fi, all the Delta One lounges that they're rolling out. I think they're up to 2 now in LAX. So, both of those airlines are very well positioned to compete with each other and further separate themselves from the rest of the industry.
Hey, Tom, it's good to see you. Thank you, sir.
Thanks for having me.
Tom Fitzgerald there of TD Cowen. Thank you, buddy. It's good to catch up. American Airlines, my hopes were so high. I really wanted them to turn it around. It's been such a disappointment for so many people.
Yeah, and the real question there is how much is circumstantial with respect to some of the moves made during the pandemic of taking on a lot of debt and furloughing staff, and how much is execution. And these are some of the questions that increasingly people have been asking, and we're heading into earnings from that company.
I can tell you my own personal experience as both a family who spent a lot of money with American Airlines and personally through business spent a lot of money with American Airlines. Baby on the way, stopped traveling. Baby arrives, still not traveling. Some of the highest tiers of the company, haven't heard a single thing from them and haven't spent a cent with them for 12 months. And you won't hear from them. You can just disappear after spending tons of money with the company. Can you imagine that kind of relationship with any other firm?
Robert Isom,
right?
I suggest you send a message.
No, it's not about me.
Jonathan Farrow.
Imagine
Please,
how many,
where are you?
How many
Come
other
back.
business travelers have experienced the same thing with the company and then said, you know what, reset, no thanks, Delta, thank you.
Yeah, and they give handwritten notes when you come on board.
Right.
They're like things like that nature.
I've crossed over too.
It's not good. It's not good. Up next, we'll catch up with Jonathan Golliver Seaport, Catherine Thompson of the Cato Institute, KBW CEO Thomas Show, Oksana Aronoff of JP Morgan Asset Management.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Very famous dogs. You have they look like balloon kind of figures to some extent. How do you make those?
In the case of the balloon dog, I blew up a balloon dog. So I had this balloon, which is kind of like a latex type of piece, molded it, cast it, and then blew that up in scale and put it into a clay, and eventually had that transformed into stainless steel.
So when you have a balloon dog, let's say, a regular size one or then a big one, did people say, Jeff, you're crazy? Were you shocked that people were willing to pay very high prices for this?
When I was making my first balloon dog, one of the purchasers was Eli Bro. And originally I thought I could make a balloon dog for around $300,000 that I could manufacture. It's a large piece, over 10 feet long, or 12 feet long, 10 feet high. But it turned out that the fabricator came back to me and said, you know, Jeff, I can't do it for $300,000. It's going to be $650,000. But eventually, then they raised the price again. And they finally brought it up to 1.6 million. And I told Eli that this is the reality of it. I showed him everything, and he ended up paying for the production costs.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The inflation situation is extremely complicated.
I actually don't think that the U.S. does have a sticky inflation problem right now.
It's really what's happening to inflation beyond energy prices that's really going to matter.
Ultimately, in the longer run, if you have price stability, that's good for the economy.
The economy will heal itself. Inflation will heal itself at a measured pace if Washington just leaves it alone.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your price action scores look like this. Equity futures on the S&P 500 negative this morning by 0.2%, down on the Nasdaq by 0.6, even with some really good numbers in tech. SML yesterday, Taiwan Semi this morning. In the bond market, 2s, 10s and 30s, yields pulling back over the last week or so off the back of softer than expected CPI and PPI, bouncing back this morning by 2 basis points, still around 420 on 2s, let's call it 415. On 10s up 2 basis points, still around 460, let's call this 457. With crude elevated, but declining somewhat through this morning, which is strange. We're down a few tenths of 1% on Brent. Likewise on WTI, around 80, even with a 5th consecutive day of strikes from the US on Iran. Coming up later this morning, we'll be talking about the data about 90 minutes away at 8:30 Eastern Time as jobless claims and retail sales. And based on the numbers we've seen so far from the likes of United, from the likes of Delta, this consumer is still spending.
Which is why you expect something around, I don't know, 215,000 for the jobless claims. In other words, steady as she goes, or even a bit of a reacceleration. We saw the same thing from the Beige Book, the idea of a steady, if not expansion. And really the key is, how much are we going to get expansion without inflation? And does that support some of the trades that have really seen the biggest gains so far? Or potentially, is this not enough to meet the incredibly high expectations? Because as we have talked about all earnings season, the bar is incredibly high. And unless you leap above it and do a flip in the air, people are going to say, show me what else you got.
The bar is high because the numbers have been so great. We'll catch up with Scott Kirby of United later on this morning at 8:15. We'll speak to Brian Moynihan of Bank of America as well. Just go back a few months ago, let's say the middle of March, and I would say to you, in a few months' time, the airlines will come out and they'll be raising their outlook, and the banks will be coming out and they'll be minting money, and we'll be talking about record numbers on Wall Street, bank to bank, bank to bank. That's the situation we're in. Back in March, it was almost unthinkable.
Well, yeah, especially considering the fact that oil prices potentially were going to go to 150 as people were predicting. That didn't happen. Even still, though, I mean, the likes of United had a $6 billion cost with respect to fuel, and Delta had their biggest fuel bill ever. This isn't exactly like it went away. It's just that the momentum underpinning it has superseded that potential skepticism. You said something earlier that I think is really important, and this is sort of the dichotomy right now. On one hand, you've got this feeling it's as good as it gets. On the other hand, you have a real kind of wall of worry that's persistently there. those two are connected, but also are they coexistent, right? Can you have as good as it gets if you still have people who are all really worried, or does that mean it can climb even higher? And increasingly, I think a lot of people are asking that question.
And I think also the market looks at a story like the Wall Street Journal with the president weighing whether or not to escalate the hostilities and airstrikes and even thinking about potentially a ground invasion of Iran, as this is just a negotiating tactic right now from the President of the United States, a threat to try to get the Iranians to the table. What actually caught my eye this morning, what India is doing. There should be no deployment of Indian crew members on vessels undertaking voyages through the waterway, quote, until further orders. This is a country that's heavily reliant on the Strait of Hormuz, and they don't want any of their citizens operating any vessels that are trying to traverse the strait.
We have been conditioned by experience to believe this is just part of the negotiation, which is why crude is still closer to 80 than it is to 100 right now. Coming up this hour, we'll catch up with Jonathan Golub of Seaport as the AI trade faces a fresh bout of uncertainty. We'll speak to the KBW CEO, Thomas Show, on the record-breaking quarter for the big banks on Wall Street. And Oksana Aronoff of JP Morgan drops by, warning the Fed's hands are tied. We begin this hour with stock stalling as robust results from Taiwan Semi fails to add to the tech rally. Jonathan Golub of Seaport Research Partners expecting second quarter earnings throughout the market to exceed sky-high expectations, writing EPS is forecasted to have grown 23%. Using historical beats as a guide, earnings should finish between 25 to 26%. Jonathan joins us now for more. John, good morning. Good to see you, mate.
Good morning.
Let's talk about these numbers. And if we can take a step back, please just frame for our audience how unusual it is to see numbers this big, to see expectations climb this much into earnings season outside of a recovery from a recession.
The only time that you ever see earnings growth this big is when you are coming out of recession and you're comparing yourself to numbers that were incredibly depressed because you're in a recession. This just never happens. I don't know, is this a forced standard deviation event? This is kind of like once in a lifetime stuff. And it's not, we talk about the AI trade, but if you're looking at the numbers that are being put up by the financials, and we're not, we're talking about asset managers, we're talking about banks, we're talking about trading, this is extraordinary. If you look at the energy sector on the back of the war, they're expected to deliver over 110% earnings growth. So it's not just one narrow group of companies and everything else is lackluster. It's really broad.
It's so unusual, John, that I think people are struggling to internalize it. What's happening here and why on earth can this continue? Can you convince our audience this can continue?
Well, you raise this issue of it's not only how much they're beating expectations, but how much expectations are underestimated and keep getting ratcheted higher. So imagine for a second that I'm an analyst and I'm modeling a company out and I think this thing is going to grow 80%. Do I have the guts to go to my portfolio manager and say it's 80? So what do? I say, I think this is a 60% earner, and if I'm wrong, it's even better. And when you get a 75 or 80 or 90, you say, look, I got the call right, directionally I was right. And that's what's happening. The analysts, as great as their estimates are, they're actually being lowballed. The estimates are going up 50% year to date. I mean, we've never experienced this.
How much is this all the AI CapEx boom? And it just is being expressed in different ways, right? I mean, we're talking about the semis. They've taken some heat off in the past couple of days, but also the airlines, for example, people flying around to try to make deals tied to the AI sector. And frankly, they're wealthier because of the AI investments. I mean, is it the music still playing and everybody's still dancing, but someone's going to ultimately pay the bill and we don't know who it will be?
Well, it is all the AI story. And I think that's why the banks are putting up such big numbers, because you have to finance this. So the banks have to lend into it. Their companies are issuing equity. They're issuing debt. And so there's a huge amount of activity. And because the economy is running hotter as a result of this, people aren't defaulting on their loans because the economy is good. So therefore, the bank loan reserves come down. And so it is a virtuous cycle. And people's stock portfolios are up because of all of this. So there is a virtuous cycle. So if you ask the question, which I think you're asking is, what could go wrong? Anything that is a shock to the availability of credit to fund this stuff is a problem. The biggest positive news in the last week was that inflation numbers weren't worse. Because if the Fed gets forced to tighten into an environment that is just thirsty for capital, then you have a problem. And so I thought this was like the most important thing, more important than earnings, was the fact that inflation is not being negatively impacted by all of this demand.
So, and we'll get to the inflation story in just a second and how this is a macro overlay that's really important that people need to watch. I just wonder who's going to pay the ultimate bill for all of this financing? Who's going to plug this gap over the next 5 to 10 years? Are we hearing from just the rank and file non-tech companies that they're seeing such return on investment that they're willing to keep paying up for tokens? Or are we hearing rationalization that threatens the overarching thesis?
So I think this thing is a two-phase process. The first one is we're building out the data centers, we're building out the infrastructure in order to make this possible. But the actual efficiencies, let's maybe think about this in innings. We may be in the 4th or 5th inning in the build out of the AI infrastructure and CapEx boom and all of that, but we're only in the 2nd inning of the efficiencies that we're going to get on this. And here's the truth. We don't really know what those efficiencies are going to, we know it's a big deal, but we don't know exactly how big, and we don't know whether, we're going to have 1 million winners or whether these are going to consolidate it. And just like in other areas in the financial industry, where there's only 1 or 2 final winners, and then the others end up not fully participating.
Are we really building out data centers? Who else is going to follow Governor Hochul and put moratoriums on these?
We have to do that. And the fact that the government may be pushing back on this, at the end of the day, there's demand, there's insatiable demand for this. And if we don't do it, first of all, if we don't do it, foreign governments are going to do it on their shores, and they're going to beat us at a very important game. States that are going to do this are going to be at an advantage. And it's not only the data centers, but it's the electricity infrastructure for this. It's going to happen. It's necessary. And anyone who tries to kind of, to stop this or put their thumb in the, in the dike to stop the flow is just is making a mistake.
I totally hear you, but we're up against a midterm election, then a massive presidential election in 2028. And this is going to be the biggest issue. Isn't this a huge risk for this entire trade?
I don't think so. I think that ultimately she's going to have to answer, to the voter base, which is why is New York not friendly for the future of technology? And if New York's not going to do it, I can only imagine that people who are campaigning in Florida or in Texas are going to say, come here and do business because we're willing to invest in these.
Unless you've been long semis, and Bramo, this is the issue. To your point, this is the political dilemma right now. You haven't seen the benefits of the CapEx. Personally, through the wealth channel, without a doubt. If you've been long the equity market, you're doing fantastic. If you're associated with these business, you're doing brilliantly. But for the average person on Main Street right now, and it speaks to sentiment, which is completely rock bottom. And I'm not saying that's material for the equity market. That's a different conversation. But I think for the politicians, they can see the numbers are decent, GDP is sky high, the contribution that's coming from CapEx is really large, but the average consumer on Main Street right now is not feeling it. And that's why it's easy to come out and say, you know what, no more data centers, because that's the kind of thing that might be popular for now.
And to the extent that they're feeling it in higher energy prices, or you're seeing that energy plants can't keep up with all of the demand necessary because it's really hot and smoky and disgusting out, and so you've got to stay inside and filter your air and have air conditioning. Well, they're running out of the capacity to also have the AI hopes and dreams. It's going to be a really interesting question. You got to have a better PR attitude also than some of the founders of some of the tech companies talking about how it's going to render humans completely irrelevant, because actually that's not what we're hearing from the CEOs, and maybe they're just doing a messaging exercise. There's a real lack of trust right now because of the lack of certainty.
The PR's been better from Jonathan this morning.
I think that it's
than it has from Anthropic.
Yeah,
right. It's been horrendous from Anthropic. We're going to take all your jobs, and we're going to push up energy prices, right? It might help your valuation. I don't think it helps the broader story.
The interesting thing is when you talk to CEOs, they're not finding it to be that big of a cost savings. They can't even identify how much of a cost savings it is, because what they're doing is anything that they save from efficiencies, they're pumping into more investment. So it's turning into a very expensive proposition. The ROI is going to be very hard to prove, and this is one of the sort of flies in the ointment, which again, when do you start seeing the breakouts that can justify how much they're spending?
Can we finish on that point, Jonathan? What's your response to that, the ROI situation? Because we have, anecdotally, we've seen individual companies, started with Uber, I think, that individual companies are starting to rationalize spend on some of these things. I think we heard from JP Morgan this week, telling employees, based on reports, to focus on the more complex things. Don't use this for basic tasks. What does that tell you about the situation we're in?
Well, I mean, when we're talking to companies, the first thing that they're saying is, it's really great. It helps me build a PowerPoint presentation more quickly. And if you look at that, that's like saying, I can do a Google search that's a little bit better. That's not really where the benefits are. The benefits are to rethink industries in a way that we couldn't even imagine before. And there are some folks who are doing that, but that's going to be a multi-year process, and we don't know what the winners and the losers are going to be on it. But I'll tell you right now, there's companies, they have no choice but to play. And so I agree with Lisa's point. I don't think you're going to see this massive wave of layoffs because, first of all, companies have to invest in the security around this stuff because they have to make sure that their businesses are rock solid. And if they do transition their computer systems over, that there's no disruption. And so right now, I just don't see a wave of layoffs. I do think that you're going to see change in business models going forward, but it's not right now.
Good politics is not necessarily good policy. You mentioned that earlier on this week. Not a great message to sit there and say if you're Kathy Hochul. We want to build a data center the size of Virginia so the first-year analysts on Wall Street can make a PowerPoint presentation faster. That's just not going to really work, is it, in any way, shape, or form?
What's fascinating is the market response. When you talk to bankers, they say this is the bull case for all infrastructure-related debt because there are going to be policy constraints on it. So our infrastructure that we do now is going to be all that much more important. And you've seen a lot of front-loading. So there is that case in markets. You can make anything into a positive.
John, it's good to see you. Thank you, buddy.
Good to see you.
What an earnings season. Jonathan Golub there of Seaport Research Partners. Let's get you an update on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Fed Chair Kevin Warsh says President Donald Trump hasn't tried to interfere with central bank policy. Answering questions from the Senate Banking Committee, Warsh saying, I've told the President and Treasury Secretary they chose an independent guy to do an independent job, and that's what I plan on doing. Japan is planning to buy more than 27,000 NVIDIA next-gen Rubin chips to build a homegrown foundational AI model for robots. It's part of a series of efforts by the Japanese government to lower its reliance on foreign technology and bolster national security. United Airlines posting second quarter earnings that topped estimates. The company expecting resilient travel demand to drive up full-year profit despite soaring fuel costs. United CEO Scott Kirby joining surveillance at 8:15 Eastern. And that's your Bloomberg Brief. John.
1 hour away. Vonnie, thank you. More from Vonnie later on this morning in about 30 minutes' time. Up next on the program, ramping up attacks on Iran.
They want to settle so badly. They don't like what we're doing, and they do want to settle. We'll find out whether or not we settle with them or we just finish it off. The country is booming, and we'll have Iran defeated soon.
Up next, we'll catch up with Catherine Thompson of the Cato Institute, live from New York City this morning. Good morning.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
We're lower by 0.25% on the S&P. On the Nasdaq, bit of a sell-off emerging here. We're down by 0.8%. Won't make too much of it. We've bounced back from those kind of levels before, but the tape is a little bit weaker, softer, lower, negative, even with some decent numbers in the tech space, which tells you a lot about things going into earnings season for the big tech players in a few weeks' time. That we heard from Samsung out of South Korea a number of weeks ago. That was the first tout. Great numbers. Stock didn't trade well. ASML, Taiwan Semi, decent numbers. Stock market on the tech side of things, a little weaker.
Yeah, buy the rumor, sell the news, because ultimately people have already priced this in and then some. It's just how high can the bar get and can they cross it? And ultimately, is this just about, okay, you guys are solid, now we can shift our focus to the more undervalued areas? Because yesterday we did have record highs. It wasn't as though we're not making new records, particularly in certain areas, just a lot of volatility under the surface.
Let's turn to the bond market. Yields higher by 2 basis points on twos. Your 2-year just short of 420. 415, 10's around 460, crude elevated. Here's the move in crude. WTI and Brent down by a few tenths of 1%, but still around 80 on WTI, around 85 on Brent crude. And the prospect, this is the issue right now that this market has got, the potential that this limited action in Iran becomes something bigger. And we're trying to figure out, is that just part of the negotiation, or are we setting the stage for something broader, wider? The market right now is not going to believe it based on the conditioning we've had through the experience of the last 3 months.
I'm reminded this morning from a viewer about how there was a story March 26, Pentagon prepares for massive, quote, final blow of Iran war. We have been here before when it comes to threats and leaks out of this White House, potentially to try to get the Iranians to the negotiating table. At the same time, last year, the president gave the Iranians months to try to come to have a talk about nuclear. And at the end of the day, they didn't, and he went forward with bombing them. So there's been examples of this president getting fed up and actually taking more of that red line, nuclear option. Is this one of them? We don't know yet.
Let's talk about the latest in the region. Under surveillance this morning, ramping up attacks on Iran.
They want to settle so badly. They don't like what we're doing, and they do want to settle. We'll find out whether or not we settle with them or we just finish it off. The country is booming, and we'll have Iran defeated soon. A lot of people thought oil would go up to $350 a barrel. It went up a little bit because I had to take tough action. When that settles down, I think you're going to have $55 oil.
So here's the latest. Crude little change following a 5th straight day of attacks against Iran. The U.S. striking a sanctioned oil tanker bound for Karg Island. Tyler Kendall joins us for the latest from Washington. Hey, Tyler.
Hey, John. Well, this marks the first time that the U.S. military enforced its naval blockade since reinstating it earlier this week. But this strike against this vessel actually happened deep into the Persian Gulf, away from the Strait of Hormuz, seeming to indicate that the U.S. is looking to expand the scope of its naval operations. CENTCOM says that it is actively working to help secure shipping, confirming that overnight it assisted at least 10 ships that were transiting through the Strait of Hormuz. But we're seeing the impacts already in the data. The 7-day average for oil flows has fallen from 4.6 million to 3.9 million barrels this week, according to RBC Capital Markets. And it's numbers like these that are sending those alarms to this White House to take potentially additional action. As our reporting indicates, the administration is now considering extending that Jones Act shipping waiver in a bid to help oil flow more freely when it comes to imports in this country, because escalation is, of course, very much on the table. We've heard President Trump threaten that they could go after Iranian infrastructure. And now the Wall Street Journal reporting that he is leaning towards expanding military operations, including potential boots on the ground. Though, John, we heard from the Vice President, J.D. Vance, yesterday, seeming to dispute that the U.S. is looking at additional ground forces.
Tyler Kendall with the latest. Tyler, thank you. Catherine Thompson of the Cato Institute writing the following: the resumption of significant military action, including enforcement of a blockade, is an incredibly disadvantageous state of play for the United States. Catherine joins us now for more. Catherine, is it advantageous for the Iranians right now?
I mean, I think it is. Obviously, the Strait of Hormuz has been the biggest leverage point for the Iranians, and we're seeing them use it. I think obviously they're potentially going to take some blows if the threats of escalation, as the president have laid out, which we have to take seriously, come to fruition. But I think for the longer term strategic horizon, it puts the U.S. in the most disadvantageous position.
When you see that story in the Wall Street Journal, do you think this is a threat from the United States to try to get the Iranians to the table? Or do you think the president is serious and within weeks we could see a serious escalation when it comes to the conflict?
It's hard to say. I mean, as you guys pointed out, right, we've seen examples on both sides of the equation where, you know, the president has sort of done this dance before, and both sides have been true. I think anytime, right, the president is putting this risk of escalation and signaling risk tolerance at such a high degree on the table, we have to take it seriously. But I think I would imagine, right, if I was in those conversations closed door with General Kane and the other military leadership, I would imagine he's also hearing about not only the risks to U.S. personnel and U.S. forces, particularly on any sort of ground invasion that could come with really significant casualty numbers, but then also on our munitions expenditure, right? You had the president and General Kane in Philadelphia in Pennsylvania this week discussing, you know, the need for defense contractors to move faster because of the munitions crisis that the U.S. is in, exacerbated military action with further escalation. Again, comes with really big strategic risks for the United States to expend more of our critical munitions that we don't have. I mean, there's not an endless supply, and so this is a real trade-off dynamic, you know, for that sort of threat. So maybe it is a negotiating tactic, but every time you put it on the table, you got to take it seriously because of these other strategic elements that we have to contend with.
Catherine, how low is the United States on hardware?
I mean, it's hard to say based on publicly available numbers because we're obviously not getting real-time reporting, but I think the latest from CSIS and other think tanks here around Washington obviously indicates that we are significantly low, potentially have depleted around half of our stockpiles that were present at the time of the start of the Iran war for many of our critical munitions, you know, within the first short stretch of this conflict. Obviously, further military action in the region that has U.S. bases taking incoming fire is going to put us in a position where we potentially have to expend more. And then you have reporting that, you know, to replenish munitions just to pre-Iran war levels could take anywhere for some of our most high-value munitions, anywhere from a year to 4 years on a time horizon. And that's not even contending with getting our stockpiles back to the health that they were before we depleted them to arm Ukraine. And so, and that's the factor that I haven't seen many reports around Washington take into account. And so, I mean, I think these numbers are significant. And that's why, I mean, they're a serious part of the conversation on any further U.S. military action.
That's exactly what Lisa was talking about earlier this week. Catherine Thompson there at the Cato Institute. Catherine, thank you. To your point, Bramo, some people think that has really shaped the approach, the timeline to this situation with the U.S. and Iran.
The nature of war has changed. You used to be able to hit 8 targets in a day, and that was a good day. Now you can hit 1,000 in real time. And so it's not a question of, you know, whether you execute those hits. It's a question of strategy that goes into game theory that is a very different calculus, because you can run out of ammunition faster than you can switch strategy or even respond to the ramifications of what it's having on the ground.
Are we blaming Anthropic for that or thanking Anthropic for that?
Yes, why not?
Right.
It's Project Maven in action.
Yeah.
Basically. Up next on the programme, KBW CEO Thomas Show on the record-breaking quarter for the big banks on Wall Street. Plus, Shahira has your morning movers. United Health raising its outlook following an earnings beat. That stock is up 7%.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on Salar de Uyuni in Bolivia, and this is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Brian Moynihan of Bank of America joining us later. I'm taking hits off the side of the set on England losing yesterday.
Well, do you want to respond?
From our next guest. I'm not going to respond.
No, I won't.
What are you trying to do? Is that how you start a conversation with me this morning?
Absolutely.
No,
just say,
I actually think getting to the semi-finals was pretty good. It would have been nice.
Let's just start with good morning. Good morning.
Double whammy for Jonathan. Italy, England.
Okay. No more football. Brian Moynihan of Bank of America on later. Looking forward to that.
Football. Yeah.
At the end of the conversation.
So ask him.
Go on, Tom.
Ask him about sustainability. Say, hey, look, the company's driving higher levels of profitability. Is this the new normal?
You're right in our interviews now, too. We're live. Right, get going. Equity futures right now in the S&P look like this. Futures in the equity market on the S&P 500, negative 0.2%. We will ask Brian now. He'll join us in about 60 minutes from now. The stock yesterday closing at an all-time high. JP Morgan at a record high. BNY, a record high. Morgan Stanley, Goldman Sachs closing at all-time highs. That sector delivered fantastic results. This equity market is down a few tenths of 1% this morning, but it's pulling off 2 days of gains in the last few days.
Yeah, especially given some of these results that shattered estimates. I don't think that you have enough superlatives to talk about just how blockbuster this quarter was, driving just a profitability that we have not seen before from these big banks. The key question is, as Tom said, the sustainability. How long is the pipeline? How much can it continue? And how susceptible is it to macro concerns? Nobody wants to hear it. They want to go on vacation and celebrate.
Tom, we'll come back to you in a moment. Stand by, all right? Maybe. In the bond market, 2s, 10s and 30s, yields look like this. The 2-year, 4.16, yields up by 2 basis points. 10s higher by 3 in the commodity market. Pushing some of the move, really. The persistence of this now is becoming a problem. Brent around 85, WTI around 80.
So you have massive waves of strikes happening last night, the latest one ending at 9 p.m., going after these military installation of Iranians that are targeting commercial vessels. Both sides are really signaling that they will continue the hostilities, and they're waiting for the other side to blink, which is why you have this story in the Wall Street Journal getting a lot of attention, even though it's not really moving the market, that the president is weighing whether or not he is going to step up airstrikes, and even weighing if there's going to be potential of ground troops.
Market participants we speak to just believe that is part of the negotiations. We'll see if they're right. 84.58 on Brent. 2 hours away from the cash open. Let's get you some morning movers. Yahara has more. Hey, Yahara.
Hi, John. We start with some deal news having to do with Eli Lilly. It is buying the psychedelic drug maker Untitled in a deal worth up to $3.8 billion. And of course, while most people know Lilly for its blockbuster weight loss drugs, this is an area that it's also known for with its treatments like Prozac. But it's just the latest in a string of pharmaceutical deals we've seen lately, which of course has driven capital markets activity and the deal making on Wall Street. Atai shares soaring 34% in the pre-market. And I want to take you through the earnings that we've gotten this morning. GE shares are falling 4.3%, even after it posted a beat and a raise. And its results really line up with what we've been hearing from the airlines, that demand has been strong, so they need more engines and more maintenance, and that benefits GE. But with shares up about 12% year to date, the bar was pretty high for them. The bar was also high for United Health, and its shares are rallying up 7% in the pre-market. It delivered a beat and a raise, and a big reason why is it paid out less in medical costs than Wall Street had expected, and giving investors more confidence that this turnaround is taking hold. John?
Yahara, thank you. More from Yahara in the next hour. On our radar this morning, TSMC ramping up spending following a 77% profit surge. The chip maker signaling that demand for chips and data centers has further room to run. Elsewhere, the US launching strikes against Iran for a 5th straight day, hitting a sanctioned oil tanker near Carg Island.
They want to settle so badly. They don't like what we're doing. And they do want to settle. We'll find out whether or not we settle with them or we just finish it off.
The Wall Street Journal reporting that the president discussed seizing Carg Island in a meeting just yesterday. And finally, the Fed chair, Kevin Warsh, keeping an open mind on AI.
Will AI eliminate jobs at a catastrophic rate?
Over the long term, absolutely not. This is a long-term job creator. Will it increase measured prices over the course of the next 12 months? I suspect it will be. But whether that's inflationary or not, that's up to the Federal Reserve. This is one of the good family fights.
Another good family fight with Kevin Warsh and the family over at the Federal Reserve. Bramo, this is what you took note of just yesterday.
Yeah, the family fight is lining up like this. You have Kevin Warsh skeptical that long-term this will be inflationary, even over the medium term, and that there will be efficiency. John Williams on the other side talking about how AI demand is now his main inflation concern. Alberto Muslim casting real doubt on just how much the efficiency can bring down inflation that is currently in the system. Chris Waller also talking about this to some degree. So there's your family fight, expected to continue.
And the minutes from the last meeting showed us that they already had this family fight. When you look at the minutes from the June 16th, 17th meeting, quote, many of the 19 officials said that the, quote, ongoing strong demand for AI infrastructure would likely sustain upward pressure on prices for technology products and electricity. At what point will the Fed actually decide whether or not it is inflationary or not? And Kevin Warsh just said it's for the Fed to decide. So he almost gave us a little bit of insight into they will come out with, well, a paper, a speech.
Yeah.
Some sort of conclusion.
We'll get more data later this morning. We'll get jobless claims and retail sales. Look out for that at 8:30 Eastern Time. Let's talk about the banks. Wall Street's biggest banks delivering blowout results. Goldman Sachs beating its own record for equities trading revenue by more than $2 billion. JP Morgan, Morgan Stanley earning more in the second quarter than ever before. And Bank of America notching a record first half for its sales and trading division. Thomas Schoch, the CEO of KBW, a Stifel company, writing banks are benefiting from positive operating leverage, accelerating loan growth, strong credit quality, and significant share repurchases amid signs of a healthy economy. Tom joins us now for more. Tom, good morning.
Good morning.
Let's do it properly. We'll start again. It's good
Great to be with you.
Hey, thanks for coming back. Thank you as always. They've crushed it. Is it just capital markets or is it more than that?
No, it's more than that. I think the banking industry's hit a new level of profitability and has a chance to even do better. Now, the ones with investment banking operations that you just mentioned, this may be a high bounce. It may not be repeatable. It could be in the next quarter, but I wouldn't expect this to be the new run rate. But I think the underlying profitability industry's absolutely been getting better, and that's really the core story here.
Let's talk about it. Operating leverage. We talk about these things so many times. Where's it coming from? Where are these improvements coming from?
Well, the first thing is that having zero interest rates, which is what we had, was unnatural. Banks weren't designed to be very profitable in that environment. An inverted yield curve is hostile to banks as well. So that's been fixed. And then you've got the regulatory shift. And I don't think it's really releasing regulations right now. I think it was the intensity of the regulations we had before being reset back to what I think is more originally intended. And that is absolutely unleashing growth. I think it'll have implications for bank versus non-bank market share. And so I think it's look, big bank stocks have been outperforming the market since October of 2023. They're 80% of the head of the market return year to date. I think the conditions still exist for banks to outperform. And now the regional banks are starting to catch up. And that started in the fall of last year. So we've got, I think, a longer cycle here of outperformance.
Can you elaborate on that? How much of the boon time type of activity that we've seen is a result of big banks winning share back from alternative asset management?
I would say that's just beginning and it can run longer. I mean, I think the story, so if you're kind enough to have me back in 5 years, okay? Of course we will. So the story we're going to talk about is the fact that private credit had a once-in-a-lifetime growth spurt during COVID when interest rates were zero, and it couldn't be replaced. So really, and that was happening while the banks were still being hammered by policymakers not to grow. That era is over. So now the shift is going to come back. That doesn't mean the banks are going to go make 7 times levered loans tomorrow because they think it's a good idea. But they're going to start clawing back some of their market share, and it's going to happen over time. The big 5 that reported on Tuesday had enormous residential mortgage growth on a percentage basis. In the last few months, Vice Chairman Bowman is leading a charge to release the very strong constraints put on banks after the global financial crisis, when the market share in residential mortgages literally fled the banks, which is what they were originally designed to do. It's starting to come back. So I think it'll be more of a slower shift, and I think it's good for the economy. I think it could be done responsibly, and I think it's good for the U.S. and the global standing, and I think Europe has gotten the message, and now you're seeing bank M&A start in Europe because they realize how far their banks fell behind. Not that they're bad companies, but they had an anti-merger policy across country lines, and so their banks just couldn't play on the global stage anymore.
So here's the question that Jamie Dimon asks: is this as good as it gets? Because you've got the regulatory side of things winning back share, you've got the M&A and IPO cycle and debt issuance cycle all just going gangbusters, and you have a consumer that's okay. So you're not seeing delinquencies.
I think I know the reason what will take the steam out of it, and it will be credit quality. Because in our models for the industry, we've got 21 basis points of provisions for the quarter. No way is that the number through the cycle. So the industry's over-earning on credit. Credit costs tend to come immediately. You don't think about it, you got to pay for it right away. So the view is that the industry's over-earning on credit, it's over-earning some on tremendous investment banking results, but it's also under-earning on its capital position, because the capital of this industry is the highest it's been in decades. So if you go back to pre-global financial crisis, the purest form of the capital ratios was about 6.5%. Our models show it'll be 9.7 at the end of 27. So the industry's got all this capital. What is it going to do with it? It could grow organically, which is what I think policymakers would like them to do, help the economy grow, raise dividends, buy back stock, and buy each other, and compete with non-banks. So I think this financial services sector, I mean, we saw the news about PayPal yesterday possibly being in play. Financial services is kind of exciting. All these companies are bumping into each other. My favorite press release of the last few weeks was Morgan Stanley announcing that they were going to undercut Robinhood on crypto trading fees. So that's the old sheriff letting everybody know they can still be the new sheriff.
I thank you for ranking his press releases.
Press release.
Exactly. Who doesn't?
Right. Help me invest. Do I trade this as a group? Or is this still a stock picker story?
It's stock picking.
It doesn't feel that way right now, so just explain that.
Well, first of all, I think the whole group can do okay, but I do. So I heard from investors going into the quarter, and you think of someone like Goldman who had a blowout quarter, right? But when you look at their business mix, it is generally more dependent than Morgan Stanley on strong markets. Morgan Stanley spent a couple of decades building more fee income businesses, and now they're being rewarded for it. So that's why we like Morgan Stanley stock more than we like Goldman at the moment. And so, yes, you can't go by. The whole group, I think, has got wind in its sails. Our favorite stories are the return on capital improvement stories. We still like Citigroup, even after the sell-off after earnings. We like KeyCorp, which is an improvement story. Citizens Financial, which I think might be reporting tomorrow, I think they report. Stocks had a great run, but they're a profitability improvement story. So those have been more of our favorite stories. And we like Bank of America. You've got Brian on. We think this improvement story at Bank of America, it has legs to it.
Got more questions for Brian? You can share them now.
I didn't realize them. They had a great quarter. What comes next?
Sometimes I'm so casual off the top of the break that people don't realize we're live on TV.
I didn't realize we were live.
I got the feeling.
Yes, we're going to talk more about World Cup soccer, I thought. But I would just talk to him about the sustainability and durability. And look, I think the market has to stop thinking of some of these companies just as banks. Bank of America is a financial services company. And you look at where Capital One is going, which is a company and a stock that we like, and American Express. These are I think they're some of the global gems of companies. And now they're going to start competing in each other's businesses because the fintechs are coming. And if you don't do that, you're going to miss out. I don't think these boardrooms are thinking about how can we be a really good bank. I think they're thinking about how can we make sure that we're involved in the payments conversation, that we're involved in what happens to stablecoin, that we're aware of blockchain. And a lot of the businesses in America, like consumer banking, it's becoming a mass market business. It's not a small town business anymore.
Some acquisitions across financial services?
I think we're going to absolutely.
Not just between banks?
Oh, we're absolutely going to see
Just
that.
describe that, what that might look like.
Well, so we'll talk about investment banking. So you're seeing companies like Citizens Financial, Key Corp, and others building investment banking operations for their middle market clients. Now, this is on a smaller scale. They're not going to try to go compete with Goldman and JP Morgan. They've got a 100-year head start in some cases. But they are going to offer more services to their clients. Then also payments. I mean, Fifth Third is an industry leader in payments, for example. And so when you go to a fintech to go do something, there very likely is a bank behind it, and it might be Fifth Third. So I think it's a collision. I think, while I'm in the investment banking business and research business, I'm like going to be a traffic cop watching a collision of all these companies, like I mentioned with Robinhood earlier, with crypto trading. And look, you go to the website of Coinbase and Robinhood and check out what they're offering. Those are good companies. Do not underestimate them.
Tom, it's good to see you.
Great
You're
to
welcome
see you.
back anytime. Don't wait 5 years.
Thank you. And I can't come shortly after an England loss in the World Cup.
We won't do that again.
That was. I see the Yankee Cup over with Anne Marie. I should probably stay there.
Yeah, and the Knicks. You like the Knicks?
The Knicks. What a great year in New York.
Epic.
What a great
It's been
year
a fantastic
in New York for
year,
the Knicks.
without a doubt.
And Male Athlete of the Year award he received this week.
Oh, really?
Jalen Brunson.
last night.
Okay.
He deserved it.
Before the World Cup's completed, he gets the Male Athlete of the Year.
Yeah.
Okay. Who awarded that prize?
And I think
Who awarded that prize?
What is it called? The ESPYs?
That's what it was.
Yes.
That was the
and
ESPYs.
Play of the Year, OG.
OG?
Game 4.
Knicks are on a
Yeah,
roll.
the Knicks annihilated that whole
I know you're
game.
going to go to another
Guys,
segment.
I'm sorry, but for people who love international sports, that's ludicrous.
Yeah, I'm going to bring up the New York Jets, which means you're going to probably go to another topic. But I'm hoping that we'll get another New York team to come out of its,
I don't know about that.
its long winter.
Tom, thank you, sir.
Thank you.
Thomas Show, the KBW CEO. How do you give it to...
Well, because the ESPYs were
Come
already
on.
scheduled.
How do you...
Yeah, give the SB to the Messi.
Right? Like the World Cup's still on.
Yeah. Well, he might get his ESPY on
The most
Sunday.
popular sport on the planet is still being played in... Let's get you an update on news elsewhere this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
John, hey, President Donald Trump addressing the nation tonight at 9. He's expected to discuss a variety of topics, including elections and voting machines. The president telling radio host Hugh Hewitt the speech will be similar to those he gave at Mount Rushmore and the National Mall earlier this month. President Trump's nominee to become the Director of National Intelligence facing a tough confirmation hearing on Capitol Hill. Jay Clayton repeatedly sidestepping questions on whether Joe Biden won the 2020 election. Democrats saying his refusal to answer shows he wouldn't be willing to contradict the president. Air quality dropping to unhealthy levels in Manhattan. As smoke from Canadian wildfires blanket the northeast. Experts suggest reducing or eliminating outdoor activities, wearing an N95 mask and shutting all windows. And that's your Bloomberg Brief, John.
Vonnie, thank you. It's not much of a prize, though, is it? We're still arguing about this.
I know.
You're not,
No, but
you're
it's
not
not
athlete
an
of the year, then, are you?
international. It's not an international. I don't think it's an
So
international
you're the
award.
American athlete of the year.
Look, there's
Okay.
there's lacrosse players that are up for some of this. Wrestling, Duke basketball,
Sure.
athletes up for it.
I get it.
It's domestic focus.
It's like saying you've won the World Series when it was only played in one country.
That's not
You know?
true.
You know?
Canada.
Oh, of course.
Unless you subscribe to the
Truly
51st
global.
state.
Truly global. Up next on the program, the long fight against inflation.
Inflation is a choice. The members of our committee have no tolerance for persistently elevated inflation, and we share a resolute commitment to restore price stability.
Oksana Aronoff of JP Morgan joins us next.
my old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
The global economic playbook is being rewritten, and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting, rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Live from New York, welcome to the program. Under surveillance this morning, the long fight against inflation.
Inflation is a choice. The members of our committee have no tolerance for persistently elevated inflation, and we share a resolute commitment to restore price stability. What the Fed's looking for is economic strength to broaden and the inflation that we talked about earlier to become more narrow.
So here's the latest this morning. Wall Street awaiting more data and Fed speak after a string of cooler than expected inflation prints. Retail sales, jobless claims dropping at 8:30 Eastern. We'll also hear from the Fed's Logan, Schmidt and Jefferson. Oksana Aronoff of JP Morgan Asset Management writing, the Fed is in a late cycle trap. Now its hands are tied. Oksana joins us for more. Oksana, good morning.
Good morning.
What does that mean for this Fed? They can't do anything for the remainder of the year.
They're in a really tough spot, which I think you could have seen coming. And we certainly, have spoken over the years a number of times, and we said, look, we think the Fed is too early to cut here. When they started cutting, long rates haven't responded to this. And now they're in the place where you have this inflation that is, legitimately stuck even after the softer print. I think everyone agrees inflation hasn't really been going where the Fed would like it to go. And what do you do here? Hike. The bar for that was always very high. That's been taken off the table, understandably. Cutting seems absolutely reckless. And so they're having to kind of just sit here and watch this develop and don't really have a lot of tools at their disposal, which was the reason for why I think they started too early.
So as an investor, you're not sitting on your hands. You're looking across the yield curve right now. Treasuries, 10s offering 460, 30s around 5, even at the front end of the curve, nicely above the policy rate of the Fed. Are these levels, these yields, these rates a buy?
Not at the long end of the curve, they are not. There are several dynamics unfolding at the long end of the curve. First of all, let's examine why rates haven't really been receptive, or why this economy hasn't really been receptive to Fed's policy of tightening, right? We didn't see a meaningful slowdown because predominantly the stimulus is coming from AI-related spending and wealth effects. It's coming from the fiscal spend. Neither of those things are very interest rate sensitive, and so we've continued to see the economy remain resilient, and we haven't seen inflation relent for that reason. And also at the long end of the curve, you now have predominantly demand coming from foreign investors who like the relatively elevated nature of our rates compared to elsewhere, and you also have, of course, these concerns about inflation. And long rates seem to be really responding to inflation concerns, demand, supply-demand dynamics for treasuries, and certainly the condition of our fiscal spend, which is only accelerating. So it's really hard to imagine that anything constructive will happen there in terms of, a significant rally. So I don't think that's a buy. And we're seeing investors, certainly retail investors, and even, what's happening really in the markets is that the retail investors are staying at the front end of the curve, understandably, and then the insurance and sort of larger institutional investors are increasingly buying assets in the private markets because they're getting pretty good yields, and we can debate whether that's a prudent strategy or not, but that's been really the game. And so the long end of the curve really depends on that foreign buyer.
Talking about the foreign buyer, how much are you worried about Japanese investors reappropriating assets back home and policies to even support that kind of effort coming from the Ministry of Finance?
So the Japanese market was always a very domestically oriented market, and that's one of the reasons that has helped Japan's yields, held them so low for so many years. So it wouldn't surprise me if that repatriation, gained steam. On the other hand, you've had China being the other major supporter of treasuries, and their treasury assets are, there's this question out there, what happens if China sort of dumps their treasury? Well, what's been happening is their treasury assets have gone from something like 1.3 trillion down to about 700 billion. So that process is happening quietly. And so while there is no sort of alarm that's imminent, I do think it will become an increasingly significant issue in the coming years, frankly, especially if our rates actually do start to go lower. Are these buyers going to be equally interested in continuing to support them?
Just quickly, where does that leave the Europeans and the European bond market?
So the European bond market, the European economy generally is struggling for a number of reasons because you don't have the dynamism, of course, of the U.S. economy. And I think the Europeans are onto this, and they're trying to make some changes. They're just exceptionally difficult. For the bond markets out there, the issues are somewhat similar. You do have inflation concerns as well. You saw the ECB take measures with respect to that earlier this year. So I think some of the concerns are similar, plus growth is just not there in the same way that the U.S. has experienced it, right? The German economy hasn't grown at all in a number of years, for one. So you have this, I think, stagflationary scenario that is maybe a touch higher. So European bonds being a buy, probably not, although certainly there are always isolated opportunities. Nothing is ever sort of an across-the-board no or an across-the-board yes.
Oksana, good to see you. Welcome back anytime also. No football jokes. Oksana Aronoff of JP Morgan Asset Management, unlike our previous guest. Up next on the programme, big hour coming up. We'll catch up with Julie Bill in just a moment. Then, the United Airlines CEO, Scott Kirby, and Bank of America CEO, Brian Moynihan. All of that the next hour on Bloomberg Surveillance.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. When you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these. Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it paradise ahead or Gattaca?
Maybe somewhere in the middle.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive. massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'd still be driving something.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
The underpinnings of this market are still in decent condition. The big story is earnings.
The reality is the earnings prospect remains very positive.
Right now, you're seeing so much earnings growth within these semiconductor names that it's a question of how sustainable they will be.
You're probably going to see companies continue to be cautious about the outlooks for Q3 and the rest of the year.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. A big third hour of Bloomberg Surveillance coming up right now with your equity market looking like this. Your scores as follows. Equity futures on the S&P 500, negative by 0.25% on the NASDAQ, down by 0.8 on the Russell. We're down by 0.4 in the bond market. 2s, 10s, 30s. Yield shaping up as follows. Up 2 basis points on 2s, up 3 on 10s. Your 10-year around 460 this morning. With this move in crude, WTI and Brent elevated but just about unchanged. Brent crude around 85, WTI around 80. Next stop for this conversation, the data, 29 minutes away. We get retail sales and jobless claims at 8:30 Eastern Time.
With the expectation being ongoing strength, as we've seen from all of the earnings, and the earnings have been incredibly robust. Key question, how much is this all the AI trade, and how much are we going to get the participation of the broader economy? That's been the underpinning question. On one hand, really good news, disinflation. We've gotten that from CPI and PPI. Can you get ongoing strength in the consumer without inflation? And this is the conundrum. Or are these swirling stories of macroeconomics paired with a consumer that continues to chug along?
Gasoline prices cratering, absolutely cratering, offering some comfort, at least for now. Looking at CPI and PPI, maybe inflation's coming in. Maybe for now. That can change. If you bring up an intraday move of crude in the last 15 minutes or so, you'll notice a very small spike, and then we came back down again. Some reports from Reuters suggesting things could get worse.
A threat from this side, from the Iranian side. Reuters is saying that Iran has asked the Houthis to stand ready to close the Red Sea oil route if the U.S. goes ahead and wants to strike Iranian power infrastructure. So they say this has been discussed amongst the Iranian Islamic Republic's leadership, and the message has been conveyed to the Houthis. This, for the oil market, would be pretty massive, because that would mean that not only one chokehold, Strait of Hormuz, is shut, but potentially then you have some issues with the Red Sea, which you could see a lot of vessels have been moving product out of. Again, it's just a threat. It's just a threat, but you're going to get maybe a little bit of a premium.
Even if there aren't official negotiations taking place right here, right now, they are through Reuters and the Wall Street Journal.
Yes.
In the last 12 hours.
Ultimately, this is the way that we've seen it for a while now. And the reason why people are absolutely shutting this out, because it seems like continually they have found ways to de-escalate and bring things back from the brink, which is the reason why people are maybe uncomfortably numb, or maybe just comfortably numb.
This market's just itching to move on, and has been for, I forget how many months now. We're going back to March. Yeah. So, however many months that was. Coming up this hour, Judy Beal of Kane Anderson Rudnick as stocks pull back on fresh AI concerns later. About 10 minutes away, the United Airlines CEO, Scott Kirby, as the airline boosts its profit outlook. And we'll catch up with Bank of America CEO Brian Moynihan after one of the bank's best quarters on record. What a quarter for the banks on Wall Street?
It has been unprecedented in many levels and exceeded expectations by tens of billions of dollars, and it comes in all sides firing, right? We've got capital markets, you've got the consumer, and the point that Tommy Sho just made, which is essentially because of less regulation or less regulatory constraints, they're winning share back from some of the alternative asset management units, and I wonder how much that'll continue being a theme.
We can spend some time on that. What did you call the airlines earlier? The AI trade?
A little bit.
Right.
I mean, at a certain point, everything's the AI trade because we're all riding on the incredible investment boom that's gone into this sector.
Business and first class are the AI trade. I'm not sure about.
Hey, some of those guys could buy an airline based on how much they're getting paid.
I think that some of them did.
Right? Or a few jets at least.
Yeah, exactly.
My goodness, some of the salaries of those guys. Anyway, not jealous at all. We begin this out with stocks inching lower as investors rotate away from tech. Julie Beale of Kane Anderson Rudnick writing, I'm loving the solid earnings growth in small caps and seeing better breadth, but to be positioned to the lowest quality parts of the market in an already tricky market segment is perhaps ill-advised. Julie joins us now for more. Julie, welcome. So far, so good. Earnings have been fantastic. Expectations have been climbing. It's incredibly rare to see earnings this great outside of a recovery from a recession, but here we are. Where do you want to be? What do you want to avoid going into this earnings season?
I think you want to be really thoughtful about the positioning that you have in terms of companies that look durable for the longer term in case we do hit any air pockets with the AI trade versus companies that are utterly dependent on everything in AI working perfectly, which is what a lot of them are priced for right now, is absolutely no bumps in the road. And as we all know, development of technologies typically has a few bumps in the road. So I think it's really important to recognize that there are follow-through effects on the economy in terms of this AI spend. It's no longer just the fact that semiconductor companies are doing well. You know, there's important implications for what this means for construction spending, for the average electrician's salary. It does have some real wealth effects for people that I think are meaningful and that are supportive to economic growth. It's just that we're a little bit dependent on it at this point. That gives me a little pause.
What do you think the potential source of market risk is here? Earnings have been decent. That's been a comfort blanket for so many people. Is it the earnings? Is it the data? Is it a potential policy change?
You know, I think it's more a function of the own expectations that people have in the market are the thing that make the market the most vulnerable. So the places where you've seen expectations rise the fastest, and we've seen that with some of the tech companies that have reported what looked like really good results, and then the stocks, you know, underperform pretty materially because people are still hoping for ever more. And, you know, that's the struggle with high expectations when you have these massive and very quick rallies, is that means that people are really holding their breath for the best news possible. And I think that's the vulnerability, is that when they get disappointed and their models aren't running as linearly in their growth or exponentially as it is for some of these companies, they really are disappointed and they pull back very quickly.
Julie, couldn't this be actually a point of confidence, not necessarily concern, given the fact that investors are being discerning? They aren't just buying everything. You're seeing shares come off even after they report earnings that beat market expectations, showing the skepticism is present.
Yes, absolutely. I think that's probably one of my favorite things about this, is how much many people really hate this rally is a great thing, I think, actually, because I think it keeps everyone pretty ready and willing to move in and out of things. And so it makes it harder for longer term investors, because for us, we really try to stay in the same place and own businesses for a long time. But I can really recognize that having these corrections, having people recognize that maybe the hyperscaler business is not going to be as profitable, the returns aren't going to be as robust, the competition is going to be much higher. I think that's a great thing, because when we lose that discernment, that's when we're really the most vulnerable. But I do think that the reflection of people pulling way back out of things, even though they report good results, it does tell you that there is a lack of real belief in the durability of it.
I'm wondering how you diversify away from the flywheel that just keeps on spinning right now, which is the wealth effect boosting the AI trade, the AI trade boosting the wealth effect, and just this cyclical virtual reality creating something that has benefited everyone. How do you hedge against the end of the flywheel?
Yeah, I think that's the concern that we absolutely have, is recognizing that, you know, we're at a point where equity ownership is as high as it's ever been as a percent of people's total wealth. Before, that used to be housing. And it's very different when you can actually see the price of this asset that is your primary point of comfort and confidence in your own spending moving every day, intraday, pretty dramatically in some cases. So I think that that does create some headwinds in terms of what that means for consumer spending if we do see any kind of drawdown or pullback, which would be typical for any kind of cycle. That's the concern that I think we have. I think the ways that you can be thoughtful about that is finding other markets, finding other places where there's less cyclicality and you're less dependent. I think healthcare is a really natural place for that. There are parts of healthcare that can be real beneficiaries of AI. And I think if you have an overall theme that AI is going to actually be more beneficiary for the users than it is necessarily the companies that are selling it, like airlines, for example, are, then you can really see a lot of benefits, particularly in small cap, of adopting this type of technology to be more competitive.
Julie, when it comes to the consumer, we continuously hear it's resilient, but you're a little bit more nervous about the lower end consumer than I think most. Why?
I still think that this is the consumer that's been the most hit by inflation. They're the most constrained. And I think that, you really have to recognize that for them, any increase in oil prices is pretty dramatic as a % of their take-home pay. So while employment has been pretty good for them, it's been really difficult for them to find any real wage growth. They've seen that purchasing power really dissipate over time, more so than most people who are benefiting from the wealth effects of strength in the equity markets and continued persistence in home prices. So for them, I am still pretty concerned. It's not the largest chunk, but I think there's also, it creates a lot of friction for them and a lot of, I'm getting left behind. And they know that now because everyone has Instagram.
Julie, thank you. Julie Bill there of Kane Anderson Rudnick. That last point is important. People start to see how other people live. That's been a massive change.
Not everyone has Instagram.
I don't use Instagram, all right? I don't use Instagram.
Yeah, I know.
That kind of Instagram envy, I just think it's really, really sad. I think it's really sad.
It is true, though. Everyone does see the wealth effects. There are benefits.
They don't see how the 1% live now. You see how the 0.0000001% live now, and you think that that should somehow be accessible. That is not healthy at all.
Touch grass. What was that? The Utah mayor who came out and said, everyone go out there and touch grass. And essentially, that's the argument you're making this morning. Jonathan Farrow is telling you to go outside and touch grass.
I'm not saying that, just like Instagram. Anyway, all right. Equity futures right now, the S&P down by a third of 1%. Let's get you an update on news worldwide this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Oil spiking briefly. Reuters reporting Iran asked the Houthis to shut the Red Sea if the U.S. hits its power networks. The Wall Street Journal reporting that the president discussed seizing Clark Island in a meeting yesterday. JP Morgan CEO Jamie Dimon comparing Anthropic's Mythos to a ballistic missile. Dimon says the risks raised by the AI model are a real issue that the U.S. government is on top of now. JP Morgan has had access to Mythos since April and has been using it to test its own defenses. In sports, the World Cup final is set. Argentina will play Spain Sunday after defeating England 2-1, coming from behind and scoring both goals after the 85th minute of play. President Donald Trump is planning to attend the game in New Jersey. And that is your Bloomberg Brief. John.
Let's talk about those Knicks. Jalen Brunson, something else, eh? Just phenomenal. Just fantastic.
Messi also.
Athlete of the year, without a doubt.
I did some digging, and Messi did win an award too.
Did he?
For his the Miami team he plays on.
Good.
He won the Best Soccer Player Award.
Good to take note of that. All right. Up next, the Morning Calls Plus, the United Airlines CEO, Scott Kirby, as the airline boosts its outlook, travelled him up, holding firm despite rising fuel costs. That conversation just around the corner. good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
At some point, the earnings growth starts to moderate. It's nothing disastrous, but it does start to moderate. I think you're seeing a little bit of unwind in sentiment, a little bit of unwind in leverage in these markets, but fundamentals continue to look quite good.
Earnings have been fantastic, better than good. Brian Levitt there of Invesco. The airlines printing money right now. Some of you might not be happy about that. We'll be talking about United Airlines raising their outlook, which is just amazing and unthinkable a few months ago. Bank of America, fantastic results earlier this week. That stock at a record high coming into this morning. We'll speak to Brian Moynihan in 15 minutes' time. Equity futures right now, the S&P 500 slightly softer, negative by 1/3% on the S&P 500. On the NASDAQ 100, we're down by 0.9. Bit weaker here. I've mentioned this a few times. Numbers there also good. What can you learn from how this market's responding to those results? Taiwan Semi, decent results. ASML, great results. Likewise with Samsung a few weeks back, and Bramo. This is the price action.
Yeah, right now people are saying that the bar is really high. And even if you cross it, it's not good enough to really get people excited. Possibly it's actually a point of encouragement, saying it can go further, given the fact that people aren't exactly walking around with beer goggle glasses going on.
You love that speech, don't you?
I do love that.
Yeah.
Jeremy Stein, fantastic speech.
I think it was Richard Fisher.
Whatever.
Right?
Richard Fisher of the Dallas Fed, correct.
Yeah.
I got it wrong. Sorry.
I remember the same speech. Doesn't matter. Okay. They kind of matter sometimes. Not then. Doesn't matter. Let's get to your morning calls. First up, Barclays raising its price target on Morgan Stanley to 262, citing its second quarter earnings beat. That stock is down by 0.7%. Morgan Stanley raising its price target on BNY to 151, highlighting clear organic growth momentum. That stock is up by 1/3%. And finally, Citi raising its price target on Goldman to 120, calling its latest earnings a, quote, standout quarter, led by trading. Earnings season ramping up with results from the major airlines. United boosting its full-year outlook, citing strong consumer demand, even in the face of higher fuel prices. The United Airlines CEO, Scott Kirby, saying, quote, United is built to thrive in every environment. Our brand loyal customers value their travel on United, whether they're in Polaris or in economy. United Airlines CEO, Scott Kirby, joins the program for more. Scott, welcome to the program, sir. It's good to see you. Before we get into the results, I just want to take a step back, because if we were back in the middle of March and I was sitting here and you were telling me what you were about to do, I'd be like, Scott Kirby's gone nuts, because energy prices have gone sky high. People are going to stop flying. They just won't pay up. Scott, can you take us behind the scenes, how you and the company navigated that energy shock over the past few months?
Thanks for having me this morning. And really, it is pretty remarkable. You look kind of at the full year, what happened. Fuel prices are up $6 billion compared to what we thought at the start of the year. And that compares to the best year in history, where we made a little under $5 billion. And the fact that we're sitting here today raising guidance and talking about at least having a shot at growing earnings on a year-over-year basis is a remarkable testament to the strength of demand. And the demand and the economy are really strong, but also that United Airlines has had that brand loyal United Next strategy that we had is the right strategy. And the people of United are doing a better job than any airline anywhere in the world at implementing that, at taking care of customers. And we've been able to attract enough of those brand loyal customers to United that we've mostly been able to overcome the fuel price spike. So I'm really proud of the team for what they've done in a tough environment to make it feel just normal if you're flying on United or if you're working at United.
Scott, I remember earlier this year we were talking about how you expected demand destruction as prices got higher. You didn't see that, neither did other people, and you said you were surprised that you didn't see more demand destruction. Are you starting to see any signs of that, or at least customer fatigue in pricing?
No, we aren't. Demand is incredibly strong for us. In fact, our fourth quarter yields are booked 14 points higher at this point in time than they were at the same point in time for 3Q. Corporate demand so far in July is up 30%. We really haven't. And I think as you sort of take a step back from it and look at what's really happened, it's air travel share of the travel pie got really, really small coming out of COVID. And even with fares where they are today, air travel is the prices are 13% lower in real terms than they were pre-COVID, while hotels are up significantly, cruise lines and rental cars and everything else is up. And so I think we're just returning to a normal historic share of the travel pie for air travel. So the total cost of the trip is staying consistent with inflation, but after under-indexing to airlines, it's now over-indexing to airlines. And so the total cost of the trip isn't changing nearly as much as just airfares returning to the normal historical relationship that we've had to the total travel pie.
Oil prices have continued to inflect upward as a result of a new resurgence in the conflict in the Middle East. And I'm just wondering, is there more room to go with respect to responding to those extra oil price costs with higher fares going forward?
Well, like I said, airfares are down 13% in real terms from pre-COVID. So a short answer is yes. And in fact, there's been another fare increase this week. There were 5 or 6 when oil prices first spiked, and then when oil came down, they sort of paused, but there was another one this week. And so demand is strong, the consumer is strong, and it really is like our whole overall cost base. It's not just airfares, but our cost base with airport fees and maintenance and labor, those have actually gone up even more. And so it really is just a case of recovering all the inflationary cost increases that have happened, and recovering from the COVID trough in pricing.
We were joking, Scott, earlier that the airline industry also is an AI trade for a lot of different reasons, but in part because of the business travel and how much is picked up. How much do you see that being driven by all the capital markets activity that we keep talking about with the big banks, the idea that everyone needs to fly around, meet their clients as they prepare for these incredible fundraising exercises?
Well, I think it's probably more translated through in just what it means for the overall economy as opposed to just specific the AI trade. But the economy is strong, and part of it is AI and all the build out that's happening with AI. But as I said, 30% up in business travel so far in July. Business demand is really strong. The U.S. economy is really strong, and we're a beneficiary of that.
One thing that we've seen is increasing creativity when it comes to how you approach different premium offerings. The latest being that in premium economy or economy plus, the middle seat gets blocked out and there's a shared table. I mean, is there something different about the creativity being used recently, whether it's different types of offerings, different segmentation, more specific offers to different slices of the consumer base?
We really are trying to build a great brand loyal airline nose to tail. We're investing heavily in premium, but we're investing just as heavily in the economy cabin. We recognize that today's basic economy customer is tomorrow's Polaris customer. And we're just trying to build a great airline for everyone. And, Starlink is an example. The Relax Row, which is in economy, is, I think, one of the coolest things we've done in a long time. An extra, a blocked middle seat in coach is just another example. And, at United, we really are trying to just try everything that we can to make the experience better for customers and believing that if we do that, we will have a brand loyal customer base that does really well when times are good, but it's also worth proving how resilient we are in times where something like this oil price spike happens. I mean, the fact that we've got oil prices up $6 billion year over year, and we have a legitimate shot at growing earnings on a year-over-year basis is just a remarkable testament to what it means to invest for the customer and get customers to want to fly us, to decommoditize this industry. And really proud of the United team for what they've done to execute on that strategy.
Scott, more people in New York might be more willing to fly you when you get back to JFK. Is that still in the works for next year?
That is. We're very excited about it. Looking forward to getting back to JFK. Looking forward to, once we're back to JFK, we'll be the only airline with Starlink on the airplanes. For those of you that care about true high-speed Wi-Fi, we'll be the only ones in those markets. Looking forward to it.
Scott, I love the idea of the relaxed row. When I was a teenager, young in my 20s, flying, when I saw an empty row of 3 seats and the plane taking off, I'd never been more excited.
Yep.
And as soon as you got up to about 35,000 feet, I was on it, trying to lie down and move the armrest to make this work. Scott, have you had that idea for a long time?
I've wanted to do it. In fairness, Air New Zealand is the one that came up with it, and I've wanted to do it ever since they did it, and now we are. I'm excited about it. By the way, I spent a number of trips when I was young and non-revving doing the same thing. When we get to be our age, it's a lot harder to do that on those 3 seats, and so the relaxed row is going to be a lot better. And plus, you can hang out with your kids, and of all the stuff we've done, I personally think it is one of the coolest things we've done. It's going to be great for kids and families.
Very cool. Scott, it's good to see you. Appreciate your time. Thank you. Scott Kirby there, the United Airlines CEO, on a fantastic quarter for them, raising their outlook as well. Weren't you the same? You spot those 3 seats, that's mine. And you see someone outside get up, not a chance.
Yeah, that actually happened. that actually happened with my younger son on a trip over the past couple of weeks. But yes, of course. I mean, you start thinking about how creative you can be. You think about all of your childhood. I feel like it's sort of like a dream industry, considering how kids are with this and sort of how they plan and they set up their planes and they try to figure it out. And it's just like you grow up and you get to play also.
The takeaway from that interview, more fare increases are possible at United, and he's been surprised, and you were right to bring it up, surprised that there wasn't really any pushback from the consumer to these higher fares.
And you heard the same thing from Delta, which is ultimately if oil prices stay high, they can respond to that with price increases, and they will respond to it with price increases. The question is, how do you divvy them up? Is it going to be focused on just the premium? Is it going to be passed through the entirety of the cabin? Is it all of the above? Ultimately, consumers have been shockingly resilient. That's why actually retail sales are going to be really interesting.
It's really impressive. United Airlines down a little bit this morning, some decent numbers out of them in the last 24 hours. Up next, we'll get you a double dose of data, jobless claims and retail sales in just a moment. Plus, we'll catch up with the main man over at Bank of America, Brian Moynihan, on the bank's record quarter. That conversation just around the corner with equity futures right now in the S&P 500. Near session lows, we're down 0.4% on the S&P, down by 1 full percentage point on the NASDAQ. The data up next.
morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Live from New York City, welcome back to the program. Equity futures on the S&P 500, negative here by 1/3% on the S&P, and the Nasdaq down by 1 full percentage point, 15 seconds away from economic data in America. The scores in the bond market shaping up as follows. 2s, 10s, and 30s in the bond market. Yields higher by 3 basis points on 2s, up 3 on 10s, 458 on 10s, 416 on 2s. With your data, Mike McKee has more. Hey, Mike.
U.S. jobs. Good morning, John. Well, we've got some good news for spending today with the retail sales numbers up by 0.2% in the month of June. Americans still spending despite what was going on. Ex-autos, though, down 0.2%. But the control group that economists worry about, because that's what goes into GDP, up a solid 0.5% after a 0.7 rise the month before. So basically, Americans still spending, and it will help GDP. The Philadelphia Fed comes in at 41.4, up from 10.3, so a significant increase there. Prices paid index at 53.9 from 53.2, so no break from the decline in CPI, and the employment index for the Philly Fed at 10 versus 7.9, so some better news there. And finally, we have initial jobless claims, and once again, it is confounding. 208,000, down from 216,000, a revised number from last week. So significant drops, still very, very low. Continuing claims, 1,805,000, down from 1,821,000. So all in all, the numbers are still very good for the overall U.S. economy.
Can't argue with that. Mike McKee, thank you. I guess 215 on claims, which these days is not much of a guess because it nearly always is. 215, 208.
Yeah.
That's
totally
the right kind of downside surprise.
You blew it. You thought it was 215.
Put it together,
He was
though.
wrong.
Seriously, soft CPI, soft
Yeah.
PPI, robust data, retail sales are good. That's a decent week of data for this market.
This is the exact kind of disinflationary productivity boom that everybody's been hoping for that can really be the cherry on top and highlights how comforting it is to see that equities are a little bit lower, at least from some people's perspective, just because people aren't taking this and running away with it. This is the euphoria that's been built into the market. Question is, how long can we stay in this good kind of backdrop that can really benefit a lot of different businesses?
The banks, the financials in prime position to leverage this moment. Bank of America, the stock, sitting at record highs after delivering blockbuster results. Equity trading revenue rising 70% in the second quarter. Fixed income trading climbing nearly 9%, making a record first half of the year for the sales and trading division. The Bank of America CEO, Brian Moynihan, saying against a healthy economic backdrop, resilient consumers and businesses are turning to Bank of America to spend, borrow and invest. Brian, I'm pleased to say, joins us now for more. Brian, good morning.
It's great to be here.
It's good to see you, sir. What a fantastic start to this year. Now, forgive me, we're journalists. We've got to ask, can this really continue at this rate?
Well, you just saw two statistics that I've watched carefully, which is what the activity of the consumer is, and then ultimately what the unemployment new claims are. That's people argue it's leading or trailing, but it's actually an indicator of the health of the employment market, and a 4.2% unemployment rate with new claims at 1.8 on long-term claims and 208,000. Everybody looks at it and says, well, that's in line with 19. Remember that the workforce has actually grown a lot since 19 in terms of size, and so you argue about 7,000 on 160 million workers or something like that. So it's a pretty small number. And so nominally it's a low number, and percentage-wise it's a low number, and that's good news because that means the consumer spend. And what we see in our data is the consumers are spending. If the consumer spend in America, that means the economy is okay, and that probably means the rest of the markets and the construct and the final demand is there.
The weather for the banking industry has been shining brightly. The sun is out, the backdrop's great, the environment has been good. I want to draw a distinction between the environment and execution, because fees were up everywhere. What are you proud of after that quarter? On execution, where are you gaining market share?
Every single business grew the revenue, grew operating leverage, which is critical because that means your revenue is growing faster than expenses, and increased their returns. Every single business. It grew their customer bases and all those things. So what you're seeing us is the power that the engine of Bank of America is across all the businesses. So our consumer business made $3 billion after tax this quarter, plus. That's half as much as Wells Fargo made, and it's a big number. That's one of our 4 businesses that we disclose, and the smallest of which made $1.5 billion this quarter. So these are big businesses. They're scaled. They're accumulating new clients. They're accumulating new activity. The markets business had a great quarter, and the investment banking had a great year-over-year comparison. But at $2.1 billion for the quarter, we were $2 billion last quarter, 2.1. It looks like a huge increase because last year's second quarter, we all thought the world was coming in, and with Liberation Day, this year it's different. But what's really important is the pipeline they have is strong. The deals in discussion are strong, and you're seeing deals announced every day across all the spectrums, M&A, strategy, financing, all of which is important.
Just elaborate on that a little bit more. How strong is this pipeline? Because things just look phenomenal. We've had a record IPO. Alphabet came out with a monster equity capital raise. We saw SK Hynix more recently do something similar. We're going to see more of that in the year ahead.
Yeah, I think, so if you look at, we and all our peers are deploying more balance sheets. Our balance sheet to the markets business went up $100 billion for the quarter over what they thought they were going to be at, just to give you a sense. And so we have capital based on that capability just to meet the moment. But if you look at investment banking, the deal, when you talk to CEOs, because if you think about last year this time and the amount of things they had to think about, we've added one with the wars, but at that time it was taxes weren't set yet. The immigration policy was, people were trying to figure it out, trade and tariff policy, and then deregulation. You come to the fall, they felt that was sort of working its way through. Whether the tax and the tariff policy kind of looked at and said, it's sort of 10 to 15% of countries willing to do business with the United States, and 50 if they're not. I can figure that out. Let me go figure out how to run my business. That got, with a court decision, all the work that's gone around in circles a little bit. So we added some uncertainty, but on top of that, what you added is a year's worth of growth and a year's worth of belief that this year is going to grow at 2% plus, next year is going to grow at 2% plus. That's convincing people that despite higher energy prices, despite inflation, despite the Fed having to keep rates higher, despite all that, the economy is growing through it. That's the interesting part. And I think CEOs last year got clarity on taxes, got clarity on deregulation, got clarity on immigration, and now are thinking hard about, wait, I can do things. I can see a little more distant in the future. Does that mean there's a parade of possibilities to change that? That's out there every day.
Let's talk about the parade of possibilities. Sorry, I'm a journalist, so I have to. Yeah. There's this question about how market dependent some of this capital markets activity will be for the rest of this year. Yeah. The idea that a lot of people are borrowing money they don't even need right now because the market is so wide open to them. What are the potential thresholds, whether it's in rates or whether it's a sell-off in equities, that could potentially stymie some of the pipeline?
So if we were here a year ago, you'd say nobody's ever going to get a mortgage at 6.5%, just to give you a sense. We were 30% up in production of mortgages this quarter. So as people get used to environments, they start to behave differently. And so the consumer borrowing is strong, but there's a lot of capacity left. But mortgage production being up 30% is kind of an interesting statistic in a world where if you said rates were going to be this high, they'd be doing mortgage volume. If you go to the commercial side, which is where you were talking about, we're seeing good loan growth, high single digits year over year in our core middle market, small business area. We're the largest small business lender in the United States. That's good news because that means, back to John's question, that's a little bit that if I'm not going to borrow if I don't need the money. I'm not going to borrow if I don't need to do something. Despite what people talk about, you're not going to issue debt and increase interest costs and have it just sit there because the arbitrage. If you don't issue below treasuries, which these guys, no borrower does, you're going to pay 300 or 400 basis points to let money sit there. It's just not going to work. So people are borrowing because they see opportunity, whether it's equipment buying, whether it's hiring, whether it's building a plant, whether it's inventory buildup. And so they're going to be more worried about can they get the margin on that. That's the question of inflation coming through the system later on. They're going to be more worried about will the final demand sit. That's watching the consumer behavior if they're in consumer side driven or if they're in supply chains, is the demand going to stay there? So I think the markets will stay there if the companies see opportunities, whether small, medium, or large size, and it'll stay there as long as they have something to do with the money. Nobody borrows money just to have it sit around.
Despite what people think about SK Hynix and what just happened. I mean, just saying, one could say.
They've got to have a view or they're going to do something with it, or else they just ate in their profit margin. So whatever they're going to do with it, they're thinking about something.
One thing that you noted, the mortgages, is something that Tommy Show mentioned earlier. And he was saying that you've seen a lot of the traditional financial institutions gain market share back from alternative asset managers. And that's one of the reasons why the regulatory pullback has been so beneficial. Has that been your experience as well?
Well, I think also, the investor money going into the private capital funds and stuff has slowed, and there's been withdrawals and people getting out, and that then slows down the activity. But I think also the questions were raised around how much leverage is too much. And I think if you looked at the average leverage of the different deals, it was different inside the banking system and out. So I think we've seen a little bit of pushback to the system. And I think we also had to come with competitive responses. So we put together pools that we and our peers and announced two different pools where we could, when the opportunity was there, hit the bid for. The core difference is if we do a $5 billion transaction, we tend to syndicate it and get 5 banks in. That takes time and effort and creates a little bit of uncertainty. The other players are saying, I'll give you all $5 billion. I'll bring you the equity, plus I'll bring you all debt. We build a practice where we can do more of that for our good middle market companies. It still will be laid off. It's just when you lay it off, up front or behind. And so we built a couple of things. I think between that and the efforts of the industry and the efforts of our company, you're seeing some of the market share come back in. So it's a lot of factors. But we grew commercial loans at 8%. That's a pretty good growth rate.
Brian, you continuously mention if we were this time last year, Liberation Day, unsure about tax policy, where the deregulation was going, where immigration policy was going. Are you more focused on Washington now than you have been in the past because of how pronounced this administration has been on policy?
Well, I think the company's been around for 242 years. So we've been around through every administration that you can name pretty much. So it affects the economy. When it affects the economy, it affects CEO's views of what they want to do. All that affects us. But I think so. An interesting question is right now is that there's the say-do paradox is as high as it's ever been. If you read the consumer surveys, it says I'm worried about and listed out. Look what you just saw in retail sales in the month of June. The money moving out of the Bank of America customer accounts was 7%, high sixes. And in July, it was the same strength. That's stronger than it was in May and April and March. That is counterintuitive to what the people are. So people are upset about high gas prices, or upset about affordability. That's a fact. That's a fact that may change their behavior. Right now, the behavior hasn't changed. And I think that's sort of a parallel to all the things about policy. People talk about it and think about it, but if the underlying business conditions are fine, they just go to work and get through it. And so the question is, when does it affect their things? When supply chains become uncertain because for pricing because of tariffs, they had to slow down and wait it out. Now they've got it kind of figured out, and they can pass it through. When the immigration policy meant they might not get workers, they had to think that through. They're used to that now, and a lot less immigration. They've rearranged their work supply. You still hear that from our small businesses, that workforce availability is a big issue for them, especially for the construction and things like that. And so I think we got to get that rational at some point. But right now, there's enough momentum behind it that we're going through it.
I've always given you credit to really understand where your research team is at with regards to their outlook, to know what they're thinking about with regards to rates. Other banks don't really do that. You do. Their view on interest rates right now, just share that with us. And if you can build on that, what does it mean for the business if they're right? that trajectory for interest rates turns out to be right later this year?
Well, number one, they're a great team, and that's why I listen to them, because they know a hell of a lot more about this than I do. Number two is it's a big investment, so you better take advantage of that investment on an annual basis. I have to say, this Friday they re-upped their things. They had 3 rate rises this year, and I think that was an outlier, and with some of these numbers they may change that. But the principle they're saying is inflation will be here longer. It'll take us into 28 to squeeze it out. That's probably a year later than they thought 6 months, a year ago. But they've raised their, if you think about the travel over the last 12 months, 2.5% GDP growth of 26, down to 1.5, back up to 3. That's showing that they're believing that the AI build out, the consumer spending consistency, the employment consistency overweights this, and that's why rates will stay higher, because the economy is strong enough in inflation, and then you've got to wait through the second wave of inflation for gas prices. First it comes to the fast turn stuff, and then it comes to slow turn stuff. And what I mean by that is this keyboard is produced with petroleum related products to produce the plastic. It just takes time to get through the supply chain, so we'll see that. Their view is 3 rate rises this year. I can't speak for them, but I think the new numbers may change that a little bit, but we'll see. They're independent, they make their decisions. But the principle was inflation is going to be sticky, and we think it's a year stickier it was a few months ago.
AI is a piece of that.
Yeah.
And maybe you can speak to what's happening internally at the bank right now. We've seen plenty of examples of certain companies, certain firms, maybe backing away on spend, telling the staff internally not to do this, maybe to focus on that instead. How have you approached this moment, just on a cost basis?
We realized that was a risk from the start, so we built optimization models on top of the models, for lack of better terms. So, and then we also negotiated, for lack of better terms, sort of fixed-based pricing, so subscription model pricing. Like with your firm, we pay you a subscription, and inside you have the Bloomberg, Ask Bloomberg, or whatever the AI capability. With other firms, we did the same thing. And so, will that hold forever? I don't know. But for right now, we're not seeing a big cost increase. And so we expect to spend more on it, but it's more about implementation. And then if we look across, I think of 2 big differences in the accelerator. We've had Erica for almost a decade now, and we can talk about that and what we've learned from that. But if you think about the implementation since the ChatGPT moment type of thing, you've had one implementation where we're just spending money to get people really used to this, and that was to roll out across 200,000 people, the ability to have AI and use it and do things with it. Everything else we have had, and that's a very modest cost when you think about a $72 billion expense base, frankly, and with Microsoft and Copilot and all that stuff. We already had a big license fee. It increased to some, but that we said it would be hard to measure the incremental return. Everything else, 110 business cases, the 37 that are implemented, all have a business case that says, here's the cost, here's the benefits, revenue, expense, whatever it is, it makes sense. Let's make the investments. 37 are implemented. We implement about 1 a week. 110 are approved. It's just a matter of getting the work done. And they've had a profound impact on the company. Now, the reality is it's slower than people might think, and it has to be done much more carefully, because the $3 billion we spent on data over the last decade allows us to have these models operate in our company. Otherwise, it'd be a problem, because they'd be picking up wrong stuff, and it'd be in problems. So you had to have your data right, you had to have your infrastructure right, you had to have your security right, you had to isolate your data so it isn't taken into the world, so to speak. And so there's a lot of pre-work that the team got right. Now, that allows us to go faster once the idea comes up.
About a year ago, maybe a little bit more, you said that you thought that the effect on the overall employment picture for Bank of America was that you'd be able to do more with the same volume of staff. Is your view the same today?
We effectively just grew the earnings 30%, and we have a little less people we had last year. And so but meanwhile, in that is a very subtle exchange. So 18,000 programmers using AI coding. We didn't cut the programmers, we just are doing more coding. We're just doing more activity. Relationship managers picking up agent force, and that's going through the system right now. We didn't change the number of relationship managers. We're adding relationship managers all the time. So, but if you had 100%, the 100 we had, in an example, 100 we have today could get 10% more efficient. They can do 10% more work. It doesn't mean we're not going to go to 105, because we want to have more production capacity. So it really is a very subtle answer depending on the activity. Our job is to handle it well and redeploy people. Last year we redeployed 14,000 people. We just hired 2,000 kids that will start next week from school. We hired 2,000 summer interns. We agreed to hire 10,000 military veterans. We are hiring a lot of people. We have to hire 1,300 people a month to have neutral headcount.
How concerned are you, and how much oxygen has been sucked out of the room from Mythos and some of the cybersecurity concerns from earlier this year? We heard some of your peers talking about that, and anecdotally, we hear a lot of fundamental concern about the risks to the financial system.
I think the administration looked at it quickly. Secretary of Treasury and others said, wait a second. And so we all got started on this, and we've all been working a long time. And yet it just speeds up the pace of the work you have to do to patch the systems and do the things. So it's a serious concern. I think the so-called AI industry and industry writ large have worked together. But you can't think that we're ever going to be able to control this, because there's foreign models that people use. And not everybody's going to have the same thought process that our country has, but our country's tried to handle it and tried to be really systematic about it. But it's a big change in the amount of work that will have to go on and the pace at which these tools will affect your vulnerabilities in your system and how fast you have to take care of that. That's the core work that's going on. And then you've got proprietary software, open source supported software, third-party software, and it's we're making sure the third parties are doing the work and working cooperatively with the team. We have a great team there. We have 3,000 plus people that work in that area, $1 billion plus a year in spending, and they do a tremendous job under a fellow named Chris Fader, under Hari's leadership, and they do a tremendous job for us. And they work very cooperatively with their peers. And so you should rest assured we're all working hard on it. You should rest assured it's a serious issue.
I've been saving the most important question. You ready?
Yeah.
How many World Cup games have you been to?
I've only gone to one, but I'm going to some this weekend.
I knew it. Too busy.
One game.
There's 102 of them.
You sponsored the World Cup. One game.
We share the fun. So we have teammates. It's been an unbelievable experience. And so we got my fan band on, and we've given out about 1.3 million of these so far this year. We've had 102 games. 102 games. Two left.
Which game did you watch?
It was in the quarterfinal in Boston.
Okay.
Yeah, and look, it has been something that has been very interesting for our company. But the way the team went after it, with the military tickets or the soccer fields, this is part of our Sports With Us complex, which the Golf With Us is the Masters and the Golf With Us program. Kids getting on munis for $5. The running.
I saw the Masters ad campaign. It was fantastic.
The running campaign that lets people.
See what they did?
Yeah.
They went back to like legendary golf shots, and the kids replicated them. It was very cool.
And so now the campaign you're starting to see now is around the World Cup is sort of the you can do it. With David talking to the young lady named Callie, who's working with Street Kids United, which is a UK-based charity which runs a Street Kids World Cup that the commercials filmed at with David and Bono and U2, the new song. So it was kind of fun. But the idea is what we're trying to do is say fields in places. We're trying to soccer in schools. We're trying to help increase the availability of a game that is massively played in the United States, but just the availability on a access basis without having to spend for travel teams and stuff like that.
You've got to pick a team, Spain, Argentina.
I don't pick teams.
Of course not.
David's a good friend, and unfortunately that was a tough result yesterday.
Basically crying last night.
That was a tough result. So I never played the game. I have no merit to talk about the quality of any decision or anything that went on, the refereeing or anything. I played football and rugby, and I have no idea how soccer's played.
But you could call Bex now and get his opinion.
He might have an opinion. I'll ask him.
Brian, thank you, sir. I appreciate it. You're a gent. Stock is at a record high. Fantastic numbers. Brian Moynihan there, the Bank of America CEO. Up next, we'll set you up for the day ahead. Plus, we'll get into this price action. Equities just a little bit softer on the S&P from New York City. You're watching Bloomberg TV.
Western countries, all of them are cutting funding to Africa. And some of these programs were supported by funding coming from Western countries, like for human resources, for testing, for transportation of samples. And suddenly, African countries have to think how to fund money and to cover this gap. But it takes some time. And I think the combination of all
politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
What we see in our data is the consumers are spending. The consumers spend in America, that means the economy is okay, and that probably means the rest of the markets and the construct and the final demand is there. Despite higher energy prices, despite inflation, despite the Fed having to keep rates higher, despite all that, the economy is growing through it.
That was Brian Moynihan, the Bank of America CEO, on the program just moments ago. The backdrop is good. Sometimes it sounds really simple. You've just got to grow revenue faster than expenses. Operating leverage is positive, things are okay. It's hard to execute. I think we've talked a lot about the environment. Backdrop's been great for these banks. A lot of these banks, including Bank of America, have executed tremendously well over the last quarter.
Yeah, possibly even gaining share at a time when there is a lot to be had given all of the capital markets activity. The big question we've been asking is how much pipeline is there? How much of a forward look can you have? Everyone's come out today, this morning, over the past couple of weeks saying to the extent that we've got visibility, things are looking good.
Tons of Fed speak today. Look out for that. Look out for this as well after the closing bell. We'll get Netflix results too. The president addressing the nation as well later on this evening. That's noteworthy at 9 p.m. Eastern time. From New York City this morning, good morning. We'll see you tomorrow morning. This was Bloomberg Surveillance.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg. World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake. While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
0.5% to all-time highs, though we start the day down 30 minutes ago until the start of cash equity trading. I'm Danny Berger.
And I'm Bonnie Quinn. Bloomberg Open Interest starts right now.
Coming up on the show, TSMC's bullish outlook fails to reignite the tech rally as traders question the AI trade.
Stocks extending losses after modest retail sales, but Bank of America's CEO tells Bloomberg the consumer remains resilient.
And in other deal news, Uber scoops up Delivery Hero while Lilly acquires a psychedelic drug maker.
Let's get into some details then. Stocks to watch. TSMC raising its sales outlook, another sign of confidence in AI demand through the year. And yet shares of big tech stocks are down as investors look for justification for sky-high valuations. As you can see, the big AI players, memory chips, but really also the Mag 7. It's just basically all of tech today, Danny.
We also have some big health news coming out. So to start with, we had earnings. United Health, they topped second quarter expectations. They raised its full year profit forecast, signaling easing medical costs and early progress in its turnaround efforts. We heard from some other medical companies that had poor earnings to start the week, so surprise to the upside for them, up 7.33% in the pre-market.
Well, that data we just got, retail sales climbing modestly in June, dragged down by gas station receipts. Let's get a read on the data with Bloomberg International Economics and Policy Correspondent Michael McKee. So was this just a function of gas prices? In effect, Michael, they're back below $2 a gallon now, so perhaps things will improve.
Well, it's probably not going to happen, Bonnie, because gas prices are heading back up again on the wake of the resumption of the war. But it was gasoline prices that dragged us down, and not just gasoline prices, but other categories, probably because people were still paying more for gas. Headline comes in up 0.2%, significantly down from May's 1%, and that was basically all cars, takeaway cars, and you're down 0.2%. Retail control, though, which is what goes into GDP, was up a relatively strong 0.5%, 0.5% after 0.8 the month before. So Americans still spending money, and what you'd say maybe is this is just good enough. But as you say, it's gasoline prices. You look at what's happened with gasoline prices over the last 3-4 months as we've gotten into and out of this war. They've been way up, they've been down, and that's there to the end of June. And now we're going back up in July. So we'll see what happens when we get the July numbers and how that influences people's spending. A couple of other numbers that were out today were pretty good. The Philadelphia Fed really rocketing up, 41.4 for July. That's one of the early reads on manufacturing for July, a big change from 10.3. New orders were up. Prices paid did not drop. They went up just a touch, but not a lot. And employment went up a little bit. And today we also saw jobless claims come in at 208,000, another drop. And it just continues to show the labor market hanging in there, which is what we heard from Kevin Warsh this week, and American consumers hanging in there. So it's really inflation that remains everybody's concern, going down in the month of June with gas prices, going up again now.
And only a 12% odds of a rate hike this month. Mike, thank you so much. Bloomberg's Michael McKee with the latest economic data. Elsewhere in tech, TSMC raised its sales outlook amid a mega trend of demand. Not enough, though, to lift the broader AI trade. Let's bring in Bloomberg Tech's Ed Ludlow. Ed, it seems like good numbers be damned. This is a nervy market.
Yeah, there's a lot of focus on beat across the board, raising the revenue outlook, but I think the market is interpreting the raised capital expenditure expectations in a really specific way. So TSMC said it will spend even more in 2026, a boost of $8 billion, so the range is now $60 billion to $64 billion US dollars. But what TSMC CFO warned is that over the next 3 years, that those numbers get even bigger. So if the leading third-party chip manufacturers of the world is saying their capital expenditures is higher, you look at how we're trading in US equity markets in the pre-market, the types of names that are down, logic, memory, other capital expenditure deployers, it's a recalculation. It's not that there's evidence that the payoff's here, it's that we need to recalculate even higher capital expenditure environment going forward, which is like a really interesting overnight change of psychology.
Yeah, we're seeing it across the board. And also, you know, we only have 1 day trading left this week, and Korea's closed. A lot of other factors going on as well. Ed, I also want to ask you about the Uber deal. It seems pretty complicated. It's a bunch of delivery hero markets going to Uber and a bunch more going to private equity. Explain it to us.
Yeah, I mean, in this case, very simply, Uber has agreed officially confirmation to buy Delivery Hero, €41.50 a share, and it's a big premium to their attempt earlier in the summer or in the spring in May. You know, why would Uber do this? The same reason that all of Uber and its smaller peers have looked at M&A. It puts you into markets that you're not already in. So in Delivery Hero's case, 50 markets that they have operations in, and it gives, you know, Uber something, particularly outside of America, right? I think there's like a lack of understanding really about how these companies operate ex-US. The complication on the funding side is that it's cash, debt, there's a $14 billion bridge loan, and separately, SSW Partners is going to acquire some of Delivery Hero's markets that Uber isn't going to take. Well, if it gets the deal done, you know?
Exactly. You got to imagine there were a few lawyers on that one. Ed, thank you so much. Bloomberg Tech's Ed Ludlow. Regional banks continue to beat expectations, joining Wall Street's biggest lenders in posting solid results. Bank of America CEO Brian Moynihan spoke with Bloomberg Surveillance.
What we see in our data is a consumer spending. If the consumer spend in America, that means the economy is okay, and that probably means the rest of the markets and the construct and the final demand is there. Despite higher energy prices, despite inflation, despite the Fed having to keep rates higher, despite all that, the economy is growing through it.
Let's get more from Bloomberg Intelligence senior bank analyst Herman Chan. Herman, the macro trends that help the bigger banks and brokerages, is that what helped the regionals too?
Yes, so we're really seeing strong results from the regional banks as well. Some of it is due to the strong capital markets activity. Recall on Tuesday, the big banks really posted blowout quarters, particularly in equity trading. But for the regionals, some of that is in capital markets, but a lot of that is also in net interest income, where you're seeing a lot of growth opportunities, particularly in commercial lending and a resurgence in commercial real estate as well. So that's propping the top line for them.
Did any of them in particular, the regionals, stand out to you? Because I know we had U.S. Bancorp this morning, PNC yesterday, First Horizon. Right. Did any of them in particular stand out as winners to you?
Yeah, the winners are M&T probably looks like the biggest winner from the reporting so far. They posted really strong lending results, and they are a bit more heavier in commercial real estate historically, and they're seeing really strong results there that should lift top line revenues and interest income for the back half of the year.
So are all of these regionals happy as standalones, or might there be a little consolidation in the air?
Yeah, consolidation is something that we think is going to happen over the longer term. That being said, really slow activity in the first half of this year. I think a lot of it is just due to what we just talked about. There's really strong performance across the banking industry, where why would you really want to sell now if you're an executive leading this bank? Because you've got really stable credit quality, you've got loan growth opportunities, you're going to generate better revenues this year. So things are really, really positive. So maybe when there's a bit more uncertainty in the marketplace, you'll see more activity. But right now, banks are doing really well.
Yeah, I feel like you and the team wrote about this early in the year when banks weren't doing well. It was like, oh, it's prime for M&A. But does that mean, for example, Santander coming and buying Webster, buying a regional bank? Right. What about that sort of like cross-border M&A, a big European bank wanting more U.S. exposure? Is that just less likely if the CEO of a regional is like, we're happy to stand alone?
Right. That one was interesting because the Webster executive team is going to lead the U.S. operations for Santander, at least for the regional banking operations. So a deal like that would make sense if the target executive team is in place. Usually that doesn't happen, which is why you're not seeing a lot of activity.
And then how are these regionals competing with the online banks, Herman? How is that going? I mean, there's so many online banks now, from SoFi, you know, to, I mean, I don't even know half of them. There's new ones popping up every day.
That is one of the questions going forward is deposits, and particularly the cost of deposits. We're expecting a potential rate hike in the back half of the year, and you're seeing a lot of loan growth opportunities that I mentioned earlier. That could squeeze some of the funding costs that historically the banks, particularly the regional banks, have had in terms of low-cost funding. Going forward, you could see margins get squeezed a little bit, and that's probably the biggest risk going forward in the back half of this year.
Herman, thank you so much for joining us. Basically every day this week I think every day this week for bank earnings. We'll give you a break. Herman Chan of Bloomberg Intelligence, probably the busiest man in New York this week. A check on your equity markets this morning, and we declined after 2 consecutive days of gains that got us to within 0.5% of all-time highs. The NASDAQ, though, leads the declines. It's a weird, nervy market. It seems to be being led by yields moving to the upside, some 4 basis points. We're nearing 4.6%, even though the trend has been lower rates, which has allowed us to basically price out a rate hike for this month. Brent crude, that's up 1%, trading at just under $86 a barrel, Vani.
Yeah, I mean, there's definitely a lot going on in the Middle East, and obviously that speech tonight, we'll see what President Trump says. Let's get a look at some individual movers. Eli Lilly buying Peter Thiel-backed psychedelic drug maker Beckley for just under $4 billion. That's good for both stocks, it seems. Netflix reporting after the bell amid concerns around audience engagement. Netflix shares down nearly 45% in the past year.
We're also awaiting a launch from SpaceX. It's going to launch Starlink satellites on its Starship rocket for the first time since its IPO. Just want to point out we're still trading below its IPO price. That happened for the first time yesterday. Its IPO price was $135. Its debt also trading below par. Will this rocket launch help it at all?
Coming up, a pair of aviation companies lift outlooks as the industry holds strong. We take a look at United and also GE Aerospace next. This is Bloomberg Open Interest.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'll still be driving someday.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Now to high interest, a look at what's making headlines around the world. The U.S. expanded strikes on Iran, hitting an oil tanker near Iran's main export terminal as Tehran fires missiles towards U.S. bases in Kuwait and Jordan. Shipping through the Strait of Hormuz is slowing sharply, raising fresh concerns over global oil supplies, while both sides threaten further escalation. South Korea cracking down on risky leveraged ETFs tied to single stocks such as Samsung and SK Hynix. Regulators will temporarily halt new listings, triple the minimum cash requirements to trade these products, and tighten investor education after a retail trading boom caused huge swings in the country's stock market. And United Airlines raised its full-year profit outlook, citing resilient travel demand, but higher fuel costs are weighing on the current quarter, with the airline expecting about $6 billion in added fuel expense this year. CEO Scott Kirby told Bloomberg TV airfares are also set to rise.
The airfares are down 13% in real terms from pre-COVID. So a short answer is yes. And in fact, there's been another fare increase this week. There were 5 or 6 when oil prices first spiked, and then when oil came down, they sort of paused. But there was another one this week, and so demand is strong. The consumer is strong.
For more, we are joined by Sid Phillip, Bloomberg Global Aviation Chief Correspondent. Sid, it was a United that upgraded their outlook, saying that travel demand is still high. There seems to be some disappointment. What was the fly in the ointment for United?
So the disappointment for United was the fact that the current quarter, the third quarter, is looking a bit weaker than the analysts expected, and that's largely down to fuel prices going up and also demand sort of ticket prices being where they are at and not being able to sort of recover as much of the sort of fuel increase as the airline expected to. And so United's saying the demand's still strong. They're still sort of cashing in on premium outlook and premium sort of travel, international travel. And those have sort of been the main sort of drivers for both United and Delta. And that sort of helped them stand out even as fuel prices sort of batter airline earnings.
But we're also potentially staring down way higher fuel prices once again. It could be much worse this time, depending what happens. So how are the airlines preparing?
So the airlines in the U.S. do not hedge fuel, and so they're sort of much more exposed to what fuel prices are at the time of sort of flight. And so for the airline industry, fuel is a major expense, and that's why there's sort of uncertainty about how airlines will actually meet this. I mean, there's speculation as to what fuel prices might be and how airlines will be able to recover it. I mean, so far, premium demand is held up, and so airlines have been raising fares as much as they can to try and recoup some of those higher costs. But depending on how those fuel costs go up and how the airline customer demand plays out, we'll have to wait and watch.
They're also all tinkering around so much with their offerings. Delta, like the other airlines, coming out with this basic business, which I could go on an hour-long rant about how I hate that idea. But then United also earlier this week saying that for our Economy Plus on some of our planes, they're basically going to put a table in between, so it's shared between the two people. I'm guessing this strategy must work because they keep doing these types of things. Well, what exactly does the consumer want? What are they trying to meet? What sort of demand are they trying to meet?
So they're trying to sort of create that segmentation of customer demand where everyone's a premium customer, everyone's willing to pay a little more to try and get more comfort, more sort of creature comforts. And so you may not be quite willing to pay for first class, where you have the lie flat seats, but you will be willing to pay for something that has a little more space and a little more sort of comfort. And that's what the airlines are sort of counting on, that people will keep upgrading. And so they're having like little steps in between economy and first class where you have
like they're just trying to squeeze every penny out of us.
That's exactly it. I mean, you're trying to sort of get as much premium revenue as you can. And
diluting the luxury, though, in the process. Listen, it's also trickling down to other companies. So this better news for airlines also helping GE Aerospace, which anticipates selling a lot more engines.
Yeah, so GE Aerospace has raised its outlook again, and that's sort of the 7th time since January 2024. And that's basically because there's a huge demand for engine spare parts, engines, and sort of aircraft spare parts. And GE sort of focused mainly on aircraft engines. So they look at overhauling those engines. They look at actually building new engines and supplying them to Airbus and Boeing. And so for GE, this is a massive business opportunity because airlines are continuing to fly their aircraft. You continue to see airlines sort of sending planes for overhaul, and that's sort of continuing to drive demand. And they've also been able to sort of cash in on the higher sort of prices because there's been such a backlog of service demand and such a backlog at service centers that airlines have been forced to pay much more to get those engines out of the shop quicker and actually get them back on the plane.
I said literally only 30 seconds here, but earlier Scott Kirby on Bloomberg TV basically said that there might be more fare increases. Do you expect that these airlines, when they increase fares, that they're keeping them there?
So the airlines have talked about how they will increase fares and keep them there because they will need to be repaying those higher fuel costs that they encountered at the start of the year. And it's an opportunity for the airlines to sort of keep being able to raise prices. But at the same time, you've got competition, and so how much more will customers be willing to pay? And also everyone's trying to get customers to buy their premium offering. So let's see how that plays out.
Sid, very much so looking to your coverage of Farnborough next week. You'll be at the air show. I hope you have some good sunglasses and some good linens. It's going to be hot, exactly. I assume. Sid, thank you so much for joining. That's Bloomberg's Sid Phillip. Coming up, Man Group's Christina Hooper says you should be selective with the tech trade, but sees a bright spot with cybersecurity. She's going to join us next. You're watching Bloomberg Open Interest.
The global economic playbook is being rewritten, and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Thousands of American Marines are heading to the Middle East.
Greece will not participate.
There's a very good chance we're going to end up in a deal.
He's looking at putting boots on the ground.
This is going to be a short-term excursion.
Trust Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
Up-to-the-minute reporting.
The GM report has been hit.
Missiles have struck the U.S. Embassy.
And the analysis you need.
The United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
The only time that you ever see earnings growth this big is when you are coming out of recession and you're comparing yourself to numbers that were incredibly depressed because you're in a recession. This just never happens. I don't know, is this a forced standard deviation event? This is kind of like once in a lifetime stuff. And it's not, we talk about the AI trade, but if you're looking at the numbers that are being put up by the financials, and we're not, we're talking about asset managers, we're talking about banks, we're talking about trading, this is extraordinary.
Seaport's John Golub on recent earnings growth of expectations. Let's bring in Man Group Chief Market Strategist Christina Hooper. Christina, great to see you this morning. Thanks for stopping by. And look, expectations are really high. Some of the figures that we've seen, something like an expected 20% increase from the year prior. Do you think that this bar is too high for corporate America to meet and beat?
I absolutely think it is. It may be the case that it meets it this quarter, but I do believe that we're setting ourselves up for unrealistic expectations by the end of this year. There's a lot happening, a lot of change going on, and I think companies are going to find it increasingly difficult, especially in certain industries, to get to the expected level of profits.
Christina, how did we end up here? How are we doing so well? I mean, there were so many concerns for a long time, and it feels like it doesn't matter. It doesn't matter what concerns turn up on our plates. The market just powers ahead.
Well, I think there are
companies, not just the market, but corporate America.
Absolutely. Well, I think there is a lot of excitement about the AI CapEx build out, and that has driven a lot of the earnings growth that we've seen. So there is a foundation for it. The problem is that I don't think risks have been properly calculated. And so, for example, you have surprises like the ceasefire actually being over and war escalating. That really hasn't been factored in, I think. There's just been this expectation that we're going to get through this, we're not going to have any more issues, we're going to do a look through. Now, some of that comes from the perspective of last year, in that we had these tariff announcements, everyone panicked, huge sell-off, and then we sailed right through it. But that was a unilateral situation where the president could turn them on and turn them off when he wanted to. This involves other parties, and so it's not as simple. And so I believe there's this view that there's a POTUS put. But we can't really have a POTUS put when we have a war going on and other parties involved.
So you have this one big existential risk there of what's happening in the Middle East. And AI is the other one. I wonder if you think that's properly priced in, because when you think about what terminal value is going to be for some of these companies, year 6 and beyond, we hardly know how the technology is going to advance in 2 years' time. And I wonder if that accounts for some of the volatility as we try to find what is actually fair value for these companies in the AI ecosystem, or are potentially disrupted by the AI ecosystem.
Yeah, I think that's a great question, because we are at the start and the early innings of what is a transformational technology that has the potential to make so many changes to our economy, make so many changes to companies' profit margins, a number of employees, all kinds of things. But we just don't know how this is going to evolve. So this is no different than any other enormous transformational technology, in that there are many surprises, many twists and turns. And I do believe we've gotten very, very accustomed to an increase in spend, always exceeding expectations every year. I think that's coming to an end. I think what we're likely to see is actually a pretty significant slowdown, because it's going to be difficult getting financing. Investors, shareholders are not going to be as positive on companies spending almost all their free cash flow on this build out. I think this is going to slow down. And of course, there are external forces like public sentiment, like New York's decision to stop data center building.
So, Christine, we have to pay our bills and go to a commercial break, but I want to talk more about this. This is so interesting. Christina Hooper sticking around with us. Just 4 minutes to go until your opening bell as stocks move lower this morning.
Being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back. had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands. The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise Ahead or Gattaca?
Maybe somewhere in the middle.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
Just moments away from the start of your cash equity trade. You're watching Bloomberg Open Interest. I'm Danny Berger. 2 days of gains turns into a loss today. We're down 0.25%. It's this back and forth with tech, some volatility in this market. No clear catalyst. Even though we did have TSMC earnings, they look pretty strong. We're down 0.7%. The Dow, though, still able to put in gains this morning. Down at the New York Stock Exchange, we have an IPO ringing the bell, C Squared. You wouldn't know from the name, but you could probably guess what the company does, considering what everyone does now, and that's AI data centers. So that's why they're ringing the bell. Down at the NASDAQ, we have an already listed company. I believe they're celebrating one of their anniversaries, Amplitech. They have more than doubled their share price in the past year. They do 5G and make a lot of the technology that goes behind things like microwaves and other complicated technology that helps cell towers. Here's the tech trade this morning, again, under pressure. The chip stocks are selling off and selling off hard. SanDisk down nearly 5%. TSMC down 3%, even though it raised its sales outlook, showing another sign in the confidence of AI demand this year. But they were spending more than expected. And again, there does seem to be this nervousness creeping into markets about just how much CapEx is being committed by these companies.
Yeah, so much churn, Danny. It's unbelievable. Well, United Health topped second quarter expectations and raised its full year profit forecast, signaling easing medical costs and early progress in its turnaround efforts. Let's bring back Man Group Chief Market Strategist Christina Hooper. So there are other sectors out there, it seems, Christina. We don't have to just concentrate on tech, the Mag 7, the Lag 7, and, the AI trade. But they're risky, right? Would you want to be going into something like healthcare now when it's all up in the air as to what the insurers are going to be doing in 6 months to 12 months' time?
Well, I certainly think there's some significant change that is likely in the industry, but I do believe there are some opportunities, pharmas, biotech. The pharmaceutical companies are cash cows. There are some pretty significant dividend yields there. And so if you think about having a diversified portfolio, having some parts of your portfolio that are low valuation, higher yield, you want to go to areas like healthcare. Of course, you want to be selective, though. This is not a time to index.
If we can go back to this idea that there's this risk in this market that the hyperscalers pull back in their capital expenditures, because we've heard from the Satya Nadellas of the world who've said and seem to be sticking by this idea, the risk is underspending, not overspending. What do you think changes that causes them to not grow their CapEx at the rate they currently are?
Well, it could be a variety of things. I mean, you have these not in my backyard movements that are they're gaining speed. I mean, it's amazing how much sentiment has flipped so quickly on AI. If you're a commencement speaker this season and mentioned AI, forget it. You get booed for 5-10 minutes. And I think there are many communities that would rather have a maximum security prison in them than have an AI data center at this point. And so I think that certainly could slow the build out down because it's going to take years for the vision of having data centers floating out slowdown space, right? You also have the potential for components to get a lot more expensive. We saw that semiconductor prices have gone up. Chips are far more expensive. That's why Apple raised prices on its laptops. And so it could be that the spend has to slow just because these components cost so much. And then, of course, financing. You have shareholders. You have just an abundance of debt out there, perhaps not as many buyers. We saw the 30-year Treasury auction wasn't great. There's a lot of debt competing for some owners. And there is also, of course, shareholders. And shareholders thus far have been fairly positive, but you can see that changing when it comes to the hyperscalers. And also rare earth elements. I mean, there could be a time when the U.S. develops a frostier relationship with China and it's harder to source rare earth elements, or at least the processing of them.
No, that's never going to happen, Christina. Kidding. So when you say slow the build out, who does that affect? Because all these orders are already in. So would it affect the memory chip makers? Would it affect the steel makers that supply the steel for the data centers? Who does it affect?
Well, it really depends on how much of a slowdown it is, right? So it could very well be that it's still enough to keep going, but it does affect all the components, unless, of course, you have something that could be a game changer. So the big issue with the data center build out is largely about electricity usage and driving up costs. So for those firms that can come up with more efficient sources of energy, sources that hyperscalers can utilize in the build out of data centers so they're not plugging into the power grid. That kind of thing, I think, has long legs, even if CapEx spending slows. But then there are other areas where they could take a hit because the build out slows. Keep in mind that a lot of the surveys, a lot of the anecdotal information we're hearing thus far is that AI is really working for coding. That is it's just an incredible technology in terms of advancing coding and not needing coders. But when you extend out beyond that, we're not hearing as many good things. So it could take longer to see an adoption. And then I think that just slows the whole food chain.
I have vibe coded an app. It doesn't work well. But I did vibe code something, which is ridiculous that I myself. It basically, it emails me who's ringing the opening bell every day.
Oh,
yeah.
I thought it was going to be where the open tennis courts.
No, that's also a really good app, and I should build that. I wonder, though, okay, if the payoff is less than expected, that seems to be a bigger problem just because the money that's sloshing around this ecosystem is just the CapEx. It's not the return on investment yet. Considering this is a market that's being held up by the pillar of these tech companies, and its economy that's really been leaning into the spending and the industrial revolution that's coming alongside this, a slower spend and a slower payoff, is that not something that wouldn't just take the index down with it, but maybe the American economy?
Well, I think there's certainly that potential. And then, of course, if you see the index go down, then that has ramifications for high-income consumers. Because if we think about kind of the two legs that have been driving the U.S. economy in 2025 and thus far in 26, it's been the AI CapEx build-out, and it has been consumer spending, but only high-income consumers who are very, very sensitive to the stock market. And so if we were to see some kind of stock market sell-off, that could really slow consumer spending. So yes, this is all very interconnected and could be problematic for both the stock market and the overall U.S. economy.
Christina, can I just ask you a brief question about Korea and the dynamics there? We finally got some movement from the regulators on these leveraged ETFs. You know, they make up a lot more of the trading environment in Korea than they do here, but there are very many of them here as well and proliferating all the time. A, does it fix the Korea stability problem? And B, could we see something like that here?
Well, I think there are question marks. Certainly it has the potential to, and hopefully it will. But keep in mind, there's a lot going on in Korea, and a lot is riding on, actually, the AI trade. So it certainly could go some ways to fixing the stability problem, but I can't say that with such a narrow market, we're out of the woods.
See, these are some really big risks you're talking about right now. How are you adjusting your portfolio and where you're thinking about where's safe in this market to maybe ride out or protect yourself from some of this if we do see some of those concerns manifest themselves?
Well, we have a wide variety of portfolios at Man, and I think that really, to me, is so important right now. Having that ability to be well diversified, having exposure to portfolios that enable you to hedge risks. And you can do that in so many different ways. So I certainly think it's important to still have exposure to this AI theme. This is long lasting. It's likely to evolve a lot, just as we saw with the internet, with the tech boom of the late 1990s. So many of those companies have survived and thrived. It's all about being actively managed and evolving with the evolution of the technology. I think beyond that, though, is being well diversified, having hedges, and recognizing all the risks that are out there. We haven't even talked about the Fed and the potential for tightening.
We only got a minute left. Do you want to do that real quick?
Sure, you bet, absolutely. So I think the bigger risk right now is not the Fed funds rate. Right. It is the potential for a shrinking of the balance sheet, which I think has the very real ability to drive up yields on the long end. And of course, we have other forces at work that are also likely to drive up yields on the long end. That could exert downward pressure on equities.
How much do we shrink? He did say we're not going back to 2006 levels. That ship has sailed.
Yes, but this has been an environment in which the balance sheet is still very large. So any kind of material shrinkage could have an impact. You know, it's really interesting. As soon as the announcement came out about Kevin Warsh as the nominee for Fed chair back in late January, what we saw was the San Francisco proxy Fed funds rate started to diverge from the Fed funds rate. It started to tighten, and it has continued to tighten since then. And of course, that's factoring in all those other monetary policy tools that if you were to actually have them as part of the Fed funds rate, shows a tightening environment. And I think that's what we're going to get, and I think we have to factor that in.
Christina, this has been an absolute masterclass. I hope you'll come back again soon. This was so excellent. That's Man Group's Christina Hooper. And let's get a quick check on your equity market this morning, about 10 minutes into your trading day. Again, we declined down 0.4%. On the upside, we had some good health earnings. United Health Group, they're on the upside, and we did have some poor health earnings to start the week. So you're seeing a rebound there. Names like United, Johnson & Johnson. The consumer names are doing really well. Walmart, Coca-Cola. So it's the physical things that are doing well. What are not doing well are the tech things. Again, kind of maybe getting into some of the risks that Christina was talking about. This spending and the concerns around it, especially since we heard that amplified by TSMC. So NVIDIA, Broadcom, Micron, a lot of the chip makers are down. And tech, so is one of the worst performing sectors this morning. If we flip it up and look at your group rank returns so far this morning, tech is doing poorly. Healthcare, actually unchanged, even though you had some of those big names doing well. Utilities, that's the worst performer though. And the top performer, communication services and consumer discretionary. I actually, just looking at this, I think this is all wrong. If Val in the production room, if we can just hit the refresh. I actually don't think that this is today's session because we were down. There we go. There's your session today. Here's what it actually looks like. Infotech is down 1.6%. Healthcare up 2%. That makes a lot more sense. Fonnie.
Yes, it does indeed. Danny, well spotted. Coming up, Eli Lilly buys a psychedelic drug maker backed by billionaire Peter Thiel. We discuss the emerging medicine next. This is Bloomberg Open Interest.
We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Time now for our top calls. Some of the analyst action in focus this morning. And first up, JP Morgan upgrading BlackRock, saying the company is set for stronger growth thanks to solid money coming in, rising revenue, and improving profitability. The firm adds that investor worries about private markets and private credit are not having a meaningful impact on BlackRock's business. Next up, Lululemon getting cut to a sell at Truist. The firm says the brand is losing buzz online, sees growing consumer concerns, and warns the leadership transition could slow any turnaround. Stock higher nevertheless. And finally, United Health's second quarter clears a high bar. Evercore ISI says the results show the business is getting back on track, while Mizuho says the quarter came in even better than bullish investors expected, thanks to lower medical costs and strong performance at Optum Health. Danny.
Elsewhere in the world of pharma, Eli Lilly is buying a Peter Thiel-backed drug maker, AtaiBeckley, for up to $30.8 billion, underscoring the firm's growing interest in psychedelics. Bloomberg's Madison Moeller covers the space and joins us now. What exactly is Lilly buying with this thing, Madison?
Yeah, so Lilly is buying into this fast-growing psychedelic space, which was once really on the fringes of drug development, but has gotten a lot more interesting and a lot more interest from drug makers over the last year or so. There are now a couple of companies that are nearing potentially FDA approval. They're in late stages of testing. AtaiBeckley is moving into late stages of testing. They have their lead drug is called BPL-003. It's actually a derivative or closely related to DMT, and it's an intranasal spray that is supposed to help with treatment-resistant depression. So it's similar to J&J's Spravato, which is a drug that's already approved for treatment-resistant depression. It's a nasal spray, and that drug has really created the infrastructure to allow things like this to have success in the market.
Yeah, what is the uptake on that drug, Maddie? And then, will the FDA just approve all of the rest of them because this is all accepted now and promoted?
Yeah, so J&J's Spravato, which is technically not a psychedelic, but kind of similar, has really opened the door to acceptance to these kinds of therapies. It's taken a few years. It was approved, I think, over 5 years ago at this point, and it was sort of slow to take off, but now it is a blockbuster drug for J&J, and a lot of clinics around the country have gotten more comfortable with prescribing something like this that requires patients to actually be in the clinic and be monitored for a couple of hours after getting a drug, just to make sure it's safe for them to drive home and things like that. And so it's, the expectation is that obviously the FDA will still look at all of these studies and drugs closely, but they're a lot more accepting of these kinds of medications than they once were. And the Trump administration is also quite supportive of these efforts, and they're taking some steps to loosen restrictions around the studying of psychedelic drugs.
I don't mean to belittle the power of psychedelic drugs, especially in treating things like depression, but it feels somehow connected that on one hand, psychedelics are being used for medical purposes, and on the other hand, medical companies are a casino now that you can bet on Kalshi based on their drug outcomes. You wrote this story. What exactly is Kalshi offering?
Yeah, so Kalshi is deepening its offerings in biotech, essentially, offering more contracts related to clinical trials and FDA decisions. So exactly what we were just talking about, you know, the FDA deciding whether or not to approve a drug. Now it's going to offer contracts explicitly tied to that. Both Kalshi and Polymarket have offered some healthcare-related contracts, but this is sort of its biggest push yet into this world. And they're working with an AI-powered platform called Applied XL that will sort of do the resolution behind the scenes and work on some of these contracts.
Is there nothing that can't be turned into a product? Nothing about our, wants and desires and need for dopamine?
Yeah, it seems like it.
Incredible, Maddie. Great story. That is Bloomberg's Madison Muller. And coming up, Bank of America CEO Brian Moynihan says the consumer remains resilient. More on that interview next. This is Bloomberg Open Interest.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Bank earnings continue to beat expectations as consumers spend, borrow, and invest. Bank of America CEO Brian Moynihan spoke on Bloomberg Surveillance.
You just saw two statistics that I've watched carefully, which is what the activity of the consumer is, and then ultimately what the unemployment new claims are. That's people argue it's leading or trailing, but it's actually an indicator of the health of the employment market, and a 4.2% unemployment rate with new claims at 1.8 on long-term claims and 208,000. Everybody looks at it and says, well, that's in line with 19. Remember that the workforce has actually grown a lot since 19 in terms of size, and so you argue about 7,000 on 160 million workers or something like that. So it's a pretty small number. And so nominally it's a low number, and percentage-wise it's a low number, and that's good news because that means the consumer spend. And what we see in our data is the consumers are spending. If the consumer spend in America, that means the economy's okay, and that probably means the rest of the markets and the construct and the final demand is there.
The weather for the banking industry has been shining brightly. The sun is out, the backdrop's great, the environment has been good. I want to draw a distinction between the environment and execution, because fees were up everywhere. What are you proud of after that quarter? On execution, where are you gaining market share?
Every single business grew the revenue, grew operating leverage, which is critical because that means your revenue is growing faster than expenses, and increased their returns. every single business. It grew the customer bases and all those things. So what you're seeing us is the power that the engine of Bank of America is across all the businesses. So our consumer business made $3 billion after tax this quarter, plus. You know, that's half as much as Wells Fargo made, and you know, it's a big number. That's one of our 4 businesses that we disclose, in the smallest of which made $1.5 billion this quarter. So these are big businesses. They're scaled. They're accumulating new clients. They're accumulating new activity. The markets business had a great quarter, and the investment banking had a great year-over-year comparison. But at $2.1 billion for the quarter, you know, we were $2 billion last quarter, 2.1. It looks like a huge increase because last year's second quarter, we all thought the world was coming in, and with Liberation Day, this year it's different. But what's really important is the pipeline they have is strong. The deals in discussion are strong, and you're seeing deals announced every day across all the spectrums, M&A, strategy, financing, all of which is important.
How concerned are you, and how much oxygen has been sucked out of the room from Mythos and some of the cybersecurity concerns from earlier this year? We heard some of your peers talking about that, and anecdotally, we hear a lot of fundamental concern about the risk to the financial system.
I think the administration looked at it quickly, Secretary of Treasury and others ways, and so we all got started on this, and we've all been working a long time, and yet it just speeds up the pace of the work you have to do to patch the systems and do the things. So it's a serious concern. I think the so-called AI industry and industry writ large have worked together. But you can't think that we're ever going to be able to control this because there's foreign models that people use. And not everybody's going to have the same thought process that our country has, but our country's tried to handle it and tried to be pretty systematic about it. But it's a big change in the amount of work that will have to go on and the pace at which these tools will affect your vulnerabilities in your system and how fast you have to take care of that.
Bank of America CEO Brian Moynihan speaking on Bloomberg Surveillance, maybe echoing some of the concerns we heard from Jamie Dimon yesterday on the threat of widespread Mythos access and those advanced AI systems. We are about 20 minutes just over that into your trading day. Here's where we stand on these markets. It's another day where tech is selling off. These AI stocks have been extremely over-owned. So even if you get good earnings like from TSMC, this risk exists that you get a sell-off. The NASDAQ falling 1.25%. Christina Hooper of Man Group was talking about this, the fact that the cost of financing is getting more expensive, that you have political pushback on building data centers, and you still don't have that robust return on capital. Small caps in the Dow, though, those are still in the green, showing you a sign of the times. As yields do yields push higher, we're up by about 3 basis points. They're trading alongside oil this morning, and even though we had some of those kind of weaker retail reports, it was the lowest figure we had since January. Brent crude, that's up just 0.5%. We're trading at $85 a barrel. We still are pricing in about 12% odds that we get a hike this month, rather. NVIDIA and SanDisk, again, look at SanDisk getting crushed in today's trade, down 9.2%. Everything is all the tech players, again, very over-owned, and a lot of these leverage ETFs that are now starting to get banned, at least a pause on new ones in South Korea because of the impact of what it does to this market when you have these ETF dealers that need to go and buy more exposure, and it can snowball into these markets. Some really good earnings when it came to the healthcare providers. United Health and Abbott both reporting really strong figures this morning. United Health up 8%, Abbott Laboratories up 13.4%. United Airlines, they upgraded their outlook. However, the current quarter seemed to have disappointed, and that's a problem considering we had those really strong numbers from Delta, so those shares down 3.6%. And again, Bank of America, we're just hearing from Brian Moynihan there. Those shares are down 0.7% in what has been a blockbuster quarter for the Wall Street banks. Coming up in the next hour, we're going to hear from Kathy Bostjancic on the inflation trends of this week, plus Carlyle's Pooja Goyal on their data center push, and the global president of TGI Fridays joins us to discuss the chain's expansion plans abroad. All of that in hour 2 of Bloomberg Open Interest.
Today, Wayfair sees immense potential in brick-and-mortar stores.
When we got into physical retail, our view was that, even if the market continued to grow for e-commerce, probably a large chunk of the market in the space would stay offline.
Kate Gulliver showed me around Wayfair's new 150,000 square foot Atlanta flagship store.
When customers who have seen us online come into the store, they're generally a bit surprised by actually the breadth of what we offer. Often if you're going online, maybe you're looking for something particular. But when you come into the store, you walk in, you see the market square, you see all these pillows, you see the decorative accents. So what we're seeing actually is that in store, we do really well in some categories that online are, less a percentage of the total.
How does technology help in kind of making it seamless online to store?
I think
and vice versa.
The biggest thing is for the customer on the front end, that she can be in the store, that she can actually shop here, go back home, complete that purchase. And if you look at these sort of price tags and everything, they're all these digital tags. That's because they're the exact same prices they are online. So you're not going to be surprised that you saw something in the store and then you decided to purchase it online, that it's somehow different and that the offering is different. It's actually very consistent, but when she's here, she can have her app open and everything that she's doing here can be very similar to what she's doing at home. And I think that consistency is quite important.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersachi in El Ula, Saudi Arabia, and this is Bloomberg.
From ABC News, I'm Chuck Severson. Torrential rain up to 30 inches forecast is setting off more flooding in parts of Texas. The Guadalupe River is at flood stage, says ABC's Jim Ryan.
Dozens of times in the past 36 hours, swiftwater rescue crews have been dispatched to save people trapped in their cars or homes.
We have a boat going in the water up River Road.
The audio from Broadcastify of a crew at work in Kerr County, which was devastated by flooding on the 4th of July last year. The ominous report from the field.
801 for command, be advised. This flood is going to be well outside of what we did during the 4th.
Unlike last year, there have been no reports of deaths or serious injuries from this episode of flooding. Jim Ryan, ABC News in Dallas-Fort Worth.
Another day of unhealthy air to breathe from millions because of smoke from wildfires in Canada and Minnesota carried south. ABC's Matt Rivers.
Those wildfires and creating these hazy, almost apocalyptic-like images across the U.S. from Michigan to upstate New York. Officials are advising everyone to take extra precautions to brace for worsening conditions. It may only get hazier.
Shoppers slowed their spending in June from May amid continuing economic uncertainty. Retail sales rose 0.2% in June after being up a revised 1% in May, says today's Commerce Department report. First-time unemployment claims are down to a 10-week low, says the Labor Department. More than 12 days after an 18-year-old was seen alive in Mississippi, who allegedly drowned while being out with friends. This update from ABC's Aaron Katursky.
The parents of Nolan Wells say they're ready to share their son's cell phone with the authorities investigating his death.
We will have a mutual inspection of the cell phone with our experts and their experts.
His mother tracked the phone to someone who was with Wells on Horn Island and suggested some content may have been deleted.
President Trump expected to make a speech to the nation tonight at 9 Eastern. Sources say it's about the 2020 election. You're listening to ABC News. An American woman held in Iran since 2024 has been released. Her lawyer says she was falsely charged with spying. Local health officials in 34 states are on the alert for the ongoing outbreak of that intestinal illness. ABC's Elizabeth Schulze.
The epicenter is in Michigan, where doctors tell us they typically see less than 50 cases per year. Now it's up to 600 per day. Health officials there say the outbreak could be tied to lettuce or salad greens, but nationwide, federal officials still have not identified a cause.
Cleared by the courts, which ruled against changes to an exhibit explaining slavery at the site of George Washington's home in Philadelphia. A map of slave trade routes and a timeline on slavery were removed to comply with President Trump's order for a more positive presentation. Miguel Johnson is a street guide for tourists.
In a memorial talking about slavery, and we're talking about the fact that you had the first black president too also matters. But that's not here anymore.
A new high-flying idea for this type of gambling. ABC's Jay O'Brien.
Kalshi, one of the two largest prediction markets, has notified federal regulators it plans to let users bet on the percentage of canceled flights at any given airport, and if that rate of cancellations would rise or fall. The company already offers similar bets for New York's JFK and Chicago's O'Hare, but this new plan would extend well beyond those, covering airports nationwide.
Chuck Severson, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they perform.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
Good Thursday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we are streaming live on YouTube as well. Check us out there. Coming up, we're going to check, it is the Bloomberg Intelligence Program with Scarlett Fu and Paul Sweeney. Coming up, we're going to check with Mandeep Singh, Global Head of Tech Research. Talk to us about TSMC. They put out some numbers there. That's important. Uber buying Delivery Hero on $14.8 billion deal, extending their reach in Europe. Kelly Bogdanova, portfolio analyst at RBC Wealth Management, will join us to give us her thoughts on the markets. And Sam Fazeli covers all the healthcare stuff for Bloomberg Intelligence in London. I want to ask about this Eli Lilly deal, another M&A deal. They're buying psychedelic firm Atai Beckley, I guess, $3.8 billion. Let's get the latest on that. Ned Lazarus, Associate Professor of International Affairs at George Washington, gets the latest on the Middle East. So a lot coming up here in the next couple of hours. Right now, let's kick this whole thing off with Alexis Christopherson of Bloomberg Business.
All right, thanks a lot there, Paul. We have still got a mixed picture on Wall Street with tech coming under pressure once again. Let's start there with the NASDAQ Composite, which is down 185 points or 0.7%. Dow Jones Industrial Average up just fractionally, a gain of 23 points, and the S&P 500 down about 16 points now, or 0.25%. Oil, though, is in the green with Brent crude up 0.2%, 85.13 the barrel there. West Texas Intermediate crude up 0.2% at 79.77 the barrel. And the Bloomberg Dollar Spot Index up fractionally at 1215.03. As for some stocks on the move, shares of General Electric down nearly 4%. This is despite the fact that the company raised its full-year outlook and topped earnings expectations. Wall Street seems concerned about the company's ability to continue that momentum in future quarters. Meantime, Taiwan Semiconductor also getting punished, down more than 1.5%, even though it lifted its spending and revenue outlook, saying the AI-fueled chip boom will extend well into 2027. And after dipping below its IPO price yesterday, shares of SpaceX are snapping back, up about 0.7% now at 136.24. And taking a look now, round one of the Open Championship underway at Royal Birkdale Golf Club in Southport, England. At last check, Daniel Brown sits atop the leaderboard at 4 under par. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Paul and Scarlett.
Alexis, do you even watch golf on TV?
You know what? No, I don't.
No.
But you sounded like you do. No, I don't. Thank you. Yeah, I could read the leaderboard, though.
That was very good. I was like, I need to get to the bottom of this. All right, Alexis, thank you so much. Very good there. We got Scarlett Fu and Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube as well. As Alexis was just reporting, we got red and green on the screen. Let's take a look and see some of the stocks on the move today. We could do that with Denitsa Sakova, cross-asset reporter for Bloomberg News. She joins us here in our Bloomberg Interactive Broker Studio. Denitsa, what are you looking at today?
Let's dive deeper in one of the names Alexis mentioned, GE Aerospace. It actually came as a pretty strong earnings report, but investors are not so impressed. The largest jet engine manufacturer posted second quarter results and gave an updated forecast. General Electric raised its full year outlook and topped Wall Street earnings expectations. The company has been doing well despite all the disruptions to travel and everything that has been going on in geopolitics, but ticker is GE, and the stock is down 4%. Despite all the good metrics we're seeing, investors are questioning whether the company can maintain its recent momentum. For example, TD Cowen are saying that guidance hike may not be good enough. The company has now raised its guidance 7 times since January 2024. Pretty impressive number. Stock is up 12% this year despite this, but nevertheless, investors seems to be hard to impress, and obviously it's been a pretty rough time for airlines travel, and I guess that expands to jet engine manufacturers as well.
Yeah, especially now that oil prices are back on the rise again. All right, next up, Denisa?
We stay with, we actually moved to healthcare. United Health Group higher after the health conglomerate raised its outlook for the year reported quarterly profit well ahead of Wall Street views. The ticker, of course, is UNH. The stock is up 8%. United Health now expects adjusted profit of $19 to $20 a share this year. This is much better than what Wall Street was expecting. It was just above $18. So a lot of optimism there. United Health has replaced its chief executive officer, revamped senior management, made a lot of changes, and it seems like it's paying off. Obviously, last year was a very, very rough year for the company. Bloomberg Intelligence, for example, is saying that United Health boosted insurance profits by raising premiums, changing how benefits are structured, and reducing enrollment. This is not too good for consumers, but clearly investors are happy.
All right. Also on the healthcare front, Abbott Laboratories, the stock is up 14% today, the most since 2002 on the backs of some good numbers. So we'll break down all the healthcare stuff with Sam Fazeli later on this hour. All right, one more for us.
For sure, big moves in healthcare, and one more move going back to the airline and jet engine. United Airlines this time, ticker, of course, is UAL. Stock is down about 3%. United Airlines are lower after the airline reported second quarter earnings. Is actually another earnings report that wasn't a bad earnings report, that there is so much turmoil for airlines that we're seeing a lot of pressure. There's soaring fuel costs, but the company expects resilient travel demand. Shares in the company are trading lower. United also expects $6 billion in added fuel costs. One fun thing for you, I don't know if you're up for that, but they're having, they're going to replace the middle seat in certain economy plus roles, and they're going to be a shared table. I don't know if that's going to improve your experience. But you have to pay. They'll charge. If it feels though sometimes you see an empty seat between you and you're just like, yeah, awesome. It's the best, and you don't have to pay. But now, you know, you don't even have to pay for that.
Scarlett, did I mention I'm a million-mile flyer on United Airlines?
Wow. Yes, you have. Yes, you have. Do you have loyalty plans with any other airline?
No.
They just shun everyone else.
No.
That's enough.
Yeah, exactly. So that's how it goes. All right, Denitsa, thank you so much. Appreciate that. Denitsa Sakova giving us the stock movers. And let's remember that stock movers, for more conversations like this, subscribe to Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Right now, let's check out Mandeep Singh. He joins us here in our Bloomberg Interactive Broker Studio. He covers all the technology stuff there for us. I want to start with TSMC, the chip maker. What did we learn with their earnings, Mandeep?
I mean, again, very solid print. Raised their guidance by about 5 percentage points for the full year, so 40% top-line growth. If you had to find faults, the only thing that they didn't show, which you saw with the memory names, is pricing.
Okay.
So pricing growth for memory was off the charts. We were talking about, 40% quarter-over-quarter pricing growth. That doesn't seem to be the case with TSMC, partly because of how they run their business. And I feel all these companies are still reluctant to expand their supply. Even though TSMC raised their CapEx by 12% for the full year, But given the supply-demand mismatch, to my mind, they're leaving a lot of revenue on the table because they don't want to expand supply.
Why do you think that is? Is it just they've been burned in the past when the cycle turned against them?
It's the management teams are very conservative. They don't want to take a chance where they double their supply in a year, and guess what? Something happens. Glut, and they don't want to be in that situation. But to my mind, the reason why Intel has a shot now is because TSMC is conservative in expanding supply.
Just clarify for us, TSMC makes chips for NVIDIA, so we're talking the super high-end AI chips. Does it make memory chips?
No, so all the memory guys have their own fabs and they make their own chips. So TSMC does have a very broad set of clients it serves. So not just NVIDIA, but also your AMDs, Qualcomms, Apple. Apple used to be their biggest customer, so they have pivoted from smartphone chips to more data center chips. But at the end of the day, they have the best process nodes, the best manufacturing capabilities. If they wanted to do the memory chips, they could do potentially, but they've just been conservative when it comes to expanding their supply. And we know the concentration in Taiwan. They've talked about adding new factories here in the US. But when you are a company with literally a monopoly and the balance sheet to expand at the pace you want, why would you not be aggressive here? And I just don't get it.
All right, so the very little I know about the semiconductor business I learned from Anish Srinivasan. He taught me everything. But the first thing he taught me is it's a cyclical business, dude. If you get it wrong, you're going to get crushed. So the question I've been asking you guys is it less cyclical and maybe materially less cyclical now with this whole AI transformation? And what I think the management team of TSMC is saying, we're not convinced of that.
Yeah, and no one is convinced, but you get, technology shifts like this in maybe 2 or 3 decades, and this is a very big technology shift, and it's evidenced by the fact that you have a big supply-demand mismatch that continues to carry through, and the biggest chip maker who's exposed to the trend, NVIDIA, is telling you they have visibility to $1 trillion in revenue. So why would you not believe NVIDIA if you're a big supplier to NVIDIA, which TSMC is?
Or you're in a really good position and you want to stay in a really good position, barring Intel coming in and taking some of that business. You mentioned that TSMC has been looking to build production capabilities in the U.S. We know, I think it's Arizona where they've done that. How's that going? How's that effort going? Because for a while there was a issue with talent shortage, right?
There is, and look, they've been actually adding to their capex for expansion here. So a lot of these fabs take up to 2 years just for that initial factory to start producing chips. And they may not be at the leading nodes like your 3 nanometers. So it will be more like 5, 6 nanometer chips before they can get to 3 nanometers, partly because of the talent shortage. So they need those kind of people who can do things at the leading node. But all of this combines with the fact that the lead times are very long to set these up.
The reason I asked about the talent issue is because we're not making it easy for companies to bring in engineers and folks with the capabilities from overseas if that talent's not available in the U.S.
Absolutely. And look, I think even when it comes to getting permits, getting the resources, water, and, all the kind of supplies you need to set up a leading semiconductor fab, it takes a lot more time here than if it probably takes anywhere else.
30 seconds. Uber bought Delivery Hero for close to $15 billion. What does Delivery Hero want to do for Uber?
I mean, the playbook with all marketplaces is consolidation. Uber CEO did that back in the day with Expedia. He's doing the same. And the big threat for a company like Uber is autonomous rides. So this for them is a way to diversify that, kind of expand to now 100 countries. Autonomous is not going to be there in 100 countries. So from that perspective, there's a cushion here.
This goes back to what the CEOs of the big banks were saying during their earnings, which is AI has made it so that every company out there is thinking, I need to scale and I need to do these strategic acquisitions.
Yep, and that's a good one for Uber. Stock's up just slightly here today, down 10% year to date. Mandeep Singh, Covers all the tech stuff, including those ride-hailing thingamajigs. I still arbitrage Uber versus Lyft. I'm shocked that more people don't do that. It saves me like 20, 30% almost every ride.
He's looking at you, Matt Miller.
Exactly, Matt Miller. He doesn't know what's going on. We're going to have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's coming up on 1022 on Wall Street. I'm Alexis Christoforous from the Bloomberg Interactive Brokers Studio. Stocks have now turned lower across the board. We've got the S&P 500 down 11 points. Dow Jones Industrial Average reversing an early gain, now down about 17 points. And the NASDAQ Composite is sliding 173 points. At the same time, we have got yields higher. The 2-year at 4.16%, the 10-year up 3 basis points at 4.57%. Oil also on the upswing, with Brent crude up nearly 0.6% at 85.45 the ounce, or the barrel rather, and West Texas Intermediate just above $80 a barrel, up about about 0.6%. Taking a look at some stocks on the move today, shares of Eli Lilly up about 2%. It's going to buy the psychedelic firm Atai-Beckley for up to $3.8 billion. That is sending shares of Atai-Beckley up about 34%. And United Health Group is gaining about 4% after raising its outlook for the year and beating all profit estimates for the quarter. Taking a look at Netflix, down about 0.7% ahead of its earnings due out after the closing bell. And more homeowners are falling into foreclosure. According to the real estate analytics firm Atom, foreclosure filings jumped 21% in the first 6 months of this year compared to a year ago. States with the highest foreclosure rates: Florida, South Carolina, and Indiana. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous, and that's a Bloomberg Business Flash. Scarlett and Paul.
All right, Alexis, thank you so much. We appreciate that. It's Scarlett Fu and Paul Sweeney live in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Some people have really, really exciting and interesting LinkedIns. Some people, it's the exact opposite. They graduate from college, and then they go to one place, and they stay there basically their entire career. It's like such the boring LinkedIn.
Are you looking at me?
No, I'm looking at our, that's you too, that's right. I'm looking at our next guest, Kelly Bogdanovich, portfolio analyst at RBC Wealth Management in San Francisco. Been there forever. I guess there's some loyalty. I have had no loyalty during my career. This 17-year run here at Bloomberg is by far the longest.
See, there's some loyalty there.
There's a little bit, yeah. Kelly, thanks so much for joining us here. Love to get your thoughts on maybe some of the conversations you're having with your clients these days, because, boy, it's been a good first half of the year. It's been a good 24, good 25. What's the conversation like these days?
Good to be with you, Paul and Scarlett. You know, clients right now, they're kind of in the mode of not checking their accounts and statements a lot. And what that means, that's good news. They're usually comfortable when they do that. And so people are pretty happy. Obviously, we've had a big run in markets. But, you know, we're trying to remind them with big runs, after that tends to come a bit more volatility, and need to be prepared that if they've got positions that have had outsized moves, so here we're talking about some of the tech positions, to understand that they need to make sure their position sizes are appropriate, because in some cases, you know, when you see stocks move up 50, 70, 100%, you've got to check to make sure that your allocation to that stock isn't too high, basically. So, you know, there's nothing wrong with trimming here and there and getting things closer back into balance.
And is that something that they need to be reminded to do, or are they eager to do, given the price action that we've seen and the volatility that we've seen in some of the best performing groups, like memory chip makers?
You know, what we see with individual investors, when they've got a stock that's up a lot, they're usually not eager to let go of those gains. And just the psychology of it, people start thinking, well, you know, what about the next 50%? I don't want to miss it. That's just the reality of how individual investors often think. So we think it's important to have conversations that, you know, you've got a portfolio, it's crafted a certain way for a reason, it matches your goals, and we need to stay on top of that portfolio construction.
What's the asset allocation that you guys feel comfortable with these days? Stocks, bonds, alternatives? How do you guys think about that?
Well, you know, it all depends on the client, and just in general, if we've got a client around 60-40 with stocks and bonds, right now we're neutral, stocks and bonds, so we're comfortable around that. You know, there are going to present certain opportunities to move that dial up or down, but in general, clients stick around their basic portfolio allocation. But, you know, that obviously depends on whether they're more growth oriented or not.
Yeah, when you look at the returns on fixed income, and this could be credit, high yield credit, or investment grade credit, or just treasuries, you know, the ag, for instance, and then you compare it to, say, equities, and you could look at the S&P 500 or the Qs. I mean, there's no contest. Equities have taken off, and fixed income just hasn't done anything. Is there still the appetite to maintain that 60-40 portfolio when you look back over 5 years, over 1 year, and fixed income just isn't getting it done?
Yeah, at times like this, I mean, obviously fixed income's been a really tough space, not just this year, but recently, what we're focused on is income. So, client has their goals, they need certain income per month. Yields have been up a bit, so there is more income to get. But when it comes to fixed income, looking at it from a total return perspective, it hasn't delivered. But what we want to make sure is that we've got, whether it's, treasuries, munis where appropriate, bank preferreds or preferreds in general, or corporate bonds, we want to make sure that that income coming in, that income check per month, we like to call it, is delivering for the client. So as long as that income is coming in and then they've got the equity side of their portfolios doing well, they're generally pretty satisfied by that. But we're definitely not pitching fixed income from a total return perspective right now.
Yeah, because it's not getting it done. All right, Kelly, thank you so much for joining us. Really appreciate it. Kelly Bogdanova, she's portfolio analyst at RBC Wealth Management, joining us from San Francisco. So, these are all things that we think about, especially when you look at this market and how it's performed so far this year.
Yeah, I think if you come into this 2026, certainly, maybe parts of 2025 in the fixed income space, and I approach it as just clipping coupons. I'm not looking for much capital appreciation, and that's not a bad. That's a good place to be. It's the best place fixed income's been in a very long time.
I know,
in
but
terms of coupon.
you look at the returns, the total returns in equities, and it's hard not to have FOMO.
Yep, absolutely.
All right, let's talk about what's going on in the healthcare space and pharmaceuticals in particular. A big deal here by Eli Lilly. It's made a lot of acquisitions, Paul. I feel like we're always talking about Eli Lilly making another purchase. Sam Fazeli is our Bloomberg Intelligence Director of Research covering healthcare, defense, industrials, and autos. He is our drug boss. That's what we like to call him, and he actually has a jacket that says that. And Sam joins us right now from London. Sam, I don't know if you were cheering for England, but if so, our condolences to you. I wanted to start with this Eli Lilly purchase. Buying a Ty Beckley for up to $3.8 billion. That valuation strikes me as interesting. Why for up to $3.8 billion? Are there incentives along the way here?
Absolutely right. So when you look at the numbers, we've got $2.8 billion upfront cash and $1 billion in contingent value rights. So that's CVRs tied to the lead assets, which are in two forms. One in intranasal, the other one is under the tongue, buccal. Getting through phase 3 and also getting EEA approval, because these are psychedelics. They're drugs that are quite fashionable these days in terms of development because of the profound effects that we're seeing on treatment-resistant depression, on major depressive disorder, generalized anxiety disorder, that sort of thing. So there's a resurgence of interest in these psychedelics, which are synthetic. So that's where this extra $1 billion and contingent value rights come from, which is why the stock's trading above the $6.75 cash offer.
So the psychedelics, talk to us about kind of that part of the therapeutic space there, Sam. Is it a big part of it?
It is. There are quite a few companies. I wrote a few names down: GH Research, MindMend, Compass, just naming a few, Altos, Cybin, Relmada, etc., who are in this space, which is a significant issue for society in terms of depression. But also the fact that they're psychedelics, I think, takes away or adds a little bit of, I wonder what they're like, magic mushroom, that sort of stuff is conjured up. In fact, this particular drug originates from a specific desert toad, which is one of the major sources of it. But this is synthetic. The fact is they work on something specific in the brain. And it's been shown that they can help you, to a degree, rewire your brain. Because the brain is a very plastic organ in terms of how learning, right? That's plasticity. We learn new stuff all the time. So unfortunately, in a depressive state or a PTSD state, that's a learned behavior to a degree, to put it very simply. So that's where I think there's a lot of interest to try and treat patients and help patients here.
Sam, I also want to turn to Merck, getting FDA approval for a new cholesterol pill. It's going to cost $3,800 a year, which sounds pretty expensive if it's not covered by insurance. How is this different, this new medication, Lipfendra, different from the world's most popular cholesterol-lowering drug, which is Lipitor?
Yeah, so these are drugs that work via a different mechanism. It's an inhaled of something within the system called PCSK9 that are involved in the metabolism, uptake, production of cholesterol. And there are other drugs that are on the market that work the same way, which would be injectables or ones that interfere with RNA, etc. In terms of trying to. Here's the first oral drug that we've got, and that's where I actually don't think $3,800 is a lot. We're living in a world where drugs come to market at $10,000, $20,000, $30,000, $50,000 a year, and here you're having a very profound effect on LDL.
Hey, switching gears a little bit, Abbott reported some good numbers, stocks up the most in, I don't know, a million years here. What's going on Abbott?
Yeah, I mean, look, so Paul, that's not a space that I'm particularly familiar with, but I'll tell you something. What was interesting is yesterday we had Johnson & Johnson report, and they have a medical devices business that they're still ongoing with, and that didn't do so well. That was a bit of a drag on them, if you remember where the share price was behaving yesterday. Abbott's, of course, in more of a diagnostic and different area of focus. So it's quite nice to see that working, and there's a lot of interest in diagnostic and quality diagnostics, especially when they're married with therapeutics.
All right, Sam, appreciate it. As always, Sam Fazeli, Director of Research, covering a bunch of stuff. I don't like the new title. I'm just going to say he's our healthcare dude for Bloomberg Intelligence. They've done some management changes there in BI. I just don't know.
It sounds like he covers everything.
Yeah, he's a boss of everything. Everybody kind of looks up to Sam over there in London. He kind of built the whole business over there for us. And his side gig is he's like one of the best healthcare biotech analysts on the street, so we kind of get 2 for 1.
He didn't comment on my comment about England not getting too far. You've been talking to guests all morning. Have you talked to anyone from London? Is anyone, expressing disappointment? Are they licking their wounds?
Also a little bit, it doesn't surprise us. This is what England does. But the thought was, oh my God, we were 5 minutes away from going to the final. But so I mean, it's just Argentina. Messi being Messi and just setting up the goals, and I don't know, but it'll be a great final out there in the swamps of Jersey.
I know, Sunday, so avoid New Jersey if you're not going to the game because it's going to be a mess to get in and out.
Most people avoid Jersey just in general.
This is true.
Which is fine.
I will admit to that.
Which is fine by me. But anyway, yeah, hopefully the smoke clears up for the game on Sunday. We'll have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Brokers Studio, I'm Alexis Christoforous. We have a mixed picture once again on Wall Street. Dow Jones Industrial Average has been fluctuating between modest gains and losses all morning. Right now, the Dow is up about 48 points at 52,706. We've got the S&P 500 dipping more than 8, and the NASDAQ Composite continued pressure there, down 152 points, being led lower by the chip stocks. Oil is on the rise. Brent crude up 0.1%, 85.10 a barrel. West Texas Intermediate crude up 0.25% at 79.81 a barrel. And the Bloomberg Dollar Spot Index now up 0.1% at 1215.59. Bitcoin is down about 0.5% today at 64,661. Taking a look at some stocks on the move, shares of Uber are on the move today. They are up about 2%. The company is expanding its global footprint and buying Delivery Hero, which values the German-based food delivery company at $14.8 billion. Meantime, we've got shares of U.S. Bancorp coming under a little bit of pressure now, down about 1%, posting a 20% jump in profit for the second quarter, beating analyst estimates on both its major revenue sources. And United Airlines is down more than 2%, despite its strong quarterly earnings results. United's full-year outlook underwhelmed traders. And round one of the Open Championship is underway at Royal Birkdale Golf Club in Southport, England. At last check, we've got Daniel Brown sitting atop the leaderboard at 4 under par. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Paul and Scarlett.
All right, Alexis, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well. The U.S. intensified strikes against Iran, hitting an oil tanker near the country's main export terminal for the first time since the restart of the blockade. Iran responded by firing upon American bases in Kuwait and in Jordan here. So heating up yet again in that part of the world. Let's get the latest on that. Ned Lazarus joins us here, teaching associate professor of international affairs at George Washington University, joining us from D.C. via the Zoom thing. Ned, can you put what's happening between the U.S., Iran, Israel, maybe into a little broader context? Because it seems like everybody in that part of the world, in that region, they're involved, whether they want to be or not. How do you think this might play out?
Thank you. I think that it's very important. You named the U.S., Iran, and Israel, and of course they're key actors. But this is really something akin to a regional world war, maybe it's slightly lower on the escalation scale, but it's really got the potential to go there, and we can see that. Because what you see right now is that any escalation, it's sort of like Europe before World War I. Any escalation in any part of the region right now triggers escalations all over. So we're talking about the escalation right now between the U.S. and Iran, but it's being conducted through Iranian strikes on U.S. assets and U.S. allies throughout the Gulf and even in Jordan, which is actually a step higher. It's adding a new front. Jordan had not been a spot that had been attacked frequently in the previous rounds, and now it's been hit twice in the last few days. Of course, the Gulf states have been hit more than any other place. Iran has fired more drones and missiles at just the United Arab Emirates itself than at Israel or anywhere else, and certainly much more if you count the entire Gulf region. So we're really talking about a regional conflict, which is part of what makes it so difficult to contain. And even when it seems that the major actors, the U.S. and Iran, are interested in a détente and a de-escalation, it is very difficult to get all these different fronts under control. And I think a second thing that we're seeing is a repeated pattern in the longer war of sort of overconfidence based on a past success. So I see that in Trump perhaps calculating that, changing the regime in Iran would be as, quick and painless from an American perspective as was replacing the president of Venezuela. Which, of course, proved to be a terrible miscalculation. The Israelis, who had tremendous success against Hezbollah and against Iran in sort of more limited attacks, calculating that then they would have even more success if they open a full-on war. Again, they ended up in a worse strategic position at the end of that than they were before it.
So Ned, the question is, the fear is that this will now be a forever war, even if it's one that's in that region. We know the U.S. doesn't want to widen this any further. Is it in Iran's interest to expand this to beyond the Middle East region?
I'm not sure that it's in Iran's interest to expand beyond the Middle East region in the sense of if you're implying striking at Europe or at the United States, not in conventional means. Iran, is also believed to cultivate the potential for terror attacks, as it did in Argentina in the 1980s for very wide-scale terror attacks. So that is a possibility, but I do think that it will stay contained, so to speak, in that region. But within the region, it's almost impossible to put out. It's like California when there are hundreds of wildfires, and you can put out some, but you can't put out all, right. and they keep spreading.
Ned, what do you think has to happen in order for President Trump to just say, okay, we won, we're out of there? I guess that's a key question a lot of folks are asking.
I think that is something that certainly many Americans would wish for, and I can certainly understand why, because this is a tremendous drain on our resources and puts our service members at risk. But I think that the reason that it has proved so difficult for presidents such as Trump and also Obama, both of whom wanted very much to lower our presence in the Middle East and disentangle us from what they saw as forever wars, neither of them have been able to do that because we also have profound interests, economic and strategic, in that region, and also because our withdrawal creates an image of weakening power, of decline, which has repercussions all over the world. And because of that, both of those presidents are continually called back. Obama, who had withdrawn our forces from Iraq, who wanted to withdraw our forces from Afghanistan, and didn't even retaliate when Syria crossed his red line, then ended up having to send U.S. forces to fight ISIS. And Trump obviously has, ended up deepening our entanglement in the Middle East. It's very complicated, but the American interests in that region are real. They're quite significant, as well as the global projection of power. Both of those things are important to Trump.
Sure.
And I don't see him pulling out in any significant way.
So with this continued entanglement, we're not going to see any clear resolution in the near term. What are the costs of that to the U.S. standing globally? I mean, we've already seen how under Trump, the U.S. Looks very different to our allies than it once did, even during Trump 1.0. But long-term, what are the costs?
I think that one of the things that Trump probably doesn't like about this, Trump very much wanted to change the situation where he felt there are free riders benefiting from the U.S. security umbrella without paying their fair share. That was part of his critique of NATO. I'm sure he's felt the same way about the Persian, the Persian Gulf and the states in the region that enjoy American protection. But, that problem is probably only going to get worse because now it's his own reputation. It's sort of the U.S.'s strategic posture and image of, deterrence depend on some kind of successful prosecution of this war. So why can't Trump just end it? He wants to end it. He wanted to negotiate an end to it, but he can't because what the IRGC, what the Islamic Republic is willing to accept, the terms they're willing to accept are humiliating terms for the United States, and would weaken the United States in global perception and certainly in regional perception. So that's why Trump can't just he can't end it. He wanted to end it, but he can't end it where the IRGC is willing to end it. The IRGC, I think, is also now committing their own form of hubris they saw that they were able to suddenly control the Strait of Hormuz, and that's a tremendous amount of strategic leverage. But I think that they are also now overplaying their hand. They had a very good deal in that MOU, but they're rejecting it and opting to escalate again, and they may end up in a worse strategic position than they were before.
Ned, thanks so much. Appreciate that. Ned Lazarus, Teaching Associate Professor of International Affairs at George Washington University. We now want to turn to Bloomberg's exclusive discussion from the Aspen Security Forum with U.S. Trade Representative Jamison Greer. He spoke with Bloomberg's David Gura in a wide-ranging conversation, explaining why stability for China trade ties remains a top priority ahead of the expected visit of President Xi to the U.S. in September. They began the conversation discussing China and Section 301 notices.
So China's compliance with the rare earth elements of our agreements, it's not perfect. I think everyone knows that. You can read that in the paper. That being said, we are getting a flow of rare earths. We don't have factories shutting down because they don't have it. But again, we really want to be in a position where we were, in 2024 and 2023 in President Trump's first term, where we had a regular flow of rare earths. We also know that the Chinese, they use rare earths for economic coercion. They did it in 2010 and 2011. They're doing it now, so it's not necessarily surprising. But we're continuing to to have some flow, and where we have gaps, where we have problems, the Secretary of the Treasury and I, we work with our counterpart in China to try to loosen that flow up. Sometimes we're more successful than others. One important thing is we're moving forward in the U.S. on rare earth production. One of the things I'm doing on my trip out west here, I'm going to Utah to visit a facility where they've discovered rare earths in the Utah desert, and they're refining them and further manufacturing them at a facility in Utah, which is a great development for U.S. national and economic security.
You've got rare earths. There's huge pharmaceutical dependence as well. And I wonder how you're thinking about that, the way that you can kind of curb our reliance on Chinese pharmaceuticals and ingredients.
Yeah, we think about this a lot. This is really critical, because at the end of the day, if somehow you lose access to Chinese inputs, it can be a huge challenge for our own manufacturing base. And some people will say, well, what about India? Fine, but a lot of the inputs that India uses also come from China. One great thing that we're seeing as we try to encourage companies to reshore is we actually have commitments from 17 pharmaceutical companies, the largest and the most major pharmaceutical companies, not only to lower prices of medication here in the U.S. Pharmaceutical prices have gone down by 2.5%, but they've also agreed to reshore here and to manufacture here. And so we have companies like Eli Lilly and Novartis and others actually pouring concrete and superstructures going up in new facilities in North Carolina and Indiana and Southern California.
There's a long way to go until this meeting in September when the Chinese president comes to the United States. But let me ask you lastly sort of how you're thinking about that. You were so integral to the conversations that took place in Beijing. What are you expecting deliverables-wise to come out of that meeting in Washington in a couple months?
Well, the number one deliverable we always have between President Trump and President Xi is to continue the stability of the relationship. Both of these leaders are very committed to having a strong and solid personal relationship. Now, that doesn't mean we don't have issues in the broader relationship. Obviously, we do. China is a big challenge for the U.S. in a lot of ways. But we want to make sure we're delivering stability. There's never been a situation where the U.S. side or even the Chinese side has gone out and said, everyone should expect a comprehensive agreement that resolves all issues. Like, no one's ever promised that, so that's not what we expect. We will have an opportunity to take stock of Chinese commitments with respect to purchases of soybeans and other agricultural products. We'll take stock on the rare earth issues we decided. So I think it'll be a moment for stock taking, confirming the relationship, making sure that China's complying with what it's agreed to do. That's really what we're looking forward to in this meeting.
All right, that was U.S. Trade Representative Jamison Greer speaking with Bloomberg's David Gura out there at the Aspen Security Conference. I skied in Aspen for the first time in my life last year. It was awesome.
But that was not a great year for the West.
No, it was a bad, but we caught a good week. We got very lucky.
Okay.
But just the terrain is perfect for me.
And it's so big and broad. There's so much space,
And
right?
we just skied Aspen Snowmass. We didn't even get her to the other mountains, so maybe we'll do that in the future. So some good stuff from David Gura. Right, let's get back to retail sales. We had retail sales this morning, Tom, and I broke that at 8:30. U.S. retail sales rose modestly in June, with the value of retail purchases rising 0.2% after a revised 1% advance in May. Let's check in with Angie Solanke, National Director, Retail Services and Practice Groups at Colliers. Angie, what'd you make of today's retail sales?
You know, it's a month over month, so I'm a little bit more optimistic that we'll see a slightly, increased number when we compare it to prior year. But overall, I think what we're really seeing right now is that the consumer is being very selective in their spend.
The consumer is being very selective in their spend, partly because prices are rising or have stayed high, especially gas prices, even though we've started to see that come back down a little bit, at least for the month of June. One thing we've noticed in data points like jobs is that the World Cup had a disruptive effect, right? It increased the job hiring in the leisure and hospitality space. Are we seeing any kind of World Cup boost to the retail sales numbers when you look beneath the headline number?
Oh, definitely. We're definitely seeing a increase in certain categories, not all, but the categories that are benefiting from the World Cup are definitely the sporting goods sector, and that's with apparel, with shoes, any accessories related to sporting goods. So they're seeing a nice, healthy bump. I would also say that we're seeing an increase as it relates to the overall in terms of just, bars and pubs. However, restaurants, we actually saw a decrease. So it was really interesting to see, I guess people are enjoying, the bars and pubs a bit more than they are just a more, call it formal sit-down restaurant, because it just takes too much time.
Angie, talk to us about just kind of how you're thinking about the consumer in general here from, a retail sales perspective. There's that inflation that's been impacting the consumers, and we got gasoline prices up and down, depending upon, whether it's a hot war or not. How are you thinking about underlying retail sales and the consumer strength?
The consumer is going to definitely be spending. Now, one thing that we did, evaluate, in the last few days is that people are still going out. So what I mean by that is we're seeing footfall or foot traffic continue to increase at malls, at lifestyle shopping centers, outdoor centers, etc. Now, whether they're spending versus just window shopping is definitely a big difference. So I think that's really what we're monitoring right now. We are starting to see some of the more, staple goods, such as grocery. The grocery segment itself is reducing in terms of their overall pricing. So we're going to see a slight decrease in that pricing on various products that will help and give some relief. So I think we're going to still continue to see the spend, but it's going to be modest.
The kids go back to school in August. How does this set us up for back to school sales, especially when it comes to the July numbers and the August numbers?
It's a little early now. I don't know if you've seen it, but in many large stores that I've been to over the past 2 weeks, they're already putting product out for back to school. So we're already seeing displays and vignettes, and people, I should say, the encouragement of these retailers to start shopping early. Now, that could be a cause of the expanded Prime Day to get in early, but I think we're not going to see that heavy boost occur until most likely end of August, mid-August to end of August, where we'll see the back to school numbers. It's a little too early right now. I think people are still trying to enjoy the summer.
Angie, thank you so much. Appreciate it. Angie Solanke, she is a National Director, Retail Services and Practice Groups at Colliers. We spent so much time when my kids were growing up in California, and their schools start like mid-August. It's a little disconcerting because, being an East Coast person,
I know.
that summer, you don't even think about school till after Labor Day.
That's right. The Thursday after Labor Day is when school starts, at least traditionally on the East Coast.
Yeah, and so the local pool would shut down during the week in August. It was really weird, but so it's never too early for back to school in some parts of the country.
I know.
I guess.
Well, I think it has to do also with weather patterns. Parts of the South, parts of Texas, it gets too hot if they stay too late into June. So they'd rather start in August.
Yep, there you go. All right, for our listeners in the U.S., a reminder: you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts in just moments. Looking at the markets, got red and green on the screen. The S&P is down 7 points. Not to worry because the Dow's up 132 points. But NASDAQ down 175. That's 0.7%. 10-year Treasury yields up about almost 4 basis points here, 4.58%. WTI crude oil absolutely unched on the day. We're sitting right below $80 per barrel. More coming up. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business App.
Good Thursday morning. This is Bloomberg Intelligence. We are broadcasting live from the Bloomberg Interactive Broker Studio in Midtown Manhattan. Paul Sweeney, Scarlett Fu, and Charlie Pellet with you for the next hour. We are, of course, streaming live on YouTube as well. We've got markets mixed right now with the S&P and the NASDAQ in the red. We're going to check in, of course, with our various guests, including David Kudla. He's founder, CEO, and chief investment strategist at Mainstay Capital Management to talk about the second half of 2026, especially after some blockbuster earnings from banks ahead of earnings out of Netflix. And then we also want to check in with David Gura. He is at the Aspen Security Forum. He will be speaking with Ambassador Rahm Emanuel. We will take you there when that begins. We're also going to hear from GameStop's CEO Ryan Cohen. He will join BTech anchor Ed Ludlow later on in the hour. All that coming up. For now, let's go over to Charlie Pellet to get us set up with our Bloomberg Business Flash.
Hi, thank you very much. And here's what's going on. Familiar themes for the U.S. stock market. Right now, we have got the S&P 500 index trading lower. NASDAQ down as well. The big news, though, what is happening with those chip names? Once again, we got the stocks down now by 3%. Chip stocks getting hit by AI spending worries. Oil right now is trading a little changed. Right to the numbers, the Dow with gains today, up 135 now, up 0.2%. S&P keeping it all in context, down 6, drop there of under 0.1%. NASDAQ down 173 for the NASDAQ Composite Index, a drop now of 0.7%. The NASDAQ 100 Index down 0.9%. And the Russell 2000 Index up today by 0.4%. Again, the SOX, the Philadelphia Stock Exchange's Semiconductor Index, down now by 3%. A 10-year at 4.58% and a 2-year 4.17%. Gold down 1.6%. Right now below $4,000 the ounce at $39.97 on the precious metal. West Texas Intermediate crude below 80, 79.49 now, down 0.1%. And Brent easing down 0.2%, 84.81 for a barrel of Brent crude. Traders, though, are grappling over whether tech stocks have grown too richly valued. Kelly Bogdanova is portfolio analyst at RBC Wealth Management. And right here on Bloomberg Intelligence last hour, she said it's okay to remind clients to take some gains.
You know, when you see stocks move up 50, 70, 100%, you've got to check to make sure that your allocation to that stock isn't too high, basically. So, you know, there's nothing wrong with trimming here and there and getting things closer back into balance.
Kelly Bogdanova of RBC Wealth Management, interviewed right here on Bloomberg Intelligence. Mentioned oil trading lower. Oil majors, though, higher. ExxonMobil up by 1.2%. Chevron up 1.1%. ConocoPhillips now higher by just about 0.9%. Round one of the Open Championship underway at Royal Birkdale Golf Club in Southport, England. And at last check, we do have Daniel Brown sitting atop the leaderboard at 4 under par. I'm Charlie Pellet, and Paul and Scarlett, that is a Bloomberg Business Flash.
All right, good stuff. Thank you so much, Charlie Pellet, with your Bloomberg Business Flash. Let's get to some stocks on the move here on this Thursday. Let's bring in Matthew Griffin. He is our Bloomberg Equities reporter, checking out a couple of the big movers. What do you have, Matt?
Well, Scarlett, thank you for having me. I've been looking first today at Abbott Laboratories, that stock, ticker ABT, having its best day in 24 years, up as much as 14% after the medtech company beat expectations in the most recent quarter. They raised guidance for the full year. They now see their profit at $5.45 to $5.60, excluding some items, so up 5 cents at the midpoint. One thing that analysts are focusing on is strength across a lot of the business lines here. So that includes medical devices, that includes diabetes care. And there were also some positive comments from Abbott CEO Robert Ford. This stock had fallen earlier this week after HCA Healthcare, their hospital operator, cut an outlook, pointed to expiring Obamacare subsidies. But Ford said Abbott's relatively insulated there. They get a lot of their surgical procedures covered under Medicare. So a lot for investors to be optimistic about for a stock that had fallen nearly 30% this year.
All right, how about a company I took public back in the day, J.B. Hunt?
Yes, Paul, J.B. Hunt having a good day. They're up 5.4%. The transportation company beat expectations. Also in the most recent quarter, their profit was $1.91 per share. Analysts looking for $1.74. This is the latest sign that improvement in the U.S. trucking market is flowing through into revenue, into profit for the biggest companies in the sector. Trucking rates had been rising, but we were really waiting for this earnings season to confirm that it would benefit the companies. So far, so good. They also said their intermodal business was strong. That's where you use 2 or more forms of transport. Because trucking's more expensive, because fuel costs are high, that's making railroad transport attractive for customers. Now, Morgan Stanley does say a lot's priced in here now, so upside could be hard to find, but for investors in that stock now, ticker JBHT, today is a good day.
All right, rewind about 35 years. I'm at the Port of Los Angeles. About 10 other investment bankers for the various firms taking J.B. Hunt public. At the end of the day, it was due diligence say, who wants to take a truck trip overnight from Los Angeles to Salt Lake? Of the 10 or 15 bankers, only one hand was raised.
Yours.
Mine. So we hopped in the truck and drove overnight. It was awesome. Got to Salt Lake and hopped on a plane, went back.
That sounds like the beginning of a movie.
Yeah, it was fun. You know, it was Jake, was the truck driver. It was awesome.
I would have gone on that trip.
JBHT, there you go. One more.
I've also been looking at GH Research. This is a psychedelic drug maker, ticker GHRS. They're one of the companies getting a boost from Eli Lilly's as much as $3.8 billion deal to acquire Atai Beckley. Investors are taking that as a sign that large drug makers are interested in psychedelic therapies, and they're one of the main beneficiaries.
All right, good stuff. Thank you so much. Matthew Griffin, he is our Bloomberg Equities reporter here in New York. And for more conversations like this, be sure to subscribe to our Stock Movers Reports, where we offer 5-minute audio reports on the biggest winners and losers in the stock market. You can do that by subscribing to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. We want to go back out to Aspen, where our Bloomberg TV and radio anchor, David Gura, is attending the Aspen Security Forum, and with him is Ambassador Rahm Emanuel. David, take it away.
Thank you very much. Great to have you with us here. Before we get into domestic policy and foreign policy, I want to ask you about this speech that the president's going to deliver tonight. Reportedly, it's going to center on 2020 and election interference. One of your many jobs was in the White House as chief of staff. You had to think through putting together speeches like this one. And I wonder sort of how you're thinking about the speech that the president's going to give tonight, again, centering on what happened now 6 years ago.
Well, my view is I'd like to give them an extra 30 minutes. Because anything that's retrospective, that's not prospective for America, that where they are today, where their children are going to be tomorrow, is going to get basically put on mute. And in fact, I think so. I think the president's making a massive strategic mistake. It will come across interpreted as self-serving for him. And I'm saying exactly what Republican strategists are saying to him, but the White House doesn't want it because this is mental health for the president. That's exactly what's going on. So my view, don't limit yourself to 15 minutes. Take as much time as you want, Mr. President. Spend a lot of time on 2020, not 2030.
We're going to talk about the political terrain, midterms, general election after that. But before we get there, I'm curious of how worried you are about this issue of election integrity. Seeing what the president has been doing, what his advisors have been saying publicly, how worried are you about the integrity of these next
I'm kind
elections?
of right-left mind. One is I'm very focused on, I think, for Democrats, winning. What does it take to win? There is a part less on the periphery, but at the other side that, you know, let's assume the Democrats win 7 seats net, get a majority. Every election, David, you have 3 or 4 seats that are 200, 300, less than 1%. Some states have automatic recount, others don't. The speaker showed that when it came to the Arizona race, he wouldn't seat the member. And I worry a little, and it's growing, that the January 6th that was on the steps of the Capitol will be driven inside the Capitol by, because the Constitution is very clear. The Speaker has the right to organizes the House. So you got to seat members to have a new election. And I think they're going to basically, until those elections are decided, say no, and they're going to say there's no majority, there's no clarity, and they're going to postpone actually beginning anew.
Let's talk about a pair of speeches you've given recently centering on foreign policy. You went to Israel and spoke in Tel Aviv. This has been characterized, I think, kind of clumsily as a critique of the Prime Minister, Benjamin Netanyahu, but it was a larger speech than that. It was not just criticism. You laid out a plan for peace.
Well, at least you heard.
I listened to it.
You didn't get it. The show's not. Yes, I think the Prime Minister led Israel into basically a dead end. Here's what I would do to get out of that status, because I have concern for the alliance. And more than that, Japan, an ally, very popular in the United States. NATO, very popular in America. We have a critical ally who is dropping precipitously in America, dropping precipitously in Europe, Canada, Australia. You have to have a breakout moment that actually establishes support for the country, not just a particular prime minister or government.
What did you make of the reaction to it, the response to it? Again, it has been kind of distilled into something that it wasn't entirely. What do you make of that? What does it say about the way that we talk about U.S.-Israel policy?
Well, people that work on it, like, without characterizing them sensitive, you know, President Clinton and I talked. I feel, you know, Hillary Clinton put out a comment. I know I've talked to Hakeem Jeffries. So one, I view the pariah status, the isolation of Israel strategically, diplomatically, militarily, economically, as a real threat to Israel. Big article today about The Economist, what this is endangering. So I laid out a strategy. You know, the Saudi Arabia, which is kind of the crown jewel, was the sponsor of the 2013 proposal by the Arab League for a 23-state solution. Basically, all 21 nations would recognize Israel if you came to some settlement agreement between sovereignty and security, the Holy Grail. But Saudi Arabia, now post-October 7th, won't go singularly, but there's a comfort in numbers with all 21. Game on. But you don't get to sit on the sideline, Arab League. You have to stand up a Palestinian Authority, because they're 3 strikes and out. They got 3 times offered sovereignty, 3 times said no, and returned violence. So you've made a cynical Israeli partner. That's not how you build trust. So I'm going to give you a chance to get out of jail card, a 4th chance. But everybody in the Arab League's got to stand up that partner. You've got to recognize not only the state of Israel, but its historic right. You got to stop rewarding terrorists for killing Israelis because they're Israelis, and stop teaching your children to hate Israelis. Now, Israel has got to stop undermining, and a classic example of this government. This government undermined the Palestinian Authority, but they allowed Qatar to send $6 billion to Hamas. Hamas was not using that $6 billion to build McDonald's franchise in Gaza. They were building tunnels, and you knew it. That was a strategic failure of this government. Second, as you can see, I recommended the IMEC, India, Mid East, Europe Economic Corridor. Cables, ports, energy. You got to get around the Strait of Hormuz. It puts Israel's technological prowess at the center of the most important trade route. So both economically and strategically, making Israel, as David Ben-Gurion, the founding father, said, a nation among nations. Second important is, in the critique, every country has 4 tools in its security toolbox: military power, political persuasion, economic statecraft, cultural attraction. The Prime Minister has atrophied 3 of them to the point they're non-existent, and relied on only 1. That is not acceptable if you're trying to be and have actually security. Example of that, and I'll pay the calling cards. You can use my AT&T calling card. You have a Syrian government today that said Iran is our common enemy. Syria is the Highway 66 for Iran to Hezbollah. You can cut it off. And he wants to come, he said, the president of Syria, I want to come to a security agreement with Israel. The United States is now building or facilitating a building of Iraqi oil through Syria. Call the Syrian president. It's not even a peace agreement, it's a security agreement. The people in the northern Galilee of Israel would get security, and you would actually knock out the trade route from Tehran to Beirut suburbs that fund Hezbollah. That's it. Use your diplomatic tools. The Prime Minister likes to say he was raised with English. Learn the letter D. It starts first letter in the word diplomacy. Try it. It works.
You have a long professional, familial history with Israel. Your sense of the kind of reception that your speech got there, as they kind of look at their elections coming up here, is there an appetite for what you kind of proposed in that speech?
Well, I do think so. I mean, look, just so you can. There was a big interview on Channel 12 with Yonit Levy, the Nachum Barnea, who is the premier columnist in Israel at Yediot, dedicated 3 full pages and the cover on a Sunday story, which was, Israel, are you listening? Ram has a message. We need to hear him. So, now again, I didn't bust out of the country. I didn't make it up to Kiryat Shmona in the north or Beersheba in the south, but I was in the kind of Tel Aviv-Jerusalem corridor. But everybody knows an example of this. 100 Israeli generals did an open letter that what's happening on the West Bank, they called it, I did not use this term, those 100 generals plus Shin Bet leaders called it Jewish terrorism and said it's undermining Israel's security. Nothing I said of the criticism has not been said by leaders of Israel's own security, Mossad, Shin Bet, as well as IDF. Nothing. And I never referred to it as terrorism. Their own generals and Shin Bet members in an open letter to society. This is what the Prime Minister is doing, and I have a long history going back to 2009 when he publicly, I didn't need a war to know what Israel was doing. I told him, what you are doing on housing in the West Bank will isolate Israel and lead to perpetual conflict. If there was a conclusion I wanted to be wrong on, that was it. He then publicly accused me of a self-loathing Jew. Now, I believe opposing the settlements and encouraging the President Obama, which he did, to fund the Iron Dome are not contradictory, but actually complementary to Israel's security. They go they're heads and tails of the same coin.
I want to move to domestic policy now, if we could, and look ahead to the next election. You've said you're thinking about running. You haven't made a decision yet. What are the factors that you're weighing? You've characterized this as a Baskin-Robbins primary in the Democratic Party. There'll be 31 flavors, and I'm curious if you're lining up to be one of them.
As I said, well, in 2024, the Democrats, unfortunately, didn't have a primary, didn't have a choice. I think that was bad for the party. And I think it's bad also for the electoral outcome. And the truth is, we didn't really have one in 2020. I do believe in 2028, I said it's going to be like Baskin and Robbins and 31 flavors. And if I decide to do it, I plan on being Rocky Road.
I look at the travel that you've done, yes, to Israel, yes, to Europe to give a speech on NATO, but you've been to Mississippi, you've been to New Hampshire.
Yeah.
Talk about what we can draw from the places you visited, sort of what you're looking at here, again, perhaps in the interest of you running in the next election.
One is America faces a series of challenges. But everything that ails America can be answered by what's working in America.
So look inward, you say?
Yeah, well, I don't, by way of example, I don't believe, like I went to Mississippi where they're moved from 49th to 9th on reading. And if you actually test for other things, they're #1 in America. I don't need to go, by way of example, and look at Manchester, England. It's right here in Mississippi. I don't need to go overseas. It's working here. How do we scale it? I'm going to assume, and in New Hampshire, they have their own examples. In La Crosse, Wisconsin, I don't need to go to Luxembourg. La Crosse, Wisconsin's community college system and their high school system and their industry is an example of what's working in that integration of economic growth and educational opportunity. I will soon, after Labor Day, make a trip to Louisiana. They're the only states whose math and reading scores are now pre-COVID numbers. They have figured out the combination to the lock. Now, I passionately care about education. I cannot believe the country has become complacent where 50% of our kids can't read at grade level. There is no getting from here to there for that student if they cannot read, cannot do math, cannot not only graduate high school, but go into the armed forces, vocational ed, community colleges, etc., or go on to a four-year institution. So my view is I'm going to go down to Louisiana, learn what they have done. I've read this report from both Stanford and Harvard and from a Tulane professor I talked to yesterday. And I want to highlight what Louisiana's done as every other 49 states are struggling. Our math and reading scores are anemic, And I don't think we as a country can give up on a single child in this country. Now, if you figured out the combination to the lock, I want to take Louisiana to all 49 states, and that's how we're going to reboot the Department of Education to actually do something for the future. Now, there is no getting from here to there, ever, when only a third of your citizens are reading and doing math at grade level. If you look at the 4 great moments of American economic growth, land-grant colleges, universal high school education, GI Bill, Science and Technology Sputnik Challenge. The one through line and constant is when you invest in Americans, America wins. That's what I believe in.
Just a question about your party, the Democratic Party, going back to these 31 flavors. Do you see this at all problematic that there is such, I guess, debate or discord within the party right now when it comes to the issue of U.S.-Israel policy, when it comes to all of these issues? Is it productive as you see it to have conversations about policy?
Look, I grew up in a family where dinner table conversations represented the gladiators. So I'm for, I think one of the things, this is my analysis of the party. We come out of, and I'm as guilty as anybody else. In 2008, President Obama wins, and we were running around going, demographics is destiny, look at his coalition, the future's ours. Now, we became, in my view, as a party, intellectually flabby. And we're paying a price for that, both on the political grounds and the policy grounds, and ultimately not just us, but the country, because we're not kind of sharp and rigorous. So I happen to think a debate is way overdue. I think we should engage in a policy debate. Look, somebody else has another education idea that doesn't agree with mine. Great, game on, let's go. You agree, I said you serve 2 years national service, we'll give you the money for a down payment. You have another idea on how to solve that? Bring it forward. I believe, as I stated, a 10% tax on the prediction markets and online sport gaming goes into an innovation fund for the National Institute of Health, National Science Foundation, and the DARPA. Double our research dollars. You have another way to advance research and development? Bring it forward. Let's have this debate. We'll be a better party to better serve America's future. My view is that the party has spent too much time just focusing on fighting Trump. I want to prove to the country, the majority of America, we know how to fight for America, not just fight against Donald Trump.
Appreciate it. Thank you very much.
Thanks.
Rahm Emanuel, scoop of Rocky Road here at the Aspen Security Forum. Send it back to you, Paul, and Scarlett, New York. Thank you.
All right, that was David Gura speaking with Ambassador Rahm Emanuel at the Aspen Security Forum in Colorado, talking about, I think, David trying to get a sense of whether Mr. Emanuel is thinking about the presidential election coming up.
Yes. I feel like folks like Rahm Emanuel are always running for some kind of public office.
Right.
If not the Oval Office, then some other elected office.
Yeah, because it would be interesting to see, he's saying he thinks the Democratic Party should be focusing more on the country and less on focusing on President Trump. We've heard that from others as well. All right, let's get a reset of the market out there. We can do that with Charlie Pellet.
Hi, thank you very much, Paul. And here's what's going on. We've got the Dow higher, the S&P, NASDAQ, they're both lower. And this Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k, tax and penalty free, go to goldencrestmetals.com/guide, goldencrestmetals.com/guide. We are seeing a sell-off in chip makers that is weighing on stocks amid concerns over whether massive AI investments will justify lofty valuations. It has been a recurring theme in recent weeks. The S&P down now by just about 0.2%. The Dow, as I mentioned, is higher. Right now, we do have the Dow Industrials being moved higher by a United Health and Merck. The Dow up 0.2%. NASDAQ down by 0.8%. The real damage, though, Techland, NASDAQ 100 index down 1.1%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, down now by just about 3.6%. Right now, we do have the 10-year currently yielding 4.57%. The VIX, by the way, just above 16. 2-year yield 4.16%. Gold down $53 the ounce. It is back above 4,000 at 4,006. Was trading below 4K. Right now, now. Spot gold down by 1.3%. Crude, little change, down 0.1%, 79.48 a barrel. Barrel of Brent, 84.81 now, down by about 0.2%. Eco data, retail sales rose modestly in June, with the value of retail purchases rising 0.2% after a revised 1% advance in May. The report signals continued resilience in consumer spending heading into the summer months. Cheaper gasoline offering households some breathing room for discretionary purchases. And again, right now we do have the S&P 500 index trading lower, down now by just about 0.2%. Round one of the Open Championship underway at Royal Birkdale Golf Club in Southport, England. At last check, we've got Daniel Brown and Sunjae Kim. They are tied atop the leaderboard at 4 under par. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Scarlett and Paul, that is a Bloomberg Business Flash.
All right, Charlie Powell, thank you so much. We appreciate that. Scarlett Phil and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. We got a lot of inflation data this week with CPI and PPI, and kind of a little bit softer than expected, reflecting probably in large part the lower gasoline and energy prices we enjoyed in June. But of course, with the resumption of activities in that part of the world, we just got oil pushing up higher here with WTI crude oil back near $80 a barrel. So that may be short-lived, but begs the question, how does the Fed think about inflation out there? David Kudla, he's the founder and chief executive officer and chief investment strategist at Mainstay Capital Management. David, I know you guys had been forecasting higher interest rates in 2026. Did the inflation data we received this week, did that change your outlook at all?
Good morning, Paul. Not really. We know that, we had a higher inflation read here a little while ago because of the Iran war and the spike in oil prices. And basically in June, what we saw is those oil prices come back down as much as 16%. So now we're seeing a little bit of relief as alternative routes were found. Oil production was increased elsewhere, and some ships started traveling until recently through the Strait of Hormuz. Started to see a recovery to some extent, not anywhere near pre-war levels, but oil moving through, and Iranian oil sanctions being taken off for a period of time, so that oil was making it to market as well. We're still concerned about inflation going forward because we're concerned about what we see now as a forever war in this Iran war.
Yeah, I guess that's my next question, because all the data and the earnings that we're starting to get and will continue to get, they all are up until June 30th. And that's when oil was at its low. And as we know now, in retrospect, it had bottomed. Since then, we've had the resumption of activity, as Paul so eloquently put it, and the Strait of Hormuz is clogged again. So does the narrative of inflation moderating broadly beyond oil still apply here?
Well, it's just going to depend on it to a certain extent. It's going to depend on, there are other inflation factors out there, but a certain extent is what happens going forward. Yeah, we saw through June oil come down into the mid to low 70s WTI, and we popped back up to the 80s very quick with this resumption of military action and very, very aggressive and hostile military action compared to what we had before the ceasefire. And we expect that to continue. And Iran continues to find ways to disrupt or intimidate in the Persian Gulf. And as long as that goes on, what do the markets want? What does the bond market want? What does the Fed want in terms of if it's about keeping rates low, or what do stocks want? No matter what the geopolitical or strategic outcome is, we just want, or the markets want, oil and other products moving through the Strait of Hormuz again until these alternative routes that come up, like the Saudi pipeline that was, the capacity was immediately increased, and there's other alternatives they're looking at longer term, but it's about getting that oil moving again. We've drained down strategic petroleum reserves to 1980s levels, more than 40 years, and are continuing to do that here and abroad. So we still face this concern about an oil pinch or a tightness of supply that it just has ripple effects all through the economy. And so until there's some light at the end of the tunnel on that, which we thought we had, but we have to see here. We're still concerned about inflation, so we're concerned about higher rates. You know, the 30-year and really across the curve from the 2-year to 30-year, rates have been coming up. And we think that the next Fed rate cut, I know many think it's still a cut, or I'm sorry, the next Fed rate move, many still think it's a cut. It could very well be an increase in rates as much as we think Kevin Warsh has marching orders from President Trump. That's yet to be seen, but we think there's just a lot of concern on the horizon about inflation yet.
So, David, how are you approaching kind of the market here? We had AI has been a dominant theme for this market, but it's I think diffused how investors look at AI. It used to be kind of, let me just buy the chips and I'm good there. How are you approaching AI as a theme in this market?
Yeah, well, Paul, interestingly enough, as much as the prices went up until, this, recent setback and recent volatility, earnings had come along so far that the valuations on some of these names just aren't that stretched. In fact, they're actually, pretty low on a historical basis because earnings, and we expect earnings continue to be good. I mean, we're going to have these spats of what we've had the past weeks, and it may be for months at a time where there's concern about the excessive debt that's being taken on and this capital spend, and will it pay off? But AI is the future. We're all using it now. We're all using AI agents. We're all using AI. We're incorporating it into our businesses. We know where we're headed. And, we see other opportunities in the market, but we're sticking with those AI names that we've talked about before that we think should still be the core part or one of the core parts of an investor's growth portfolio.
All right, David, thank you so much. We appreciate that. David Kudla, founder, chief executive officer, and chief investment strategist at Mainstay Capital, joining us via Zoom from Troy, Michigan. So there you go.
All right, let's head over now to our colleagues in San Francisco. BTech anchor Ed Ludlow getting ready to speak with Ryan Cohen, the CEO of GameStop, and they are talking on Bloomberg Television. Let's listen in to Ed Ludlow right now.
To pursue strategic transactions. So where does the deal stand now? Ryan Cohen joins us on Bloomberg Television and Radio. Ryan, thank you for your time and good morning. Welcome to Bloomberg Tech. On the long list of things that have happened since May, our audience just has a very simple question for you, which is what's changed? What's developed in that period of time?
There has been a complete failure by the media to explain why this transaction makes sense. And so number one, my track record. Chewy and GameStop, it speaks for themselves. My alignment with shareholders, I'm putting $500 million of my own money into this transaction. The high margin growth opportunities for this business within live commerce, which the company has not been doing well, and using GameStop stores as nodes for both the marketplace and live commerce is huge because the business today in live commerce is tiny. Then building out a digital marketplace for in-game items, those are just like some of the high growth opportunities within the business. And then there is the cost takeout opportunity. I've committed to taking out $2 billion within the first year, and that's just the beginning. So this whole narrative that the business is going to be too leveraged is a fantasy invented by the media, and it's just simply not true.
On the banking side, let's go there. You lined up some banking support, right? And I think that one of the concerns that Moody's put out there as an example was the credit rating and the credit worthiness of the combined entity. So again, another question from the audience is, explain the banking support that you've secured since May, but also that concern that the debt component of it, what the credit negative outlook would be for a combined entity based on the plan that you've just outlined.
We have a highly confident letter from our bankers. We have a lot of parties that are interested in this transaction. And the most important thing Ultimately, if we can't get the debt, then it means that eBay can't get the debt, and eBay can get the debt. So this entire narrative is simply not true.
I didn't explain that question very well, Ryan, if I'm self-reflective, honest about it. So I'm just going to go back to it. Your financing letter is from TD, right? And it was widely reported to depend on the combined company maintaining investment-grade credit rating. And then Moody's came out and said that this deal would be credit negative for the combined company. Have you taken steps to address that?
Nobody has reached out to us, including the credit agencies, but the pro forma company is going to be investment grade.
We talked at the beginning of the conversation about shareholders increasing the company's authorized share count. Does that allow you to do something new that you couldn't have otherwise done in the context of the eBay deal?
Yeah, I mean, yes, it does.
And what would that be?
Buy the business, buy eBay.
I posted on X that you were coming on the show, and you know, in the context of what you've done with financial mechanics of late, you know, the question that existing GameStop shareholders sent to me over and over again is, you know, you're asking them to accept pretty significant dilution. And they're basically asking, like, what's the payoff for them in accepting that dilution?
There's different forms of dilution. Most dilution is dilutive to shareholders. When you're buying a business and I've committed to pulling $2 billion of costs out, so if you do the math, I'm buying a business for $56 billion, and the business is forecasted to make over $3.5 billion. That's the consensus for 2026, plus what I would be pulling out in costs. So you're at over $5.5 billion of EBITDA, and then the ability to take this platform and build a much, much larger business. The upside is huge. So I wouldn't go and buy a business if I didn't think I can take it from $56 billion and turn it into multiples larger. So it's accretive to shareholders, but most of the time when companies are issuing shares, it's dilutive and earnings per share goes down. In this case, it's a different story. But most of the time, you have management teams. A good example is this company that collect tons of risk-free compensation, and they're not aligned with shareholders. In this case, that's not the case.
You had the letter from TD. You said earlier you were going to put $500 million of your own money into this transaction. Outside of that, is there any other financing support, any other parties that since mid-May you've pulled into it?
We've had a lot of parties come to us, and there's been a lot of interest from the capital markets.
We're live on Bloomberg Television and Bloomberg Radio with Ryan Cohen, the CEO of GameStop. We're talking about Ryan and GameStop's bid to buy eBay. Really simple question. Has anyone from eBay, the management team or the board, reached back out to you or responded to you in this interim period?
No, I hope they do, but they're entrenched and they're hiding behind their advisors.
If I go to teddy.com on any browser, I'm diverted back to GameStop.com. Why?
I'm focused on GameStop.
The root of the question is, let's say that you proceed with this. There's a very wide range of opinion, speculation, basically. Why does Ryan Cohen want to buy eBay? At one extreme is the idea that you just want to be the CEO of eBay rather than GameStop. At the other end is the idea that you have a bigger plan, a master plan. You kind of talked about it a little bit earlier. But what's the reality here? What is the bigger picture for a combined entity? Or referencing Teddy.com, there's some history there, but a sort of conglomerate, a holding company.
eBay is a platform that I can build into something much more profitable and much larger. The ability to take GameStop stores and our experience in gaming and refurbished tech and collectibles combined with eBay and be a leader in live commerce, build out an in-game digital marketplace, use the stores for same-day authentication, and ultimately pull out significant costs. And none of these things come at the expense of growth. It's actually the opposite. The more efficient you get, the easier it is to grow. It makes too much sense. So that's why I want a business. That's why I want to buy it. It's not that complicated. There's such overlap between the businesses, and my experience is in e-commerce.
Right. Are you prepared to improve the offer, Ryan?
I'm not going to negotiate against myself.
But that might be what it takes.
We'll see what happens, Ed.
You've talked about this a little bit recently. A lot of people point out to me you've done a number of interviews in quick succession, right? What happens if eBay just keeps saying no?
Ultimately, it's going to be the owners of the business that are going to decide who is more competent, who's more aligned with shareholders, and who is more capable of building a much, much larger business. So the management team can only hide for so long. And I would love for this to be a collaborative process and a consensual process. That's my preference. That's number one. But if that doesn't happen, then it's going to be shareholders' decision because they're the owners of the business.
Right. I do want to talk a lot more about the GameStop business, a lot more about eBay, and we're going to take a break and come back and do that. Talk about what's really happening. I have a final question from the audience that I promised I would put to you, and it's from GameStop shareholders. A lot of GameStop shareholders have asked about the warrants that expire in October. You know, another recent or relatively recent financial transaction from the company. What should they expect happens with those warrants between now and October of this year?
I don't have a crystal ball. I can't answer that question.
Okay. Their expectation is that when they expire, I think the date's October 26th, that's the outcome.
Ed, people that have invested alongside me when it comes to Chewy or GameStop and me committing $500 million into eBay, they've done very, very well. So I don't have a crystal ball. I can't predict the future, nor can anyone that I've ever met. But GameStop is a business that was on the brink of bankruptcy, and everybody was betting against it for good reason. And now the company is making more money than it's ever made in its history.
All right, that was Ryan Cohen. He is the GameStop CEO speaking with Bloomberg Tech anchor Ed Ludlow on a wide-ranging interview about a variety of topics, but particularly the GameStop's intention or expectation that it would like to buy eBay.
Right, and the interesting news that eBay has not responded at all to that offer. And Ryan Cohen sees his offer as one that adds value and points to his track record at Chewy and at GameStop.
Always an interesting interview with Mr. Cohen. All right, let's get a reset of these markets, and we can do that with a Bloomberg Business Flash with Charlie.
All right, I thank you very much, and here's what's going on. We got GameStop up by 0.9%. eBay shares, they are in the red. We've got eBay tumbling now by 1.1%, and this Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide, learn how to add metals to your IRA or 401k, tax and penalty free. Go to goldencrestmetals.com/guide, goldencrestmetals.com/guide. The Dow pushing higher, S&P 500 index a little change, NASDAQ 100 index both declining. Chip stocks today getting hit by AI spending worries. Right now we have oil moving lower. S&P 500 index down 9 now, drop there of 0.1%. The Dow up 0.3%. NASDAQ down 184 for NASDAQ, a drop of 0.7%. The NASDAQ 100 index down now by just about 1%. The Bloomberg Mag 7 index lower, little change, down 0.1%, with the SOX, the Philadelphia Stock Exchange Semiconductor Index. Right now, that index is moving lower. It is down now by 3.8%. We've got the 10-year currently yielding 4.57%, with the 2-year 4.16%. Gold down $49 the ounce at $4,011, down 1.2%. Crude, I mentioned lower, $79.24 on WTI, easing by 0.5%. Barrel of Brent, $84.59, down now by 0.4%. Round 1 of the Open Championship underway at Royal Birkdale Golf Club in Southport, England. At last check, we do have Daniel Brown and Sunjae Im. They are both sitting atop the leaderboard, tied at now 4 under par. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Scarlett and Paul, that is a Bloomberg Business Flash.
Oh, Charlie Pell, thank you so much. We appreciate it. It's Scarlett Field and Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Abbott Laboratories stock is soaring today, the most since 2002. I guess the street liked their earnings for the second quarter and probably more importantly, their guidance going forward. Let's check in with the analyst who covers ABT, Matt Hendrickson, Senior Equity Analyst for Bloomberg Intelligence. Matt, talk to us about Abbott Laboratories and what they disclosed here in their earnings release.
Yeah, this earnings was a huge sigh of relief for investors. They went into the call, some headwinds or some headwind risks were in the nutrition segment, and that was going to be dilutive to the overall growth. There was also questions about the CGM market, which is their core growth CGM? Driver, continuous glucose monitors.
Oh, that's the I see on people's arms.
Yeah, exactly. It's a little like the size of a quarter on the arm. That's a $10 billion revenue run rate for the company. There was some concerns that it was decelerating growth from kind of the mid-teens, high teens from last year to below high single digits this year. Basically, their results kind of calmed all those nerves. Nutrition is recovering nicely after they implemented new pricing mechanics into their business model. The CGM business, growing at 9.5%, kind of slightly below the double-digit expectations that management had. But overall, it wasn't worse than what was expected. So we eliminated that worst-case scenario.
Okay, why was there so much concern? I think about healthcare and I think about United Health in particular and some of the issues it's had with Medicare reimbursement and government changes to reimbursement plans overall. Is that a concern for a company like Abbott?
It's always going to be an overhang, and we saw that earlier this week when HCA reported, and they highlighted some headwinds from ACA-related insurance patients. We have not seen that yet in the medtech side so far in the second quarter. J&J talked about stable procedure volumes. Abbott talked about the same procedure volume stability. One of the reasons I think is that Abbott and J&J, they're focusing on those more high acuity cases. These patients need to be treated regardless of what their insurance coverage is. And so the hospitals almost have an obligation to treat those patients, where some of those low acuity cases will be deferred longer term.
I'm looking at the PGO function on the Bloomberg terminal. Shows me kind of where they get their revenue. There's a lot of places where they get their revenue.
It's highly diversified.
It is highly diversified medical device company. What does the street focus on? Are there 2 or 3 business lines that, because even with the stock up today 11%, it's still down 20% year to date. So what's kind of the investment call here on this name?
Yeah, so the first one goes back to the CGMs. That being that, kind of $10 billion revenue run rate. If you're looking at it being back to that double-digit revenue growth, that's going to be a promising growth driver for them. that nutrition recovery, because that is still almost 25% of their sales, if they can get that back to growth, that's going to be a good contributor for them. And then the newest growth driver actually is the Exact Science acquisition that they made. So when you think about, you see those TV commercials for Cologuard, that's Exact Sciences. So now Abbott has entered that cancer diagnostic segment. And that's a business that's, they were expecting it to be mid-teens growth this year for that cancer diagnostic segment. And so if they are able to deliver that throughout the full year, they've grown at 13% so far in the first half. That will be accretive to kind of their 6.5 to 7.5 growth guidance.
Is there any talk about M&A when it comes to Abbott, whether it's maybe going to divest some businesses so that can get a higher share price, or maybe even add on because it has done a pretty good job with diversification?
Yeah, I'll start with the add-ons first. So that Exact Science deal closed late in the first quarter, and so that was a $23 billion deal. They have to digest that deal. They have to integrate it. They raised $20 billion in debt, so they have the free cash flow to just pay down that debt. That's the first step. Divestitures, I mean, there's always, because they're so diverse, there are some probably differentiated features like nutrition that could be able to potentially divest in the future.
Matt, thank you so much for joining us today. Matt Henriksen, our senior equity analyst covering Abbott Labs of Bloomberg Intelligence, and that stock is flying right now, up almost 11% at 98.83 on this Thursday morning. This is Bloomberg Intelligence on Bloomberg Radio.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All
right, Scarlett Field, Paul Sweeney, we're live here in our Bloomberg Interactive Broker studio in New York City. We're streaming live on YouTube and streaming live at Bloomberg.com as well. World Cup finishes up this Sunday in the MetLife Stadium over there in the swamps of Jersey. We got Spain, we got Argentina. It's been a big series of games for the Fox Network, who's been the broadcast partner here. But the challenge with soccer is there's not a lot of inventory time. It's kind of got running time for the games. You get no in-game advertising like you do in other sports like the NFL. So they created this hydration break. So I thought that was a pretty interesting idea. Obviously, the soccer purists don't like it, but this is dollars and cents here. Our next guest knows all about this stuff. Mark Douglas, President and CEO of Mountain, joining us via Zoom here. Mark, just give us a sense of how the advertising around the World Cup, how has that played out this year? Has it been a success?
Yeah, I think it's been a smashing success, actually. And there's a few reasons why. One, obviously, being in the U.S., you not only got the fans worldwide, but you picked up a lot of fans in the U.S. who, I think, who previously weren't big soccer fans, football fans, as it's called everywhere else, but became fans now. That includes myself personally, as well as just about everyone I know. The other interesting thing is there's so many more ways to watch it. So this, last year going in, this year, live sports on connected TV started to become a really big thing. And so I personally have watched every game streaming, and some of them, I've told people, don't tell me what the score is. I watched them after the game was played. That just wasn't as much of an option 4 years ago. So I think all of that combined has, just created insane viewership. I think I was just reading 11.5 billion people have watched a World Cup game, and those numbers probably don't include full streaming numbers. So it's even higher than that, and that's just insane if you compare it to even things like the Super Bowl.
So, I mean, a huge global event like the World Cup has big global sponsorship and advertising partners. How about for some of the smaller companies that might want to advertise and try to participate from an advertising perspective in, again, what is just a monster event?
Yeah, absolutely. So smaller businesses, small and mid-sized, were completely cut off from events like the World Cup and things like March Madness and other events. This year, because of streaming, we in particular at Mountain have made that inventory. We have many customers advertising in the World Cup have made that inventory available on demand, and our customers have been really happy. And again, it's contributed to what's probably the motherlode of advertising dollars that these networks are earning. So it's just this continuing opening up of streaming, not just for scripted shows, but now live sports, major events, and the democratization that brings for small and mid-sized businesses of just, it makes everyone, it's better for everyone. It's better for the businesses that want to access it. It's better for the company, the FIFA and NFL and so forth, and obviously for the streaming networks broadcasting it.
So how do you and your clients, do you negotiate that inventory with Fox or with FIFA? How does that work?
Yeah, so we have Mountain. We have direct relationships with essentially every streaming source of inventory in the United States. Everyone. So everyone from the TV manufacturer to Fox to and everyone involved. And so in advance of these events, we negotiate inventory that's made available to the SMB market, to small and mid-sized businesses. And this year, starting in Q1, is the first time that has ever happened. And so it now, kind of just brings another source of demand for shows like this. All the advertisers do have to be approved, in particular for an event like this by FIFA. But the approvals are actually more to not conflict with like major sponsors, because those major sponsors have been promised exclusivity. So you can't, if Visa sponsored it, you can't bring in Amex. And we're not going after, the size companies that would compete with those major sponsors. So generally it's not a problem.
So Mark, it just seems like more and more live sports is going to streaming. Are we ever going to see, I don't know, a Sunday afternoon NFL package that historically has been on the broadcast networks? Will we ever see that go exclusively to a streamer, do you think?
I think it's possible. I mean, you're seeing things like Thursday Night Football, I believe, is on Prime, and so you see elements of that. But I think, ultimately the networks, everything follows the viewer. So, and you have to meet people where they are. So if people are like, this is how I want to consume it, then ultimately every dollar, every network, the sports leagues themselves follow. And it can take a bit of time, but as I said earlier, there was a definite theme last year going this year that this was kind of the year of live sports on streaming. And there's just been so many events. I believe Olympics is obviously Super Bowl, World Cup, March Madness, and there's still more to come. So I think and the networks and the viewers have all gotten very, very comfortable with it very quickly. And again, the viewer, you're just going to follow the way people want to consume it ultimately.
All right, Mark, thanks so much for joining us. Always appreciate getting some of your perspective here on the global advertising, digital advertising business. Mark Douglas, he's the president and CEO of a public company. The name is Mountain, stocks tickers MNTN. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up right now.
From ABC News, I'm Michelle Franzen. Severe storms in Texas leading to mass evacuations and water rescues. Life-threatening flash floods impacting communities in hill country devastated last year from deadly flooding. Here's ABC's Jim Ryan.
During the flooding of July 4th, 2025, the town of Comfort was inundated when the Guadalupe River was driven out of its banks by heavy rain upstream. Now, after days of heavy storms, the Guadalupe River is raging again, and the National Weather Service is warning of what it calls a large and deadly flood wave roaring toward Kerrville and Comfort.
Extreme heat combined with drifting smoke from hundreds of Canada wildfires leading to bad air quality again for parts of the U.S. ABC's Matt Rivers is in New Jersey.
Millions of Americans under dangerous air quality alerts from the upper Midwest to the Northeast as firefighters battle more than 180 wildfires in Ontario, Canada. Skies in Boston looking apocalyptic.
Breathing's a little bit more strained than normal.
Smoke also spreading from fires burning in Minnesota's Superior National Forest, forcing evacuations.
Hostilities between the U.S. and Iran continuing to escalate. ABC's James Longman says the Strait of Hormuz remains at the center.
A U.S. aircraft attacked a tanker trying to make port at Karg Island. That is the Iranian oil terminal in the Persian Gulf. CENTCOM says that it gave this tanker multiple warnings and it did not heed them. This is in breach of the blockade that the U.S. currently has on Iranian ports.
Tonight, President Trump will deliver a primetime speech. Sources tell ABC News he will use the address to detail information recently received from the Office of the Acting Director of National Intelligence related to the 2020 election. Sources familiar with the matter tell ABC News federal investigators with the Commodity Futures Trading Commission have found the president's longtime teleprompter operator believed to have made tens of thousands of dollars placing bets on his State of the Union speech. You're listening to ABC. Officials with Prediction Trading Market Kalshi have notified federal regulators this week. They plan to allow users to bet on the percentage of on-time or delayed flights at airports nationwide, drawing fierce criticism from airline experts. Here's ABC's Jay O'Brien.
Airlines for America, though, the trade group representing the nation's air carriers, says it has serious concerns. Writing in a statement, the safety and security of the aviation system should never be treated as a betting proposition. The industry also warns that these bets could give bad actors an incentive to find ways to get flights canceled so they can win big.
Kalshi's proposal now in the hands of regulators. The Trump administration has announced its first new formal tariffs. They are the first since the Supreme Court struck down much of the administration's tariff policies earlier this year.
Brazil is being hit with new 25% tariffs, with Trump administration officials accusing the country of engaging in unfair trade practices. The new 25% tariff is lower than the 40% tariff announced last year, which was struck down by the Supreme Court in February. They also include carve-outs for beef, coffee, and orange juice, as well as some energy products and aerospace parts. The new tariffs take effect July 22nd. Mike Dubusky, ABC News.
Scientists say a massive great white shark was recently spotted off North Carolina and appears to be headed north to Cape Cod. The 14-footer believed to be the largest great white tagged in the Atlantic waters. I'm Michelle Franzen, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
President Trump back in prime time. Welcome to the Thursday edition of Balance of Power as the president prepares to address the nation in prime time tonight from the White House. Expected to question the results of the 2020 election in his latest push for the Save America Act. We'll tell you what we know when we talk in a moment with Bloomberg's Tyler Kendall. Cliff Young from Ipsos joins us with fresh polling on the president and the midterms. And as the U.S. intensifies strikes against Iran again overnight, we're going to hear from the ranking member of the Senate Armed Forces Committee, Jack Reed of Rhode Island, and we'll get analysis from our political panel. Rick and Jeannie are both with us for the hour, and so is Charlie Pellet. Let's start with the Thursday trade right now. To Wall Street we go. Charlie, how's it going?
All right, now looking at a decidedly mixed market, Joe Matthew. The Dow higher, yes. S&P, NASDAQ 100 index all in the red. The Dow being led higher by United Health, Merck, and also Nike. Right now, we do have the Dow up 58 points. That is a gain of 0.1%. But the S&P 500 index trading lower, down 22 right now, down by about 0.3%. Familiar theme for investors, more weakness in chip names. NASDAQ down 0.9%. The NASDAQ 100 index now down by 1.3%, while the SOX, the Philadelphia Stock Exchange's semiconductor index, now tumbling by 4.1%. The VIX holding above 16. The 10-year currently yielding 4.57%, with a 2-year 4.16%. Gold down $60 the ounce. It is trading below $4,000. Spot gold down 1.5%. Crude turning around, now higher, little changed. It has been fluctuating between gains and losses. WTI $79.65 a barrel, up by about 0.1%. Brent 85.03, also up by about 0.1%. But a bottom line here, a sell-off in chip makers is weighing on stocks. Christina Hooper is chief market strategist at Man Group, and she says what is happening now in the Middle East is very different from markets than last year's angst over tariffs.
That was a unilateral situation where the president could turn them on and turn them off when he wanted to. This involves other parties, and so it's not as simple. And so I believe there's this view that there's a POTUS put. But we can't really have a POTUS put when we have a war going on and other parties involved.
Man Group's Christina Hooper interviewed on Bloomberg Open Interest. Again, we do have oil advancing. Little change right now with WTI up by about 0.1%, but the oil majors are gaining. ExxonMobil up 1.5%. Chevron now up by 1.7%. ConocoPhillips up by 1%. Round one of the Open Championship underway at Royal Birkdale Golf Club in Southport, England. At last check, sitting atop the leaderboard, two-way tie now. Daniel Brown and Sun Jae Im, they are both 4 under par. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
Wow, great. Great job, Charlie. As always, our good friend Charlie Pellet will be back in about 15 minutes with more on the markets here as we follow the Thursday trade. Charlie Pellet is like the Swiss Army knife of news. You hear what this guy does? He's stitching together markets, stocks, headlines, promoting stuff. He's amazing. He'll be back and is a part of our program every day here. Live from Washington, good to see you. Welcome to Little Friday, the Thursday edition of Balance of Power here on Bloomberg Radio. We're always on satellite radio channel 121 and, of course, on YouTube, where you want to get in there. We'll talk to Tyler, and you want to hang out in the studio with us. Search Bloomberg Business News Live, and you'll catch our live stream with much to discuss today. The big speech, we're counting down. The president's probably looking at the script right now. And if you believe what we're reading in the tip sheets, he'll be making little changes right up until 9 o'clock when they load that puppy into the prompter and he goes live. The East Room is the venue tonight. My big question is, will there be a seated audience? Remember last time? That was the case. We got pictures from the White House after his most recent primetime address there in the Cross Hall when he was kind of grinding through the situation with Iran. And it turned out there was a room full seated audience. The cabinet was in there. Other VIPs invited because he likes to have faces to look at. And I can relate as I stare into this camera talking to you every day and this microphone. So the question is, what's he going to talk about? And we're hearing it's going to be a lot about 2020 election, which is curious because when Cliff Young joins us a little bit later, you'll see the numbers he's got on the issues that matter to people. It starts once again, hate to tell you, with the economy. There are big questions about the war in Iran as we intensify strikes, and not so much about the results of the 2020 election, but that is apparently what we're going to get with what's being promised as new evidence. We'll bring you up to date on what's happening in Iran as well. Later in the hour, we'll have time with our political panel, and we had a great conversation last evening up on Capitol Hill. Kaylee and I went up to the Senate to talk to Jack Reed, the ranking member on the Armed Services Committee, about the most recent developments with the war in Iran. This is a very important voice in the national security space, former 82nd Airborne U.S. Army West Point, top Democrat on armed services. And when we start thinking about a potential war powers move again, he would be the man to ask about that. So we'll get into that a little bit later on this hour. The president's back from Pennsylvania. You know, Tyler was up there yesterday. I didn't even think I'd see Tyler today because she was up in Carlisle. And I wake up this morning, she's back on TV in Washington. It's 100 degrees in the city today. And we're waiting for all this smoke, I guess, to come from, if you're listening to us in Boston or New York, I can hardly see you. It'll be here tomorrow, they tell us. And because it's 100 degrees on the North Lawn, we told Tyler to come over to the bureau. And I keep it pretty cold in here, so she has an Afghan on right now. And so instead of sweating on the lawn, she's freezing in here. I'm sorry for all of these climate issues. I'm part of the reason why.
If you are joining us on YouTube, I did take off the Afghan.
Yeah, I thought you had.
For this, I should.
You can keep it real
kept it
on the elephant here at 12 o'clock every day. So you got your TV guide out. Where ABC will have Press Your Luck on, which is Kaylee Lyons' favorite game show. CBS has an all-new Big Brother. Is that right?
I think we might have found that there was an update, and there may be a different show on, but it may be an extended version. I
The
can't
Americas,
confirm.
and all new The Americas on NBC. That's the Tom Hanks episode. President's interrupting Tom Hanks.
I think that one's also about the Gulf.
Well, okay. So you invade people's living rooms, you need to have something to say. What are we going to hear?
A primetime address, much to your point, is the chance for President Trump to talk directly to the American people. But it is so interesting that all the reporting is leading us to that this is going to be about election security. That's what it's expected to center on. Various reporting from various outlets. I think we're pinning this on Politico, saying that they will focus on the declassification of previously unseen intelligence, perhaps related to the 2020 election.
Is this Fulton County, or do we not know?
Perhaps that was one of the pieces of context here. We knew that the former DNI, Tulsi Gabbard, had been sent there to look into some allegations. We'll have to see where it goes. I'll give you the broader context, which is that we know President Trump has been pushing and really pinning most of his other legislative agenda items on the SAVE Act, which is that voter ID law that would tighten restrictions ahead of the midterm elections. I mean, he didn't even put his name on the housing bill, which is considered to be bipartisan and something that American voters were looking for. We could debate the merits of how effective that bill would be, but the president didn't put his signature on it because there has been so much focus when it comes to what he says are free and fair elections.
Fair enough. So this is a sales pitch for the Save America Act and a chance to maybe relitigate 2020. Does he talk about Iran? Tonight we've got a war raging with Iran.
So President Trump did say yesterday, he said that there would be, quote, really big news, but that we will talk about other topics too.
All right.
So perhaps that will fall.
It's a variety show.
Perhaps that will fall in that camp. Nancy Cook, our colleague, had a really great analysis previewing this yesterday that said that perhaps there's more of a focus on election security to get away from some of those stickier issues like the ongoing conflict. But we also know that the White House wants to dominate the narrative when it comes to Iran because there have been so many developments. And at this point, we're pointing toward escalation. I'm sure, as you saw overnight, the U.S. targeted a tanker near Karg Island that was headed towards an Iranian port, marking the first time that the U.S. enforced the naval blockade since reimposing it earlier this week.
Yeah. You know, we heard from the president when you guys were up in Carlisle yesterday. This was the big defense summit that Senator David McCormick put together. It was a who's who of industry and politics, including the president held a roundtable, and this is the update he gave us on a potential deal with Iran.
They want to settle so badly. They don't like what we're doing. And they do want to settle. We'll find out whether or not we settle with them or we just finish it off. A lot of people thought oil would go up to $350 a barrel, and today it's at $79. A couple of days ago, it was at $68. It went up a little bit because I had to take tough action because they did not obey.
This, of course, leads us to oil prices and gas prices. We're at $3.94 today. Crude oil, what do we have? Brent at 85 when I was coming in this morning. We're just south of that now. So going to talk about this tonight?
We'll see. I mean, this is clearly going to be top of mind. The fact that we have reporting that the White House is starting to think about other actions that they can take to try to mitigate some of the fallout when it comes to supply disruptions, like potentially extending that Jones Act waiver that would make sure that it's easier to ship oil, at least in this country. That's feels significant that the White House is looking at what this fallout could really be, because at this point, we're seeing the risks really laid out on the table here. CENTCOM says that they are trying to secure the strait. They said yesterday they helped transit through at least 10 vessels, but Joe, that is so much lower than what we had seen when the Memorandum of Understanding was first signed. I pulled the latest statistics. According to RBC Capital Markets, the 7-day average is already starting to drop 4.6 million to 3.9 million barrels. According to their calculations. And then you also had that reporting earlier today from Reuters that maybe we could see some disruption in another global shipping strait in the Red Sea because Iran is now engaging its proxies, the Houthis in Yemen.
The Houthis are calling again.
That is setting the stage for a lot of supply disruption.
So that's a big deal. If the U.S. does target Iranian infrastructure next week, remember the president said bridges are coming down, going after the power plants when he talked to Fox News. If this rolls into next week, quote, everything that has remained intact so far due to Iran's nobility will be smashed to pieces. That is, all of the infrastructure in the region. This would be the escalatory event that so many people have referred to, apparently.
He seemed to give the indication that next week is the deadline. We'll have to see. We've gotten a lot of deadlines before from this White House. We've also gotten this same threat before from the White House, which has raised the question among analysts, is this the president negotiating for leverage essentially in public if those conversations aren't happening behind closed doors? We can't say there is some sort of perhaps diplomatic effort happening behind the scenes because President Trump yesterday announced what he called this goodwill gesture, and Iran released a detained American woman who was in Iran's custody. We didn't get many details about that, but people seem to link onto that to say they're still having some conversations.
Some sort of
but outwardly, this is pointing towards a lot of kinetic action. I mean, 5 days straight of strikes that the U.S. says is designed to degrade Iran's capability to target commercial shipping. Iran has really chose to use that leverage.
George and Mandy's First Marriage will be on
That's
CBS
what it is.
when the speech starts. I've never seen any of these shows. I'm really, you could tell me these aren't even real and I wouldn't know the difference. No whammies, says Kaylee Lyons. She'll be here just about 45 minutes from now. We're all done with Tyler. That went by fast. Thank you, Tyler Kendall. She'll be back at the top of our next hour as we anticipate the president's words this evening. And we're watching Wall Street. We'll, of course, get an update from Charlie Pellet in a moment. Can you smell the smoke? You can hardly see the skyline in New York. It's all coming here to D.C., they say, by tomorrow. I'm Joe Matthew. This is Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. Oil higher, semis lower. The Dow just moving into the red. So the Dow, the S&P, NASDAQ, and the NASDAQ 100 index, and yes, the Russell 2000 all in the red right now. We do have the S&P down 29 at 75.43. That is a drop of just about 0.4%. The Dow had been higher for much of the day, down 40 points now, drop there of 0.1%. NASDAQ down 1%. The NASDAQ 100 index down 1.4%. And the SOX, the Philadelphia Stock Exchange's semiconductor index, now lower by 4.4%. We do have the 10-year currently yielding 4.57% with a 2-year 4.17%. Gold at $39.87 the ounce, trading below 4,000 again right now. We've got the precious metal down 1.8%. Crude advancing, little changed, up under 0.1%, $79.65 on WTI. Brent holding above 85 right now, up by about 0.3%. Eli Lilly has agreed to buy Atai Beckley for as much as $3.8 billion, underscoring growing interest from large drug makers in the once fringe area of psychedelic medicine. Shares of Atai surging 33%, Lilly up by 1.7%. Abbott Labs raising its 2026 profit guidance. Abbott shares surging 10.7%. Elsewhere, Merck has won regulatory approval of a pill that rivals powerful injections for cutting dangerous cholesterol levels. Merck shares, they're up by 3.4%. Round one of the Open Championship underway at the Royal Birkdale Golf Club in Southport, England. At last check, Daniel Brown and Sun Jae-im sit tied atop the leaderboard, but 4 under par. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie. I don't know if you're coughing. You got another plume coming. Did you hear about this? I'm looking at the terminal here. A second strong smoke plume is forecast to waft toward New York City and Boston this afternoon and evening. New York City Emergency Management warning, quote, this could become the most significant smoke event in New York since 2023. I thought it would be the biggest since they legalized cannabis. Conditions will be closely monitored for any deterioration. You can pick up your KN95 mask at a local police precinct. It'll be here by tomorrow, they tell us, in Washington, D.C. We'll all survive this together. It is pretty wild when you look at the New York skyline and give you a sense of what's coming over here. President speaking tonight. Did I fail to mention you can watch and listen to the speech here? He's interrupting, I guess, primetime stuff. It'll be the China show here on Bloomberg, and I'm hanging around late. You should be here, too. Speech starts at 9. They say he's going to go 20 to 25 minutes. We'll find out together what he says, and we'll spend some time afterward unpacking all of it. And that's, of course, going to set up the big debate as we head into the Friday edition of Balance of Power. The question, though, is what's on voters' minds? If the president's supposed to talk about the 2020 election tonight, is there some demand from the electorate to get to the bottom of this when we're talking about affordability as the number one issue, the economy? The war in Iran is starting to pick up pretty serious way again. A lot of sons and daughters are overseas. 50,000 men and women are in the crouched position right now in the Middle East waiting to be called on. And the president wants to relitigate the 2020 election this evening. They say he's going to have new evidence, declassified documents in this address. So I look at the new polling from Ipsos here from our good friend Cliff Young, and I see that the economy remains the top issue, followed by threats to democratic values, then corruption, political violence and extremism, and immigration. I don't see the 2020 election on here.
Yeah,
the question is, will he do damage by going there?
It's great to be here.
Thank you, sir.
You would expect this to be like the lazy days of summer, but they're anything but lazy, right?
Absolutely.
At this point, chock full of lots of stuff. Listen, right at this moment, Americans are focused on those most important things for them, making ends meet.
Yep.
That's what they're worried about. Those $20 turkey sandwiches and astronomical grocery bills that everyone's sort of dealing with. Mm-hmm. Those are the sorts of things people are worried about. It's a problem for the administration. It's a problem for Trump. It's a problem for Republicans. It's the critical issue of this electoral cycle, and they're on the wrong side of it. It makes sense in a conceptual sense, in a theoretical sense, that the president would want to reset things.
Yes.
But you just can't convince people that a banana is not a banana, it's a screwdriver. You're just not going to convince people of that. With the caveat that it is some red meat to throw to the base.
Okay.
They've had base issues, right? Yep. There's been a lot of controversy over the last little bit, especially because of Iran. A lot of more libertarian-leaning Republicans did not like it. This might shore it up a bit because they do complain about the fact that the administration hasn't done more. But at the end of the day, Americans are worried about making ends meet.
I look at the approval ratings, and it's upper left to bottom right, not the direction you want to be going in. It's kind of like a Bitcoin chart here, and he's down to 39.9%. I'll get all kinds of bad email for saying that. I'm sorry. When you start this, though, in February of 25, Trump announces Canada-Mexico tariffs. We're way above 50%. We're above water. We're breathing air. By the time you roll through one big, beautiful bill, we're at 45%. U.S. troops capture Maduro. We're down in the low, mid-40s. U.S.-Israel joint strike on Iran, still lower. And then we crack into the 30s here as the U.S.-Iran ceasefire ends. This is officially underwater when you're below 40%, right?
Yeah, Trump and the administration and Republicans are sucking wind at this point.
Wow.
And we've
It's a
talked.
technical term.
It's a very technical term. It's a statistical term. No, but I'll give you a data point, an important data point, based upon a database of 1,000+ elections that we put together at Ipsos.
Yep.
We know that a sitting president at 40% approval rating has a 50-50 chance of winning the next election. Now, obviously, Trump is not going to run again.
Sure.
But it's a measure of relative power, of relative credibility. It is the inflection point. It is the tipping point, and they're below it slightly, but they're below it, and that's not a good place to be.
Boy, it's really something when we went from talking about the golden age, stock market at all-time highs. The market's actually been behaving pretty well considering the news. If that starts to break down, oil prices continue to rise, gas prices, and we see a breakdown on the markets, maybe a correction, which would not be unusual and could be provoked by any number of things, not necessarily having to do with this president. What's the residual effect on approval ratings going into November?
Yeah, I think only marginal.
Yeah.
Indeed, we have to understand that average American mom, average American dad are not looking at the stock market every day. They don't have 401k plans. They're not worried about that. Their challenge is today. Their challenge is going to the grocery store and making ends meet. Obviously, if you have a massive correction, it can only create more negative atmospherics. But ultimately, in my mind, the bad economy, the affordability crisis, is already baked into the numbers.
It's great to have you back, Cliff, as always. He's Ipsos Public Affairs Chair as well. Visiting Professor of Political Science, Texas A&M University's Bush School of Government and Public Service. He's running numbers all over the place. And nothing makes me happier than every couple of weeks when I see this Ipsos deck. It says, prepared for Bloomberg. Cliff, thank you. You're the best. We'll be in touch with Cliff through the balance of this cycle, an indispensable voice in helping us understand what's going on. As we follow the money, this is interesting, and I've been looking forward to this because I never get to spend time with Bill Allison on the air. I'll let you know, Bill Allison, you've seen him on other programs, one of the best reporters here in our Washington bureau, and I usually see him walking around with earbuds in. I think he has them in right now. And he's listening to news. He blocks out the bureau because he's a data-based reporter who needs to have this cocoon of silence around him to do the type of work he does. He's with us now as President Trump and Republicans amass a huge amount of cash to offset some of the numbers that we were just talking about with Cliff Young. Bill Allison, Bloomberg News campaign finance reporter. Welcome at last to Balance of Power, Bill. The headline says it all. Trump and GOP amass $1.1 billion to battle Democrats in the midterms. Is this as lopsided as it was a couple of months ago?
It has remained rather lopsided. I mean, the real thing that's sort of driving this is that unlike previous presidents, Donald Trump, raised a huge amount of money for his super PAC. And, that is one of the big chunks of money that's out there. I mean, he's got almost $400 million in the bank in his super PAC. We'll find out how much more it has on Monday. And and Democrats just haven't been, that a lot of money is flowing into their campaigns. They're outraising Republicans, on a candidate-to-candidate basis. But the big money hasn't come off the sidelines yet.
Wow, interesting. This is, by the way, based on new FEC disclosures. You've got $1.1 billion in the Republican war chest to $322 million held by Democrats in their corresponding committees. Bill, Ken Griffin's making news here and helping to make the difference. How many more Ken Griffins will we see emerge, as you point out, from the sidelines in the next couple months?
It'll be interesting to see. I mean, one of the big trends that we've seen in recent years, and it just continues to grow, is that a lot of donors are giving dark money. They'll give to a nonprofit, which in turn gives to a super PAC, so you really don't know who the money is behind it. But you know, we've seen Ken Griffin now. He's always you know, given straight to committees. I think he's given, you know, close to $320 million so far since 2015, and this cycle he just poured, you know, $27 million into super PACs after sitting out, you know, 2025. I mean, normally he's a guy who stays engaged even in the off years. This year he bided his time a little bit before, you know, making an impact.
Yep, really interesting. The question you might not be able to answer, Bill, as we follow the money trail here, and I should note that the DCCC was out with a news release today, boosted by massive grassroots support. Democrats across the House battlefield post huge fundraising numbers. And for some of these individuals, they are big fundraisers. Frontliners talking about an average of nearly 2.7 million cash on hand, about 5 times they claim their Republican challengers. But to what extent does the direction of the news flow impact things here, Bill? Money's not everything, as we know. Democrats think they have the narrative to win. And the president has a huge opportunity tonight when he speaks to the nation. Does he potentially hurt himself with donors if he aims to relitigate the 2020 election starting now, or I guess continuing now, but in a whole new way?
I think that, you know, I think that where the problem that the president has is that, you know, he's been focused on, you know, just about everything except the one issue the voters seem to care about the most. And that's obviously affordability, prices, the economy. And by, you know, the more he seems, you know, off message and what Republicans want to be, they want to be making an argument that they've got this housing bill, that they have the no tax on tips. There's all kinds of different things that they kind of want to talk to voters about. And if he's talking about something else, that's just sucking a lot of the air out of the room. And, you know, I think, though, you'll see donors giving to, like Ken Griffin, at the Senate level, at the House level, and, you know, trying to bolster those, because those are the guys who are going to be on the ballot.
Well, ain't that the truth? Bill Allison, it's good to see you. Don't be a stranger, Bill. Stay in touch with us on this. It's going to be a huge part of the midterm election cycle, one of the most important storylines to follow. With the help of Bill Allison, Bloomberg News campaign finance reporter, we'll assemble our political panel next. Rick and Jeannie are on the way in, only on Bloomberg Radio.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are declining as Taiwan semiconductor manufacturers' results failed to boost AI stocks. Also, traders continue to assess a worsening situation in the Middle East. The Dow, the S&P, NASDAQ, and the NASDAQ 100 index all in the red. Interestingly, though, Russell 2000 index of small-cap shares holding on to a gain of 0.1%. The S&P keeping it all in context at 75.45, down 27 now, down 0.4%. Dow Industrials down 48 on the Dow, drop there of under 0.1%. NASDAQ lower by 1%. The NASDAQ 100 index down 1.4%. On the SOX, the Philadelphia Stock Exchange's semiconductor index down now by 4.1%. The VIX just above 16, the 10-year 4.57, the 2-year 4.17%. Spot gold now at $39.89 the ounce, trading below 4,000. Spot gold down 1.7%. West Texas Intermediate crude down 0.3%, 79.35 a barrel. Brent 84.83 now a barrel of Brent, down by 0.1%. United Airlines expects resilient travel demand to drive up its full-year profit despite soaring fuel costs. Shares are trading lower. United down 2.3%. United says it expects about $6 billion in added fuel costs for 2026. CEO Scott Kirby was on Bloomberg Radio this morning talking about demand and the U.S. economy.
The economy is strong, and part of it is AI and all the build-out that's happening with AI. But, as I said, 30% up in business travel so far in July. Business demand is really strong. The U.S. economy is really strong, and we're a beneficiary of that.
United CEO Scott Kirby, again, United trading lower by 2.3% among the other legacy carriers. American up 0.2%. Delta Airlines gaining 0.2% as well. Round one of the Open Championship underway at Royal Birkdale Golf Club in Southport, England. At the last check, right now we do have Jackson Suber of the U.S. He is sitting atop the leaderboard at 5 under par. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. And that, Joe Matthew, is a Bloomberg Business Flash.
All right, my friend. Thank you, Charlie Pellet, as always. Charlie, of course, a big aviation buff. And when I hear him say that, Scott Kirby reporting a 37% increase in business travel in this environment, that is absolutely incredible when you consider what's happened to jet fuel and what continues to happen. We're a little bit lower right now, but you got Brent touching $85 a barrel again today. WTI is just south of 80. Gas prices are creeping back up to 4. Diesel warming up to 5 again. We knew already that jet fuel had practically doubled. But man, you can't get enough room at the front of the plane as it happens right now. I'll be curious to see what they do with capacity as we work our way through the rest of the year. President Trump will be speaking this evening. Thank you for joining us here on the Thursday edition of Balance of Power. We meet again on this little Friday, knowing that he will be speaking to Americans beginning at 9 p.m. Eastern Time with enormous questions about what's happening in Iran. That may not be the bulk of the speech, as reports point us to some address involving the 2020 election all over again, and we'll have to wait and find out. We're not going to see the speech, obviously, until he gets on at 9. You can see it, hear it right here on Bloomberg. Catch us on YouTube, watch us on Bloomberg TV. We'll be all over this. As the president reportedly leans toward expanding operations in Iran. Wall Street Journal had a big splash last night. The president leaning toward a couple of ideas that you've heard about already, including seizing Karg Island, sending ground forces to do so near the Strait of Hormuz, bombing a fortified site that could be used for covert nuclear work. You heard him talk about Pickaxe Mountain. He hosted a Situation Room meeting a couple of days ago to talk about this, how many troops it would take to seize Karg Island, what we might bomb in that tunnel complex at Pickaxe. And now that we're leaning back into this here, I mean, the U.S. intensifying strikes overnight. We hit an oil tanker near the country's main export terminal. It was the first time that we've seen that since fighting resumed. And so it's going to revive a whole conversation about war powers on Capitol Hill. We spent some time last evening with Senator Jack Reed. He's the top Democrat on the Armed Services Committee, the ranking member, former 82nd Airborne, West Point graduate, influential voice, not only in armed services, but national security. Slightly different angle on, in his view, the need for a war powers vote, as it would help to support the troops we already have in place. This is something we talked about in the Russell Rotunda. Kaylee and I went up there last evening. Listen.
Well, no, I have not supported this effort from the very beginning. The president did not get the congressional authority to conduct a war, which he's doing, and he has avoided responsibility and accountability, not just to the Congress, but to the American people. He started off without a real plan, without really defined and achievable objectives, and now he's just looking for some way to get out of this situation he created, and there aren't any easy ways. Land combat will be expensive, particularly in the lives of American soldiers, sailors, Marines, airmen. And also, I'm not convinced that seizing those positions would stop the Iranians from continuing their efforts.
Well, you talk about the cost, yes, in human lives, but also in terms of our munition stockpiles that we have access to. We know a great deal has already been expended in this conflict. We just were hearing our colleague Tyler discuss that with your colleague, Senator McCormick. That is part of the reason why this White House and the Pentagon have requested $73 billion in funding for the war. Is there not reason for that if it means resupplying munitions that we may need for conflicts of the future?
Well, first, the Department of Defense has access to close to $80 billion from the reconciliation package we passed last year. And they should, I believe, use that money to resupply, to re-equip, to develop weapon systems. Again, this is just a result of a poorly planned and well executed, I must say. Our military is superb, but when the leadership is asking them to do things that cost us in so many different ways, and one of them, as you point out, is our precision munitions and our ammunition supplies, but they have a slush fund, if you will, of around $80 billion. I would go there first if I was the president, if there was the critical need he suggests.
Well, of course, that's just a drop in the bucket, Senators, of the $1.5 trillion that the administration is asking for annual Pentagon spending. And we're told that this has turned into a proxy, essentially, for Democrats to vote against the war, not so much as defense spending. Does this NDAA that's being debated right now stall? Does defense spending not get approved as part of the new budget?
No, I think the problem is that we do not have a top line for the appropriators, including not just defense spending, but domestic spending. What we've seen is a very aggressive and over $1 trillion request from the president for defense, but significant cuts to programs that are absolutely critical to the American people. SNAP programs for food for children and other people. And until we get a balance, which we've always maintained in the past, then I think we're going to have difficulties clearing anything on the Senate floor.
Senator Jack Reed, the gentleman from Rhode Island, again, top Democrat, armed services. Let's play it to the panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us right now. Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick is a partner at Stone Court Capital, our Republican strategist. What do you think of this, Jeannie? Is this, in fact, for Democrats, a proxy on the president's policies in Iran? Will any of this defense spending get approved?
You know, I can't imagine the NDAA not getting approved, but this would be an environment in which that is the potential. I doubt it happens. I think the bigger issue is going to be the appropriations. And so I do think that the president has put himself in a bind here. The White House went around Congress when it went into this war, and now they're coming back and asking for funding for what's already happened and what is going to happen. And of course, they could have saved themselves a lot of heartache by going to Congress in the beginning, by getting on the same plane, if you will, with Congress and moving forward in that way. And I don't think you would have found yourself, they would have found themselves in this position. But I do think in the end, the NDAA does get passed, although we've already heard some Democrats say they will not support it at this point.
What do you think about this, Rick, having heard from Jack Reed knowing that this is going to be a debate that needs to happen pretty quickly if they want to get this in time. The number of legislative days left are getting down to, what do we have, 20 or 21 or something. What are your contacts in appropriations telling you on Capitol Hill?
Yeah, look, I think the two different things, right? I think the appropriators are stuck, as Senator Reid suggests. Unless you have a top line to work off of, usually that's the big agreement between Republicans and Democrats in the White House. Then everything else follows below that, right? And you start negotiating how much defense, how much healthcare, how much agriculture, all that kind of thing. The NDAA is not an appropriations bill; it's an authorization bill, and that should go through, because even though it informs on what to spend, it is not the appropriation. And it shouldn't get stuck. And it's been the tradition that the NDAA, which is needed to guide the actions of the Defense Department, is kind of a sacrosanct document. And so I would hope that the Senate and House would follow in that tradition and pass the NDAA, give the Defense Department its guidance on what Congress says they should be doing with the money that has been already appropriated. And then, have the fight as the fight. But you point out the key thing here, Joe. We're running out of time. Most likely going to go into a continuing resolution. And that then starts the whole debate around, closing down government and all that mess we just got out of. And now we're going to get right back into it.
My God. We've got short memories around here, Jeannie, although I guess this has to do with much more than that in a midterm election cycle. We asked Senator Reid about war powers, Jeannie. He said that, in fact, with the United States re-engaging like this and considering options like seizing Karg Island, like putting troops on the ground, maybe a bombing pickaxe, we'll see what happens in the days ahead. The president's threatening to drop bridges and bomb power plants next week if it continues throughout the weekend. The point that the senator made, though, this is not so much a check on the president as it is a message to the troops that the United States is behind them, not just the executive, that the people have spoken here and that monies are allocated to pay for this mission. Will Democrats take another swing at this?
They might. And, Senator Reid made such an excellent point there. And, of course, he is somebody who has served, that it is important when we are in an active war that the troops know that they are supported. So I do think that you're going to see a lot of Democrats line up with that. But I think what Democrats really need to demand from this White House and demand of their Republican colleagues is a strategy for this war. We can talk about the money, and that is certainly important. But what is the president's strategy here? You cannot bomb them back to the negotiation table. Bombing infrastructure does nothing. What we need to do long term is we need a strategy so we are not all so reliant on the Strait, and we need a strategy to protect Iran's neighbors, our Gulf allies, from threats from Iran, and we need to get them back to the negotiation table to talk about the key issue, which is nuclear weapons. So I think that's what the senators on the Democratic and Republican side really need. And of course, to go back again, had the president gone to Congress in the first place, some of this would have been agreed to earlier, and we wouldn't be in this position today.
Well, if the clock is presumably ticking again, you wonder if this starts to get loud in the next 60 days. But we'll have to wait and find out. Rick, I wonder your thoughts on this new round of reporting and why this is getting out to reporters. In our remaining moment, is this just another pressure play in an effort to influence Iran, force them back to the table? Or could you see the president pulling the trigger on a Karg Island seizure, on some of the ideas we've talked about since the beginning of this conflict?
Yeah, there's no question that the president has sometimes successfully used disinformation, information warfare to set up our opponents. And I hope that's an aggressive policy in sort of parsing which is a head fake and which is a real plan. I think is fool's errand, right? We got to assume that he's got teeth behind what he's done. He's proven his willingness to engage, and if you're Iran, you got to take everything he says seriously.
Got it. Our great panel today, and they'll be back in our second hour. Rick Davis and Jeannie Shanzano, the best we have, Bloomberg Politics contributors bringing viewpoints from the Democratic and Republican sides of the aisle. We'll have much more to follow in hour 2 here on Balance of Power, as we're joined by Andra Gillespie, political science professor at Emory University, who's going to help us prepare for this speech tonight. 9 p.m. Eastern Time, Wall Street time. You'll see it and hear it right here on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
But what will he say? Welcome to the Thursday edition as President Trump prepares to address the nation in prime time tonight from the White House, with reports now saying that he will present new evidence to challenge the results of the 2020 election. I'm Joe Matthew alongside Kaylee Lines here in Washington as we wait to hear from the president. Kaylee, this seems to be part of his latest push to pass the Save America Act.
Yeah, a push that is running into roadblocks on Capitol Hill, I think it's fair to say. It is a non-starter in the Senate. The votes are just not there, as we've repeatedly heard from the majority leader. But right now, House Republicans are trying to figure out how they can take components of that legislation and work its way into a budget reconciliation 3.0 package, which the House Budget Committee is marking up today. $95 billion worth of spending with no offsets.
Could run into some challenges with the parliamentarian next door, but we'll find out about that. The fact is, we've got a primetime address from a president that has not used that venue terribly often, and there are a lot of questions about what else he might talk about, including the war in Iran that appears to be escalating as we speak.
Yeah, as we've seen many days of strikes in a row and still remaining questions as to what extent the Strait of Hormuz is open for transit with the U.S. blockade in effect, at least for Iranian vehicles. So we'll get into this as we turn to our colleague Tyler Kendall, who joined us live from the White House in just a moment. And as we consider geopolitics when it comes to Iran, there's also the question of Israel that is live on the Hill. After yesterday, we saw a pretty remarkable vote in the House as 100 Democrats, more than 100 Democrats, voted to restrict aid to that key U.S. ally.
It was really something. Nearly a dozen voting present on top of that. We'll get into this as well with our political panel. Rick and Jeannie are both with us for the hour.
Indeed. Just like Charlie Pellet is always with us to keep an eye on the markets from New York. And so we turn for a check on these markets to him now. Hey, Charlie.
And good day from smoky New York. We have got the Dow higher, S&P, NASDAQ 100 index all moving in the red right now as traders assess a worsening situation in the Middle East. Right to the numbers now, because the S&P trading lower. It is down 22 points, drop there of just about 0.3%. Dow Industrials up 44, higher by 0.1%. We've got NASDAQ down 246 now. That is a drop of almost 1%. The NASDAQ 100 index down 1.3%. Familiar story. Weakness in chip names as evidenced by the SOX, the Philadelphia Stock Exchange Semiconductor Index, now trading lower by 4.3%. The VIX just above 16 with the 10-year at 4.57%. The 2-year 4.16%. Spot gold is at $39.92, moving further below 4,000. Right now, gold down 1.7%. West Texas Intermediate crude now dipping by almost 1%, 78.86 a barrel. Barrel of Brent 84.26. It is down by 0.8%. Oil has been bouncing around. The oil majors, however, still showing gains. Right now, ExxonMobil up 0.9%. Shares of Chevron up 1.2%. ConocoPhillips up now by about 0.7%. Round one of the Open Championship underway at Royal Brookdale Golf Club in Southport, England. At last check, Jackson Suber is sitting atop the leaderboard at 5 under par. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Joe and Kaylee, that's your Bloomberg Business Flash.
All right, Charlie Pellet, thank you very much. Keeping an eye on the markets for us is from here in Washington. We're keeping an eye on all things Capitol Hill and White House, both ends of Pennsylvania Avenue covered for you here on Bloomberg TV and radio today. And at the White House, as we speak, we're preparing to see a briefing from the White House press secretary, Caroline Leavitt, who should retake the podium any minute now. Her first briefing with reporters, Joe, of course, since having her second child. She is back from maternity leave, and I would imagine she's going to be pressed a number of times as to what exactly she knows about what the president is planning to say in his primetime address this
we
evening.
haven't seen her in this forum in some time, and she's going to, I'm sure, try to frame what the president wants to talk about this evening without getting in front of the boss. There's only so much that you want to say, and of course, there's only so much that everyone knows about what exactly is inside Donald Trump's head. He's known for tweaking the script right up until the moment it's put in the prompter and then ad-libbing around it when it's on the paddles. I guess he'll be in the East Room tonight. I'm curious to know if he has an audience again this time. Remember, there was a seated crowd filled with cabinet officials and others last time he did one of these.
Yeah, there's been reporting that the FBI director, Kash Patel, could be involved this go-around, as it is expected. At least it has been reported that the president is going to unveil new intelligence pertaining to the 2020 election, but we're all on tenterhooks to find out. We actually don't know. None of this is confirmed.
This is going to be something, which is why we start at the White House. Bloomberg's Tyler Kendall is on a sweltering North Lawn right now. It's about 95 degrees here in the nation's capital as we anticipate the smoke plumes. We'll be looking a lot like New York, they say, by tomorrow, Tyler. What's in store for us this evening? The president's speaking at 9 p.m. Eastern. What do you know about it?
Well, Joe, at this point, we know it's going to be a primetime address. President Trump is set to address the nation about what we're expecting to be, as you both are outlining, election security. There has been various reporting on exactly what the president could lay out tonight, including this report from Politico that says that he will focus on the declassification of previously unseen intelligence related to the 2020 election. But as you both mentioned, we don't know at this point, but we do know that there's a lot of context leading up to this, which is that President Trump, for the most part in the past weeks, has really been pinning most of his legislative agenda on the Save America Act, that voter ID law that would tighten restrictions around voting as we head into the midterm elections. He's tied it to most of the legislation on Capitol Hill, from the FISA extension to that housing bill, that bipartisan bill that he didn't put his signature on. The other context that we know, of course, is that there are very slim margins when it comes to Congress, and perhaps this could be trying to lay the groundwork as we head into the midterm elections. Democrats only need a net gain of 3 seats in the House and 4 seats in the Senate to flip those respective chambers, and I would expect that the president's going to talk about his views on this as we get closer to Election Day.
Well, and of course, Election Day does just grow ever closer with every passing day, Tyler, and that looming election and the economic consequence of what has happened in the Middle East that could impact voters as they head to the elections is the reason why the president was pursuing a deal with Iran and entered the memorandum of understanding that, of course, he has since declared dead as we see a resumption of hostilities with Iran. Do we expect that he'll have anything to tell the country about the prosecution of those operations moving forward? The last time he did this, as I recall, he was talking about Iran and how he expected that it could be wrapped up in a matter of weeks. And that was what, back in April?
Kaylee, it's definitely a possibility. President Trump himself said yesterday that he would have really big news, seeming to allude to the election security aspect of this. But he also said that he would speak on other topics. So at this point, we're going to have to see if he does give some sort of update, as it's been very clear that the U.S. is opting for tighter economic pressure and also kinetic action to try to force Iran back to the negotiating table. We had President Trump yesterday reiterating his threats to hit Iranian energy infrastructure by next week if they don't start to resume talks, as well as seeing just overnight the U.S. target a super tanker near Karg Island that was headed towards an Iranian port in the first instance of the U.S. upholding its naval blockade that it reenacted earlier this week. At this point, Joe and Kaylee, things are pointed toward escalation, but as we have learned in the cycle of this conflict, there can always be some sort of breakthrough that may tamp down those tensions. So we'll be on the lookout to see if President Trump announces anything that either ratchets up the tensions or perhaps gives us some sort of leeway when it comes to the diplomatic channels that we know this White House would like to pursue.
All right, Bloomberg's Tyler Kendall live at the White House for us. Thank you so much. As Tyler told you, and as we've told you, no one knows for sure what the president will say, though I would imagine that there's going to be some bets in the betting markets around what he could say. Joe, I just have to mention quickly this story,
I know where you're going.
report that the teleprompter operator that Trump has long worked with for years apparently was able to make $100,000 betting on what would be in his speeches, and this is under investigation now by authorities here in Washington. Yeah, on Kalshi.
You got to be kidding me. I guess you're in the catbird seat when you're the one loading the speech into the prompter and you know what's going to be announced. It also reminds us how quickly these things take place. You get seconds notice and you can make that much money on Kalshi. Fascinating that it was Kalshi that reported this to authorities.
Maybe trying to ingratiate themselves. It's not all bad. We are also self-monitoring, self-regulating in the absence of
I wonder who's going to be on the teleprompter tonight.
That is an excellent question. Will there be a teleprompter tonight? That may dictate how long exactly this primetime address is going to be. But of course, it is expected a lot of this may center around the 2020 election, even as the 2026 midterm elections approach. This could be some relitigation. We saw plenty of relitigation yesterday as well in confirmation hearings for 2 key appointees that the president wants to serve in key roles in the government, including the Director of National Intelligence nominee Jay Clayton, who of course used to run the SEC, was U.S. Attorney for the Southern District of New York, was asked repeatedly who won the 2020 election, didn't always give an answer, as evidenced by what his exchange with Democratic Senator of Georgia, John Ossoff, looked like yesterday. Listen.
Who won the 2020 election? I'm not going to do this with you.
This is a job interview. We've established that you have an obligation to be honest and forthright with the committee. Yes, you do have an obligation to be honest and forthright with the committee.
Yes.
Who won the 2020 election?
Like I said, I'm not going to get into that with you.
But you do have an obligation to be honest and forthright with the committee.
Is anything that I just said not honest or forthright?
Yes, you're not being honest or forthright. Who won the 2020 election?
I think I've answered the question. We can keep doing this.
Oof. And they did, by the way.
Yeah, this went on for a bit, and there were a number of exchanges that sounded pretty similar.
Yes, exactly.
To that. But all of this, of course, leads up to the address the president will give tonight. And again, 2020 could come up repeatedly in that speech as well. So on that note, we turn now to Andra Gillespie, who is joining us from Emory University, where she's Associate Professor of Political Science. We frequently talk to her about Georgia and Georgia politics. And it does seem, Andra, welcome back to the show, that Georgia could be at the very center of the claims the president's getting ready to make tonight, both in terms of, say, what happened in Fulton County, and also even, it's been reported, could look into the results that elected John Ossoff and Raphael Warnock in the first place. Will voters in Georgia or anywhere else believe that?
I think it really comes down to the quality of the evidence that's presented. So if President Trump wants to make this case and he says that this, election security commission that he's put together has findings, people are going to have to interrogate those. They're going to have to interrogate the quality of the source, whether or not it is objective, whether or not the analysis is systematic or not. But suffice to say, he has an uphill climb. If we look nationally at what people think about the results of the 2020 election, The Economist and YouGov did a survey that came out about a month ago. Only 28% of Americans believe that Donald Trump really won the 2020 election. If we break that down by party, it's about half of Republicans. So there are a lot of people who will need convincing, and there are a lot of people who will also want to ask whether or not this line of inquiry is even valid or prudent at this time, given all the challenges that our nation is facing right now.
Well, let's catalog some of them. The president, professor, says, or at least his subordinates say he could talk about a range of issues. This is the narrative we've been hearing throughout the week, knowing that he wants to have a higher cadence of these primetime addresses that he has typically not embraced. If he does, in fact, get to the economy this evening, gets to Iran, what's the impact for voters here who are trying to balance their own lives here and follow the ball at the White House?
Well, this primetime address format is actually an interesting format. Political scientist Samuel Cornell kind of developed this idea called going public more than 40 years ago, and he was using the Reagan administration's use of these primetime addresses as an example here. And so what President Reagan did and what President Trump could be doing tonight is using primetime addresses to circumvent Congress, to try to persuade individual voters, to put pressure on their Congress members, on their senators to vote for legislation. So if this is about voting, then I think the big question is, does President Trump use this to try to boost his SAVE Act, which is stalled? Or is he going to try to announce some type of unilateral action that could immediately be put into court because of questions about whether or not the executive branch has power over elections, or whether or not it looks like he's trying to suspend elections? So we have to wait to see exactly where this is going. If he's going to make these addresses, I think it becomes a question of whether or not he uses it as persuasion to try to influence the legislative branch to align with his agenda, or whether or not he's using it to justify some type of unilateral action, and whether or not that unilateral action would actually be deemed constitutional, even within the context of expansive presidential power.
Well, and on the persuasion idea, Andra, it's one thing to persuade elected officials to try to do things. It's another to persuade voters to show out and to vote your way. If this is primarily going to be about 2020 and election integrity, does that not play to the president's base? Is that not motivating for them?
So it might be motivating to the base, where you could look at half of them believing that, that President Trump didn't win the 2020 election as an evidence of slippage in some way, shape, or form. But I think the important thing to kind of keep in mind is that when we're talking about congressional elections in this cycle, given party polarization, most seats are safe. We're talking about a handful, a few dozen districts that could be swinging. This is not helpful for them. This is also not necessarily going to be helpful and most salient even for base voters who might have concerns about other issues like the state of the economy, like our continued involvement in the war in Iran and other types of issues. And so I think the question that we may be thinking about tomorrow, once we've heard the speech and once we know what action he's proposing or what his big announcement is whether or not this was actually a good use of time.
Democratic Congressman Jim Himes with an op-ed in the New York Times talking about this very issue, Professor. The headline on the guest essay, Trump's election denial has never been more dangerous. And he floats the prospect knowing that, as Kayleigh mentioned, FBI Director Kash Patel may be part of this, along with others, including Bill Pulte. His concern that Bill Pulte or others could declassify Americans' view of the electoral system and the security around elections, which begs the question, is this about 2020 or is this about 2026?
I think it's about both. President Trump certainly has an incentive for his legacy to try to relitigate 2020 because I think he wants to, at the end, feel vindicated. And this is the way that he has decided that he will feel vindicated. It's not enough to have come back in one election. Again, in 2024 for him, he has to prove that everything was wrong about 2020 and perhaps get a pound of flesh from people who were involved in that. I think the danger with this classified information being declassified selectively is whether or not people are discerning of the source of the information and the quality and the systematic analysis of that information. And so it could reinforce ideas amongst people who have been misinformed that their thoughts and that their sort of instincts about the 2020 election were real. There are also people who would be inured to that, sometimes for superficial reasons, like it's coming from the wrong party, but also because there are other people who might be better equipped to be able to discern misinformation and then to be able to kind of dispel that from their thought process.
It's good to have you back with us, Professor. Andra Gillespie, Associate Professor of Political Science at Emory University. Great to have you. And of course, we're going to carry the speech from President Trump this evening. It starts at 9 p.m. Washington time. Congressman Himes in this piece, Kayleigh, says, I have read the most detailed version of this assessment of the election, and the declassified findings are fully consistent with the classified material, which was based on exceptionally sensitive, high-value, high-confidence intelligence. His concern is that we'll be cherry-picking things this evening, declassifying unsubstantiated reports from human sources that could say a lot of wild things.
Yeah, he, of course, can't divulge what he's been told in classified briefings, but he did say in that piece that he has seen no evidence of activity to actually disrupt the voting process in the midterms coming from adversaries of the United States. But, of course, this is going to be the subject of much debate throughout the day today leading up to the president's speech, and I would imagine very much so in the aftermath.
That's for sure. We'll be doing this again tomorrow. That's why you should join us this evening for the speech. We'll be unpacking it together live on the air. We'll assemble our panel next, only here on Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. The Dow does remain higher, barely up 5 points right now. Little change, but most stocks are declining as Taiwan semiconductor manufacturers' numbers failed to boost AI stocks. Also, traders continue to monitor a worsening situation in the Middle East. The S&P right now lower by 0.3%. NASDAQ is down 1%, with the NASDAQ 100 index down 1.4%. The SOX, the Philadelphia Stock Exchange's semiconductor index, now trading lower by 4.6%. The VIX holding above 16 with a 10-year at 4.57%, the 2-year 4.16%. Gold, meanwhile, below $4,000 an ounce today at $39.88. The precious metal trading lower by 1.8%. West Texas Intermediate crude now down 0.7%, holding just above 79 on WTI. Barrel of Brent below 85, down 0.6%. Eli Lilly has agreed to buy Atai Beckley for as much as $3.8 billion, underscoring growing interest from large drug makers in the once fringe area of psychedelic medicine. Other drug maker news today, Abbott Labs raising its 2026 profit guidance after a stronger than expected second quarter, driven by improved performance across most of its business lines. Abbott surging now by 10.9%. And Merck has won U.S. regulatory approval of a pill that rivals powerful injections for cutting dangerous cholesterol levels, betting that the easier to take medicine will find more success with high-risk patients. Again, Merck shares are up now by 3.5%. Dow just turning negative, down now by 7. S&P keeping it all in context, down by 0.3%. Round one of the Open Championship underway at Royal Birkdale Golf Club in Southport, England. At last check, Jackson Suber is sitting atop the leaderboard right now, 5 under par. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. Watching the markets for us from New York. Meantime, here in Washington at the White House in the briefing room, Caroline Leavitt is back at the podium, the White House press secretary, giving her first briefing to the media since returning from maternity leave. We haven't seen her do this in a few months, Joe, and no surprise, she led off her comments with some scheduling announcements. Not only will the president be attending the FIFA World Cup final on Sunday between Spain and Argentina, he apparently will be attending a FIFA reception at Trump Tower in New York City tomorrow. And of course, before any of that, he has a speech to give to the country tonight. It's slated for 9 p.m. Eastern, and the White House press secretary just confirmed what we had been reporting and seen reports about, that the president will be talking about election integrity.
So just to back up, first of all, if you're at the Peninsula Hotel, you're in for it on Friday night. But what will these people going to the game have to endure?
Oh, yeah.
When he went to Madison Square Garden, that was what? If he had to get there 5 hours early for the next game, airport-style security? I'm assuming that'll be the same on Sunday.
Yeah. Plus, there's the smoke factor to contend with this time. It might not be a super cool experience, but of course, for fans of Spain and Argentina and soccer in general, I'm sure it's once-in-a-lifetime stuff.
Breathe deep, wear a mask. Let's assemble our political panel. We've got a lot to talk about. Rick and Jeannie, our Bloomberg Politics contributors. Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick, our Republican strategist and partner at Stone Court Capital. I know you've got your clock set for 9 p.m., guys. It's great to have you with us. Rick, talk to us about the president's decision to use the primetime address here to go back to the future. This is a very critical moment, of course, for rhetoric coming from both sides. As fundraising takes place, we work through the primary calendar. The economy, as we've reasserted based on new polling this hour, shows that the economy is the number one issue, not who won the 2020 election. What's the president getting into here?
Yeah, you would have to be living under a rock to not know that for the last 14 months, the economy has been the number one issue. And if you polled, the concerns about the 2020 election outcome, I suspect, you would get only the hardest core of Donald Trump's already, base vote, thinking that it is at all an issue. And they're already voting for him, so it's not like he needs to talk to them. So who is he talking to? I think this is probably as has been discussed, as much about his legacy as anything. It's not like you're going to go back and say, oh, well, you're deemed now president in your third term. I mean, they're not going to actually declare him winner. Nobody will of the 2020 election. So what are we trying to accomplish here? If it's to make elections better, then the administration needs to look no further than their own actions, basically shutting down efforts at the cybersecurity, at Homeland Security, having the Postal Service crack down, pursuing rules in Congress like the SAVE Act, which makes it harder to vote, not easier. It's really kind of a head scratcher as to what he would hope to accomplish in this, other than just his legacy, saying he was right and everybody else who attacked him on this idea that the elections were rigged were wrong. His own administration at the end of 2020 said there was not a impact in the election with any of these efforts that may be described tonight. So he has nowhere else to look but himself in that regard. So I don't know. To me, it's a horrible waste of perfectly good presidential time in the Oval Office. I'd be trying to get the public on board with the Iran campaign. That would be a really good use of time, since that seems to be exploding. But no, we'll see, I guess, where it winds up tonight.
Well, and I wonder, Jeannie, how much you see this as if he can't make an argument that Republicans should win or focus on the issues he thinks they should win on, he can set the stage for people to question the results if Republicans lose. Is this pretense for what could happen leading up to and after the votes are in?
Yeah, Kelly, absolutely might be. First of all, I want to say I was questioning the speech tonight, and now that you guys are reporting he's coming to New York tomorrow, I'm telling you, everybody here is grabbing their masks and trying to leave. So now I'm questioning that as well. It's very smoky here. I don't think any of us know why the president is doing this primetime address. It is a very risky strategy unless he has something really important to share with the American public. And as far as we know, he's going to focus on election integrity, and he's going to try to wind it back to 2020. And there is absolutely nothing new that has been shared, at least so far, that would have changed the results of those elections. And, it's almost as if the president thinks that everybody is thinking about 2020 the way he is. Most of us who think about it think it was a year we want to forget. That was COVID. Very few of us think about it as, oh, I'm so sorry Donald Trump lost the presidency. And of course, let's not forget, if he tells us there was foreign interference and he has some evidence of that, well, guess who was president? He was. So is he trying to tell us that while he was president, there was Chinese foreign interference in our elections? So again, it doesn't make much sense. A big question is, how do the networks handle this? Do they carry this live? Do they fact check in real time? And if they want to continue to do these primetime addresses and he doesn't say something very important to the American public, how much does this come back to haunt him? I think this is a very risky strategy. And oh, by the way, today, as mortgage rates have hit their highest level in a year, and that's what people care about, he's going to talk about the 2020 election. It doesn't make much political sense for the Republicans at all.
6.55% on a 30. Rick, we're keeping tabs on Caroline Leavitt here. She's being asked about this as we're discussing it, and says that she's seen misreporting on what the president will say. A lot of reporting and misreporting. She says the American people will be relieved to hear what they hear from him. He's going to talk about safe and secure elections, she says. And he's also working on, quote, all these economic issues, unquote, that Americans have at home. If this is going to be a variety speech, are we getting into the sort of fireside chat mode here where we talk about a lot of things, like a mini State of the Union, a White House that wants to increase the cadence of these addresses? Could the president make this venue work for him?
First of all, it's a great venue for the president. It's his bully pulpit. Sure, it probably isn't attended to as much by the public as it used to be. when the president would go and do a public address from the Oval Office. It's still important, and it'll make a lot of hay in the social media world afterwards. So, yeah, it's still important to do these things. If indeed he focuses more on the sort of the political issues of the day and plugs his, Save America Act, that would be okay, traditional, but like, where's the beef? I mean, like, why in the world do you have to do that from, the Oval Office in a, primetime speech when you could have been doing that in Pennsylvania yesterday? You could have been doing that, in some of the other events that you've held. And frankly, he's just, for whatever reason, not wanted to talk about cost of living, affordability. And when he does it in more of a disparaging way, not like, hey, my administration's doing something. I mean, he's got some great economic news this week to talk about. He should talk about the strength of the U.S. economy and how that will ultimately benefit everyone. But I don't know. I mean, like, when was the last time he gave an uplifting, positive speech? I mean, like, we're still waiting around for that to happen. And so we can hope. And I'm tuning in because I know one thing for sure. It's going to be high entertainment value.
Well, so Rick Davis will be a member of the audience. So too will Joe and I, Jeannie as well. But there is a question of to which audiences the president's really speaking. If it is to people at home, or if it is, Jeannie, say, to lawmakers on Capitol Hill who he wants to push to pass the Save America Act. Is he able to sway holdouts with a speech like this by applying so much public pressure? Or does it simply not change a difficult math equation in the Capitol?
I would be surprised if it changed the calculation as on the Save Act. I agree with Rick that traditionally these speeches are very important for presidents, but we're talking about Donald Trump, and Donald Trump has not proven to be adept at using these speeches. He is much better with a rally. He is much better when he is going off the cuff. He's going to have to give the networks a limited time here. He's not going to be able to bob and weave and curve the way he likes to. That makes this all very difficult for somebody like Donald Trump, who has many gifts relating to the public, but this hasn't proven to be one of them. If he was doing this in a traditional way, he would be speaking to the leaners that Pew told us yesterday have now switched 16 points since 2024, 12% leaning Democrat. Those are the people who want to hear number 1, 2, and 3, economy, cost of living, affordability, and optimism, and a plan for going forward on the war and everything else. They're not as interested in an issue like election integrity, and certainly not the 2020 election relitigation. And so he usually reverts then to speaking to the base. And while that can drum up his base getting out in 2026, you know what it also does, Kaylee? It makes Democrats much more enthused, and the enthusiasm amongst Democrats is a critical problem for Republicans going into 2026 because Donald Trump says things that get them out to vote.
All right, Jeannie Shanzano and Rick Davis, our political panel, thank you so much. I would point out the White House Press Secretary Caroline Leavitt was asked if the president is going to accept the results of the election in November. She dodged that question, though she did say the teleprompter operator who was making all those bets on Kalshi is on unpaid leave. This is Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg with the Dow, the S&P, NASDAQ. They're all in the red right now. Dow moving lower, down now by 101 points. Stocks are declining. The Dow down 0.2%, S&P down 0.4. Tech hit hard again today. We've got NASDAQ down 1%. The NASDAQ 100 index lower now by 1.5%. All of this with the stocks now lower by 4.7%. Taiwan semis results failing to boost AI stocks. Traders also keeping an eye on the situation in the Middle East. 10-year yield 4.56% with a 2-year 4.16%. Spot gold now down $80 the ounce to $39.81, falling further below 4,000, down now by 2%. West Texas Intermediate crude 79 even a barrel, down 0.7. We've got Brent at 84.36, down now by 0.7%. Round one of the Open Championship underway at Royal Birkdale Golf Club in Southport, England. At last check, we've got Jackson Subert sitting atop the leaderboard at 5 under par. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you very much. I'm Kaylee Lyons alongside Joe Matthew here in Washington, where we always bring you the news you can use. And there is a bit of a fixation here in Washington today with one story in particular about an operator of the teleprompter for President Trump who had worked with him for years, making more than $100,000 in bets on Kalshi about what exactly would be contained in President Trump's speeches. The White House press secretary Caroline Leavitt is talking about this right now at the podium in her first press briefing since returning from parental leave. She says that the CFTC was notified by Kalshi on the teleprompter operator, which had been reported earlier, that operator won't be working at the White House. She said, Joe, that President Trump thinks the operator accused of betting is a disgrace. I don't know that he's going to comment directly on this in his speech tonight, presumably being fed to him on a different teleprompter with a different operator, but something to
pretty wild.
Watch.
Gabriel Perez, this is an ABC News report. Technical assistant to the president has been operating Trump's teleprompter since 2016. This is not some new face in the White House. Now in talks with federal regulators about reaching a settlement. There will be, as you mentioned a few minutes ago, a new teleprompter operator. He's not going to be freestyling tonight. There will be a script in the prompter.
Well, he still could freestyle around the script, as we have seen him do repeatedly. And of course, the question is going to be how much the speech is about election integrity, as the White House press secretary told us, and how much it may be about other things, from the economy to geopolitics.
Yeah, this is, of course, the conversation that's happening as well in Aspen, Colorado this week. The Aspen Security Forum is underway. It was coinciding yesterday with the Defense Forum that the president attended in Carlisle, Pennsylvania. They are not related. Aspen has been underway for many years and draws players from all around the world, including Bloomberg's David Gura. We have deployed our asset once again in the center of the news, and he's with us right now from a beautiful backdrop in Aspen, Colorado. Mr. Gura, great to see you. Welcome back to Balance of Power. What are you hearing about this speech tonight? I'm just curious, in sideline conversations in Aspen as the United States leans back into war with Iran.
I think there's some hunger here, picking on what you just said a moment ago, Joe, that there are any number of issues he could talk about besides election integrity. And obviously the focus here is on the war in the Middle East. Principally, there's some attention being paid to what's happening with China as well, especially when it comes to AI. But I should say there are some rolling eyes here when it comes to the president delivering a speech that would focus on election integrity, knocking back to 2020. I did sit down with Rahm Emanuel, who, among his many past jobs as chief of staff to President Obama, and something we talked about was just the sensitivity surrounding delivering an address like this. Obviously, he worked with President Obama on many of them when he was in the White House. His counsel, interestingly, to the president was he should go on as much as he wants or can on this subject, that it seems so out of touch with what Americans are thinking about and care about at this moment in time. It would be advantageous for Democrats were the president just to keep talking about what happened in 2020. But I think that you're highlighting the fact that there are folks here who would rather him be talking about strategy, military strategy, diplomatic strategy than this. And I did get a note this morning, an indication that one of the dinners here is off-site and has very poor cell service. So if you intend to watch this speech, it may be difficult.
Good to know.
Well, that may be difficult indeed. David, you mentioned your conversation with Rahm Emanuel. I know it ventured into other subject areas as well, including Israel, where, of course, he visited to make a speech in Tel Aviv just recently. What did he tell you?
You know, I started off that conversation by saying there's kind of a sense that that speech really was a direct criticism of Prime Minister Netanyahu, and it was that in part. And I was very curious to hear from him just about how he gauged the reception to that speech. So he did travel to Tel Aviv. He spoke at Tel Aviv University. He didn't meet with the Prime Minister while he was there. He didn't want to be seen, as he said in many interviews, as influencing domestic politics there. But of course, that was part of the substance of that speech. Look, he took a lot of parties to task. Yes, the current Israeli government, but Arab states as well, the Palestinian Authority. He was doling out a lot of criticism. But what he emphasized to me in our conversation this morning is he really wanted to present a constructive path forward for peace in Israel, and really wanted to get Israelis to recognize the fact that as Prime Minister Netanyahu has focused so much on military strength and on defense, really since October 7th, 2023, he's kind of squandered playing up for emphasizing what else Israel has going for it. And part of that, of course, is economic. Israel is a country that has a huge venture capital community and ecosystem, and he thinks that that's been largely ignored by the Prime Minister. I found that fascinating. He also said, kind of lost in the coverage of that speech, yes, here domestically in the United States, but around the world, is on the heels of that, he traveled to Germany and gave another speech that was focused on NATO and the future of NATO and how Europe could be defending itself in kind of a different partnership with the United States. So kind of a fascinating window into him wanting to kind of make constructive strides and talking about his vantage on foreign policy. Yes, perhaps in an effort to position himself as a presidential candidate here as we move ahead. But the way in which in this political moment, when this issue of U.S.-Israeli politics is so fraught, parts of that were seized on and others were not.
All right, David Gura, live at the Aspen Security Forum. Thank you so much. And let's listen ourselves to some of David's conversation with Rahm Emanuel earlier.
I think the Prime Minister led Israel into basically a dead end. Here's what I would do to get out of that status, because I have concern for the alliance. And more than that, Japan, an ally, very popular in the United States. NATO, very popular in America. We have a critical ally who is dropping precipitously in America, dropping precipitously in Europe, Canada, Australia. You have to have a breakout moment that actually establishes support for the country, not just a particular prime minister or government.
What did you make of the reaction to it, the response to it? Again, it has been kind of distilled into something that it wasn't entirely. What do you make of that? What does it say about the way that we talk about U.S.-Israel policy?
People that work on it, like, without characterizing them sensitive, President Clinton and I talked. Hillary Clinton put out a comment. I know I've talked to Hakeem Jeffries. So one, I view the pariah status, the isolation of Israel strategically, diplomatically, militarily, economically, as a real threat to Israel. Big article today about The Economist, what this is in nature. So I laid out a strategy. The Saudi Arabia, which is kind of the crown jewel, was the sponsor of the 2013 proposal by the Arab League for a 23-state solution. Basically, all 21 nations would recognize Israel if you came to some settlement agreement between sovereignty and security, the Holy Grail. But Saudi Arabia, now post-October 7th, won't go singularly, but there's a comfort in numbers with all 21. Game on. But you don't get to sit on the sideline, Arab League. You have to stand up for Palestinian Authority, because there's 3 strikes and out. They got 3 times offered sovereignty, 3 times said no, and returned violence. So you've made a cynical Israeli partner. That's not how you build trust. So I'm going to give you a chance to get out of jail card, a 4th chance. But everybody in the Arab League's got to stand up that partner. You've got to recognize not only the state of Israel, but its historic right. You got to stop rewarding terrorists for killing Israelis because they're Israelis, and stop teaching your children to hate Israelis. Now, Israel has got to stop undermining, and a classic example of this government. This government undermined the Palestinian Authority, but they allowed Qatar to send $6 billion to Hamas. Hamas was not using that $6 billion to build McDonald's franchise in Gaza. They were building tunnels, and you knew it. That was a strategic failure of this government. Second, as you can see, I recommended the IMEC, India, Mid East, Europe Economic Corridor. Cables, ports, energy. You got to get around the Strait of Hormuz. It puts Israel's technological prowess at the center of the most important trade route. So both economically and strategically, making Israel, as David Ben-Gurion, the founding father, said, a nation among nations. Second important is, and the critique, Every country has 4 tools in its security toolbox: military power, political persuasion, economic statecraft, cultural attraction. The Prime Minister has atrophied 3 of them to the point they're non-existent and relied on only 1. That is not acceptable if you're trying to be and have actually security. Example of that, and I'll pay the calling cards. You can use my AT&T calling card. You have a Syrian government today that said Iran is our common enemy. Syria is the Highway 66 for Iran to Hezbollah. You can cut it off. And he wants to come, he said, the president of Syria, I want to come to a security agreement with Israel. The United States is now building or facilitating a building of Iraqi oil through
New
Syria.
pipeline, yeah.
Call the Syrian president. It's not even a peace agreement, it's a security agreement. The people in the northern Galilee of Israel would get security, and you would actually knock out the trade route from Tehran to Beirut suburbs that fund Hezbollah. That's it. Use your diplomatic tools. The Prime Minister likes to say he was raised with English. Learn the letter D. It starts first letter in the word diplomacy. Try it. It works.
Rahm Emanuel speaking with Bloomberg's David Gura, who's kind enough to bring us out to the Aspen Security Forum. He's out there for the week, and we'll have more of David's conversations with us. We want to seize on this moment, though. What they were talking about plays directly into what took place last evening on Capitol Hill, a vote in the House to cut U.S. aid to Israel, more than $3 billion worth. Cut the Democratic caucus in half. Kaylee, the numbers that we saw there were remarkable. 103 Democrats voted to withhold the aid. 10 more voted present. Pretty remarkable here. 98 opposed it. It did fail because Republicans rejected this. But it brings us to Capitol Hill, where we want to spend a couple of moments with Bloomberg correspondent Eric Wasson, who has a little bit more on this. Eric, this is something that would have been considered unthinkable a couple of years ago, and it speaks to the state of the Democratic Party now in the House. What do you think?
State of the Democratic Party, state of U.S. relations with Israel. It's a real red warning sign to the Israeli government that there are large sections of the American population who are waning in their support for Israel, especially after the way that the war on Gaza has been conducted. House leader, Democratic leader Hakeem Jeffries voted against this measure, but his number 2, Catherine Clark, voted for it. It split the leadership right down to Pelosi voting, in order to strip this aid, to send a signal, she said, in a statement. Republicans pounced on this in their statements, plan to use it in the campaign. But I talked to at least one Republican aide who said, on the Republican side, there are also problems for members who voted to defend Israel aid, and they may see problems from some of their right-wing base, the same base that Thomas Massey represents, who are skeptical of Israel aid. So this is a troublesome time in the U.S.-Israel relationship, and this was certainly a landmark moment for that.
Well, as we talk about troublesome times and fissures we see in the Republican Party in particular, Eric, I also wonder what you're hearing about the prospects for this Reconciliation 3.0 package that they're trying to mark up in the Budget Committee today. Are the votes there for it? And I'm not just talking about the House. Is the Senate interested in this at all?
Well, first breaking news from BGov, my colleague Ken Tran is there. He says the committee did pass it out of the committee, which was not a given. It's supposed to come to the House floor next week, and leadership seems pretty confident of it. But we are hearing from a lot of senators this is going nowhere in the Senate. You're talking to John Thune. He said it's a risky proposition. We had already flagged to our terminal and web readers that, there's a political risk here in voting to support an unpopular Iran war that's raising prices right before the election. But there are also other problems with it. It's not offset. It adds to the deficit. It's $95 billion right to the deficit going to the military. Bill Cassidy, I talked to him in the hallway, and he said, I want that thing offset. I want to find spending cuts. There's got to be a way to do that. But then I talked to Roger Wicker, who's a military hawk, and he says it's not spending nearly enough. He wants $350 billion for the military. Wow. So it's a real mess in the Senate. I talked to Lisa Murkowski, and she said, I don't see this getting done before the election at all. And frankly, after today in the Senate, my money would be on it not getting done anytime soon.
Great reporting. I love this.
Yep.
Bringing it straight to us, Eric. Thank you.
Live from the halls of Congress, We appreciate it, as always, Bloomberg's Eric Wasson. And of course, it's one thing to consider whether or not a reconciliation package can get through before the election. There's also the question as to whether or not the regular appropriations process is going to make any headway before November. And reporting today that the Speaker in the House, Mike Johnson, is considering putting forward a continuing resolution in the near term to try to fund the government past the midterms in November.
Just rip off the Band-Aid. That's what Senator Houston suggested last night when we were on Capitol Hill. Everyone agrees if that doesn't work, we could be headed to another shutdown. It's amazing. We'll meet you back here on the late edition of Balance of Power. Alongside Kaylee Lyons, I'm Joe Matthew. This is Bloomberg TV and Radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed, across Bloomberg platforms. This is Bloomberg Business Week Daily on this Thursday, July 16, 2026. Gotta say, once again, we've got one sector, Tim, weighing on markets.
Yeah, that would be the Philadelphia Semiconductor Stock Exchange Index, the SOX. It's where the chip stocks live. It's down about 5% right now. 30 members in there, Carol. They are all lower. Look at that.
Yeah. I mean, listen, it's been a volatile sector as of late, trading and moving, as it seems, from one big piece or even little piece of news to the next. The headline today comes from TSMC, which hiked both its spending and revenue projection. So revenue, yay, excitement. Spending, that CapEx spend goes up. That gets investors worried. And basically, it's reigniting some of those concerns that are out there, this big narrative around data centers, the overbuilding, the uncertainty over when trillions of dollars in spending will deliver lucrative returns. It gets back to that ROI and valuations. At what point does it get to be a little irrational? And this is where we're trying to figure it out.
Yeah, the first part of our program is certainly focused on this. We're going to get to what you need to know from TSMC. Ed Ludlow joining us in just a minute. Also to an AI story where returns in the AI reckoning has already arrived.
Yeah, love this story by our Business Week team. Also this hour, we've got to get to the U.S.-Iran hostilities worsening. We're going to hear from Democratic Senator Chris Murphy on blocking the president's $1.15 trillion defense authorization bill. It is massive, and this is amid two wars that are going on around the world, one in which the U.S. really kicked off.
And on healthcare, why United Health's lone bear on Wall Street is a bear no more. He joins us in just a few minutes.
I love this story. All right, we're going to get to all of this over the next 60 minutes. Let's get a check on the trading session for you. Here is Charlie Bell.
Hi, thank you very much, Carol and Tim. We got the Dow, the S&P, NASDAQ all declining, but Tim set us up perfectly mentioning the SOX. And 30 out of 30, I'm repeating it right now, 30 out of 30 names in the SOX are all trading lower. Leading the declines, Astera Labs, followed by Marvell Technology and also Credo Technology. We've got the Dow, the S&P, NASDAQ very much in the red right now. S&P down 0.4%. NASDAQ down 1.1%. NASDAQ 100 index down 1.5%. The SOX right now, Philadelphia Stock Exchange's semiconductor index, it is trading lower now by almost 5%. Again, NASDAQ 100 down by 1.6%. NASDAQ down 1.1%. The 10-year, 4.56%, with the 2-year, 4.15%. Spot gold is down $74 the ounce now to $39.86. That is a drop of 1.8%. Crude now down by 1.2%, $78.68 a barrel. Brent 84.09, trading lower by 1%. And again, worth repeating on spot gold, back below 4,000, $39.85 the ounce. Yes, oil lower, but the oil giants are moving higher. ExxonMobil up now by 1%, Chevron up 1.2%, and ConocoPhillips up by 0.9%. Golf news, round one of the Open Championship underway at Royal Birkdale Golf Club in Southport, England. At last check, Jackson Suber of the U.S. sits atop the leaderboard at 5 under par. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. Carol and Tim, that's a Bloomberg Business Flash.
Charlie, thank you so much. Once again, semiconductor stocks, as we mentioned at the top, a drag on the overall U.S. equity trade. Charlie also putting that into context. All names in the stocks are down on this Thursday. The index is off about 5%. Now, this is coming as U.S.-listed shares of Taiwan semiconductor manufacturing are down and a drag. The chipmaker reported its second quarter results and gave an outlook. However, the company is also spending more to meet AI-related demand. So you've got that kind of push-pull going on there.
With what you need to know, we've got the host of Bloomberg Tech, Ed Ludlow. He's in our Bloomberg News San Francisco bureau. Ed, analysts broadly positive on the report. I mean, you got to spend to meet this demand. What's not to love in this report?
That's probably exactly the right way to frame it. The world's biggest chip manufacturer, contract chip manufacturer, beat across the board, raised its sales outlook. Everything is very AI demand specific. But you're right that the market right now is recalculating the spending environment overall. So it's kind of like a chain effect. If TSMC is saying, okay, we are going to boost CapEx, and what they said was not just this year, but boost CapEx multiple times over multiple years. I think they said up to 3 years. What's the next step of that? That means that they see the hyperscalers also boosting CapEx. The recipients of capital expenditures needing to up their own game. And so the market's recalculating this relative to valuations.
What?
Yeah, no, jump in, Carol.
No, one thing I just want to ask you, it feels like everybody is working on this time frame of like looking to until 2030. Why is it?
Yeah.
Why is it that 3-year thing that everybody seems to land on?
Super good question. In simple terms, the bit that TSMC is confronting on the demand side is capacity demand for leading edge chips for AI, both logic and memory. Those chips go into data centers. The data centers take time to get built. So there is like this backlog that goes all the way through to the end of the decade, which is projects that are underway, projects that have been planned but not yet started, and it factors in future demand on inference, basically, what they think the compute demand will be for running AI workloads, such as the information that they have now. And so, like, the way you guys have framed this, like, it's completely fair. The market is also just taking a breather. You know, I loved, what did Tim say was so good? The socks giveth and the socks taketh away. That has been true every day for about a month. It's so normal to see a swing of 5% to the upside or the downside.
Yeah, the reason I said that is because every day it seems like the SOX is either the leader of Carol's gainers or the leader of my decliners.
True,
I mean,
right?
and it is 5%. And look, so far this year it's still up, you know, 2/3. It's still up 66%.
Exactly.
But and look, and I think, Ed, and this is something we talk about with Ian King all the time. Chip makers are the ones that move drastically when it comes to cycles such as these. I mean, you've been in Silicon Valley for quite a few years at this point. What are folks telling you who lived through the dot-com boom and the dot-com bust and other times where chip makers have been the belle of the ball?
Well, the difference is the health from a balance sheet perspective of these companies, the scale that they have now. You know, in the dot-com bubble, you know, from a, you know, these are financial metrics, but from a cash flow perspective, or literally cash on the balance sheet perspective, the world's biggest technology companies now, they weren't of that size then. They didn't have the financial clout that they do now, and equity markets, you know, those that were using equity markets weren't being used in the same way that they're being tapped now. So, like, that's the principal difference. You know, on the stocks, you're exactly right to put it in relative performance year to date, and also zoom out, right? NVIDIA is the easiest case study of, like, look at its performance from a stock perspective over multiple years. On days like this, I often, like, do my bow tie, do my gruffest Tom Keane voice, and I hit HRH on the Bloomberg terminal. Yeah. And so, like, a move of 5% on the stocks is well within 2 standard deviations. That's what he would say. I won't do the voice. It's like normal.
You know, I mean, you know, we're talking about TSMC today, Ed, but it is not just a TSMC story, as you guys were just talking about. I mean, the 4 biggest US AI operators, Meta, Alphabet, expected to spend upwards of $725 billion this year alone. This is all of them. What's going on right now, this market churn, is about whether or not you believe the AI spend and build is all real and impactful and will pay off, or do you kind of don't believe that story, at least not at these constantly growing spend levels? I mean, that's kind of where we are.
So the way that I've read all the sell side notes I can, I've talked to as many market participants as I can. The conclusion today is that, yes, everyone is even more bullish on AI, but bullish on the idea that we have confirmation spending gets bigger. We don't have any confirmation that the payoff on the other side is there. You know, the literal revenue growth that derives from AI workloads when you strip all of the hardware story out. One point is that TSMC is a chip manufacturer. It makes chips for other companies. The most analogous story this week is ASML, which is a chip equipment maker. TSMC is the biggest buyer of ASML equipment, but ASML did exactly the same thing, raised their sales outlook for this year, boosted what they call capacity, but the number of chip-making machines they plan to build this year, and said that this is a multi-year horizon. They have a backlog for multiple years. It's all linked in a chain of chronological order. TSMC buys the machines from ASML. TSMC churns out the chips go into server racks, those go into data centers. The thing that's missing is how are the software companies showing us that they too are seeing the same boom?
Ed, I don't remember. Have you been to the TSMC facility in Arizona, just north of Phoenix?
I've not. I wish. Yeah.
So what is happening? I mean, we don't have time to get into a complete answer here, but this is supposed to be an ability for the U.S. to get some of what TSMC does in Taiwan happening in the United States. And started during
Yeah.
the Biden administration. It's now continued during the Trump administration. What is the status of like what TSMC can do here versus in Taiwan?
Well, the news is that they've boosted their commitment by $100 billion, right? So $250-ish billion overall in their planned investments for America. But what jumped off me at the page was, what does $100 billion extra get you? It gets you 4 fabs. And again, like goes to Carol's question, like why are we talking about 2030? Fabs cost tens of billions of dollars a piece, and they take a really long time to build. At the root of your question is also a technology question, right? So America wants to re-onshore chip manufacturing, wants to bring chip leadership back to this country. But from a technology process standpoint, is TSMC, a Taiwanese company, or Samsung, a Korean company, going to put their absolute latest, greatest process into an American fab, or are they going to do that domestically? And that's the bit that lots of people question.
I mean, gosh, it's a fair question. I mean, I have thoughts on that, but, you know, if you want to play it safe, you keep it in your home front, right? Or, I don't know. Ed Ludlow, thank you so much. I know you're going to be joining us much later in the 4 o'clock hour to talk a little bit about Netflix, or a lot about Netflix, which will report earnings. Thank you, thank you. He is the host of Bloomberg Tech. Catch it on Bloomberg Television at 11 a.m., Monday through Friday on Bloomberg Television. All right, so we kind of want to stick with AI and trying to get to, I mean, it's part of almost every story that we get to. And a fascinating story, it's a most read on the Bloomberg. It's by our Business Week team about how the reality of AI and its impact, and AI reckoning, you might say, has already arrived for software engineers. And we want to get to this story. Mark Millian wrote it. He's Bloomberg Business Week deputy editor, joining Tim and me right here in studio. You know, we talk about, first of all, great story. Loved it. We caught our attention this morning on our read-in. We talk about ROI and productivity gains. Coders, software engineers, they're already feeling the impact of what AI can do for their world. Maybe there's an upside, maybe there's a downside, but walk us through what's going on.
Yeah, I used to live in San Francisco. I covered the tech industry for more than 15 years. I'm living here now, working on Business Week, but I had just been hearing for the last 6 months from sources and old friends out there that this is like the biggest thing that's happened in their industry in at least 20 years. And I felt like I just had to go out there and see and just really understand what was going on, because you hear a lot of doomers talking about how AI is going to take all the jobs.
Right.
And here they're saying that because it's taking their job, or it's at least drastically changing their jobs. And so I went into Anthropic and OpenAI, spent time at the labs, and just met with people who have been doing this their whole life, their whole adult lives, learning to coding, and now, they're not writing code anymore. They're just having conversations with Claude.
Meaning they're vibe coding or something different?
Well, vibe coding...
Because there's not necessarily a name for this.
Yeah, they look at it as a little of a derogatory term.
So that's more elementary. That's for the folks like me who don't actually know how to code.
Exactly.
Okay.
And so there have been different terms for it, and most of them just call it coding, even though they're not actually writing the code themselves. But yeah, it's like basically telling it what you would have spent the next 6 hours doing. It's like, here's how I want the app to be structured.
Okay, so then what do they spend the 6 hours doing now?
They spend the 6 hours building 10 different features for their app. And so they'll open separate windows and saying, like, you work on this, you work on this, you work on that. It's sort of like a product manager, which is a job that exists, but like those people don't have people who are, going to produce things as quickly, within 10 minutes that would take a person, a couple days.
Mark, tell us about Boris Cherney out in San Francisco. He created the software Claude Code, runs it at Anthropic, and in your reporting you say that at Anthropic the expectation that everybody is at least a little bit of a coder has become endemic, and that mindset is beginning to infect much of the tech industry. Tell us a little bit more about, I'm assuming you chatted with him, you talked with him.
Yeah, I spent a bunch of time with Boris. He's a really interesting guy. He's like a coder's coder, and so he's like a little bit of a guru that like people follow him on their podcasts and his X posts just to like figure out like how is my job going to change tomorrow? Like Anthropic is releasing stuff almost every single day. But he has, like a long background in the industry. He was the leader of code quality at Meta. So like he kind of set the standards for how Meta developed Facebook and Instagram and worked on the server architecture at Instagram. And he's like, just sort of articulated what this new world looks like, and it's changing even for him every week. Instead of actually telling it what to do, now he just creates this broad framework for his AI, and it's just spend the next several days working on this challenge.
What does this mean for what we've seen with the talent pipeline in Silicon Valley over the last 20 or 30 years or so? It comes to mind. I was actually speaking with a Bloomberg intern. We have a great class of interns here. He's not on the media side, and I asked what he was studying. He said, well, I'm now studying cybersecurity, but I spent my first year majoring in computer science and programming, and he saw the writing on the wall. He decided to switch his major as a result.
Yes, it's been a sea change within especially entry-level jobs in this industry. And it's still so new that it's hard to know how it's really going to shake out. There's plenty of optimists who say there will just be more demand than ever for software and people who understand how software fits together. I talked to somebody at Carnegie Mellon who's working on helping restructure their computer science program. But the early signs have not been great. So since ChatGPT came out in 2022, coding jobs for people in their 20s is down 20%. Wow. And it's a lot of the first in, first out at the big companies. They're doing mass layoffs. Some of them are blaming AI when it's really maybe not AI's fault, and they just maybe overhired during COVID and are trying to correct that. But for a lot of companies, they're true believers that this is a new way of working.
Measuring productivity or ROI, though, is tricky, even among these folks who maybe are finding they can, basically use AI and talk to it and say, go for 5 or 6 hours and do something, and then maybe do another one somewhere else. But it's still tricky.
It's true. Everything based on my reporting leads me to believe that this dramatically increases productivity for a software engineer. But finding actual data to support that has been very difficult. There was one study that was highly respected that took place early last year, before this was before AI coding was really a common thing and the models weren't as good. And they found that, people thought they were more productive, but they're not actually more productive. But there was this moment in time last November when Claude released a new model that really was capable of replacing parts of people's jobs, and ChatGPT followed with a similar model. They couldn't run the experiment again because most of the software engineers were we don't want to hand code anymore. We've got a better way. We're not going to waste our time for your experiment.
What's the thing now that you saw in Silicon Valley that still can't be done by Claude that people are having to do that maybe a year from now Claude will be able to do?
There were some examples of people who were coding on very outdated hardware that had severe limitations that Claude, which is trained on incredible amounts of code bases to understand the best practices. There are very niche types of electronics that require a human touch, but for the most part, those people, they would use Claude, they would find errors, they'd fix those errors themselves, but they're still using Claude and Codex.
It's almost shocking how quickly we are here. I know we've been talking about 3 years, but it does still feel pretty shocking. Mark.
Glad we're still here.
Right now. Sorry. Mark, thank you. Great story. Mark Millian, Bloomberg Business Week, deputy editor. Check out his story. It's on the terminal. Coming up, the latest on the Iran-U.S. hostilities. This is Bloomberg.
It's 2:20 on Wall Street. We do check markets all day long here at Bloomberg. We've got a chip maker rout underway again. Lots of concerns about AI spending, and stocks are selling off. Let's begin with tech, specifically semis, because the SOX is now down 4.2%. That is the Philadelphia Stock Exchange's semiconductor index. 30 members, all 30 are lower right now. Bottom line, tech's declining. NASDAQ down 1.1%. The NASDAQ 100 index down 1.6%. And again, the SOX bears repeating, down now by 4.2%. S&P, putting it all in context, down 31. That is a drop of 0.4%. The Dow now lower by 0.2%. NASDAQ Composite Index down 1.1%. Our Mag 7 Index also lower as well, down 0.7%, with a 10-year 4.56% and the 2-year currently yielding 4.15%. Gold at $39.90 the ounce, below 4,000. Spot gold down 1.7%. West Texas Intermediate crude declining, now down by 1%, 78.78 a barrel. Brent 84.13, now lower by 1%. SpaceX will attempt a major test flight of its massive Starship rocket tonight. It's a milestone for a vehicle that is a critical part of Elon Musk's plans for the space, satellite, and AI conglomerate. Liftoff targeted for 6:45 p.m. Wall Street time from SpaceX's Starbase facility in South Texas. Yes, we'll have it for you live on Bloomberg. Round 1 of the Open Championship underway at Royal Birkdale Golf Club in Southport, England. Right now, at last check, Jason Suber of the United States sitting atop the leaderboard at 5 under par. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, Carol and Tim. That is a Bloomberg Business Flash.
All right, Charlie Pellet, of course, keeping you up to date on the trade today. Again, we see stocks overall selling off, semiconductors in particular, under a lot of pressure. All right, we also continue to keep an eye on what's going on in the Middle East. The war between the U.S. and Iran continuing. The U.S. intensifying strikes against Iran overnight, hitting an oil tanker near the country's main export terminal as shipping traffic slumped through the critical Strait of Hormuz. Iran responded by firing at American bases in Kuwait and Jordan, and Tehran seems in no mood to back down in the face of President Trump's warning that he will escalate strikes.
We head to the Bloomberg News Washington, D.C. bureau and to our national security reporter, Nick Wadhams, who joins us from there. Nick, as we as a nation, the question I think a lot of people have, I don't know, Carol was asking this question earlier, are we less secure or are we more secure the longer this war between the U.S. and Iran goes on?
Are we less secure? I think the big question that you have to look at this from a few angles. One is obviously U.S. bases in the region and U.S. allies, so their willingness to sort of partner with the United States in the long term. Big question there. They are obviously getting a lot more anxious given that Iran's way of responding has been to attack U.S. allies as well as U.S. bases. So service members in the region certainly less secure. I would say that hasn't really bled over into the United States itself, though obviously there are assassination plots against the president where they've accused Iran of trying to do that. So that is a big concern. Economically, I think on this very much an open question and a much more difficult one. Oil going back up. The president had said when he had signed that ceasefire, listen, we wanted to avoid economic catastrophe. Well, here we are again. They're looking to potentially ramp up strikes again, and you can bet that will have real aftershocks for the economy, and it will hit people's pocketbooks back home.
Well, speaking of such, the U.S. forces began conducting a new wave of strikes on Iran, so it continues, and it goes on and on. You know, one of the things that we have been talking about as a team, Nick, is military stockpiles. Where are we? You know, you've got the Ukraine war with Russia, whatever assist the U.S. has been providing there, obviously, its efforts, its actions with the war with Iran. Where are we? Just yesterday, President Trump was talking about, calling military contractors to speed up production. A lot of them were at this event in Pennsylvania with him.
Right. Well, there are so many issues there, but certainly the information we have here, I mean, the administration is not disclosing the extent of its stockpiles for some of its more advanced weapon systems, but certainly when you fire a lot of cruise missiles and bombs at Iran, that means you can't use those weapons or stockpile those weapons if conflict should arise elsewhere. We've seen that strain, especially on the ballistic missiles, on Patriot missiles and things like that, which cost millions of dollars and take years to produce. And then we've also seen on the flip side, the U.S. has really struggled to ramp up production of certain other munitions, such as 155 millimeter shells for artillery that were so desperately needed in Ukraine. Obviously, that's not as much of an issue for President Trump because he's not supplying those weapons as much as Joe Biden was, but you do see this issue across the defense sector, which is why it's so important to the president. Defense companies are not able to ramp up as quickly as he wants, and that's also pushed a real question for other countries that want to buy those things from the United States. The wait list there sometimes goes for years.
Nick, we covered this late yesterday, and I want to get your take on this. The Wall Street Journal with reporting yesterday that said that the president is leaning toward expanding U.S. military operations in Iran, hosting a Situation Room meeting on Tuesday to discuss the seizure of Karg Island, questions about the actual presence of troops in the area as well. What's your reporting telling you about the way that this could escalate?
Well, I mean, certainly the big question, what you saw from the overnight strikes was itself an escalation. If they're hitting an oil tanker, that does suggest that the administration is willing to get a little closer to that line of really going after civilian and energy infrastructure rather than just military infrastructure. That's something the president has not really been willing to do in an extensive way. And if they start doing that, that could open up a lot of thorny legal questions. But then obviously there's the bigger risk. If he decides to commit troops to the ground, I mean, that extends the time horizon much more for the conflict. Obviously, it puts U.S. troops in much greater danger. The blowback could be much more severe. I mean, there's a reason why presidents have wanted to rely on air power for so long, because though it's expensive, it's considered a much less dangerous way to do the conflict. Of course, as Iran is showing, they've been able to hold out against that. So the president really wants this thing to end, but he doesn't seem to be able to achieve his strategic ends through bombing alone. So that then raises that question of a more serious commitment, either going after infrastructure or providing troops. But, a huge political issue for the president, as well as, the livelihood, lives of his troops, because this is something he campaigned against, no new wars. And this one's been going on for several months, and indications suggest he may be thinking of deepening the U.S. involvement just before the midterms. That's going to have blowback.
Nick, Iran's lead negotiator, I'm curious the intel that you guys feel like you're getting. Iran's lead negotiator defending diplomatic efforts to end the war, pushing back against hardliners, urging him to abandon a tentative peace deal and avenge the country's slain supreme leader. What do we know? We keep thinking about what's going on inside Iran. What do we know about the internal tensions and battles within Iran and how that complicates bringing this war to an end?
Right. I mean, so those remarks that you cite clearly show that there are deep factional divisions within Iran, just like there are, anywhere else, including in the United States, where you have members of Congress or members of the administration within the administration, members of the opposition, all of which have a voice and can slow down or speed up that process. And we have seen Iran, you have the political leadership, you have the IRGC, you have the supreme leader, all of whom have deep interests in the outcome of this thing. But what we do see is sort of a fascinating element, which is despite this war, there are two very powerful and clear factions in the U.S. and in Iran that do want to see this thing end and are looking for an off-ramp. The question, of course, is whether they have the power to, push that policy through amid all the voices that don't want that. And then obviously the issue of how the U.S. and Iran either read or misread each other's intentions or actions. So it's a whole sort of swelter of competing interests and power centers on both sides, not even looking at the dynamic when the U.S. and Iran actually get in the room with each other.
Yeah, and I'm glad you mentioned the politics of this too. I want to home in specifically on the nuclear issue and the many months that it took over a decade ago for the JCPOA to be negotiated. What is the U.S. strategy around the nuclear enrichment program in Iran right now? Because it seems like sometimes we hear about from the president about actually physically going and getting what he calls the dust versus versus bombing facilities that intelligence and in some cases reporting says where they could be working on this stuff. Like, what is the strategy with that part of this mission?
I mean, this is a great question. The administration may have a strategy. They have been inconsistent, I would say, in communicating that strategy. I mean, the president, when he announced the ceasefire a few weeks ago, said, hey, maybe Iran should have the right to enrich. Other countries are allowed to enrich, or they have civilian nuclear programs, and so it wouldn't be fair for Iran not to get that. Of course, that goes against sort of his own programming that he'd been saying for years, and that a lot of his advisors have been saying Iran should not have the right to enrich uranium at all. The issue with the JCPOA, I mean, that took years to negotiate, and the Obama administration gave very detailed explanations of what it was seeking to achieve. So allowing Iran to enrich at a low level for a set period of time, and then they would address it again once the terms of the deal ran out. This administration has not given us nearly so detailed roadmap, but what they do seem to toggle between is an acknowledgement that, listen, we are probably going to have to give them the right to enrich at least at a low level, similar to what the JCPOA did, and then we can figure out the rest later while insisting that they not have a nuclear bomb.
Where's Israel in all of this? Is that also a complicating factor? Sorry. We give you all the easy situations, as you know, to make sense of. We know Benjamin Netanyahu is going to be in town and spending some time with the president. But I'm just curious where they fit into all of this still.
Well, it's a great question because, you're talking about the political centers in the United States and the various factions here and in Iran, and then you have the whole issue of Israel, which with Prime Minister Netanyahu essentially willing to act independently, and in some ways, though he's an ally of the president, acting as a spoiler for the president's plans. So continuing the war in Lebanon and then maintaining its own covert campaign that they have been doing for years to eliminate Iranian nuclear scientists. And essentially conduct their own campaign against Iran. And that has been enormously complicating for President Trump because we've seen repeatedly that even when the U.S. commits to a ceasefire with Iran, it's not able to stop Israel from attacking Lebanon in particular, but though Iran considers stopping Lebanon, the fighting there to be part of the ceasefire. So it's very complicated and very difficult for the president to control Prime Minister Netanyahu. Netanyahu wants the Iranian regime essentially, their nuclear program completely eliminated and is working sometimes at counter purposes to President Trump.
And my apologies. Prime Minister Benjamin Netanyahu actually is not coming to the U.S. next week. He was supposed to. Right, yeah. But this is as Lindsey Graham's funeral service has been pushed off and postponed a little bit. I don't know. Nick, I am shocked. I think a lot of folks are shocked that here we are still talking about this. I think the assumption was that this would be done early. I think anybody who understood Iran and the Middle East would have said differently when this happened. Where do we go from here? How do you guys, markets sometimes look through it. Markets sometimes don't look through it. Right. And so I guess we're just going to have to wait and see. I don't know. Is there a time, some point that you expect the president to talk about it in his speech tonight? We are hearing it's going to be maybe about elections, but I'm just curious.
Right. I mean, I think it seems likely that he would address it in some way. But the president really faces a big choice here, because what Iran has shown is that with relatively few resources and despite the intense U.S. bombing campaign, it can really lock up the Strait of Hormuz and keep ships from going through it. So it doesn't need a lot of resources to do that, because it's shippers that are going to make the decision about whether they want to risk that. And right now they're showing they don't want to risk it. That is not something the president has a lot of control over. So in a way, he's really sort of stuck in a bind here. He wants this thing to end, but the only way it seems to get it to end would be to really, in a way, counterintuitively ramp up the military campaign to a degree that he just does not want to do. So it's a real bind. I mean, I don't see how this thing ends anytime soon, especially given the complete lack of trust between the two sides. So it feels a little bit like we're going to be in this cycle where the president promises a ceasefire, then maybe we get a ceasefire, then we return to conflict. That's going to happen in many more cycles or repeats of that cycle to come.
Yeah, it absolutely does feel that way. Nick, as always, we appreciate everything that you do. Nick Wadhams.
My pleasure.
He is Bloomberg News national security reporter there in our Washington, D.C. bureau.
We stay on national security and defense, and we head back to the Aspen Security Forum. That's where we find David Gura. He's the co-host of Bloomberg This Week, and he also is the co-host of the Big Take podcast. He's sitting down with Senator Chris Murphy, Democrat of Connecticut. Hey, David.
To do this, by the way, which I am. So.
We got word that just a few minutes ago, the U.S. resumed strikes on Iran, and I guess I'd like to start there if I could. The situation we find ourselves in, the plasticity of the president's policy toward the region right now, and your latest thinking on sort of where we are and where things are headed.
Well, I didn't know that we had stopped our strikes. This war restarted about a week ago. It shows no signs of ending. This is the most significant foreign policy disaster in the last 20 years. Iran effectively has control of the strait. They are going to have control of the strait for the long run. As a price of opening that strait, they want all of the sanctions released, which is going to put a lot of new money into their economy, but also allow them to send money out to their proxy groups in the region. This war should have never started. It's hard to figure out what to do now, because it's kind of like asking somebody, now that the raw egg is splattered over the floor, how do you put it back together? But it seems as if the United States is going to have to pay that VIG, billions of dollars to Iran in sanctions relief, and we're going to have to prevail upon the Israelis to permanently stop the war with Lebanon. And if those two things happen, maybe we can get that strait reopened. I have no confidence that ultimately there's going to be any bigger deal between the United States and Iran. I don't think they're going to make any commitments on the nuclear program. So I guess the best we can ask for right now is to just stop the shooting, get the strait reopened, and we're still seemingly a far away from that.
As we look at Humpty Dumpty there on the floor, do you think the administration gets that? Are they still confident that they can stare down Iran, I guess, and find some solution by doing that?
Yeah, I think we sort of can't overhype the degree that just plain old incompetence plays in this story. I mean, the Trump administration doesn't know what it's doing. Its primary diplomats with Iran are the president's son-in-law and a guy who was a real estate developer 2 seconds ago who's never done diplomacy. So it's not surprising that they're failing. They're going to either have to put actual adults, like experienced diplomats, in charge, or they're just going to have to step out of the way and ask our European friends or our Gulf friends to come in and, try to seal an ultimate deal on reopening the strait. So I have very little confidence that this crowd that's in charge of our national security is going to be able to get anything done.
We've seen in recent weeks your colleagues on the other side of the aisle, many of them expressing more reservations about this. Do you detect a real change kind of in their position as this is attenuated, as it plays out?
I mean, this is, of course, a deeply unpopular war. The American people don't support the war. They want it to end, and they're paying the price, not just in higher gas prices and higher diesel prices and higher fertilizer prices, but also in the cost to the budget. This is $100 billion to $200 billion. And what is going to happen is that Republicans are going to cut funding for schools, for transportation, for nutrition, in order to pay for the war. That's part of the reason that the American public don't want it. So as you get closer to the election, this becomes an issue that Republicans are going to have to deal with, because this will be an issue where voters are going to say, are you for the war or against it? And it's going to matter in their choices. So yes, I expect that you will get more Republicans saying, time to end the war. For the first time ever, about 3 weeks ago, we passed a resolution in the Senate to end the war. It ultimately was stymied by some procedural moves in the Senate, but there is evidence that Republicans are starting to wake up.
You mentioned Israel a moment ago, and I go back to that memo of understanding, which it seems was not worth the paper that it was printed on. I think the president would agree with that now. Israel, of course, not a party to those conversations, and I'm curious how you look at the U.S.'s power to persuade Israel to scale back, pull back its campaign in Lebanon, and change tack.
I think you'll have to use the leverage that we have, and the leverage that we have is our defense relationship. So long as Israel believes that the Trump administration is going to continue to feed them the weapons and the intelligence that they need to carry out war on Lebanon, they're going to continue to carry out that war. That's a very blunt tool. It took me a long time to accept it as a tool to try to influence their behavior in Gaza. But if it is a precondition to getting the Strait open, then we have to consider using that tool, because as long as the Strait is closed, it is American citizens, families, that are bearing the cost.
Let's talk a bit about that. Pull to domestic politics here, and you mentioned it's a deeply unpopular war. How do you see that playing out in the months ahead, and how do you and your fellow Democrats kind of maybe capitalize is not the right word to use there, but highlight the fact that it's as unpopular as it is with the electorate?
You know, what I found in my time in politics is that most of the time foreign policy doesn't matter in elections until it's sometimes the only thing that matters. And I do think that this election, it's going to be on the ballot. Even if Trump were to get the Strait reopened today, the cost of a gallon of gasoline or fertilizer is not going to come down to any reasonable level by November. So it will be a voting issue, and the president's foreign policy incompetence. And that agreement you mentioned, that ceasefire agreement, was just an example of incompetence, right? He signed an agreement committing Israel to do something without Israel at the table. He apparently by accident signed an agreement that actually gave control of the Strait permanently to to Iran. His foreign policy disasters are, I think, going to be relevant this November.
I had Ambassador Rahm Emanuel here earlier, and he really seemed to welcome having this debate about U.S.-Israel relations going into the midterms and the general election on the heels of that. Do you likewise? I mean, there's a lot of ink being spilled here about the degree to which there's division in the Democratic Party. There's debate about Israel, how healthy that might be. Where do you fall on that?
Well, I mean, broadly, I don't think you're a healthy party unless you're having debate, unless you have division. Part of the reason that the Republican Party is about to get their clock cleaned in this election is that they don't have any division.
You're confident of that?
I am pretty confident of that. I mean, they're going to try to cheat their way to a win, but I'm confident that if it's a free and fair election, Democrats are going to do very well. Yeah, I think in a healthy political party, you have debate, and we certainly do have a debate in the Democratic Party about what to do with Israel. I mean, I'm somebody that wants a strong U.S. relationship with Israel. I do believe in the preservation and protection of a Jewish state in the Middle East. What Netanyahu is doing is not serving that objective. He is actually, in the long run, going to end up recruiting more enemies of Israel, both terrorist enemies and frankly, countries that don't support Israel's existence through his conduct in both Gaza and in Lebanon. That's why I think we have to use blunt tools to get his policy to change.
You allude to election malfeasance, the potential for that. 7 o'clock local time, 9 o'clock Eastern time, the president's going to give a speech to the nation and reportedly will focus on the 2020 election and election irregularities as he sees them. I'll ask you if you're going to tune into that, but more broadly here, what's the message of that and the danger of it as you might see it in him continue to espouse what we know not to be true?
Well, the danger is that we, for the first time in American history, don't have a free election. I don't know what the president is going to recommend, but if he is trying to build the case to put troops out in the polling places, he will likely be stopped by the Supreme Court, and then we will see whether our democracy collapses and he does not listen to the decision of the Supreme Court. This is a really dangerous moment, and I'm really worried that so many of my Republican colleagues are quiet about it. You know, their party is a cult right now, and I am just still hopeful that some of my Republican colleagues will stand up and when they hear his speech tonight, call it out for what it likely will be, the most significant rhetorical attack on democracy on the national airwaves that has ever been made in the history of the country.
Let me ask you lastly just about your counsel, your vision for the Democratic Party. You have a new book out, Crisis for the Common Good, and a lot of the counsel in that book is just for us to come together more through clubs and activities and kind of re-engage with the way things used to be. not wholly leaning on nostalgia, but that's a part of it here. I could ask if you're running for president. I expect you to demur on that. But let me ask you sort of how you see the future of the Democratic Party here, vis-a-vis that text, or just how you're thinking about the way your party should take shape here going to the next election.
Yeah, I mean, I want my party to recognize that there's not just an economic crisis in this country. There's a spiritual crisis. People are feeling less meaning and purpose in their lives. They're feeling more disconnected from their family, from their community than ever before. We've got to sort of preach a gospel of happiness about how people can wake up every day and feel like they have real dignity and meaning in their work, how we can control these technologies that are sending their kids into lives of isolation. Our party sometimes, solves very technical problems like the price of a prescription drug, but doesn't explain to people how that's actually going to make them happier. If we were to lead this November and 2 years from now with a really aggressive plan on how to control the ravages of social media and AI, a space that, by the way, is open to the Democratic Party right now. Like, parents don't know which party to pick if they want to protect their children from AI. That would speak to families in a spiritual way because they feel like they're losing control of their lives at the hands of these new technologies. That's the conversation my book is trying to start in the party.
Thinking of running?
I mean, I think it's a little too early because we're not even sure that we're going to have a democracy in 2028. So let's make sure that we have a free and fair election in 2026, and then we'll all make our decisions for 2028.
Senator Murphy, thank you very much.
Appreciate
Senator Chris
it,
Murphy of Connecticut joined me here at the Aspen Security Forum. Back to you, Carol and Tim in New York.
So appreciated. David Gora, he is, of course, Bloomberg This Weekend co-host and, of course, co-host of the Big Take podcast. Still to come, the lone bear on United Health is a bear no more. We're going to talk to Michael Ha at Baird. He's coming up in just a moment.
First up, though, check of the day's trade and top business stories. Charlie Pellet is standing by. Hey there, Charlie.
Hi, thank you very much. United Health, by the way, trading higher right now. UNH on the ticker up by about 1.7%. Headline right off the Bloomberg right now. Google Gemini launch delayed as the technology falls short of goals. Alphabet, which is the parent company of Google, trading lower now by 3%. We've got the Dow, the S&P, NASDAQ, all moving lower. S&P down 40, drop there of 0.5%. Weakness in tech, specifically semis. The stocks, the Philadelphia Semiconductor Stock Index, down now by 4.6%. NASDAQ 100 Index down 1.6%. The S&P currently at the worst level of the day. 10-year 4.56%. Spot gold down 1.9%. 39.82 the ounce, falling further below 4,000. Crude WTI down 0.7%. Sports, specifically golf. Round one of the Open Championship underway at the Royal Birkdale Golf Club in Southport, England. At last check, we do have Jackson Suber of the U.S. sitting atop the leaderboard at 5 under par. Carol and Tim, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, United Health's lone bear coming out of hibernation.
I like that.
This is following the company's quarterly update. The company did raise its outlook for the year and reported quarterly profit well ahead of Wall Street views, helping to solidify the company's earnings recovery after a historic collapse. It's been a journey.
It has been a journey. Michael Ha is Baird's senior research analyst. He covers managed care and healthcare facilities, covering names in the group including United Health, which he just upgraded with a $453 price target. He joins us here in the Bloomberg Business Week studio. You were sitting in this same seat a few months ago, and you were the only bear out there on Wall Street, and that was until today. What happened? What did you see?
Thank you for having me on. And I want to jump into it, but maybe just quickly.
Sure.
I think we might be at the beginning of quite arguably the biggest shift in healthcare investing over the next several years. And for context, just to lay the framework for the United upgrade.
Yeah.
Over the past few years, investors have wanted to buy hospitals because healthcare utilization has kept surprising to the upside. Well, over the past month or so, based on our work and our checks, we see evidence that these cost trends are coming down. And we're not talking about slightly, but it could be in a potentially unprecedented way. And if this is true, if it continues, if it's durable, we see a shift to managed care and away from hospitals. And that's why I think today was so important with United Health.
Explain the distinction.
Yeah, exactly.
Between managed care and hospitals.
Right, so health insurers like United Health, hospitals like HCA and Tenet Healthcare, they typically trade inversely. If healthcare utilization goes up, right, people are going to the hospital, that's typically bad for insurers. So that's how they trade. Over the past few years, hospitals have gone up and up and up, health insurers down, and I think we're just at the beginning where that trade is flipping, and it spells a lot of opportunity for investors ahead.
What does it mean for patients, that shift?
Right. For patients, I mean, there's a multitude of things here. Maybe this is a good segue into United, actually.
Okay.
So, yeah, I've been the lone bear for a while now. And the thing is, long term, structurally, still a lot of concerns about their crown jewel, Optum Health, Optum Insight, which I'm happy to talk more about. But near term, remember, United has a health insurance business, the biggest in the country, and they're going scorched earth, burning all the furniture, cutting benefits for seniors, exiting markets and plans, which is bad for the consumer, the individual, but for them, they're brute forcing EPS power and margins. And as of today, we're seeing the strength of that take place and take hold within their earnings.
So the fundamentals, financials, and if an investor wants to invest in the name, it sounds like a great play, but we will see the impact on patients.
Oh, we are seeing
We are
it.
already.
Right. So there's a multitude of things, but there's been elevated healthcare utilization. A lot of people utilizing the system over the past few years, and now we're seeing evidence of that beginning to normalize. And there's a multitude and complex.
I hate that word normalize. What does that mean? Less people using the system?
It could be that. Based on our work, we're also...
Forgive me, but...
Oh, no worries at all. Based on our work, we're seeing that AI has had a big impact over the past few years in helping hospitals maximize their revenue, right? Collection, diagnosis, coding, if you will. And what we're seeing is that it quite possibly could be a big sort of one-time shot that hit over the past couple of years, and that ability to code may be flattening. So that's one of the elements. But to your point as well, just utilization in general, things like surgical trends, for example.
Those are going down, or quote unquote normalizing, you say?
Normalizing.
Why were they high? Why were they higher over the last few years?
Right. I mean, there are a lot of different theories. I think post-COVID, no one was using the hospitals during COVID, so there's a built-up, pent-up demand, deferred care, if you will, that ran through the system. And then I think more recently, our work suggests maybe AI played into elevated trends even more.
Meaning like people, like what do you mean? How would AI play into that?
I think more on the hospital side.
Okay.
They're utilizing AI and maximizing their ability to
bring people
well,
in.
actually, to take existing procedures, services, and say, okay, you know what, we missed this previously, but now they actually have greater severity. You can code to even more different diseases, and that's helping them capture more revenue.
I do want to point out your upgrade, just to share it with everybody. In your note today, we are upgrading to neutral following clearance of the second quarter 2026 underwriting hurdle, improving near-term earnings visibility, supports a more balanced view. The primary